Absolutely. That is the role of Europe today, to allow you to take a deep breath. But let's look at some of the individual names. We might get some more volatility. Philips is in focus, the medical equipment maker. We'll be speaking to the CEO later. They've been flagging rising cost pressures. Maybe that's going to be something that sticks to them this morning. Could this stock move lower, despite the fact that they beat and raised, but some of that was at least to do with tariff refunds. Barclays certainly in focus as well. We spoke earlier on to the CEO. Equities traders certainly delivering for that particular business. We'll watch that stock at the open. And Mercedes has cut its revenue outlook on Chinese luxury. The Chinese luxury dynamics attached to the property weakness in China, it would seem, Guy.
Okay, how do we factor that all into our thinking this morning? Let's find out. Let's show you some numbers, give you an idea of what is going on. I'm not sure over the next minute's going to deliver that much excitement, because Europe at an index level, as we've already articulated, is not doing very much. The FTSE is up by a staggering 0.1%. The Kospi closed down today by 11%. So the FTSE 100 flat, doing nothing. And there's been plenty of guests on the show talking about the idea that if you want to hide out, the FTSE could be the place to do it. Stock 600 is up by 0.1%. We'll wait for the CAC to arrive. It's got to factor in LVMH this morning, plus also looking forward to what is happening with Kering. DAX is going to be interesting, what happens with Mercedes. The IBEX is up by 0.7%. We're going to look into why that is this morning. The AEX, let's see what the ASML story is this morning after the big rout that we saw yesterday coming through for that individual stock. So there's some really interesting single stock stories which are clearly moving things around. The CAC is going to be interesting as well to delve into the details there. But at a headline level, stock 600 is up by 0.1%, Anna?
Well, if you want to know where to hide out, the answer seems to be you hide out in some of the consumer-facing stocks, because that's where we're seeing the strength coming through. So personal care is the place to hold out. That is the best performing sector, and within that we see Unilever up by 5.4%. It's not only Unilever. Reckitt Benckiser is higher on the back of Unilever. We had Alex Morgan telling us about the numbers out of Unilever earlier on, but sales jumping on demand for Dove soap in India, in the United States, so that's clearly doing well for them. And that seems like in the face of all of this tech volatility through the Asia session, and still ahead of us into the US session, maybe that is the calming thought that Europe can provide this morning. So that's the best performing sector, is personal care. To the upside, we do have actually most sectors in positive territory. We've got consumer products also on the rise. There are only 5 sectors in negative territory. Technology is one of them, and we're down by 0.8%. The likes of Soitec down by 3.4%, ASM International down 3.3%. So a continuation of yesterday's dynamic, it would seem there. I see SAP is up by 1.1%. So it's a sort of dialed back version of yesterday when it comes to the tech narrative then, Guy.
Barclays is down really hard. It dropped initially out of the gate really strongly. It's still down by 5%. Let's call it circa 5%. Is that credit exposure? Is that the FIC underperformance that we've seen coming through this morning? Is that what is ultimately driving that?
It's being read across into other UK banks, which is interesting. Not to the same degree, obviously, but NatWest is down by 2%. Lloyds Banking Group down by 1.9%. So is it something that's been said on the UK? We'll delve further into the details there and see if we can unearth something. But yeah, at first look, the numbers didn't look bad. And certainly when we heard from CS Venkatakrishnan earlier on, he was pretty confident about certainly the performance that the equity traders had delivered and the rest of the business. Let's widen the conversation. Talk to Paul Markham, Investment Director and Head of Global Equities over at GAM Investments, with us on set this morning. Paul, very nice to have you with us. Thank you. It's a really interesting day in markets. As we've been saying, Europe sort of stands out as an area area of calm, set aside the banking results for just a moment, an area of overall calm for these markets. The Stock 600 up by 0.2%. Yesterday we saw weakness in tech, of course, and through the Asia session we see real weakness in tech. But is that what you're looking to Europe to provide? Some sort of diversification, personal care seems like the place this morning. But is that the story for Europe right now?
Yes, I think it is, Anna, and good morning. Thanks for having me. I think that the sector mix in Europe is really quite advantageous in this kind of market environment. It is quite heavy in some of those areas which may do better in this kind of more defensive market. It also benefits from more of that kind of value rotation that we may see as a result of some of the dislocation around tech. So I think from that perspective, you should probably expect to see Europe be a relatively good performer. That doesn't necessarily mean that it will make a whole lot of progress on an absolute basis.
Yes, and I have to ask you about the tech, the chip wreck that we're seeing through the Asia session, ongoing selling of all of these chip stocks back to levels that we haven't seen since April, which doesn't sound like very long ago, but we've been on a big old journey higher on some of those names since then. So how does that set us up for the earnings story around tech that we're going to get into this week with numbers from some really big hyperscalers and other big tech names? How are you thinking about the tech narrative as we head into those corporate earnings?
I think there are two aspects to it. One is the basic long-term fundamental story, which I think remains largely intact. The recent news that we had from Moonshot and Kimi, clearly the frontier is now has less of an advantage over some of these other secondary kind of models that we're seeing in AI, and that is a concern. However, I think that what we're seeing on the other side is very significant adoption of AI at a faster clip than we had been imagining. On the other side of that, this kind of position-led rotation was always going to happen at some stage, and it was always a question of what set it off. If you recall, last January we had something similar with DeepSeek, and we're having a similar thing again, and it's always likely again to happen in the summer months when volatility is higher because volumes are lower. So I think my view on that would be to stay in touch with the tech names, stay involved with them, but maybe at lower weightings and wait for the opportunity to add back to those positions as we go through to the rest of the year. And very quickly on earnings, it's damned if you do, damned if you don't. So I think this quarter...
On the CapEx side,
yes,
certainly.
exactly. So that kind of is being taken badly. And even the CapEx beneficiaries, some of the semi-cap equipment manufacturers, for example, are starting to underperform as well. So you can't really find a place to hide within that hardware space.
So this is a buy the dip opportunity?
Not just yet.
No, sure, not just yet, but it is. But that's what's...
Yeah, absolutely. I mean, if you think, for example, a stock like Hynix, and there's been a lot of excitement around the fact that, you know, it's on very low multiples. You usually sell Hynix on low multiples. You don't buy it on high multiples. But what you should expect is a higher multiple to sell on the basis that margins and pricing are increasing very significantly. So the fundamentals there are very, very strong. I just think that there are so many people on the same side of the boat that there is always going to be a situation where there is over-ownership of some of it.
So this isn't the end of the story?
I don't think so. I do think there will be a hiatus and a pause until maybe a bit later.
We go higher from here? Not from here, but we will go higher.
We will eventually go higher. This is not a definitive end, Guy, no.
Right, okay.
So, as you said, still intact, that underlying argument around AI and what it delivers, or the underlying argument around stocks. Can I ask you about the turbulence that we're seeing sort of under the hood on the S&P? Because I was drawn to this slightly complicated line, but I'll give it to you anyway, Paul, and see what you make of it. During 2026, up to this point, we've seen 8 occasions where the weekly gap between the best and the worst performing groups on the S&P has been a double-digit percentage growth. So there's just a lot of disparity within the S&P. And somebody, one of our colleagues has written a story about this and has looked back at the other times where we've had that occur, and it was 2000, 2001, 2009. So you can see where this question's going. I mean, are you concerned about the disparity that we're seeing between these different groups and what that tells us?
Yeah, I mean, I think, well, to start with the positive side, I think as long as we don't start to see the whole market drag down, because we have this skew towards tech, we have high ownership of ETFs and indexed products, which can lead to sort of stop-loss style behaviour, and then you start seeing a ratcheting down, it becomes a trend, and it becomes a rout. I think as long as we don't get into that, then we're okay. And clearly, some of the rotation, you know, you have these incredible stats where, you know, the top 10 stocks in the S&P are worth more than the other 490 and all these kind of things. So I think that all of that, we're not yet into that territory. Clearly, if investors want something less volatile and they want to hide out somewhere, they're going to have to accept much lower value or higher valuations on a peg basis, so lower growth style stocks. But as long as investors are staying involved, I think that's very healthy for the market. It's a broadening out, and I wouldn't be too concerned about that.
Okay, so that broadening out is a good thing. How does it stand up to the to the chance that we get Fed rate hikes, and how are you thinking about the Fed? Because we're now at a 40% chance. Some people thinking we could get a hike this week. Then that's what that 40% tells you. Some people think 4 in 10 people perhaps are thinking that we get a hike this week. How nervous are you going into a Fed meeting where we have that kind of number?
It's a bit of a knife edge, isn't it? Actually, because the employment numbers have actually been fairly healthy. But, there are some concerns that inflation is starting to get a bit sticky. And there is evidence, that the Fed is now much less clearly dot plot led than it was. You hear comments made about, for example, the UK economy, where inflation has been very hard to drive out of the system, and I think the Fed is aware of that. So I think that there is a chance that rates go up, but it could lead to a bit of a further bout of volatility in markets. That may well become an opportunity for a broader set of assets, but not necessarily just solely in tech.
Does fixed income provide the diversification? How do I diversify my portfolio? If I want to de-risk at the moment, if I'm worried about this volatility continuing, what do I do?
I think, to be honest, Guy, if you think there is still this risk of there being a Fed hike, clearly, fixed income is going to be a tricky place to be depending on where you are. It may be a little bit more or less volatile to be in kind of high free cash flow stocks, ones which potentially have high dividend yields. They could be a good place to be. The S&P, of course, isn't a fertile place for that. Europe is a good place for that, and the UK in particular is a good place for that. So dividend yield could be a factor here, actually, in this kind of situation.
And all of this is going to outperform cash, is it?
They could potentially on a total return basis, but it may well be that if rates being now closer to 5 than they are to 4, that cash for a short period of time could well be a place to be if you have that flexibility, particularly as an individual investor.
Paul, what are you thinking about the drop in oil prices that we've seen this week? None of us can, has a crystal ball as to what happens in the Strait of Hormuz and the Red Sea. But what assumptions do you have to make about the oil price and the extent to which this still drives market thinking and the extent to which we can put it on the sidelines?
The really big moves like we've had in the last few sessions where they've been nearly double-digit here and there in either direction are still a concern. I think lower, 1 to 3% moves in the price just have caused fatigue in the market, and I think reacting to it does create a kind of whipsawing effect that as a portfolio manager is not really what you want to get sucked into. So from my perspective, I've tried to sort of ignore those moves unless they become either something which is more of a trend or if they're very, very sharp and very, very significant.
What's the big opportunity you're looking at in Europe, Paul, right now? I'm looking at this Unilever share price move, up by 6%, most in 2 years, sales beating expectations. I mean, maybe not that particular company, but are you thinking about things that are resilient to all the volatility?
It's a really key question, Anna, because I know for my time in markets, there's always been a very clearly defined set, until recently, a fairly clearly defined set of defensives. And those consumer staple style stocks, HPC style stocks, really used to fit into that category. The problem we've seen over the last few years on a fundamental basis for those kind of businesses is that branded goods in that space aren't as worthy of a premium as they used to be. Own brand at supermarkets has become a big trend. Input costs have become an issue. Emerging market growth has fallen away. So if you think about the sort of Latin America-driven growth story that people like Colgate had in the 1990s and 2000s, that's gone away. So it's actually been quite hard to buy those names with the confidence you're used to. It does seem like with this set of results, hopefully there's some kind of stabilisation coming around for Unilever. I think also the valuations reflect the fact that they don't have that cast iron sort of mid-single digit high cash generative earnings that they used to have. So I think that could certainly be an interesting area.
Costs are a big factor for those kinds of companies as well. Paul, great to see you. Thank you very much indeed for dropping by to see us. Paul Markham, Investment Director and Head of Global Equities, joining us from GAM Investments. Let's take a quick look at the Core 6, figure out what is happening here, and get an understanding of kind of how the market sees the world this morning. Nestle on the right-hand side of the screen, talking about that theme, reflecting that we've just been discussing. But ASML is down again this morning. Schneider is flat, which I think is interesting. LVMH, though, is up 1.1% this morning. So there's a lot going on in this market. Let's try and dig into some of the details a little bit further. Unilever is maybe a good place to start. So let's point Alex in that direction.
Morning, Guy. Yes, well, we saw the red head there. Unilever was up 6.5% just a few moments ago. That's the most in 2 years. And, of course, that's coming off those beats in the earnings. And also, it's worth noting that there is, well, there you go, as you can see, ticking up in the green as we're speaking, there is this overall transformation plan that the company is undergoing. And it seems that investors are liking that as well. It's the move away from the foods brands. Of course, we've seen the completion of the spin-off of the ice cream brand and the focus more on these products like beauty and well-being. Let's turn to banks, though. And after talking up the results, the sales from the equities traders at Barclays, you can see sharply down in the red this morning. And that potentially is because there were some misses on the fixed income trading. But also, when we looked earlier at the cross picture, looking across the pond and seeing how well stocks traders have done on the other side of the Atlantic, maybe people were expecting even more over here. Let's turn to Man Group, the investment firm. They also had some earnings out this morning, doing well. You can see up around 8% this morning, also on the move out of the gate. And then you have Orange. Now, just yesterday, they had a statement out, of course, the primarily French telco, about a new project into data centers. Well, also they're up in the green this morning, advancing around 4% this morning. So a bit of a mixed picture there, but the real leader of the pack is Unilever, and that's coming off the back of those beats, guys.
Alex, thanks very much. Alex Morgan with some of the stocks that are in focus this morning and on the move this morning. We will continue the conversation around Barclays shortly. Shares dropping despite beating estimates. A host of reasons out there. Is it the costs? Is it what they've said about the UK part of the business? Is it the investment banking part of the business? And seeing all of these being cited by various analysts this morning. We'll get to that conversation next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
I'm absolutely pleased with the set of numbers we've published today. You know, our top line income of £8.1 billion is up over £1 billion on the same number last year. Profits of £3.3 billion are up 30% over the previous year. And the investment bank, as you say, has done extremely well, including my colleagues on the equity trading floor behind me. Equities are now 30% of Barclays. And remember, this was the house that fixed income built. And so the diversification we're seeing in the business, the strength we're seeing in our business is something that we're truly happy about.
The CEO of Barclays speaking to us earlier, and the stock is under a little bit of pressure this morning, and we've been citing a number of reasons for that, and different views coming from different analysts. We're down of 5%. Let's get the thoughts of Bloomberg's Charlie Wells, who's been combing through the details of what all the analysts are saying this morning. And we heard, good morning to you, Charlie, we heard CS Venkatakrishnan there saying that this was the house that fixed income built, and maybe there's room for a little bit of disappointment there. I'm not sure if we're just splitting hairs, but at the moment, something's pushing the share price down.
Before market open, it was looking like this was going to be in the green. Now we're in the red. I think there's a lot of questions here, and it was really hard to find a red flag, at least in the numbers that we saw, right? We saw beats across the board. We saw beats on equities. Equities has been the theme of this earnings season in banks so far. We saw, softness in FIC. That could be, as you mentioned, some of this. We saw, loan loss provisions. I think this was something that I was going to come on and say we should maybe check out loan loss provisions. Those were better than expected. So I think this could be a case of high expectations, right? The comparables are tough. The comparables are tough to the United States. We saw, Goldman Sachs reach, I believe, its highest level in the market ever on the back of these stellar earnings from JP Morgan. I think this red is a mystery.
Can you compare? Every time we compare Barclays with Wall Street,
right?
Is that a fair comparison? Wall Street now has easier regulations. It has it's freer capital. It's got better access to capital. You can fund these divisions more. Is it a fair comparison? It just feels like Barclays is a little throttled in terms of what it can do, and I can understand why. It wants to build a diversified business. It wants to have all of these various engines firing, and it wants to be capital light in some respects. But can we compare it with Wall Street? Therefore, are those expectations the right ones?
I think your intuition there is right. I think apples to apples is better than American apples to. Are there British oranges? I don't know about that.
The apples.
Yes, exactly. But no, I think you're right. And I think looking at some of the European lenders that we're likely to see report this week, I think that's smarter. That's where we get more of this nuance, as you say. And I think, in that interview, which I think anyone watching now should go and rewatch, because it was really good, you asked, your first question out the gate to Venkatakrishnan was, is equities throttled here, right? They did make that pivot in 2024. They are trying to get growth out of that trading, out of that markets division, but they have imposed some self-imposed capital limits there. And so is this a missed opportunity? Is this an opportunity cost? And I think across the continent, we're going to get some really interesting takes here, right? Because 2019, Deutsche Bank, they pivot out of equities. We see a lot of different kind of, strategic moves. And so I think when you look, Europe to Europe, when you look cross-channel instead of cross-Atlantic, you get more of those strategic choice questions. I think those are a lot more interesting.
And we made the point earlier on, Charlie, that this was weighing on some of the other banks in the UK. So it's sticking even closer to the British apples, that we are seeing some weakness coming through in others. And is that because the market is saying, look, there's some specifics about the UK business that are making them nervous? And I'm pulling out this line from Citi this morning. Our concern is that the mix is likely to disappoint, with the three UK businesses showing a combined -2% profit before tax miss on a slightly weaker NII. And so if you're looking for something that is UK specific, and then there's the context of a new government, I'm not sure that's relevant today, but that is the wider context from the UK business.
And I think for a lot of investors, I think that's the kind of question about Barclays, right? You've got the markets business, the trading business, so important to their global ambitions, but then basically you've got this sort of domestic lender. And, that's a little bit different of a kind of put together than a lot of the other banks that you see, even in Europe. I think something that was interesting that did stand out to me was that growth in the United States, right? And we know that a lot of banks, we know Santander, for instance, is trying to grow in the U.S. So I think you see potential weakness in the U.K., potential growth in the U.S. I think, again, that's a kind of interesting shift that we should be watching.
I give you the Blenheim orange, which is actually an apple here in the UK.
Is this the answer to the question? Is there a British apple?
Well, there are loads of British apples. Maybe
sorry.
not on the British orange, but I found the Blenheim orange. Anyway, Charlie, very nice indeed.
I would eat it.
Yeah, that sounds very tasty to me. Very healthy as well. Okay, let's talk about what else is healthy this morning, and that is the Mercedes share price. up very nicely. This on the back of what is being described here as robust profits and cost cuts. China, though, is a factor in your thinking when it comes to this stock. China and luxury cars are certainly a struggle right now. Elizabeth Behrman, Bloomberg EMEA Autos Industry Team Leader, joins us. Why is Mercedes up as strongly as it is? Are these numbers that good?
The market certainly likes it. I think it's a case of better than expected or less bad than feared. If you think historically, a car-making margin of 4% is pretty dire. But on the whole, as we've seen from the German car-making peers of Mercedes, namely VW, and the Audi brand would be the direct competitor, of course, and BMW, they've all been reporting far lower profitability. What this result tells us is that some of the cost-cutting efforts at Mercedes are paying off. They're also launching this really broad product launch, and that's reaping some results as well for them.
It's really interesting, Elizabeth, to see that the market is taking the glass half full view of Mercedes today. And I mean, sometimes you see that when a market thinks the bottom is in and they're ready to believe again in the story and they're looking for the first signs of a turnaround. But this is a sector that is still under so much pressure.
Absolutely, it's still under so much pressure. And Ola Källenius, the CEO, also pointed to more cost-cutting efforts needing to happen, particularly at German sites. We know from VW that in Germany in particular, it's really hard to shave costs significantly because of the labor setups. Like VW, where the situation is even more complex for significant job reductions, Mercedes has a guarantee in place that precludes it from firings of workers for the foreseeable future. And at the same time, in the Chinese market, Mercedes is continuing to struggle. And during the second quarter, we saw how the market slide at Mercedes outpaced the overall market downturn. And that's because of course, of local rivals gaining ground, particularly at the electric vehicle end.
Elizabeth, thanks very much. Thanks for joining us. Bloomberg's Elizabeth Behrman with the latest on Mercedes, and we brace for other earnings from that sector, of course. Let's turn our attention to personal care, and Unilever is in focus, and this was one of the standout performers to the upside that we spotted out of the gates at 8 o'clock this morning. It's paired some of those earlier gains a little bit, but it's still up by 4.6%, and I'll pull out a couple of lines coming through from some of the analysts this morning. Standout is one of the phrases being used by Barclays analysts. Scant picking for the bears is another phrase I see coming through. Very strong volume growth, another phrase coming through. Emerging markets, there was a high expectation they'd do well in EM, but it's beaten those expectations. And so a host of positives around Unilever.
I did not expect a World Cup deodorant boost.
No.
But that's what I think is the hot weather.
Yes.
Maybe, probably is a more contributing factor.
Yes.
Maybe. The World Cup just
You wonder what we discussed in the breaks. We were discussing this earlier on. Whether it's the World Cup, whether it's the hot weather. But Philips, also in focus this morning.
So it's getting crushed. Stock's down by 9%. Why? We will find out shortly, but we are now trading at 21.39. I'm looking at a one-year chart. We are now at a one-year low on the stock. June, July has actually been okay. It's definitely rolling over now and rolling over pretty hard. Roy Jacobs is the CEO of this business. We're going to talk to him very shortly, 8:45 London time.
We'll be back with more on the markets shortly. This is Bloomberg.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back, everybody. This is the opening trade. 30 minutes into today's session, and Europe delivers you something a little greener than the rest of the world and some earnings stories to digest this morning. So we're up by 0.3% in the overall markets. This really is in contrast to what we've seen through the Asia session. It wasn't just 10% down on the Kospi, it was also considerable weakness in Japan as well. But that's very much the tech theme. Europe played some of that yesterday. We saw ASML very much weaker on the back of concerns around Chinese competition in yesterday's session. But we're stuck here in Europe between that theme in Asia and then into the US. We are looking at Nasdaq futures and E-minis that are still negative. So it's as if the tech theme has further to go. But in the meantime, Europe does what it wants with its earnings stories. And we've had plenty of those. Top level then, Guy, we're making progress across European stocks, up by 0.3%.
It's amazing. It just kind of stands out so obviously as a big difference compared as a differentiator compared with some of the other markets we're watching right now. Let's break it down. Higher, 412. Lower, 177. Let's call that 2-to-1. Volume's actually fairly decent today, which is interesting as well. Tech got battered yesterday. Deodorant is doing well today. Let's talk about the deodorant trade. Unilever up very nicely on the back of its numbers this morning. The sector's up as well, so it's got a tailwind from that kind of rotation narrative that we're watching. But look at Unilever. It is up by over 5%. Now, LVMH was up. It's now down on the back of the numbers that were delivered last night. Remember, we've got Caring out with numbers a little bit later on as well. Let's call LVMH flat. Man Group, we had the CFO on the show a little bit earlier on. Inflows look strong. The market likes what it hears, and the stock is rising on the back of that, despite actually a fairly decent performance that has been delivered by that stock so far this year. Let's turn the tables and look at the underside of the table and figure out what we're seeing on the downside. Philips, is this a cost story? Yeah, probably is a cost story. It's not a tariff rebate story because the stock is being marked down really strongly on the back of the numbers. Look, Philips is down by 9% right now. Barclays is also under significant pressure as well. Why? I don't know. To be honest, I'm really struggling with this one this morning. As somebody pointed out to me a little bit earlier on from Bloomberg Intelligence, maybe it's simply that there's an awful lot of buys on Barclays right now, and maybe some of that is simply being unwound right now. There are other reasons out there. It could be just as simple as that. And ASML, after a big drop yesterday, is down by, let's call it another circa 2% today on the back of this continuing concern around what China is doing in the lithography space, Anna.
Let's get an update then, Guy, on some of the other stories we need to know this morning. Wildfires in France and in Spain that forced the evacuation of more than 300,000 people have stabilised, but officials are warning that another heat wave expected this week will make the fire's evolution unpredictable. The Spanish and French governments are now studying ways to funnel money into the regions that are impacted by these fires. President Donald Trump says the US and Iran are engaged in diplomatic talks to end the Middle East conflict, but warned the two sides would return to fighting if negotiations didn't yield a deal. Trump's remarks came after the US held off attacking Iran for a third straight day, and Iran paused strikes on Gulf countries. Separately, Bloomberg has learned that Oman and Iran are trying to reach an agreement to restart shipping through the Strait of Hormuz. And a sell-off in semiconductor stocks is continuing today as fresh signs of China's progress in the advanced chip making and mounting concerns over the AI spending boom spark another wave of selling across the sector. The Kospian's index plunged in the Asia session, triggering a trading halt, while memory giants Samsung and SK Hynix each slid more than 13%. Guy.
Okay. Let's move on. Let's talk about what we're seeing in terms of the private credit story and what is happening. Holdings in private credit assets continue to rise amongst insurers and pension funds, and it's making people worried. Certainly causing concern at a bunch of central banks. You take a look at what they're saying. The ECB is one that stands out. The growth in private credit holdings certainly is an interesting story that is quite niche at the moment. Does it become a wider story going forward from here? It certainly prompted one fund manager to launch a new fund to take advantage of any downturn in this market, i.e. the insurer's exposure to private credit. And if the private credit side of things goes bad, what happens with the insurer's share prices is basically the idea here. Let's talk to the founder and CIO of the company behind this, Lee Robinson from Altana Wealth. Good morning.
Good morning.
In 2 seconds, more than 2 seconds, 10 seconds, just explain to me what your concern is.
Well, having been through, the dot-com, been through the great financial crisis, been involved in those trades, involved in the Big Short, when you look at private credit and you look at the sheer amount of money that flowed in a short period of time, and the lack of due diligence was done, it echoes the financial crisis, right? Bad decisions being made. And we saw this earlier this year with First Brands, Tricolor, MFS. We saw that due diligence wasn't being done. And then we start digging deeper and you say, well, who holds these awful positions, right? As you said, pension funds and insurers. And when we were interviewed on Bloomberg, hats off to the journalists Abinar, Liza, and Tassos last month, we had a huge number of incoming calls. Huge number of calls from concerned maverick citizens who had done the deep dive to big hedge funds, to other people. And when you look at this, there's so many red flags. So you've got regulatory arbitrage. So clever people are saying, I can get better treatment of my insurance capital if I move to Wyoming or I moved from New York to somewhere else. You've got regulatory arbitrage. Then you've got ratings arbitrage. You go, well, if I go with this rating agency, I'll get a triple B, but if I go with this one, I'll get a B+, so I'm going to go with this one. And then you find out that the private credit companies are giving the EBITDA estimates and the multiples to the valuation agents for their funds. And then you start looking at all these red flags and you go, hold on, what's going on? And then you look a bit deeper and you go, well, clever people are saying, well, if you put 30% capital as an insurance company against this debt, okay, it's maybe reasonable. But you know what? If we split it up into mezz and senior and equity, you can put 19% capital against it. I mean, this all rings like subprime mortgages, right? So there's a lot of red flags coming through this stage. And so just to finish, and then another red flag is, of course, you've got the parent companies pushing all the bad credits into their subsidiaries. So these cross holdings are happening. Well, you saw with Blue Owl when it had to, had those redemptions earlier this year. So people are very concerned about, shall we say, malpractices.
Okay, so that's the theory. You created a fund to look at this and potentially interest in the fund. How much are you seeing? Are people putting money into it, or is this just kind of theoretical exercise at this point?
Look, we're trying not to be big-headed. We're very good at looking asymmetric returns. So when we got into Bitcoin in 2014. Why? Because we thought it could go down 50%, but it could go up 10,000%. We got in the dot-coms because of the same thing. We got in the Big Short because we thought we could lose 2 or 3% and make 50. The great thing about this situation at the moment is the spreads are really tight. they're close to their all-time highs. Some of these insurance companies are 80 basis points, 70 basis points. They've been as tight as 60 basis points on the CDS. So if I'm wrong, I'm not paying a lot to get it wrong, and I can put a lot of leverage on that at 60, 70 basis points that I probably wouldn't at 200 basis points. So that's one thing. Volatility, implied vols are not that high. And prices of assets, including AI stocks that are related to a lot of this credit financing, by the way. There's a lot of them. Meta didn't even have a CDS a year ago. Right? It's now, even though it was issuing billions and billions of dollars. Go on now. Yeah, go on now. And you know which way that's going, right? I mean, it's not going to go to zero overnight. So you can play these trades, and then you've had the fraud. You came into January thinking there'd be 3 rate cuts this year. Yeah. So people were buying duration. People want to be in duration. Now you're talking about rate hikes. Yeah. You're seeing a situation where private credit was sucking in money from retail. You now got redemptions. And people are saying, well, the redemptions have peaked. Well, to me, the numbers are higher than quarter one. So how does that work? So you've got tailwinds that have turned into headwinds. You've got tight levels, and you've got malpractices. It sounds like a trade you should be in.
So it's a lot for you to worry about, or a lot of opportunity, perhaps.
A lot of opportunity.
Yeah, to out there, Lee. So in terms of the CDS and the way that you play this, which is in the main, or has been up to this point, a lot to do with the CDS, is this because you think that the concerns around private credit are so great that insurance companies are going to be in trouble, or is it that you just think the CDS is mispriced and people don't see that actually there's more risk here than is priced into the CDS?
I think it's both, isn't it? I think you can have a perfectly good credit, trading at 60, 70 basis points, but people get concerned and it widens out to 200, 300.
So it doesn't need to collapse. It just
and then it comes back again a month later and you take your profits. I think there's that. And then there's also that credit one really is a bad credit and you make a lot of money. But let's say you didn't have it in your portfolio, but guess what? Every risk manager has to cut all their positions. And this is what we saw in the subprime, right? As soon as the triple Bs were going down to zero, everyone had to sell their single As. And it's a risk-off scenario. So we think the big problem here might be that, let's call it insurance company A, I'm not going to name them. They got over 40% in level 3 assets, which means they're almost impossible to sell. Right? So when the regulator wakes up and says you've got to put more capital and you need to sell assets, they're not going to be able to sell the level 3. So they're going to have to sell the level 1s and 2s.
So you sell what you can.
So the spreads widen, I think, and so you get this credit spread widening in general across the whole sector as well.
And we have seen some central banks being a bit worried about this, as you...
not worried enough.
Not worried enough, you think? Okay. But in terms of your underlying worry, so you're worrying about private credit and where the risks are there and whether they are mispriced right now. Is that because you think that AI is just going to be so amazing it floors software stocks? And is it based on a belief in the power of AI, or do you not need to worry about what AI really is going to do to?
Well, AI is not helping, right? In that it's sucking out a lot of money, right? I mean, you saw SpaceX do $19 billion of debt after their IPO, right? You've seen Meta do $27 billion. That money's coming from someone else's potential credit, right? So if you're a not such a lovely name in the AI space, you're somewhere down the list and you're trying to raise money in June 2026, and you're not going to be getting any calls from your bankers if they've got to focus on SpaceX. So that money is sucking out, right? And it doesn't help that most of our governments are issuing a lot more debt that's sucking out there. So rates could be going up. Credit spreads are very tight. Who's going to buy this duration? So we think credit spreads widen out. And if they widen out, there's knock-on effects. Less money comes into private credit. People start losing money. Pension funds have to sell assets. It becomes a vicious circle.
Outside of credit, we're seeing, Bo, growing concerns around what is happening with the chip trade, the AI trade more broadly. We're about to see a series of hyperscalers reporting numbers, that some of them are gone, and we saw this with Alphabet going cash flow negative. The game seems to have changed quite significantly. What do you see happening next? Like, how does this trade unfold?
Look, we all love AI. I think everyone loves AI. But one of the things that struck me from the article last month in Bloomberg was the number of incoming calls, which tells me that people, they talk in public how they love AI, and they look like an old fuddy-duddy, doesn't understand it, right? But in the background, they're going, these prices are insane, right? The multiples of sales that are on quantum stocks, that are on chip stocks, that are cyclical. Who's buying these chips in 2032, 2030, when there are established winners? Because not Gemini, OpenAI, Anthropic, Grok, not all of them are going to be winners. And there could be Chinese winners, by the way. It might not be any of them. So if not all of them are winners, then this massive race at the moment to become number one, number two is over. They're not going to spend all that capex and all that money. So the forward earnings of these chip companies, I just not seeing where it is. So I think people are starting to wake up to the fact that these are companies that you're looking at for 20, 30 years of earnings. They're going to have a big order flow in the next 2 or 3. But where's the next 27 years coming from?
Lee, thank you very much. A lot to think about. Thanks for joining us. Lee Robinson, Altana Wealth founder and CIO. Let's move to something different. We just want to keep you updated with some other news flow that's happening around the world, and this comes from Japan. A magnitude 7.1 quake hits Japan's Kumamoto. A tsunami caution has been issued. This is all according to the Japan Meteorological Agency. The maximum shaking intensity was 7 on a scale of 7. So we're keeping this very much in focus and under review.
Coming up, we're going to be talking about Philips. The stock is under significant pressure this morning. The company warning of rising cost pressures. Certainly, it's grappling as well with waning profitability at its key diagnostics and treatment division. Input costs into that business, a challenge right now. Roy Jacobs is the CEO. He is next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Welcome back. This is the opening trade. Now, Philips shares are slumping this morning. The Dutch company is warning of rising cost pressures as it grapples with waning profitability at its key diagnosis and treatment division. Joining us now with some details, Roy Jacobs, the CEO of Philips. Roy, thank you so much for being with us. So the stock is under a bit of pressure today, down by 9%, Roy. And I wonder if we can talk about some of the things that might be driving that. Some of the analysts are saying there might be a difficulty in achieving your margin guidance. How confident are you about the margin guidance that you've given to the markets?
So actually, we are very confident on the full year margin outlook that we have been giving. Actually, we opted for the tariff refund. If you look at the first half, we are up 10 basis points despite increasing inflation and tariffs that we are paying. We have said that in the full year, we are dialing up our mitigation actions. We already had 258 million of productivity savings in the first half, and we are generating more in the second half. And as they phase in, including when our new products, our new innovations at higher margins phase in, that will give us the strength also in the margin for the full year outlook. So we are having a healthy pipeline in terms of what we see coming in orders and sales in the second half. Very strong momentum in the personal health business. And as these cost mitigation actions also come through, we feel really confident that we will achieve the full year margin, as we said in February this year, despite everything that's going on around us. And what we did actually do is increase the absolute amounts of the adjusted EBITDA and also the free cash flow for the tariff refund that we collected by very proactively going out to immediately preserve our rights and already get most of that into the Q2 results.
Okay, so is there any more to come from the tariff refunds, Roy? What's your expectation? What are you factoring in?
So actually, the vast majority of what would come, we have actually banked, and we are very happy with that because that's actually cash that we have in. There's only a few millions left, so we more or less concluded the tariff refund process in the US. We now see also new tariffs coming, so that's actually what we have been prepared for. When we made the plan for the year, we assumed that we would have to pay tariffs all year long. Now, the fact that we could have an opportunity to claim back, we fully grasped, and also we kind of achieved the goal of getting that money back. And I believe we are one of the first companies who got it back in the vast majority of the refund.
Roy, good morning, it's Guy. Can I just come back to the margin issue? Diagnostics and treatments, the margin there was circa 25% below where the market was anticipating that it would be. Can you tell me why? What happened there? Can you give me some color as to what happened with that situation?
Yeah, so if you look to Q2 margin, actually the total margin delivered 12.2, which actually was in line with what we forecasted. We had two businesses, personal health and connected care, that did substantially better. And then one business, D&T, that actually was lower. Still was in line with our plan, but below expectations for sure. If you look to the reasons for that, that is this increase in inflation, also tariffs that we are paying, as well as China impact that is coming into D&T. We said for the full year, we see D&T margins strengthening, but we need time to actually offset some of this cost pressure. And that's actually coming in the second half of this year. So that's where you see in the D&T segment that some of the cost pressure that currently already kicked in Q2 depressed the margin. There was also a one-off effect from last year. We had a service booking into Q2 that made the Q2 2025 margin exceptionally strong in D&T. So we keep the trajectory underlying where we see more contribution coming in at the gross margin level. We also see the cost mitigation. And that's also why we are confident that we can reconfirm the full year guide for the group, but also where we see the strengthening of the D&T margin.
What costs in particular caused that you're going to mitigate against in the second half? What was it that caused the problem there? What's led to that number?
So for the D&T business in particular, two. One is cost and freight. The other is also chip cost. So there is materials cost inflation that we see coming through. There are two drivers. Right. Those are the main drivers, and those we need to mitigate. So we know what it is. We also know how much it is, and we will mitigate it in the second half.
Are you confident you've got your arms around that, though? Because both of those two costs are highly volatile right now. Freight costs are all over the place. We're seeing what's happening in the Gulf, the Red Sea. Freight costs, if you look at the numbers, are very volatile. Chip costs have been rising very, very sharply, as you well know. Is that a moving target? Are those costs going to be even harder potentially in the second half?
So we have accounted for a rising inflation, including these and also including prices for those. So that actually is what we are offsetting and what we planned for. We also, if you look to one we guided at the beginning of the year, we also built in a margin, a buffer for unforeseen external developments. And this is exactly what we're looking at. So next to our underlying profile, we also had some room to offset. That's why when we came out with the full year margin, we are very strong in reconfirming that we will be within the range that we initially guided for at the beginning of the year, despite the cost challenges that we see, because we have the offsetting productivity, but also we see the traction of our innovations coming in at the gross margin line.
Can I ask you about the Chinese business then, Roy? And you've already referenced that this was part of the numbers for D&T coming in a little weaker, but we've got some strict domestic product requirements for a number of categories in China, and I wonder how that is weighing on your ability to do business in China.
Yeah, I think the China impact, and that's where we saw some new regulation coming out in Q2, where they have a new centralized procurement policy that they're now expanding across all of China. Now, what we have learned when they came out with centralized procurement earlier, but in certain spots, cities and provinces, is that this actually depresses the market volume in total. So actually what we have seen is the market in total is down. That is because you see prolonged timing to work through these new procurement processes. And that hits us, and we are in D&T disproportionately exposed to China because it's a big part of the revenue. And while we are building up, and we saw really good momentum in that in orders, in PD, double digit outside of China, that takes a bit of time before they come into sales. And that's also what you see coming into the second half. So we're shifting some of the volume of China. We have planned for that to be taken up from a stronger Europe and also a stronger North America. And actually the good news is that North America over 12 months is double-digit order intake growth, and Europe in the second quarter was double-digit order growth. So we really see underlying also that momentum is coming in.
Yep. Roy, great to catch up. We genuinely always appreciate your time. Thanks for spending some time with us this morning. Roy Jacobs, the Philips CEO. Let's get back to the market. Skylar's here. Europe looks like a sort of place to hide this morning.
Yeah, I mean, it's doing much better than Korea is. I think we need, we need to remember that Korea is a very different market now than it was 10 years ago, but certainly than other markets globally. So I wouldn't expect the same kind of spillovers. Yes, particularly in tech markets, I'm more concerned. But, you know, one metric is if you look at ETF leveraged AUM in Korea over total ETF AUM, that's at 6% in Korea. So that's quite a high number. In the rest of the world, it's 1%. So, you know, there's more room for speculation to come down in that it was 4% in 2025, and we had a peak of 8%, so we've only done half of that. But it's just a more volatile market. So yes, spillovers, but maybe not as concerned from a high level, big downside, especially when there's not a really specific catalyst that you can see being negative for earnings in the US.
Right. So, yes, that's an interesting one, isn't it? Because will we get a catalyst this week with all of the earnings reports that we get in the US? Did we see the catalyst last week with the cash flow negative on one of the big tech names? Are we still in search of a catalyst then to really crystallize negative sentiments around how far the tech story has run?
Yeah, I think we are. In terms of, yes, earnings have been stronger than expected, and that hasn't boosted the market. But I think until we see kind of broad-based downsides, so not just in those big names that are reporting, but over a longer term and in multiple stocks, not just your tech stocks, you're more worried about global growth, then you can kind of still continue. What worries me is when we get that catalyst, yes, you know, you don't have leveraged ETFs in the same way in the U.S. market, but you do have general leverage is very high in terms of margin debt in the U.S. In June reached a peak high. It's at levels, if you have a denominator in there in terms of total market cap, that are pretty concerning relative to the .com, relative to the 2021 bear market. So if you do get that catalyst, not necessarily we'll get that this earnings season, but when you do get it, I'd worry that there's quite significant downside.
It all gets very complicated, Guy, tracking the twists and turns of the tech story. So in the face of all of that, we have Unilever and Reckitt Benckiser up pretty strongly in this morning's session here in Europe.
Europe's the place to hide. Deodorant's the place to be.
It seems so. This is the theme of the morning. 8:56 here in London. That's it for this programme. We'll be back with The Pulse shortly. Thank you to Skylar. That was the opening trade. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television. Newsmakers and market movers. This is The Pulse.
Good morning, everybody. Welcome to The Pulse. I'm Anna Edwards, live in London, and these are your top stories. The global chip rout deepens on AI spending fears. Slumps in Samsung and SK Hynix point to cracks in the memory chip boom. Barclays shares slide the most in more than a year, despite the UK lenders, equities traders, and investment bankers beating estimates. Plus, oil and gas fall further as President Trump says there's a good chance of a deal with Iran, but Tehran denies formal talks are taking place. Let's check on some assets for you then. Real weakness coming through from the Asia session. It isn't just the Kospi, but the Kospi certainly stands out. Very driven by two individual stocks, of course, but down by 10.8% just in one day on that major market. The Japanese market also under pressure. Nasdaq futures then looking to pick up that negative baton by the time we get to the US session, and Nasdaq futures are down by 1%. In amongst all of that, we're pretty flat on the euro dollar. The Brent price, though, thankfully does continue to retreat. We're down by 2.8%. 85 now the handle on another calm night in the Middle East. Let's take a look at the European markets map, because this tells a very different story to the tech rout we've been talking about. There's a lot of earnings news in here. There's also a lot of resilience, it would seem, in European stocks, resilience away from that tech story. And so that seems to be where Europe is playing its card this morning. We see personal consumer goods companies doing pretty well on the back of maybe some haven flows and some earnings. Let's just get up to date with what we're doing on SK Hynix, on the ADRs there in pre-market. Just to give a sense of where this trend goes, it looks as if we've got further selling to go. We saw selling on the Philadelphia Semis Index yesterday. That went into Asia. We see a continuation of that through the Asia session, and it looks to be into the US session once again, with those ADRs under pressure. So the global rout in chip makers has deepened further, looks to have further to run. The losses coming after a Chinese state-backed firm reportedly began producing machines that could rival ASML's dominance in that space. Meanwhile, rising levels of corporate leverage have pushed the cost of insuring Nvidia's debt higher after it announced fresh deals. Let's talk to Bloomberg senior strategist Neil Campling, who can bring together some of these disparate threads, a host of factors then again, weighing on the tech trade, weighing on our confidence around chip stocks, Neil, and not just chip stocks, but those companies that make the equipment that makes the chips. Let's go there first, because we do seem to be worried about Chinese competition in lithography. To some degree, this was Europe's story yesterday. ASML was considerably weaker on this story in yesterday's session. But how should we think about Chinese competition right now?
I think, Anna, the issue on Chinese competition is concerning to many players in the market because, of course, we've had lots of IP restrictions on technology going into China. And yet, somehow, China seems to have gone up the technology curve substantially in terms of the ability to produce chips, the ability to create AI frontier models, and potentially now even into chip equipment, which, of course, ASML is really the monopoly for both what they call deep ultraviolet, DUV, and EUV, extreme ultraviolet machines. So that's where I think the concern is coming in from that. And then with regards to the likes of the NVIDIA situation in terms of the circular deals, this isn't a new story in of itself, but the numbers mentioned in terms of dollars continue to move higher and higher. And the worries are how much of the AI ecosystem is being, if you like, artificially inflated by NVIDIA's kind of financing of their own ecosystem.
Okay, and so all of this sets us up for an earnings season still to fully play out from the big hyperscalers in the United States, Neil, in a very nervous fashion, doesn't it? We're concerned about circular financing around NVIDIA and the AI space. We're concerned about Chinese competition, just how much of a build-out do we want to see from these chip companies? And then we're waiting for at least 4 really big corporate earnings from the tech space this week.
We are indeed, and I think the kind of the litmus test last week was the fact that Alphabet delivered their first ever quarter since going public of negative free cash flow. So what are we going to hear from the other tech giants this week? And as you mentioned at the top of the hour, regarding sort of the increasing cost of the debt within the hyperscaler sector. So we want to see where the free cash flow trends play out. And then whether any of those big tech firms will actually blink first and slow the pace of CapEx. That's not something that we necessarily know just yet, but it's certainly something to watch for this week. Meanwhile, of course, there is another big tech company, Apple, who are not investing hundreds of billions of dollars into the AI race. They're probably waiting to see who wins out, and then we'll sign a deal later on down the line, I think.
Okay, and we get earnings from Apple as well, don't we, this week? Neil, thank you very much. Thanks for the update. Bloomberg Senior Strategist Neil Campling putting together all of the themes that are weighing on sentiment around technology. Let's talk now to Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. Very good to see you, Laura. Thanks for coming in. How concerned are you then about the tech dynamics? Do we set aside what we see on the Kospi and say that's a very different market, it's very volatile, it's very influenced by just 2 companies, and they have a fairly volatile track record recently? Do we set that aside as being different, or are you overall concerned about what we see in the tech landscape?
So there are idiosyncratic factors that are driving the Korean stock market in particular, most notably the ample leverage in the system. And yes, we are seeing a high degree of correlation with the U.S. NASDAQ, but I think at this juncture, we're not overly concerned about drawdowns in the tech space, and that's largely because of the earnings backdrop does remain exceptionally robust. There's questions around the return on investment from a lot of this CapEx spend, but we're not yet seeing signs of cracks there. And even if we look at margin expansion, really it's being driven by tech. So not any meaningful concerns. The key risk, I think, to watch for is when we see that first hyperscaler signal they're going to pull back on CapEx. I think that's when we could start to see some of this momentum really start to falter.
Yeah, it's interesting, isn't it? As we look ahead to so many earnings reports from these hyperscalers, Laura, you're pointing to the CapEx number, which I'm sure is where everybody is focused. But it's hard to know how the market is going to receive these CapEx numbers, because on the one hand, if you give a big number, does that express confidence? But also then, does that make people nervous about how much you're spending and how quickly? So is there kind of a Goldilocks hope when it comes to CapEx and hyperscalers? I don't know how they get it right this earnings season.
Well, and it's a key question for investors. You know, how much patience do they have before they start to see real meaningful returns on some of this this investment. So far, investors seem to be continuing to want to bet on these big AI ambitions, and I think that's going to continue to dominate. If we take a step back, though, and look at valuations, we are seeing valuations come off their June peaks, but still well above the 5-year, 10-year averages, looking at that S&P 500. So I don't think we're going to see these AI ambitions really drive more multiples expansion. It's really going to come from that earnings backdrop. And because tech continues to show such robust earnings, we think that's going to continue to drive the market higher, albeit we're going to see these bouts of volatility, particularly in August when we're going to see lighter liquidity.
And we'll think more about the European earnings season in just a moment. But I wonder how the central bank narrative then rubs up against the tech story, because do we think that the tech narrative is robust enough to withstand higher interest rates? And will they come from the Fed? Even as soon as this week, Laura, what's your thinking?
Well, there's two great questions in there. I think on the one hand, the hyperscalers and the amount that they're tapping into the debt capital markets in particular at the longer date of the curve, that's actually adding to this higher for longer yield backdrop. So that does add a little bit of a conundrum, let's say, for the Fed. But I think the Fed is going to be really the key event risk of the week. And that's because very unusually, markets are pricing in, about a third chance that they could hike. That's double where they were a week ago. And that's very unusual. If we look over the past decade or so, the Fed has well telegraphed what the moves could be. And so I think this is investors having to grapple with this new Warsh regime of no Fed guidance. So I really am watching for that rate decision tomorrow.
Yes, and so 30-40% expectation that we get a hike as soon as this week. As you say, we don't normally go in with such sort of divided opinion, but this is by design, isn't it? The Fed chair wants us to think more carefully about the data we receive and make our own judgments about whether rates will go higher. Do you think then that we're going to end up with higher rates? How many hikes do we get this year, Laura?
Oh, that's a great question. It's less about when, but more about, it's less about if, but more about when. But I still think at this case, if the Fed is data dependent, like they're saying they are, the data since the last meeting, well, we've had softer than expected inflation. We've had a weaker payrolls print with that June around 57,000 for the headline. So the data itself doesn't suggest the Fed needs to hike in the near term. But that being said, we do have oil price volatility that's come back into play. That can lead to higher core inflation. And as well, if we look at the June meeting, just the amount of Fed members that were quite hawkish, anticipating anywhere from 1 to 3 hikes this year. So I think we're going to see, greater dissent. I think we're going to see, more speculation that the Fed could potentially hike rates. But if they do go tomorrow, markets are likely to extrapolate that even further, and I don't think the Fed is at that juncture where they want to do that because the data doesn't support it. So I think on pause for now, and we're still leaning against the need for a hike this year.
Okay, Laura, thanks very much. Stay with us. In fact, we'll get your thoughts on the earnings season in just a moment. Laura Cooper from Nuveen. Now, Barclays equities traders posted their best second quarter haul in 4 years, driving an earnings beat and an upgrade to the British Bank's annual outlook. But that hasn't been enough to impress investors. Shares falling in early trade. CEO CS Venkatakrishnan told us he remains optimistic about the outlook.
I'm absolutely pleased with the set of numbers we've published today. Our top line income of £8.1 billion is up over £1 billion on the same number last year. Profits of £3.3 billion are up 30% over the previous year. And the investment bank, as you say, has done extremely well, including my colleagues on the equity trading floor behind me. Equities are now 30% of Barclays. And remember, this was the house that fixed income built. And so the diversification we're seeing in the business, the strength we're seeing in our business is something that we're truly happy about.
CS Venkatakrishnan there. Bloomberg's Charlie Wells has been looking at all of the details here that we've got from Barclays this morning. Charlie, good morning. So what does the share price reaction then tell us about perhaps the expectations going into this print? Is that what they've become a victim of this morning?
Well, Anna, that's a very good question, because this red behind me really is one of the key puzzles of the market this morning. Barclays reporting a really solid set of results. They beat on a number of fronts. They beat on equities. They beat on investment banking. And what we're really picking up on so far, if we flip and take a look at some of the misses here, that really seems to be what a lot of traders are focusing in on here. FIC in particular, right? You can see a miss there. Not a huge miss, but one that the market seems to be paying attention to. You see softness in that U.S. consumer revenue as well. And again, some difficulties here on operating expenses. So again, a solid set of results. They were in line with the trend that we've seen at a lot of global investment banks, but the market this morning not liking what it's seeing.
Yeah, so the market selling this stock. How do these numbers then from Barclays compare to those that we saw on Wall Street? Because inevitably, those are the kind of comparisons that get made, certainly around some parts of the business.
Well, Anna, that's one of these relativity issues, right? So even where we see beats, you can see that we're just not getting the same growth that we see in some of these American giants, right? So let's think about equities trading. This has been one of the key areas that traders have really been focusing on, analysts have been talking about, and you see in that second quarter, you see year-on-year growth at Barclays up 45%. That's a great figure, but not so much when you compare to the likes of, say, JP Morgan, where we see a growth year-on-year of nearly 86%. So again, this is where Barclays beat. Let's flip and take a look at where they missed expectations, because what we see is in that FIC number, you saw a little bit of growth, right? You saw a little bit of growth in FIC at Barclays, up 1.4%. That still missed expectations. Let's look at some of these other areas. Let's look at Goldman, up nearly a third there in that FIC space. So these comparables are different too. You're not just getting these misses. When you compare some of the beats and some of the misses to the American counterparts, you get difficulties there. But let's just zoom out, right? Let's keep this in context. A lot of this movement is intraday. But if you take a look at the Barclays share price over the course of this year, we're up. We're up significantly, right? And we're up even compared to some, well, at least we were until today, some American competitors. So look, intraday, this is difficult, but if you look big picture, you still see Barclays in a prime position.
Charlie, thanks very much. Bloomberg's Charlie Wells with the latest on Barclays. Let's get back to Laura Cooper from Nuveen. Think about the earnings stories more broadly than just the tech space. We've talked about the tech sector already a little bit, Laura. Here in Europe, we have a standout story, really, by today's standards, because European stocks are flat. And all of that in the context of real tech selling, and the earnings stories are, in some cases, not in the case of Barclays, but in some cases are supporting stocks here. Are you looking to lean into some of the personal care companies, the more defensive companies, at a time where we're nervous about tech?
Well, I think Europe has been a really surprising story so far this year in terms of its resilience, despite everything that's being thrown at it, from the geopolitics to the energy crisis. And yes, I think there are pockets of opportunity in Europe. One area, as you alluded to, is around energy. We're seeing exceptionally strong earnings, and that is proving to be more of that geopolitical hedge. But other pockets, including banks, despite some idiosyncratic earnings stories, because valuations are relatively attractive. And there is some degree of AI exposure in Europe as well that can benefit in terms of looking at metals and miners, because the copper dynamic, we're quite bullish on copper. That's going to have feed through there. So I think there are opportunities, and we're seeing that actually translate in terms of broadening in the European earnings story.
Yes, it's interesting. You can see how companies in the basic metal space might benefit from AI. We keep asking CEOs to give us a sense of the return on investments in AI, and we're not getting a huge number of answers just yet, which is interesting in itself. You mentioned the banking sector. You do think it's cheap then, I guess. And what is it that you see that will change the cheapness on banks? What's going to drive a re-rating of this sector?
That's a great question. I mean, if we start to see signs of the European economy come under pressure, perhaps the resiliency of the consumer could start to be challenged. We'll start to see more loan loss provisions come through. But that's not our base case at this stage. We are seeing already leading economic gauges in terms of PMI have an upturn more recently. We expect the European economy to have a more pronounced recovery next year on the back of fiscal stimulus. So I think at this stage, the valuation story overlaid with the growth dynamics is still quite compelling.
Yeah, and in that context, in the European context, we have a central bank meeting this week. That's the Bank of England. You're expecting a cautiously hawkish message coming through there. Is that going to be the theme of the week then?
And I think that is going to be the key theme, in the sense that, you know, policymakers don't want to be overly hawkish because the data doesn't necessarily support that, with both inflation and the labor market deteriorating at the margin in the UK and the US. As well, they're also not going to want to out-dove the market or be, too dovish, because we are still dealing with geopolitics, renewed oil volatility, so the energy price risk still remains. So it's kind of threading this needle, I would say, for them. And so, yes, I think cautiously hawkish is the way to describe it.
Okay, Laura, thanks very much. Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. Coming up on the program, Ukraine's president heads to a meeting with President Trump in Washington after securing jamming technology from the UK. Details next. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back. Now, President Trump says that the US and Iran are engaged in diplomatic talks to end the Middle East conflict, even as Tehran says that no formal negotiations are taking place. But President Trump also warned the two sides would return to fighting if negotiations did not result in a deal.
They want to meet, and we're meeting. We'll see what happens. There's a chance we can make a deal. Without what we did, they wouldn't even be talking to us. They requested a meeting through their surrogates and directly. And we're meeting, and, you know, good things can happen, I guess.
Let's get more details with Bloomberg Horizon's Middle East and Africa anchor Abir Abu Omar. Abir, how realistic is a deal then between the US and Iran? At the very basic level, they have differing accounts of whether they're even talking to each other.
Good morning, Anna. Yeah, you're exactly right. I mean, you heard the back and forth in the president's own remarks just there, saying that a deal is possible, but then if it does not happen, then the United States will go back to hitting Iran. Now, this follows a halt in attacks by both the United States and Iran. This is after 13 consecutive nights of strikes by the United States on targets in Iran. All of a sudden, on Friday, the U.S. stopped attacking those targets without giving any explanation. Iran later on Sunday saying that it will suspend its own attacks as a result of the U.S. halt. But when it comes to actually reaching a conclusion or reaching a deal, as President Trump had suggested, we just do not have enough clarity yet, Anna. There's no sign to indicate that there are any substantive negotiations happening between the two. President Trump did say that Iran did reach out directly and through surrogates to the United States to have conversations. Iran says through the foreign ministry that while it could send messages through mediators and delegates, there's no concrete conversations happening at the moment. And so this is what we're waiting to see, whether actual negotiations similar to the ones that have taken place after the MOU was signed in Switzerland will take place over the course of the week or over the next few days, really.
And of course, from an energy market perspective, oil continues to drop. $85 now the handle on Brent. We understand that Iran and Oman are looking to reach an agreement to restart shipping through the Strait of Hormuz. What progress is being made there?
Yeah, Brent seems to drop by the hour every time we speak. It's a little bit lower, Anna. And so what we know, and this is a Bloomberg scoop that was reported earlier, is that Iran and Oman held talks to restart movement through the Strait of Hormuz. Now, we don't have a lot of clarity still about what that mechanism will look like. We have, from historic sort of evidence, stuff to suggest to us that Iran and Oman were developing a mechanism to start shipping, to start charging fees for ships that are moving through the Strait of Hormuz. We don't know if those discussions were the ones that were taking place. But look, both the United States and Iran need shipping to start making its way through the Strait of Hormuz. Yet again, as of now, ships are pretty much paralyzed because while the United States had stopped attacking Iran, it maintains its naval blockade on Iranian ports. And then Iran is also threatening all ships that are not sticking to the routes that it had laid out. So you're seeing traffic at a standstill pretty much. Very little ships are making their way through. And then parallel to all of this, on the other side of the peninsula, you have a risk at the Red Sea now, which Saudi Arabia had resorted to throughout the course of the war, really, because of the shutdown in the Strait of Hormuz. So you're seeing the parallel war or the parallel aggression between the Yemen Houthis and Saudi Arabia taking place, putting further risk on the Red Sea, on the Bab el-Mandab Strait. And so that is a risk that has emerged over the past couple of weeks or so. And so there's a distinction to be made here, Anna, between what oil markets are interpreting and the drop that we saw over the past 3 days in Brent crude prices, and between what is actually happening on the ground, and that is a paralyzed movement or a semi-paralyzed movement in ships and tankers.
Abir. Thank you very much. Abir Abu Omar, Bloomberg Horizons Middle East and Africa anchor. Sticking with geopolitics, the UK has agreed to share technology with Ukraine that can jam Russian air defense systems. The agreement to share the so-called Stone Cloak system came as Ukrainian President Volodymyr Zelensky became the first foreign leader to meet with the new British Prime Minister, Andy Burnham. Zelensky is now in the United States and will meet President Trump later today. Let's get more details with Greg Sullivan, who joins us now. Greg, good morning. So President Zelensky had a tough time at home. What does he need to bring back from these trips? Of course, there's been he's been having to deal with a lot of changes in his cabinet, making a lot of changes in his cabinet. What does he need to? What does success look like from this international visits?
These are both very important visits for Zelensky, and he can't come home empty-handed. And he won't, as you said, already securing the technology to jam air defenses from the UK, this so-called Stone Cloak, which will help his own drones make it through air defenses as they continue a campaign of long-range strikes within Russia aimed at bringing the cost of the war home to ordinary Russians and increasing the pressure on Vladimir Putin. But more immediately, and especially in Washington, he'll be seeking to bolster his own air defenses. Of course, Trump said that he agreed to allow Zelensky and Ukraine to domestically produce the Patriot anti-missile systems at home. However, that will take a while to ramp up. So while they will discuss next steps for that system and domestically producing them, they also need to discuss how to bolster, how to fill in the gap for Ukrainian air defenses amid Russia's own airstrikes, which are turning increasingly deadly amid a deficit of these interceptors. So that will be top of Zelensky's agenda. He'll also look to discuss sanctions pressure on Russia as Washington looks to consider a new package of sanctions very soon. So he'll want to discuss that with President Trump. And again, all of it aimed at trying to increase the pressure on Putin to come to the table.
Yes, Greg, so it's about sanctions. It's not about peace deals, but I suppose they're trying to get towards a peace deal. How elusive is that proving to be?
Well, it looks pretty elusive from where we sit right now. Now, President Volodymyr Zelensky did say that last week he talked to U.S. envoys Steve Witkoff and Jared Kushner, and that they had a productive discussion about restarting diplomacy. But at the current moment, there are no signs that talks look ready to start. President Vladimir Putin has stuck to maximalist demands, including to gain territory that he does not control militarily. He has not backed away from those demands. He's even rejected an open call from Zelensky to meet and negotiate an end to the war. There are also signs that the Kremlin has hardened its position, feeling that perhaps potentially some understandings that were reached with President Trump at the Alaska meeting last year have potentially collapsed. So potentially hardening that position, it does not look like there's any momentum towards restarting the talks. They've been stalled since February due to Washington's focus on the Iran war. So.
Greg, thanks so much. Thanks for the update. Bloomberg's Greg Sullivan joining us there with an update on Ukraine. Coming up, we will discuss the outlook for deal-making in Europe as the continent's companies attract renewed interest from investors. What does the M&A picture look like in Europe? That conversation coming up shortly. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. Welcome to The Pulse. I'm Anna Edwards in London, and these are your top stories. The global chip rout deepens on AI spending fears. Slumps in Samsung and SK Hynix point to cracks in the memory chip boom. Barclays shares slide the most in more than a year, despite the UK lenders, equities traders and investment bankers beating estimates. Plus, oil and gas fall further as President Trump says there's a good chance of a deal with Iran, but Tehran denies formal talks are even taking place. Let's talk about deals. Deals targeting European companies are on course to top $1 trillion this year, recovering from a dip following the Iran war. European listed companies are commanding average premiums of 24% from buyers, a figure well above the average for the last decade. Let's discuss that, the deals outlook, with Anna Scotland, who is co-head of EMEA Investment Banking and EMEA head of the Financial and Strategic Investors Group at Goldman Sachs. Anna, nice to have you with us. Thank you for being here on The Pulse. So what is driving this renewed interest in M&A, do you think, in Europe?
What I would say is, and I was here in November last year, and we had predicted that we would see a resurgence in corporate M&A, and that has really played out this in the first 6 months of the year. if you look at the 20 largest deals, which we basically had 20 deals above 10 billion, 15 of those are corporate deals. And these are deals that some of them we've been waiting for some time. You know, if you think about the TK elevator sale to Kone, that was sort of expected maybe last time around when Advent and Cement bought the business, but it happened now. So I think, you know, it's sort of played out. And I think it's really this volatility which paradoxically is actually driving more decisive deal making. Not making a decision and not going ahead, you know, in this uncertainty is probably a decision as well. So we are seeing more confidence and active forward-leaning stance than we've seen in a long time.
So would you say capital markets activity is continuing despite the sort of volatile geopolitical landscape? Is that what we're seeing? Are we just more accustomed to a background level of volatility that we just have to accept as a new normal and get on with deals regardless?
Yeah, I think that's right. I think that's right, combined with the fact that you have these sort of once in a generation, several generations maybe, change in technology, underlying change in technology around AI. And then you have geopolitical, obviously, volatility, but also, I would say, corporates are sort of realizing that they need to act. Corporate simplification has been a theme for some time. We are continuing to see that. For example, you know, the Volkswagen sale of Air-Valence to Bain.
Yes, I mean, we've talked a lot about private equity over recent years and how they've, in some cases, not been able to offload companies that they've wanted to either bring to market or to sell on. Is that going to get easier? Is it already getting easier? What does it mean for PE exits, the fact that we're seeing this activity?
Yeah, I would say this. If you take a step back and just look at the overall M&A market, M&A markets in volumes is up like 48–50% almost. Europe is actually up 90% because we've seen a lot of, you know, the corporate deals, as I've mentioned. If you look at entries by private equity, that's also up. But it is true that, you know, maybe sponsor M&A was a little bit slower than we hoped for in the first quarter. We've seen a sequential uptick in Europe in Q2. And we believe that that's going to continue. Now, it is this sort of different kind of deal making, you know, selling into corporates, taking stock in exchange for, instead of cash, for example. We're seeing continuation vehicles. We're seeing minority stake monetization. So the deal making is more varied. I would point out, though, that we've seen more entries and more deployment than, you know, last year. So that's really encouraging.
And you mentioned technology and how we have such a, you know, changing landscape when it comes to technology. Is that proving to be a catalyst for M&A within Europe?
Sure.
Yeah, trying to get hold of the right technology quickly.
Yeah, for sure. And by the way, if you don't do it quickly, I think we just put out this report talking about the sort of volatility paradox and also another one around AI and how it's driving deal making. If you look at the industries which have been active in Europe this year, it's industrials and business services. Last year, it was TMT. So it's interesting to see how that AI technology catalyst, I would call it, is driving M&A in other sectors than strictly tech.
Yeah.
And we expect that to continue.
And how's all of this being echoed in the IPO space, in the ability of companies to come to market and to raise funds? We've talked about successes this year, but we've also had stumbles, some from the defense sector, you know, spring to my mind.
Yeah.
So what does the landscape look like for IPOs?
Yeah, listen, going public is, you know, it's a start of a journey, I often say. And, you know, I worked on many IPOs over my career, and, you know, it's rare that you see a sort of straight line, particularly in this uncertain geopolitical volatility, etc. What I would say, though, capital markets are open. Capital markets want to fund growth. And we, you know, expect the best companies to be able to come to market. Now, if you have an event which happens exactly around your transaction, it's probably not the most prudent thing to go because you do want to deliver on returns for investors from day one. So I would say, yes, capital markets are open. We expect to see continued IPO activity. But it's not going to be a straight line. It never is.
Yeah, never a straight line. The AI theme has been so dominant in the US and Asia, certainly, less so in Europe, but there are opportunities within the AI space in Europe. They just look a bit different, it seems. That's what a lot of people are telling us. So how does that, the AI landscape impact on Europe? Is there less crowding out of other themes in Europe than maybe is happening in the US and Asia?
Yeah, Listen, first of all, I'm super excited about the opportunity for AI and technology broadly for European companies. We have a very, very strong base of highly performing industrial companies. I mentioned industrials being one of the most active sectors in M&A this year. I think that's going to continue. Industrial tech, European companies are optimally placed to take advantage of that. So that's an exciting theme. Business services, financial services. Listen, I think in healthcare, I mean, I could go on, right? Like, I think what we saw being mainly a tech-based activity, maybe in 24 and 25, has already spread to other industries. And I think it's going to be a catalyst for M&A.
And if we want to get excited about that, we keep asking the CEOs about return on investment, from AI spending. And we don't always get a lot of detail on that front. And it's quite difficult. It's quite the sort of costs and benefits seem quite dispersed around the P&L. So difficult to say exactly what it's delivering. Do you see the evidence you need? Are the clients you talk to really confident that they're getting what they need from their investment in AI?
Maybe a couple of points. First of all, taking a step back, it's called a frontier technology, a generational technology, for a reason. This is going to play out over many, many years, even decades. And therefore, I understand our clients who do not want to necessarily sort of put hard numbers up front today. It would probably be a mistake to do so because it's going to play out. So what are they doing? They're identifying areas where they're going to see the benefits. We do so ourselves, be it in client engagement, be it in sort of these work streams that we have, work processes that we have identified. So I understand. I wouldn't say it's a reluctance to commit to numbers. It's being strategic with this technology. And that, I think, is the right thing to be.
And this boom, if we can call it that we're seeing in M&A and this corporate activity, does it withstand higher rates? Do you think we're going to end up in a position with higher rates than, Anna, if we get, the Fed is in focus this week, the Bank of England, the BOJ, but we've seen a hold from the ECB, of course. But are you expecting higher rates, and will that disturb what we're seeing?
Yeah, listen, financing markets are super conducive. Like, they are there to finance both strategic M&A, this CapEx wave we're seeing. Rates may move, but I just don't see that putting a lid on this activity because it's strategic, it's multi-decade, and it's exciting.
Okay, Anna, thank you very much. Thanks for bringing us the excitement. Anna Skoglund, co-head of EMEA Investment Banking and EMEA head of the Financial and Strategic Investors Group at Goldman Sachs. Now, Barclays shares are slumping this morning despite an earnings beat, as results showed its US consumer banking and investment bank growth there lagging larger rivals on Wall Street. We spoke to the British lender's CEO about the results.
I'm absolutely pleased with the set of numbers we've published today. Our top line income of £8.1 billion is up over £1 billion on the same number last year. Profits of £3.3 billion are up 30% over the previous year. And the investment bank, as you say, has done extremely well, including my colleagues on the equity trading floor behind me. Equities are now 30% of Barclays. And remember, this was the house that fixed income built. And so the diversification we're seeing in the business, the strength we're seeing in our business is something that we're truly happy about. And to your question, we are doing this in a very disciplined way, with disciplined capital, disciplined cost control. And the revenues keep going up, the returns keep going up. And we're doing it on a fixed capital base and really sweating it. And our capital efficiency is much higher than we thought it would have been at this time. So I'm pleased with the numbers all around. I'm very, very happy with the progress in fixed income, particularly in securitized products, which is a business we've built from nowhere to being high ranking on Wall Street. Our credit businesses are very high ranking. Our depth with our clients keeps increasing. One of the statistics we said 2.5 years ago was with our top 100 clients, we wanted to be top 5 with 70 of them. We're now at 65 in the middle of this year. So that's great. And the UK businesses are producing over 20% ROTE. The bank itself has produced 16.1% ROTE in the first quarter, in the second quarter, and 14.8% for the full year. So we're reaffirming our guidance very confidently for both this year and for 2028, and as you said, we've upgraded our income. The UK needs more growth and more productivity, and I think the government and both the Chancellor and the Prime Minister recognize that, and they're going to build on the foundations that their own party has created over the last couple of years, deepening the involvement of the leading UK firms and industries in the growth of the country. They say growth in every postcode, and I cannot be more supportive of that. I think there's been continued uncertainty in the markets. You spoke about AI. We've seen both a run-up in technology stocks and technology-related stocks, and now some volatility. The crisis in the Middle East continues. The crisis in Russia and Ukraine continue. The UK economy, the US economy have been robust. Employment has been strong. Credit conditions are strong. But they're facing a kind of uncertainty at a global level that's continuing and persistent and not been seen for a while. So I have to worry about that. You know, and we protect ourselves by running good businesses, by being well capitalized. You know, our CET1 ratio is at 14.3%. So I'm worried, but we try to run a safe bank.
The Barclays CEO, C.S. Venkatakrishnan there. Moving to UK politics now, Labour lawmakers have warned Prime Minister Andy Burnham that he will lose the support of his party if he approaches welfare reform with a focus on punitive cuts. The pressure comes as Burnham prepares to set out plans to boost education and employment opportunities for young people. In other news, wildfires in France and Spain that forced the evacuation of more than 300,000 people have stabilised. But the start of summer's fourth heat wave means little respite for emergency services. During a visit to Bordeaux, the French president underlined just how unusual the circumstances are.
Firefighters from across France are on the ground with around 20 firefighting task forces, unprecedented aerial resources, and more than 1,500 military personnel deployed. We are facing events we have never experienced before.
Meanwhile, the Spanish government says the situation remains very, very complex. Let's bring in Bloomberg's Caroline Conan, who's actually in Paris and can bring us an update on everything that's been developing over the past 24 hours or so. Caroline, what's the extent of the damage then that we're looking at, and how stable is the situation now?
It seems like in both Spain and France, the situation has somehow stabilized overnight, meaning the fires have not spread much further. But that doesn't mean the fires have been fixed. In fact, firefighters in France are saying that today they have to fix about 100 miles of this wall of fire near the Bassin d'Arcachon in order to really circle the fire. It seems, though, that in the short term, the metropolis of Bordeaux is not threatened anymore. However, we are looking carefully at the next few hours because as soon as tonight, another heat wave is coming in both France and Spain, with temperatures rising to as much as 40 degrees Celsius and strong winds, so the situation could turn bad again.
Yes, indeed, and certainly something that the politicians will be very aware of. The Spanish Prime Minister saying that summers like this are the new normal, Caroline. President Macron saying that this is a situation that France hasn't seen before. Are these fires then, are they likely to provoke more thought, more action, a new course, a new plan for dealing with climate?
It is possible, and in fact, if you look at the cost of these fires, we have the Spanish Prime Minister Sanchez doing a press conference later at midday, and this situation in Spain is slightly different because fires have been considered as emergencies. This means that there will be some kind of emergency funds opening the door to financial aid in those affected in those areas around Madrid. The situation is different in France because fires are not considered, they are not included in what we call natural disasters, natural catastrophes in France, such as storms or floods, for example. That means that the insurance companies, at least in France, are going to bear most of the cost. The Finance Minister, Roland Lescure, was saying yesterday that the insurers will cover about 3 weeks of those people who have been evacuated and had to relocate. But of course, you have to look at the businesses. We're still in the middle of the tourist season. It's really the middle of summer in those regions, especially around the Cap Ferret Peninsula, where people have not been able to come back. Restaurants, hotels are still closed. There's no one in the streets. It looks like a dead zone, really. And these areas have about 8,000 people in winter, but they have more more than 100,000 people in the summer. So far, about 13,000 businesses have been affected, and about 130,000 people are out of work, according to the Finance Ministry. There's going to be a crisis meeting at the Finance Ministry in Bercy on Thursday in order to give some answers, but clearly there will be a lot of debate about a long-term impact of these wildfires that are raging every summer. In France, 115,000 hectares, that's the worst in 2 decades. In Spain, it is also the worst since World War II. So clearly, there will be some questions about how governments can include these fires into natural disasters, natural catastrophe schemes. And we'll be talking also to the AXA CEO on Friday, one of the biggest insurers in France. That's going to be very interesting.
Caroline, thank you very much. Bloomberg's Caroline Conan setting out the details there of those wildfires. Let's pivot to some other news. This out of Japan. Japan's meteorological agency says an earthquake with an estimated magnitude of 7.1 has hit the country's southwest. The runway at Kumamoto Airport in Kyushu is closed. It's not known when it will reopen. Train services and some phone networks have also been affected. Kyodo is reporting that TSMC evacuated staff from its plant in Kumamoto. TSMC, Sony Group and Tokyo Electron also have plants in the region. Japan's chief cabinet secretary says no abnormalities have been observed at nuclear power plants in Japan. 9:47 here in London. Coming up on the programme, Mercedes shares. They're gaining today despite a slump in China, and we'll get further details on that ahead. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
One is cost and freight, the other is also chip cost. So there is materials cost inflation that we see coming through. There are two drivers. Those are the main drivers, and those we need to mitigate. So we have accounted for a rising inflation, including these and also including prices for those. So that actually is what we are offsetting and what we planned for. We also, if you look to when we guided at the beginning of the year, we also built in a margin, a buffer for unforeseen external developments.
That was the Philips CEO, Roy Jacobs, speaking to us earlier this morning. Shares are under pressure this morning after that warning of rising cost pressures, with the adjusted earnings margin in its key diagnostics and treatment unit falling in the second quarter. So that's the Philips story. Let's move on to Mercedes, where shares are climbing this morning after the car maker reported resilient profits that beat expectations. That's even as deliveries fell due to a slump in China. Let's get more now with Elizabeth Behrman, who leads Bloomberg's coverage of EMEA Autos. Elizabeth, good to speak to you this morning. So investors appear to have welcomed these results despite the challenges in the Chinese market for this business. What's the story?
Yeah, I mean, to be clear, Mercedes' profits still slid quite a bit, more than 1 percentage point to about 4% on the all-important car-making unit. And what Mercedes was able to do, as we've learned this morning, is the cost-cutting efforts that they've been putting in are resulting in some measures to underpin the business. Development spending has also been lower, and that's due to a lot of the big spending requirements on the electric vehicle transformation sort of having seen its peak. At the same time, the China challenge absolutely remains for Mercedes. In China, they sell a lot of the S-Class sedans and the related Maybach sedans that are key to the profits for the company.
Yes, and I saw that sales of those were related to the property sector, which has been an area that's been struggling in China. So what's the outlook for the second half of the year for the business?
Yeah, the company put a lot of emphasis on the second half of the year, where they expect to get lots of benefits from sales of new products. The company is working on the rollout of some 40 refreshed or new models. So that's good news in terms of garnering sales momentum. What's going to be really interesting is how some of these products will do in China. One of them that we'll be paying a lot of attention to is the electric GLC SUV. It's generally one of Mercedes' best-selling models, and that's going to go on sale in China within a few weeks. And it's in that area of SUVs that are premium, but sort of mid-range premium, where a lot of competition is present in China from the likes of BYD, from XPeng, and what the issue there is that the competitors are able to offer these cars at prices that outsiders, Mercedes, BMW, Audi, are really struggling to match.
Elizabeth, thanks very much. Bloomberg's Elizabeth Behrman with the latest there on Mercedes. On to LVMH, where the key fashion and leather goods unit, home to Louis Vuitton and Dior, barely eked out sales growth last quarter as the conflict in the Middle East deterred wealthy shoppers. Organic sales at the division, the group's most profitable unit, rose 1%, missing the 1.52% estimate of analysts surveyed by Bloomberg. Let's bring in Bloomberg's Angelina Rascouet, who covers luxury for us from Paris. Angelina, what stood out then most to you from these results?
Hi there, Anna. I mean, indeed, it was on the positive side. The key fashion and leather goods units returned to growth the first time in 2 years. However, as you said, it was a slight miss on the growth number. It was led by, Christian Dior did slightly better than the unit average, so that's relatively positive because they have a new designer. He's put out new collections, and there were fears that perhaps it wasn't doing so well, especially because they're facing competition from Chanel, who also has a new designer. So Dior did slightly better than the unit. Louis Vuitton was in line. So that's on the positive side. But I think there's still question marks, and that's potentially why the stock reacted negatively this morning. When it comes to growth in China, I mean, we're still not seeing strong recovery sign. And the other unit that actually did positive was the watches and jewelry unit, led by the jewelry unit. So that means Tiffany and Bulgari, and that's something we had seen as well with Richemont. Richemont, its mega brands, Cartier and Van Cleef did really well, and that probably means that in times of uncertainty, consumers are keener to spend on gold products rather than perhaps leather goods and accessories.
And Angelina, what are you looking for from Kering and Hermes? These results still to be reported.
Indeed, so Kering will be tonight. Kering, I mean, it's in The biggest brand is Gucci. Gucci, we know it's been in turnaround mode, so we are expecting quarterly sales to be negative, but slightly less negative than in the first quarter of this year. The company is in a turnaround mode, and I guess investors probably have to be patient. We know that the market is expecting the Kering jewelry unit to be positive, just like the rest of the sector. And tomorrow we have Hermès, and the big question mark regarding Hermès is whether they have to manage the difficult decisions of whether to keep growing their leather goods units. So that's the one that includes, the Birkin bags, the Kelly bags. But at the same time, how do you preserve brand equity if you keep growing that unit?
Angelina. Yeah, absolutely. Thank you very much. The perennial question in luxury goods, Angelina Rascouret, with the latest on the luxury sector. Up next, Bloomberg Brief will continue to count you down to the start of the US trading day ahead. European stocks making modest gains this morning on the back of earnings. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see, the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent. But when she's here, she can have her app open, and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The chip slump gathering steam, stock futures dipping on AI angst. Deal optimism, oil extends its decline as Iran and Oman negotiate restarting shipping traffic in the Strait of Hormuz. And more trade tensions. Beijing warns Washington against sanctioning Chinese AI firms. Germany, meanwhile, maps China's trade weaknesses. Ructions once again in South Korea as chip makers plummet for another day. Let's get the details of the Asia session now from Winnie Su in Hong Kong. Winnie.
Good morning, Bonnie. Well, a very brutal sell-off in the chip sector in Asia today, with a gauge of Asia chip makers seeing its worst decline, intraday decline in more than a year. Now, a couple of different factors in play. First of all, we have the rising Chinese competition after that report of a Chinese state-backed company mass-producing such DUV machines, which are essential for these AI chip making, and we see that pressuring the global peers around the region. Now, following that, we also have those concerns around NVIDIA's circular financing potentially inflating the underlying AI demand and valuations. And of course, not to mention, we have SK Hynix's earnings coming up tomorrow, as well as Samsung Electronics the day after. So a bit of a caution ahead of that. Now, flip the board and take a look at the broader Asian market, because we are seeing South Korea's Kospi index leading declines here, down more than 10%, and with the exchange triggered 2 circuit breakers. MSCI Asia down about 3%, and that is also headed for a technical correction. Now, when it comes to Japan, we did just hear about an hour ago that there was a very powerful earthquake that hit the Kyushu area, and that area is essential for these chip makers as they have a lot of factories there. So we are in the middle of looking at some of the impact on these factories as well.
All right, Winnie, thank you so much. An awful lot going on once again in Asia. That's Winnie Su there. Now to London for a look at Europe with Justina Lee. Justina.
Good morning, Bonnie. Now, it's a good day to be a little bit boring and also not have that much exposure to the AI trade. Now, we're seeing here the Stocks Europe 600 still calmly up 0.3%. Because, of course, today oil is down, and that is a good day in general for European assets, especially a lot of those automakers, which is why we see the DAX actually up 0.5%. Now, also kind of a good day to be kind of a lot of fixed income assets. You can see here the UK 10-year bond yield actually down 10 basis points. Now, this is noteworthy, especially because gilts are outperforming German bond yields today. And so maybe this kind of reflects the fact that markets expecting the BOE to be able to be less hawkish compared to the ECB as long as oil is kept kind of not rising further. And now we flipped the board here. An interesting story yesterday from my colleagues about how the Swiss National Bank plans to keep its key rate on hold at 0 until the end of 2027. And we can see here the Swiss franc weakening against the euro for kind of 2 days straight. And that's kind of reflecting the fact that, you know, the SNB is not kind of in a rush to raise rates at all.
Justina Lee, thank you so much. Well, as Justina said, oil prices are lower, and as you can see, Brent down another almost 3%. It's trading just about $85 a barrel now, with New York crude at $80 a barrel. So that's a far cry from where we were just literally 2 sessions ago, where we were almost $16 higher. European gas futures also coming down, still trading around 56.75 a megawatt hour. Again, that is potentially helping the mood, not helping to offset this lack of confidence or this waning of confidence in the chip trade, or specifically the US and South Korean chip trade. And to that extent, you see that we have NASDAQ 100 futures pointed lower once again. This after yesterday's sell-off, which obviously bled into Asia. And it'll be interesting to see at what point this gets stemmed and at what point buyers want to come back in again. Obviously, all of these things are still up very healthily year to date, but they have had a massive sell-off. Russell 2000 futures not moving too much. S&P futures pointed lower, but not to the same extent. If we look at yields, obviously the other major risk this week is the Fed, and a new voice out today, Citadel Securities looking for a hike, saying that it would bolster Chair Warsh's inflation-fighting credentials, as well as really just getting rid of the idea of forward guidance forever, because it would be a move that wouldn't have been telegraphed by the Federal Reserve. As you can see, we're down a couple of basis points really across the curve, more so at the front end. Healthy auctions right out as far as the 2-year, but beyond that, it seems there's really just not much appetite. A 5-year auction, which didn't really meet too much demand, and that's after all of the longer end auctions that we've seen that also suffered the same fate. Let's get to some individual market movers now. Back over to London and Chloe Melly. Chloe.
Good morning, Bonnie. As you were mentioning, we are seeing this big chip sell-off this morning in pre-market trading, with 2 things in particular weighing on that sector: those fears around China's progress in chip making, and then also those concerns around the sustainability of AI spending. And so we are seeing red across the board there. Moving on to Johnson & Johnson, which is also in a focus this morning after the company agreed to pay $5.5 billion to settle claims that some of its products cause ovarian cancer, We are seeing the shares up this morning because this removes the overhang of that litigation, which had really put pressure on the stock over the last few months. And finally, moving over to Europe, where Unilever has raised its guidance thanks to strong demand in the US and India. And this seems to confirm that the strategy of moving away from food and refocusing on personal beauty is really working out quite well and paying off for that company. And we're up about 6% this morning in London.
All right, Chloe, thank you so much. Chloe is going to be back later in the hour, and also coming up this hour, the Federal Reserve set to begin its two-day meeting. We'll discuss with Henrietta Pacmo of Allspring. Semiconductor stocks leading a heavy tech sell-off. As you heard there from Winnie, the Kospi posting its second biggest drop since 2001. SK Hynix and Samsung, of course, a large part of that, the former having plunged 47% from its all-time high in June. And that weakness bleeding into futures this morning. Bloomberg's Neil Campling joins us now. Neil, we also saw NVIDIA, CDS's spike yesterday, right? So there's very definitely a waning of confidence. Is it justified, or do investors just feel like, you know, we've had enough of the positive AI narrative and it's time to take profits here?
I think that final word you mentioned there, profits. I mean, a lot of these stocks are, in terms of like Hynix, for example, up triple-digit year to date. So it's an easier call to potentially lock in some of those profits now and wait to see what we get later this week from the hyperscaler earnings. And also, traders will remember that Samsung posted an enormous pre-profit earlier this month in terms of preliminary numbers, and the stock fell on the back of that. So I think it's a question of locking in the profits now while waiting for further direction later in the week. And as you mentioned, of course, the CDS spreads in terms of the credit market is giving those signals in terms of the tech narrative is likely reflected in some of that risk aversion for the sector.
Yeah, and also I suppose just the amount of supply in that area as well. We can't discount that that's a huge factor in that as well. Neil, why is it so difficult to get price discovery here? I mean, we've had such a massive run-up and we've had so many sell-offs now. Are investors unable to value these companies?
So the valuation argument's a really interesting question that you posed there, Bonnie, because if we look at memory in terms of the absolute price earnings multiples, they're very, very cheap. However, if they return to the kind of ideas of chips being cyclical and memory in particular being cyclical, then investors won't look at them as being on a price earnings basis. They'll look at them on a historic price book basis, and they're very elevated relative to where they were over the course of the last 20, 30 years. So I think that's a key question in terms of which valuation do we look at. And that discovery mode will take some time to play out in terms of supply, demand, the AI ecosystems, which models plan out, which ones are likely to be winners, and the free cash flow from the hyperscalers themselves, which we had that warning sign really from Alphabet's result last week, where it's been highly cash generative in the past, and this quarter they produced the first free cash flow negative quarter since going public.
So we just don't have enough information yet. Neil, thank you so much. That is Bloomberg's Neil Campling. Staying on the tensions around the US-China AI competition, Beijing setting a ceiling on new tariffs by Washington and warning against sanctioning Chinese AI companies. For more, let's bring in Bloomberg's Brendan Murray. Brendan, is this all rhetoric because the US seems to have upped its bellicose rhetoric re-trade in China in the last few weeks?
Yeah, exactly. I think what's happening here is China came out of this latest round of U.S. tariffs last week with an effective tariff rate of about 22%, and China is now saying less than 2 months before Xi and Trump were supposed to meet in the U.S. that if it goes any more above around 30%, which is where it was before the Supreme Court ruled against President Trump, then there are going to be problems. This is essentially China drawing a red line in the sand and saying, if you cross this, we're going to have a trade war again. And on top of that, we have these accusations from U.S. officials that China has taken U.S. AI technology and used it for its own company's benefit. So the trade war between the U.S. and China is still at a stable place, but this is just another signal that China is only going to take U.S. tariffs so far, and U.S. accusations of the kind of the tech theft that have been lobbed at Beijing so much before they hit back at Washington.
And then it seems that Germany has been doing some Oppo research. It's actually mapping out China's weaknesses. This is a great story. Give us some of the details.
Yeah, this is some great reporting from our colleagues out of Berlin, where there's a real economic reckoning going on. Germany has to decide, really, is it going to be a partnership with China, or is there going to be a competitive threat? And given the hits to the German auto industry, the German chemical industry, the officials in Germany are now looking at ways that they can apply leverage on China should it come to that. Remember, China weaponized its critical minerals last year. The Western world in Europe and in the U.S. took away a lot of lessons from that, and one of those is we better be able to apply some leverage in return, and that's what we're reporting today. Officials in Germany are looking at. There's no attempt here to escalate things, but it's more of a sort of defensive mechanism that it seems to be employing in case things get rough with China on the trade front.
Yeah, I mean, one would almost have to ask the question, is it too late for all of this for Germany? But we shall see. Brendan, thank you so much. Bloomberg's Brendan Murray. Now, to other top stories trending on the terminal this morning. Barclays shares are dropping the most in over a year after second quarter earnings showed it's lagging behind U.S. peers in consumer banking and investment bank growth. Barclays CEO C.S. Venkatakrishnan spoke with Bloomberg.
I'm absolutely pleased with the set of numbers we've published today. You know, our top line income of £8.1 billion is up over £1 billion on the same number last year. Profits of £3.3 billion are up 30% over the previous year. And the investment bank, as you say, has done extremely well, including my colleagues on the equity trading floor behind me. You know, equities are now 30% of Barclays. And remember, this was the house that fixed income built. And so the diversification we're seeing in the business, the strength we're seeing in our business is something that we're truly happy about.
Meanwhile, Mercedes reports robust profits in the second quarter, even as sales slumped in China. Cost cuts helped offset weaker demand. Citadel sees the Fed raising interest rates this week. The firm's head of macro strategy says that a quarter-point increase would, quote, reinforce Chair Warsh's repeated pledge to restore price stability. Coming up, Iran optimism. Iranian and Omani officials discussing to restart traffic in the Strait of Hormuz. More next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Brief, I'm Bonnie Quinn in New York. Optimism around deal talks with Iran dampening oil prices further today. Bloomberg learning that Iran and Oman are continuing discussions aimed at restarting shipping through the Strait of Hormuz. This as President Trump talks up negotiations with Iran. Joining us now from Dubai is Bloomberg's Abir Abu Omar. So, Abir, what are the options that Iran and Oman are speaking to?
Good morning, Vonnie. So our understanding is that both sides have spoken about the possibility of restarting movement in the Strait of Hormuz. Now, this is a Bloomberg scoop that was reported late last night. And essentially, all we understand is that, again, both Oman and Iran are discussing ways to restart this movement that was pretty much paralyzed over the past couple of weeks or so, especially since the U.S. started attacking Iran for 13 consecutive nights. Now, those attacks have stopped on Friday. We don't have an explanation neither from the Trump administration or anyone from the U.S. side as to why those attacks have stopped. But in return, we know that Iran said on Sunday, by the end of the week, that it will suspend its own attacks on the region and shipments in the Strait of Hormuz as a result of the U.S. stopping its attacks on cities in Iran. Now, just something to bear in mind here, Vonnie, while Oman and Iran are discussing ways to resume or to help ships resume their traffic through the strait, we understand that the movement there is pretty much paralyzed. You're seeing Brent crude on the screen at $86 on the barrel. You're seeing NY crude also a little bit lower, but there's a distinction to be made between what markets are reflecting and the optimism there, but what is also happening on the ground. On the ground, the movement in the Strait of Hormuz is still at a standstill or semi-standstill. And then you also have the parallel movement in the Red Sea. We've seen the aggression between the Yemen Houthis and Saudi Arabia pick up in recent weeks. And so you're seeing the movement there at risk. Saudi Arabia has resorted to Bab el-Mandab Strait in the Red Sea, Vonnie, throughout the course of this war, and this is now at risk. So the distinction that needs to be made between what is happening in energy prices and then what is happening on the ground is important. But what we know is that the two countries are essentially in talks for us to see a little bit more movement in the waterway that was halted or came close to a halt over the past 14 days or so.
And how much say does the U.S. have in this? As I understand it, Iran and Oman are talking about a middle passage. There may, though, be mines there, at which point they would have to be cleared or neutralized. Where does the U.S. come into all of this?
That's a very good question. And look, while the U.S. had halted its attacks against Iran, we know that it's maintained its naval blockade on the Strait of Hormuz. And so you have that situation of the double blockade yet again. This was the case at the beginning of the war. We're now seeing a resumption of that double blockade. The U.S. Threatening to attack ships that are making their way through without permission. Iran, on the other hand, also asking ships to stick to routes that it has laid out for them and asking them to essentially also seek permission in order to make their movement through. And so ships that are not sticking to those routes or are not asking for permission are at risk of being attacked by either the United States or Iran. And so you're having that situation in the Strait of Hormuz. The risk of Iran and Oman tolling the Strait of Hormuz is still very much there. So those are things that we're keeping an eye for, and the discussions that are possibly set to resume. We just don't have a lot of clarity on that, Bonnie, yet.
All right, Abir, thank you so much. Keeping us up to date there is Bloomberg's Abir Abu Omar. Coming up, a look at what else is making headlines in your front page news. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
In New York, heat waves are ravaging the United States, causing power outages and threatening data centers. PJM, America's largest power grid, warning that data centers that fail to secure enough power generation could be temporarily dropped from the grid during high demand periods. Bloomberg's Noreen Malik joins us now. Noreen, how does it work in an emergency? So JPM has announced an emergency auction to help plug a shortfall, but who gets the power from that auction? Is it the highest bidder?
Yeah, so there's two things. On a daily basis, PJM is securing power for the same day. So there's a daily auction, and then there's the emergency auction you're talking about is a longer term planning auction. And that one specifically is meant to make sure there's enough power for data centers like down the road, like 5 to 10 years down the road, depending on the timelines for when it comes online. But right now, everyone that's connected to the grid expects to get power from the grid, but data center demand growth has been so fast that PJM is like, well, when it's extreme heat and everyone's got the AC on and data centers need their own AC too, they will have to get off the grid. And data centers have on-site generation, backup generation, diesel units mainly, but increasingly natural gas, so they'll likely have to shift to that. Or in winter, we saw Google shift some of their workload from Virginia to Chicago as a way to like reduce demand there.
Yeah, I mean, can they be forced? One of the board have to bear higher capacity costs caused by the new large loads that do not bring basically their own power supply, right? Why should other customers have to pay more, and indeed prices are spiking because of data center needs?
Yeah, this is the big debate in PJM right now, and I think it's important to understand that just like a couple years or so ago, PJM had so much excess supply. They had spare power plants were shutting down because there wasn't enough demand growth, and the demand growth from data centers has been sudden. It's caught everyone by surprise. So that has been creating a lot of growing pains. They've soaked up all the excess supply, and you're exactly right. The infrastructure that's in place, the power lines, the power plants have been built and paid for by generations of like people living in that area, Americans. And so now you have these big data centers coming in. They can use up enough power as entire towns or cities. That's how big these are. And so now it's like, how do you make them pay for it? And how do you make sure the lights stay on for everyone?
Tough questions. Noreen, thank you so much for joining us today. That is Noreen Malik. Time now for your front page news. First up, the Financial Times reporting NVIDIA has signed leases worth up to $50 billion for a massive Texas data center. It's a previously undisclosed commitment that shines a new spotlight on NVIDIA's growing role in financing AI. Next up, the Wall Street Journal is reporting President Trump is turning up the heat on RFK Jr. to cut back childhood vaccines. The Journal says the president asked RFK Jr. in May to investigate the alleged connection between vaccines and autism and is frustrated Kennedy hasn't accomplished more on that issue. And finally, the Washington Post reporting the Trump administration has asked the Supreme Court to clear the way for an executive order that would place new limits on mail-in ballots for November's midterms. A divided appeals court panel upheld a federal judge's block on the order. Coming up, we're going to look ahead to the Fed decision. We'll be speaking with Henrietta Pacamont of Allspring Global Investments. This is Bloomberg.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The chip slump continues. Stock futures dipping on AI angst. Deal optimism. Oil extends its decline as Iran and Oman negotiate restarting shipping traffic through the Strait of Hormuz. And earnings season continues. Boeing, Coca-Cola, and Ford all on deck. Oil dipping then with Brent crude now firmly below $87 a barrel. Actually, we're at $85.63, $5 lower than that for WTI, and European gas futures also down by more than 3%. Seems to be more optimism today, given that there were, again, no strikes overnight. And the president was talking up the idea that there were deep negotiations going on. He mentioned that to Axios yesterday, though he didn't give details on what Futures-wise, it seems to be a chip story, once again inheriting the pessimism from the Asia session, where we saw the Kospi down nearly 11% on sell-offs in Samsung and SK Hynix. Several stories percolating from China building its own lithography-type machines to NVIDIA CDSs spiking, NVIDIA financing more than $750 billion worth of AI spend itself, and the circular financing just really causing investors to back off a little bit, and perhaps it isn't quite the time yet to get back in and start to rebuild positions. Yield-wise, it's all about the Fed, of course, and those auctions. Healthy as far as the 2-year tenor, and beyond that, well, not so healthy. We have the 2-year yield down almost 3 basis points, and the 10-year yield still above 460. That 30-year yield is coming down, though, ever so slightly, though we're still well above 510. Let's get to some individual market movers now. Here's Chloe Melly.
Good morning, Vonnie. We are seeing this chip sell-off extending in pre-market trading this morning. As you mentioned, there are worries over just how much progress China is making in advanced chip making, and also those concerns around the sustainability of AI spending and this circular financing. And so we are seeing all of those names quite firmly in the red this morning. SanDisk, Marvell, Intel, and Qualcomm very much taking a hit this morning. Moving on to Johnson & Johnson, which is up in pre-market trading after agreeing to pay $5.5 billion to settle claims that were related to ovarian cancer cases because of some of its products. And so this removes overhang on the stock litigation that had really put pressure on the shares for a while. So the removal of that is lifting Johnson & Johnson this morning. And finally, Barclays here in London is taking a bit of a hit despite some very strong equities trading. The problem there was that Wall Street banks had set the bar just so high that it was quite difficult for European investment banks to actually hit that same bar. And so we are seeing some of that disappointment there for Barclays this morning, down almost 5% in London.
All right, Chloe, thank you so much. Chloe Melly there. Markets pricing in rate hikes sooner now as we await the Fed's decision tomorrow. Joining us is Henrietta Pacmont, Fixed Income COO at Allspring Global Investments. So there's quite the non-zero chance that we'll get no hold tomorrow. In fact, we might get a hike. Henrietta, at what point will the Fed feel compelled to hike? Do we have enough data that would allow them to hike?
It's going to be really interesting to see what happens tomorrow for a variety of reasons. At this point in time, data is actually quite hard to read, right? Given the moves that we've seen, oil is easing off a little bit over the last couple of days, but you had a spike there. You've got the potential effects of El Nino that might feed in later in the year, and we're seeing strong signs on the economic side. So a number of data points that could lead to a hike. At the moment, if you look at what's priced in, we don't have a hike priced in for tomorrow, but we do have hikes priced between now and year end. In that context as well, obviously we've had feedback from the Fed Chair, Walsh, and the style that he wants to give, and less forward guidance going forwards. So it'll be really interesting to see what comes out of tomorrow.
Yeah, I just want to read a quote from Frank Flight of Citadel Securities. He's expressing what some in the market do believe. Quote, the market may once again be underestimating the extent of the hawkish shift at the Fed. A hike this week would emphatically end the forward guidance era. I suppose what that's getting to, Henrietta, is that there are other reasons potentially for hiking than just showing off your inflation-fighting credentials. Would it be enough for the Fed to hike in order to prove that, for example, the forward guidance era is over, or would it have to be just in response to the data?
So I think if there is a hike tomorrow, that would cement going forward that there will be less forward guidance, because I think that would be a surprise for the market, and I'm not entirely sure that the market will like to see a hike tomorrow. So I think that would definitely cement his credentials and what he's been saying so far.
Henrietta, these auctions that we've been seeing, fairly healthy, 3-month notes, 2-year notes, but then beyond that, investors seem to still be balking. What exactly are investors expressing here?
So I think that's fair, right? If you look at our portfolios, we're certainly focused on the sort of shorter to intermediate areas of the curve, and we're a lot more cautious on the long end. A variety of reasons for that. Obviously, it's a bit of a safety valve for the markets when they get anxious about inflation, when they get anxious about deficits, and we've also seen a fair amount of issuance there. And what's interesting is not just your sovereigns that are issuing in that space. Obviously, it's one of the areas of predilection of the hyperscalers as well. So you're getting corporate issuance in the long end. So a lot of reasons to make the technicals on the long end of the curve a little more difficult at this point in time.
We got a headline just a moment ago that Meta and BlackRock are developing a data center campus in El Paso, Texas. Curious as to what you think about the amount of volume that we're seeing basically in terms of issuance in order to fund all of these data centers, these campuses, and all of the expansion that we're seeing, Henrietta. I mean, are you at Allspring interested in any of it?
So it's big, right? The volume is huge. They're also tapping all areas of the market, which I think is really interesting. They're going to the IG market, they're going to the high yield market. You're also seeing issuance that's linked to this development in the structured product area, private markets, you name it. It really is pretty broad. Not only that, they're not just tapping the markets in dollars, but across other currencies as well. So you can see why there's a little bit of indigestion at this point in time. So this is something that we have expected. The companies have guided that they're looking to issue to fund this development. So it's not unexpected, but the volume needs to be digested. What we've seen over the last few days is quite interesting. We've had sort of spikes in yields. Look at March, look at the sort of end of May as well in that space. But it's taken a bit of an acceleration in the last few days, which makes it a lot more interesting from our perspective. So this is really what we've been expecting and hoping for, that you have a bit of volatility in spreads so that we can tap into these interesting yields. And I think our focus at this point is going to be in the primary market.
Primary market. Also, you know, we're not just concentrated on the Fed this week. We have the BOE, but also the BOJ as well. Not that we're expecting a move just yet, but are you seeing anything interesting globally that you're trying to take advantage of right now?
So from a global perspective, what we like at this point in time is the diversification aspect. We are, if you look at our multi-sector portfolios, really tapping into that so that we have a bit of a buffer there. Yes, I agree. If you look at the Bank of England, not expecting much this week. BOJ, same thing. You do have some hikes that are priced in between now and year end in both spaces there. We'll have to see what the inflation picture looks like and obviously what the growth picture looks like in Europe there as well.
Henrietta, what is your, maybe an unfair question, but your forecast for the 10-year yield towards year end?
It's been interesting to see the sort of behavior over the last few days. We touched 470 in the 10-year in the last couple of days. That's when we were still sort of seeing strikes in the Straits of Hormuz. We've sort of come off the boil a little bit. So we're going to have to watch what happens. I think, as I mentioned at the start, some of the data is going to be hard to read, given some of the uncertainty in the market. So I think that's going to keep the central banks on their toes, and that's going to feed into the rest of the curve as well. So I think it's going to be really quite path dependent in terms of geopolitics, in terms of also what happens given the sort of heat waves that we've seen and what impact that might have on food prices and inflation going forward. There's a lot to contend with between now and the end of the year.
So you're saying it could in fact go either way with the 10-year. It could be higher, it could be lower.
I think it's going to be a ride. We may have seen the peaks at this point in time. If we have a bit of a slowdown in terms of growth, that could be positive. If we have seen more of a peak in inflation, which is a distinct possibility, we could see less pressure on the 10-year. That being said, I think from an investor perspective, at this stage, you've got some pretty interesting yields that are on offer. particularly as we see volatility in the equity markets. So I think for investors that are interested in income, there is income in the fixed income markets at this point in time.
All right, Henrietta, thank you so much. Henrietta Backman of Allspring Global Investments. Now to other top stories trending on the terminal this morning. Germany is working to identify Chinese economic vulnerabilities if the European Union finds itself in a trade war with China. Germany says the goal is to strengthen its negotiating position, not shift its policy towards China. China has set a ceiling on new U.S. tariffs and warned Washington against sanctioning Chinese AI companies. The move comes weeks before the next meeting between President Donald Trump and Chinese leader Xi Jinping. Johnson & Johnson has agreed to pay $5.5 billion to resolve years of litigation surrounding claims that its talc products caused ovarian cancer. J&J says this would be a, quote, efficient conclusion to the lawsuit spanning 15 years. Coming up, President Trump set to meet Israeli Prime Minister Benjamin Netanyahu in Washington as Iran tops the agenda. That's next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster. You don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
They want to meet, and we're meeting. We'll see what happens. There's a chance we can make a deal. Without what we did, they wouldn't even be talking to us. They requested a meeting through their surrogates and directly. And we're meeting, and, good things can happen, I guess.
President Trump talking up talks with Tehran as Iran and Oman discuss restoring shipping lanes through the Strait of Hormuz. Joining us now from Dubai is Bloomberg's Abir Abu Omar. Are these separate talks? Is President Trump talking about the Iran-Omani talks, or is he also talking about U.S. mediators? Do we even know, Abir?
Good morning, Vonnie. That's a good question. No, we don't, is the answer. What we know, what we've reported on, is that Oman and Iran have had separate meetings, and that is to discuss restoring, as you have mentioned, the shipments through the Strait of Hormuz. Now, what we understand happened during those meetings is that the both countries are trying to open up what is called a middle passage. So, Vonnie, throughout the whole war, Iran has been asking ships to stick through the lanes that it has laid out, and that is close to the northern parts of the Strait of Hormuz or close to its borders, and ships that have gone through the southern part of the Strait of Hormuz or closer to Oman, Musandam, really have had to turn off their lights to be able to go through, or else they're at risk of getting attacked by Iran. And so we understand that the countries are trying to restore the movement through opening this waterway that has been pretty much shut throughout the course of the past 5 months or so. Now, there's no clarity on whether this is actually going to happen or not. We understand that those are talks at this stage. President Trump saying that Iran, as you just heard, has reached out directly and through surrogates. Iran, through the foreign ministry, saying actually any kind of discussion that is happening is probably messages that are going through negotiators, that are going through mediators, but no active, substantive negotiations are happening at the time being. So we're keeping an eye out on the course of those meetings and whether we're going to have actual conversations happen between Iran and the United States directly similar to the ones that have taken place after that MOU, Vonnie, was signed in Switzerland about a month or so ago. That all seems like history for the time being, because the escalation in the Middle East that has happened over the course of the past 13, 14 days, despite being halted on Friday by the United States, seem to suggest that we're seeing a period of re-escalatory movement in the war here in the region.
And Abir, President Trump meeting Benjamin Netanyahu in Washington. What's been the reaction in the region to this meeting?
Yeah, you're right, Vonnie. So far muted. What we understand is that Benjamin Netanyahu is going to attend the funeral of Lindsey Graham that is taking place. He also said that he wants to meet with President Trump to discuss many things, including Iran. He did say earlier in the week that he will ask President Trump to keep a, quote, constant watch over the nuclear program in Iran, that Iran can never attain a nuclear program. And the nuclear component, Vonnie, is not just Israel's main goal, it's also President Trump's main goal. It was laid out in the 14 concession MOU, still not being discussed because at this front and center for the time being is the Strait of Hormuz and the movement through tankers and ships there.
All right, Abir, thank you so much. Bloomberg's Abir Abu Omar. A global chip rout deepening after a heavy sell-off in Asia. Bloomberg Semiconductor Index for the region slumping and bleeding into U.S. futures too. Bloomberg's Neil Campling joins us now. The repricing continues. Neil, is this all off the back of fears that China will eat everybody else's lunch when it comes to not just, you know, AI, but the stuff that goes into it, the semiconductor, the chips, the lithography machines now, and everything else along with it?
I think the fear with regards to the investment universe around AI is that China, despite not having access to a lot of the IP, seems to be playing very fast catch-up now. The frontier AI models seem to be months behind rather than years behind. So, as you mentioned, whether it's through the chip equipment companies, whether it's developing the internal solutions, whether it's the chips or the memory or the financing of similar, it's all leading to those concerns, I think, for the momentum trade in AI, just ahead of the significant earnings we get in the next couple of days from the big memory companies through to the hyperscalers, Vonnie. So there's so many moving parts, but one thing is definitely for clear that while indexes are reaching new highs, the S&P equal weight last night, for example, one thing we are seeing is volatility at the stock level is significant.
Yeah, absolutely. Neil, also just learning that Meta and BlackRock are developing a data center campus in El Paso, Texas. It's hard to keep track. Is this something that we didn't know about before? And put it into context for us for both Meta and BlackRock, if you can.
Yeah, sure. So I think the numbers that I've read, obviously, is a breaking story, but it's about $10 billion of commitment for Meta. They'll own 20% of this particular data center. BlackRock will own 80%. Now, to put those kind of numbers into context, the numbers we were talking about yesterday for NVIDIA's capital commitment to this new OpenAI data center was up to $600 billion. So relative to that data center, it's quite a small number. But it's just adding even more capital clearly to the whole AI trade. But it's small relative to what we heard yesterday for the OpenAI platform.
Yeah, it's just these headlines now that they're getting taken negatively and they keep coming. It doesn't really help the narrative. Neil, thank you so much. Bloomberg's Neil Campling. Staying with earnings now, Boeing set to report before the market opened. Bloomberg Space and Aviation Managing Editor Benedict Kamel joins us now. So Boeing is recovering. It's somewhat of a pace, Benny, but we're very, very much off the highs of, say, back in 2018 when orders were at 1,100. We're at something like, 300 now after Farnborough. What's the next 12 months going to look like for Boeing?
So, as you said, Vinny, this is a company that is recovering, and we'll probably see that in the earnings. A couple of things that people will be looking out for. Will Boeing have generated cash in this quarter, or will that be something we'll see in the second half of the year? Will they maintain some of their longer-term targets? What are things looking like on the certification front? For some of their aircraft, it's the 737 and the 777X. In particular, those two types of aircraft are still awaiting certification, at least some of those models. So we're waiting for updates on all of that. But broadly speaking, and we're coming out of the Farnborough Air Show last week, the tone is certainly positive, if not upbeat. We spoke with Kelly Ortberg, the CEO, at the show last week, and he generally said we haven't quite turned the corner yet, but we are certainly on a good path. So people will be looking out for more evidence on that today as they unveil earnings. There'll be an earnings call with a CEO, with a CFO. There's usually a message to employees where he'll sort of feel the temperature of the company a little bit. So people will be dissecting that. So all of that happens in just over an hour. So lots to digest.
Absolutely, can't wait. Benny, how much of the next sort of few months and the recovery in general is out of Boeing's control, in the sense that engine producers sort of have to get their acts together as well, right? Pratt & Whitney and some of these other engine producers.
Yeah, I mean, the entire industry is fairly finely tuned, and there are a lot of things that are in some ways out of Boeing's control. There's geopolitics, which we've discussed often here on this forum. What will China do going forward? Will China resume ordering aircraft? What about some other countries that might be more or less amenable to the political whims out of Washington? But as you said, engines are also a big component. We've heard in particular from Airbus that they have issues with engines. They've produced what they've called gliders, so essentially ready-made aircraft, but just lacking a key component, which is the engines. It's been less of an issue for Boeing, but they have said that they have some issues with supply chains, be it engines, be it interiors. So again, people will be looking out for any clues that that's improving. So in about an hour, we will know more.
Yeah, can't wait for those headlines to cross. Benny, thank you so much. Bloomberg's Benedict Kamel there. This is Bloomberg.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions.
It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
Now we'll look at what's ahead today. Earnings season in full swing. Boeing and Coca-Cola reporting before the bell, and we get Ford after the market close. Plus, we get some data with U.S. wholesale inventories at 8:30 New York time and consumer confidence at 10 a.m. Some movers before the bell include some of the memory disk makers, SanDisk, for example, taking a hit as the tech glut deepens, particularly the memory chip stocks. Barclays now extending losses. Most of everything came in great in its earnings report. It's also giving lots more back to shareholders, but perhaps lagging some of its U.S. peers. And Johnson & Johnson maybe putting the talc claims to bed, and that has that stock higher. This is your macro picture as we go into the Tuesday session. We have futures on the NASDAQ in particular pointed lower with that tech route that continued across Asia. Brent lower and yields lower.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form. but is going to be a platform that runs in parallel to our more traditional exchanges.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The good news for tech seems to be priced in.
They've got the strong earnings, but the market wants more than that.
When the market stops rewarding good news, you have to pay attention.
We're still positive on tech longer term.
Going long U.S. equities just outside of the mega cap tech, I think, is a great place to be.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, stocks stumble, the Nasdaq 100 slides, and the chip rout deepens as the Kospi plunges, weighed down by SK Hynix and Samsung. Europe's tech giant, ASML, is struggling on reports of the emergence of a Chinese competitor.
Yeah, there's a story in the information that China has created a deep ultraviolet lithography machine that can potentially compete with ASML to produce chips more cheaply. This all goes to a similar theme, which is the AI story is changing. BlackRock put it really well yesterday in a white paper saying the bigger question is whether today's extraordinary profit levels can be sustained as cheaper models reshape the economics of AI. A lot of these cheaper models are coming from China, and the question is how much can they penetrate the market and seriously eat into some of the profitability of big U.S. technology.
And obviously this comes at a time when China is desperate to get their hands on these machines. They're barred from getting access to the most advanced versions ASML is able to sell. I believe they have 8 generations back. So for China, this would be a massive step forward. But this is early stages. We don't even know the name of this company. That's how early we're in.
There's some weakness in the chip sector. We've seen it over the last 3 days. Spills into South Korea. Check out the Kospi, getting absolutely hammered. SK Hynix, Samsung, absolutely battered. Those 2 names plunging in trading over in Asia. You've now got 3 fronts for the weakness. Price and positioning had a massive run-up in some of these names. The financing of the ecosystem, NVIDIA a piece of that in the last 24 hours, and now competition and capacity. Those 3 things together, that's a headwind for this sector.
Yeah, and given the first aspect of that, which is the positioning, people need any excuse to sell, to lock in profits, so that only exacerbates the price action with the anxiety coming from the other 2. There is a question, as you mentioned, about China, which we just hit, but the financing aspect is increasingly present, as about 80% of future financing needs comes from the external capital markets, not free cash flow. At a time where you're seeing credit spreads start to widen, you're starting to see credit default swaps widen, and frankly, you see a lot of these equities come under pressure. At what point will that stymie the hopes and dreams coming forward?
We've got a tech scare on our hands. We haven't got a growth scare, but can one turn into the other? We'll spend some time on that. Check out these numbers from UPS this morning, dropping just moments ago. This is their outlook. They now see full-year revenue of about $91.2 billion. The previous range was about 89.7. The estimate was 90.39. So it's better than expected and higher than previous. Bramo, some good news from UPS.
Yeah, talking about CapEx coming in pretty much in line and saying that they've successfully completed the Amazon glide down. This has been a company that's been beset by competition from Amazon, as well as ongoing union negotiations. But the fact that they raised their full year adjusted EPS view to $7.22 versus the consensus of $7.13, this is actually a positive. So if this is the read of the overall consumer, which is a big if, it is showing the same kinds of green shoots that you're hearing from everyone else.
Lisa's reminding you it's not just about big tech this week, though kind of
it.
just about big tech this week.
No.
The week starts on Wednesday, the scheduled week anyway. Let's go through the results you can look for. These are the tech names we keep talking about. So Microsoft and Meta on Wednesday, Thursday, Apple, Amazon. In a year from now, we'll hear from NVIDIA. There's another name in the mix in the next couple of days we should pay attention to. In the next 24 hours, you'll also hear from SK Hynix. We've been exporting market volatility. When you get jitters like this, we've also been importing market volatility from places like South Korea. And I think those earnings will be pretty important to the broader market.
Yeah, although it's unclear exactly how the market's going to react to them, because SK Hynix is probably going to report another record quarter of earnings, and yet its shares are down 47% from the all-time high in June. Why? This isn't necessarily because people are worried about what they're going to deliver. They're worried actually about the existential risk from DRAM production over in China. This has nothing to do with their particular performance. It's that maybe their profitability is just too high to continue for much longer.
Stock is down 15% in South Korean trading this morning. Unreal. Coming up this hour, we'll catch up with Cam Dawson of New Edge Wealth as the chip sell-off drags equities lower. Mame Q of PSP Growth on the emergence of Chinese competition, and Jonathan Pingle of UBS predicting a family fight over at the Federal Reserve. It sounds like we've had one already, based on the reporting from the Wall Street Journal in the last 24 hours.
Yeah, I'm shocked. I mean, we all were expecting. And the key question for a lot of people is just how many dissents are you expecting? And frankly, how volatile are some of these conversations going to be?
I did feel seen by Governor Waller when he apparently said at this dinner, tell me the name of who's leading one of these task forces and I'll tell you what the policy is going to be. Personnel is policy. We know all these names. We know how they think. So I feel like that's how a lot of people felt going into this when Kevin Warsh kept foreshadowing the fact that he was going to announce these massive task force. Well, I guess we'll have to see what they come out and say.
To be fair, that's also how most Fed meetings feel often, right? We know what they're going to say ahead of time. You tell me who's on the committee and I'll tell you what they're going to say at the meeting in the next 2 days.
Yeah, it's just that normally they're not given the same kind of mandate to set policy for the next however many years, which is part of the issue that a lot of them are grappling with. What is the Fed that really is helmed by Kevin Warsh?
That 2-day meeting begins later this morning. We begin this hour with the chip sell-off building. Cameron Dawson of New Edge Wealth writing the following. The semiconductor profit cycle depends on 2 big factors. Hyperscalers continuing to spend aggressively and limited new competition entering the space that could challenge margins. Markets seem to be questioning both. Cam joins us now for more. Cam, good morning. Good to see you.
Good morning.
That quote just perfectly illustrates this moment we're in right now. We are questioning both. Do you think it's valid to question both?
I think it is, but I think before we get to the fundamentals, we have to appreciate the technicals, because so much of the upside was driven by positioning chases and squeezes and flows. And so what we're experiencing now is effectively the mirror image of that. Because flows were so aggressive into leveraged products within the semiconductor space, not just in the US, but of course in South Korea, what we're seeing is the dynamic is that as that leverage unwinds, you're seeing a lot more downside. Effectively, these stocks got so overbought by the time you got to the middle of June that even though we've seen things like a 40% drawdown in something like SK Hynix, you're technically not oversold yet. So if you look at a name like Micron, yes, it's down over 20%, but it's still 40% above its 200-day moving average. You can think the same thing for the stocks overall. So it's important to remember narrative follows price. So all of these negative narratives on the fundamentals we're talking about is effectively just following the negative price action.
So is this a price move looking for a narrative, or is there a story here?
I think it's a matter of both. I think some of the dynamic that we saw in the upside move was ignoring the fact that a lot of these capacity additions, whether you're thinking about Micron itself adding capacity, SK Hynix, Samsung adding capacity, and now China adding capacity, we've all known this for the last 6 months, over a year, because we've known that there has been a capacity shortage. But now the market is starting to wake up to it. And at the end of the day, you had this clarion call from big bulls on things like Micron saying, of course, the 85% gross margin is sustainable. This time is in fact different. But this is still a very, very cyclical business. And so given the fact that you are going to have capacity additions over the course of the next few years, you will see downward pressure on those gross margins. The big difference, or the big thing to watch, is that is there any downward pressure on the revenue line? Because that's really when you start to see the deleveraging and the operating leverage of these businesses. And if you continue to see weakness within the hyperscaler names, the question that we have been asking is, if the stocks continue to get pressured, will they continue to raise capex?
At the same time, there's this issue of exactly whether the economics are changing and moving away from certain companies. And I'm thinking of, say, the closed models like the OpenAIs and the Anthropics that are suddenly coming under pressure from open source models that are coming out of China but are being adopted rapidly by a lot of U.S. companies. I mean, the search for cheaper models is definitely taking steam. Do you think that does fundamentally alter the tech story?
Yeah, because I think the big question that you have is a scaling factor. We know that we are getting growth because of some of this CapEx investment, but effectively the growth is coming in slower than what the CapEx investment is. So you can see that by looking at free cash flow. Free cash flow for a name like Google was negative in the quarter because their CapEx is growing faster than their operating cash flow. You go to 2027, that's going to be the case for all of the hyperscalers. And so you're going to have a world where CapEx grows faster than operating cash flow. You're not seeing it show up in the operating fundamentals yet. And this is in a world where we're still thinking that we're going to be at the leading edge, and those are going to be the areas, those leading edge models are going to be the areas that drive growth. If you have competition, then you could still be in a world where CapEx continues to grow faster than operating cash flow, not just in 27, but potentially in 28. That, of course, would come into ahead with where consensus is, simply because consensus is expecting a big acceleration in operating cash flow in 28.
Have chip stocks and hyperscalers sold off enough to make them attractive to you?
On a technical basis, no. I think that if you're looking at oversold indicators for something like the semiconductor area, certainly you're not at that level of a total wash and flush out yet. For the hyperscalers, you're now trading at a valuation that is as low as it was back at Liberation Day, valuations that are as low as it was back in the lows in 2022 for certain names. Meta, for example, has undercut those lows. You can also look at ETF flows. Mag 7 ETF flows have been very aggressive outwards over the course of the last month or so. So there's probably some opportunity there to step in. The challenge that we have is that we know these businesses are fundamentally changing. They were monopolies that had very high return on invested capital because they didn't have to spend a lot of money to make money. These are now competitive businesses. They're having to spend a lot of money to make money, which means that ROICs are going lower. So we think structurally valuations will go lower as well.
It's why Meta and Microsoft to some extent are in a bear market. You alluded to it earlier in the conversation. I don't want to bury it. It's important. Do you think they respond to what their stocks are doing? Do you think the stock moves shape their approach to CapEx?
Well, in a way, they kind of have to. Because if free cash flow is negative, that means that you have to rely on outside funding to meet your CapEx goals. But now that outside funding is getting more expensive. If your equity price is down, your incremental equity raises will be more dilutive. If your credit spreads are up, your incremental debt raises will be more expensive. So they cannot ignore the markets. And if you're a name like Microsoft, who's seen its valuation fall by 45% since October, at what point do you say, hey, maybe this is being perceived as being profligate, and we need to pull back on that spending?
That has been a massive tailwind for this economy. So let's work through it. The year so far, rolling shocks through energy, through rates, now through tech. Does that become a growth scare at some point? Does the shake-up in tech translate into some kind of fundamental story down the road?
Potentially, yes, if we see more weakness within the S&P 500. The strength of the equity market has been such an important driver of economic growth or support for economic growth in the US. It's allowed the consumer in many ways to deal with the fact that real income growth has been negative because of higher inflation and low wage growth. But if you continue to see pressure within equity markets, and put this into context, we're still 3.5% off highs, so this is nothing to necessarily cause a big pullback in spending. But if you were to see a deeper, more protracted route, you could effectively have a negative feedback loop where the equity market weakness translates into economic weakness.
Cam, it's good to see you. Thoughtful stuff. Cam Dawson there of New Edge Wealth on the risks ahead. That was the conversation we were having yesterday. Do the jitters in the equity market translate into something more fundamental beyond just a story of price and positioning?
Troy Ludka at SMBC, Nico Securities America put out a chart that I thought was fascinating, that the household's equity ownership as a percent of net worth in the United States has risen to the highest levels going back to 1948. In other words, people are more exposed to the tech boom that we've been seeing in the equity market as a percent of their household wealth. So the wealth effect has that much more of a direct channel over how much they buy.
This is why you said the airline earnings were actually an AI tech trade, because people were being able to maybe buy premium seats instead of sitting in the back of the plane because of what is going on in terms of the money people are making when it comes to the AI trade.
Well, to Cam's point, before we stretch this too far, we're down a tenth on the index this morning and some 3% off all-time highs on the S&P 500. The rout very much in chips within tech. Let's give you an update on news worldwide this morning with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John, good morning. President Donald Trump reiterating his claim that the U.S. should have the lowest interest rates in the world. Trump saying he knows Fed Chair Kevin Warsh wants to do the right thing, but he has to work with, quote, very political board members. The sell-off in AI stocks intensifying, driving the Kospi to its lowest level in 3 months. Asia responding to
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty
people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The week ahead looks like there's some major events for you over the next 48 hours. A two-day meeting at the Federal Reserve begins later this morning, concludes tomorrow. Then tech earnings season really gets into high gear. Microsoft on Wednesday alongside Meta, Thursday Apple and Amazon at some point in between in the next 24 hours. You'll also hear from SK Hynix, and SK Hynix today is getting absolutely battered. Stock is down 15% in South Korea. Equity futures struggling stateside. Not so much on the S&P. It's where big tech lives. It's on the Nasdaq 100. We're down by 0.8%. Chips really struggling. In the bond market, 2s, 10s, and 30s. An 8 or 9% decline on crude is worth a 1 basis point drop on a 2-year yield. We're down another 2 this morning. The 2-year around 429.94. Let's call it 430. That tells you a lot about what people believe this oil move really means for this Federal Reserve.
Not a whole lot, essentially, and that makes sense given how volatile things are. Citadel Securities came out and actually said they expect the Fed to hike rates despite the widely spread belief that they'll remain on hold, just simply to show that we're in a different place and we're sick of inflation. So let's see. There still is that more than 30% chance baked into the market.
Supply starting to matter further out along the curve as well. Had a 5-year issue yesterday. I'm sure you saw the results of that, Bremo. 5-year supply a little bit sloppy. Yeah. 7-year later.
$44 billion for it. And suddenly you start to have to think, at what point are they trying to anchor the long end of the yield curve as much as they are inflation expectations?
Well, let's get into the inflation story. Let's turn to crude. We do decline once again this morning. We're down by more than 2%. Brent back to 86. WTI just holding the line, just about above 80. Let's call it 81 this morning. Under surveillance this morning, another push for peace with Iran.
They want to meet, and we're meeting. We'll see what happens. There's a chance we can make a deal. Without what we did, they wouldn't even be talking to us. They requested a meeting through their surrogates and directly. And we're meeting, and, you know, good things can happen, I guess.
So here's the latest this morning. The US and Iran pausing strikes for a 4th consecutive night. The president saying both sides are engaging in talks. Tyler Kendall was alongside the president on Air Force One yesterday and joins us now for more. Good morning, Tyler.
Hey, John, good morning. Well, our reporting indicates it's Iran and Oman working toward a deal
to reopen the Strait of Hormuz, which would then allow formal negotiations with the U.S. to resume over potential curbs to Iran's nuclear program. One of the proposals on the table is to reopen that so-called middle passage in the strait to traffic, though there are concerns about mines that have been placed there by Iran. Though people familiar with the matter tell us that Omani officials would like to make an announcement signaling progress in the coming days, though at this point there's no guarantee, because even with the pause in the fighting, traffic in the Strait of Hormuz remains stalled and is now dwindling in the Red Sea. President Trump told me yesterday that he's in constant contact with Saudi Arabia over the threat posed to shipping by the Houthis. And while the U.S. hasn't gotten involved yet, it stands ready to. Ship tracking data shows us now at least 8 super tankers are redirecting towards an Egyptian port to load up with crude from Saudi Arabia in a bid to avoid that more conventional route. Now, John, it is our understanding that Iran's foreign minister held a phone call overnight with his counterpart from Saudi Arabia. And amid this flurry of diplomacy, we heard President Trump yesterday say that there's a, quote, good chance that something could happen. He said that he has plenty of time to reach a deal, but he also added that if progress isn't made, then the U.S. will resume strikes, leaving the threat of escalation firmly on the table.
Tyler Kendall with the latest in Washington. More from Tyler in about an hour from now. Let's build on this with Stephen Cook of the Council on Foreign Relations. He writes the following. The Trump administration made it clear that it was standing down because the United States does not have the weaponry to carry on. The Iranians now know that they have impunity. Stephen joins us now for more. Steve, you say in your words the Trump administration made it clear. Did they make that clear?
Well, all of the reporting from the advice that the president has gotten from the Secretary, I'm sorry, not the Secretary of State, the Chairman of the Joint Chiefs of Staff, as well as Admiral Bradley Cooper, the head of CENTCOM, was that we were running out of munitions and that the bombing in the Strait had diminishing returns, so that the president called it off and is now relying on the Oman channel, where the real negotiations are underway. Meanwhile, Iran's proxies, the Houthis, as well as Iraqi militias, are doing a lot of damage to Saudi oil processing facilities and other energy infrastructure around the region. The Iranians are doing what they normally do, is that they are signaling directly to the United States and its allies and its neighbors in the region that it's willing to talk, while directing its proxies to sow chaos.
When it comes to rebuilding stockpiles, it's not like turning on and off a light switch. So do you expect this pause to be a long one?
Well, it does seem that despite the president's threat of escalation, that he has made the decision that that's not really in the cards. So I think that the pause will go on longer than he was indicating on Air Force One yesterday, which has really become just an idle threat. The last 2 weeks of bombing did not change the Iranian position at all, and in fact left them in a somewhat stronger position because it was the United States that essentially called off the campaign.
We know that Oman tries to keep friendly relations with everyone. They somewhat play both sides. Do you expect them to come out and support Saudi Arabia for a toll?
The Omanis have at times sounded a lot more like Iran's lawyer than a mediator. They maintain that they are being bullied by the Iranians because there is some daylight between Washington and Muscat. That, of course, is a self-serving statement, but it does seem that the Omanis are really the best chance for trying to figure out how to reopen the strait, whether it will be a toll or not. They say publicly at the moment that they don't support a toll. We'll see what happens as the negotiations take place. It's important to note that there's a negotiation going on between Oman and Iran right now, not between the United States and Iran and Oman.
At the same time, Stephen, attacks are continuing. There were reports on satellite images of smoke coming from an oil facility in Saudi Arabia. In Bahrain, there were 2 Amazon centers, data centers, that were reportedly under attack. How much do you expect to see a region-wide war amplified and participation of the likes of the UAE as well as Saudi Arabia?
It's a good question, and it seems to me, as I was noting before, that while the Iranians are signaling a willingness to talk through the Omanis, its proxies are being directed to attack American partners in the region, with the exception, I should say, of the United Arab Emirates, which has not taken any hits thus far. But the Houthis, who have a separate conflict with the Saudis, have hit Abqaiq, Abqaiq, a major oil processing facility in Saudi Arabia, as well as a number of other facilities. Iraqi militias have also joined in these attacks. So once again, it is the Iranians talking from one aspect of this, while at the same time their proxies undermining hopes for regional security.
I'm just wondering what it's going to take for some of these Middle East economies to really become, once again, a safe haven for businesses. Hilton just reported earnings and said that revenues from the Middle East and Africa declined by nearly 30% as a result of the war in the region. This was the hotspot for so many different companies to really go and do business. I mean, is that kind of over for the foreseeable future?
Well, this war has raised a question about the Gulf development model, which was based on security and stability and attracting the talent of the world to these city-states, and thus attracting lots of investment. If you cannot provide security, people are not going to come and people aren't going to invest. The Emiratis had taken somewhat different course. They have invested in the relationship with the United States and Israel, while at the same time signaling to the Iranians that they want to have better relations. That seems to have shielded them during this round. It's possible that the Bahrainis and others will follow suit. But once again, the Iranians are intent on disrupting American military operations in the region. And as long as the Kuwaitis and the Bahrainis and Qataris and others have major American bases there, they're going to come under Iranian fire.
Steve, it's good to see you. It always is. Thank you, sir. Stephen Cook there, the Council on Foreign Relations. In many ways, we're still in the new normal. Things haven't changed. Just rotating between strikes and talks with no durable, sustainable off-ramp for diplomacy.
Which is not a new normal that anyone really wants to tolerate. And frankly, the longer it goes on, it takes on a life of its own with respect to inflation expectations and disruptions.
Potentially, the opening of the Strait of Hormuz would give more leeway to the negotiations, but that middle passage they're discussing, well, they have to demine that first before vessels go through.
We've got a trouble in the tech sector this morning. Equity futures decline in chip stocks. That rout deepens. We'll catch up with Mo McHugh of PSP Growth in just a moment on reports that China is making new advancements in the chip space.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Your morning starts in South Korea. Good morning. Starts with the Kospi. We're down by close to 11%, the biggest one-day drop since March, potentially, for that index. If you look at Samsung, SK Hynix, they're getting hammered this morning. SK Hynix has lost about half its value in a month. And they're not alone. The chip sector very much under pressure. You see the follow-through stateside. The Nasdaq underperforms. Nasdaq futures negative so far this morning. We've learned a lot about price and positioning. We're also hearing a lot about increased competition and maybe increased capacity as well out of China. And the financing of the AI ecosystem facing some questions increasingly too.
You've seen an underperformance pretty significantly from the bonds that have been issued by all of the tech sector in particular, but even just the decline that we've seen in prices really threatens their ability to raise equity financing. Ultimately, it was a good story when they were financing all of the capex out of their free cash flow. It is a more worrisome story for people when their own money is on the line as investors, and that's what you're seeing right now in markets.
Even if you're putting up the growth, and that was what was interesting about the Alphabet numbers last week. How do the likes of Microsoft and others avoid an Alphabet-like moment in the next 48 hours?
Well, can they? And to go to Cam Dawson's point, does it require them ratcheting back some of their capex plans, or are they damned if they do, damned if they don't? Between a rock and a hard place, as we were talking about yesterday. If they reduce their capex plans, well, you're going to be behind the curve and you clearly don't have ambitions. If you increase them, well, where do you think you're going to get the money, and why do you think that you can keep burning hours? Either way, it seems like they're in a somewhat tenuous position.
That's the equity story. Here's the bond market picture this morning. 2s, 10s and 30s. Yields declining across the curve, but not by much. 2 still around 430, down 2 this morning, down a single basis point yesterday. Off the back of this move in crude, and it's a big move. Down about 9% yesterday, down this morning again by, let's call it 2%. It's a big 3-day decline. Friday, Monday, Tuesday, 86 on Brent, WTI at 81.
The president with some soothing words that basically the market is looking at this as no immediate prospect of intense military strikes. So they started to feel a little bit more comfortable, even though the Strait of Hormuz has a complete grind to halt. A lot of cargoes are starting to avoid the Bab el-Mandeb Strait. But the oil market is looking at the fact that the president is leaning towards diplomacy. But for how long? How many times have we been here with this cycle? And that's what you really need to ask yourself.
It's a limited rally in the bond market off the back of this, and I think that's for a number of factors. One being, how sustainable is this? Can crude really sustain this downward trend? We've had a vicious repricing of crude in 3 different directions over the last several months or so. The other issue as well is economic resilience, and I think that's keeping yields up. The Fed's still going to engage in talks about interest rate hikes. That will certainly keep yields elevated. And then the supply. Bramo, it's your story. The 5-year was a bit soft, the 7-year later, and this Treasury, unlike years gone by, has got some real competition coming from elsewhere.
Yeah, the central bank of Alphabet and the central bank of Microsoft, the central bank of NVIDIA, my goodness, they're being a central bank to every single tech company out there, really in serious competition with them. And that's the reason why this isn't from inflation expectations. When you take a look at the actual trade in bond yields, it's been real yields, which reached some of the highest levels that we've seen in more than a decade until just a couple of days ago. So the reason why oil doesn't matter as much is because this is a multifaceted story that has a lot more prongs than just where goes the story in Iran.
10s around 460 this morning. Yields lower by 2 or 3 basis points. As we count you down to the opening bell, 3 hours away. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with the chip equipment stocks. They are falling this morning on that report that we've been discussing all morning, that China is beginning to mass produce certain chip-making machines, raising concerns that Beijing is making progress toward building its own semiconductor supply chain despite years of U.S. export controls. It also is raising concerns that Beijing could emerge as a lower-cost competitor to Western companies like ASML and Applied Materials. But the selling isn't isolated to those names. It is spreading across the chip sector, with AMD, NVIDIA also falling, as investors use this story as a reason to trim exposure in one of the most crowded parts of the market at a time when investors have become just increasingly jittery around this trade. You could also say that with this report, investors are starting to weigh the risk that a more competitive Chinese chip-making industry could eventually lower the cost of chip making, weakening the pricing power that these names enjoy right now. And we end on the biggest winners of this market, the memory names, of course, selling off on this report. Micron and SanDisk down about 5%. As I said, it just adds to the jitters, since investors have already been questioning whether the hundreds of billions of dollars being poured into AI infrastructure will yield enough of a payoff. And now with this report, it also adds to questions whether all this investment is needed, if we will eventually get cheaper models and cheaper chip making. John?
Yahara, thank you. Appreciate the update. More from Yahara in about 60 minutes from now, in the next hour. On our radar this morning, President Donald Trump saying there's a good chance for a deal with Iran.
They requested a meeting. They would not have requested the meeting if we were doing poorly. The only reason they want to meet is because we've been hitting them very hard. Their whole shoreline's wiped out. The strait is in very good shape. And we're talking right now.
The extent of the talks between the two countries remains unclear. Elsewhere, the president voicing support for Fed Chair Kevin Warsh while taking game at the Board of Governors.
Kevin's fantastic, but he's got a board, and the board members are very political. He wants to do the right thing. I know what he wants to do, but you need the consent of some people that have perhaps bad intentions. Rates should be lowered.
Investors widely expecting the Fed to hold rates steady tomorrow, with a very slim chance of a surprise hike. And finally, chip stocks selling off on a report that China is mass-producing advanced semiconductor machines. The information reporting a state-backed company is aiming to produce 20 machines in the next year.
You can argue, and many people will, and debate, frankly, whether these machines can truly compete with the likes of SK Hynix and Samsung to create the memory chips that are necessary. There's a bigger question here, whether north of 80% profit margins are sustainable before there is some sort of competitive pressure. The idea that some of these companies, the chip maker companies, the memory chips in particular, have been able to capitalize so significantly these profits has historically been a recipe for self-demise, because that will invite competition and demand and some sort of supply to meet that demand.
At the moment, it's just a prototype, and it's not becoming at the same level that we have ASML. And the reason why it's important for China is because they don't have access to the level of ASML machines that we do or other parts of Europe or Asia have. They are barred by U.S. export controls. That is why it has a lot of people's attention. At the same time, they're producing 5 this year, maybe 20 next year, and we don't even have the company name. So I'm just a little bit skeptical into how advanced this company actually is.
How much weight can we put on this story? Mo McHugh of PSP Growth writing the following. The chip stock rally has largely been driven by scarcity, the rise of a low-cost competitor, and risk of China's self-sufficiency directly puts pressure on that. Mo joins us now for more. Mo, do you believe we have an upcoming emerging competitor to ASML?
Good morning, John. Nice to see you. Yeah, the chip stocks definitely had a rough week over the past week, or a few weeks if you count from their peak in June. But let's put this into perspective. If you look at the stocks index, they're still up 100% year over year, the index that measures semiconductor stocks. And several of the individual names are up 400, 500% year over year. I think it was on this show a few months ago that you asked me, is there any limit to their growth? Because the chip stock seems to be the bottleneck for AI, and there were no alternatives. So finally, for the first time, you're seeing the alternatives. You're seeing the pressure. First, you're seeing that from the domestic producers or competitors, where you have hyperscalers making their own custom chips, and now you're seeing it from China. So I think anything that puts a dent on the perfection of the chip stocks will cause a market reaction. But let's not forget that they're still fundamental to core fundamental AI supply chain, and I wouldn't worry too much that crisis is emerging.
So how would you paint the narrative right now, Mohamed? Do you think that this is just some blow off top that gives it a more attractive entry point? Or do you think that this is a bigger readjustment to valuations that make more sense going forward, given the fact that there is likely to be some competitive pressures for these companies?
Yeah, absolutely. I think a while ago we were thinking the upside could almost be infinite, and obviously that is not sustainable because, to your point, when you have that kind of profit margins in such a big market, you're going to invite competition. So I do think this is a reaction from the market that yes, competition is here. It probably won't be the last competition, and what you see is not necessarily that these are bad companies to be in, but you finally, for the first time, are seeing a cap on what the valuation on these companies could be.
Do you think that we're going to see a cap on some of the CapEx ambitions from the likes of Amazon and Meta and Microsoft later this week?
Doesn't look like it, right? I mean, the numbers keep going up. I think the latest numbers is the Max 7 are going to spend $800 billion on CapEx this year. This was revised up even from just a few weeks ago when the number was 600 or 700 billion. And I think that's why the market is starting to put pressure on the CapEx too. It's losing patience with the story of invest today to hopefully win tomorrow. And we're not really seeing the end in sight in terms of just how much money it takes to build the overall AI infrastructure, and the market is not reacting well to that. So I think you're going to see that storyline throughout this week as the Max 7, more of the Max 7 report earnings.
We also are getting another fresh dose of this concern about circular financing, with this week NVIDIA being the backstop when it comes to OpenAI and SoftBank's data center commitments. How concerned are you again about this story that seems to pop up every few months?
To me, this is not a new story. It might exacerbate some of the concerns that we had before. One, that CapEx spend doesn't seem to be slowing down. It seems to be reaching new levels. And the other thing it does show me is adoption is still not there, right? And because the circular financing means you're paying your own customers, you're financing your own customers to drive the demand while the AI infrastructure matures. So I think there are two things maybe in two levers that can lead to a win-win equation, if you will, that could ease some of these fears. One is there's a strong focus on cost. We're hearing all the time that cost is not sustainable. So you are seeing innovations from the hyperscalers to develop their own chips. OpenAI is developing their own AI chips. Even on the earlier innovation side, you're seeing companies like Ingram, like Cell Research, doing new innovations on memory, on long horizon agents to drive the overall cost of AI infrastructure down. And then the other side is obviously if AI adoption, we're seeing AI become mainstream, is embedded in our lives, that will ease concerns. And I think on that trend, everyone's watching enterprise adoption. There's a renewed interest in physical AI and robotics because that's a tangible way that these AI innovations are being embedded in our everyday lives. So names like physical intelligence, like general intuition, skilled field, those are getting renewed interest because the market is so desperate for some form of real AI innovation in our everyday lives.
A lot of vulnerabilities in the AI ecosystem at the moment. Mohamed, appreciate your time as always. Thanks for the update. Mohamed Q there of PSP Growth. Massive focus on tech, as there should be. Bramo's looking elsewhere, as she should be, because we've been talking about this, and we'll get to the jokes in a moment. But we've said repeatedly that if you look at the tech story right now, yes, there is a tech scare across several parts of the tech sector. But you look at the broader economy, it's hard to point to many companies right now who are too concerned about this economy.
So Royal Caribbean Cruise Lines, which is what you're most passionate about in your life, John, came out. They beat expectations. They raised their full year EPS forecast. Beat estimates across the board. Shares a little bit lower. They talked also about the geopolitical tensions that have been reducing certain lines, in particular in the Middle East. We heard the same thing from Hilton. So clearly not getting a good read-through in the shares. But the commentary is that booking trends for 2027 are pacing ahead of historical levels, that the environment remains strong, that their differentiated experiences for Jonathan Farrow remain very robust in their offerings, and that, they're going to go potentially to, Puglia. So I think that maybe that has something in your offing.
Look, we won't make this about me. I'll avoid that.
But
the backdrop for these stories, these stocks seems to be okay right now. There's no scare. Now, maybe there is one in the pipeline, but you don't see it this morning, which is why we keep going back to these rolling shocks through energy, through interest rates, through tech as a sector in the equity market, but not through the economy.
And it explains why equal weight continues to outperform and hit an all-time high yesterday. So even though we're all focused so intensely, and correctly so, on big tech, because that's been a huge driver of everything, the consumer's hanging in there, and that's what these stories show.
That stock is down by something like 5% of the pre-market. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. President Donald Trump preparing to meet with Israeli Prime Minister Benjamin Netanyahu at the White House today. Administration officials saying the two leaders will discuss the framework agreement they signed with Lebanon over the Israel-Hezbollah war and the expansion of the Abraham Accords. President Trump also meeting with Ukraine President Volodymyr Zelensky, who is in Washington for Senator Lindsey Graham's funeral. Zelensky saying his top priority for the meeting is securing stronger air defense and strategic cooperation as Russia intensifies its attacks. In markets, Citadel Securities expects the Fed to announce a rate hike tomorrow. The firm's head of macro strategy writing in a note, quote, a quarter-point increase would reinforce Warsh's pledge to restore price stability and show policymakers no longer rely on signaling every policy move well in advance. And that's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. Up next on the programme, potential dissent in the ranks.
Warsh wants to indicate that he is in control. He doesn't want to look like he's being pushed around either way. I think you would get at least one dissent. We would guess two, probably, if Warsh keeps rates on hold this week.
Has Waller been throwing the bread rolls across the table at dinner?
Tell me who it is.
Is that what's been happening?
I think that, he's got the arms for it.
He certainly got the arms for it. I would not get a fight with Chris Waller.
No way.
No. Kevin Warsh's got my build. Steer clear from that. Just steer well clear.
I will.
You know. Jonathan Pingle of UBS joins us next, live from New York City this morning. Good morning.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action. bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Tech underperforming once again this morning. We've had 3 days of weakness for semis. It continues this morning. On the Nasdaq, we're down by 0.9%. On the S&P 500, only down 0.1%. Those tech jitters preventing us from getting a nice rally off the back of this move in crude. Down yesterday, down again this morning. WTI and Brent declining by, let's call it 2%. Brent crude at 86, but a limited rally in the bond market. Yields down a single basis point at the front end of the curve yesterday, down by 2 this morning. Let's call it 430 on 2s. Let's call it 462 on 10s. This from HSBC. And Dhiran Narula saying it's more than oil prices driving long-end rates. We think this reflects a combination of fiscal concerns amid renewed headlines around budget deficits, in addition to mounting capex guidance coming from the private sector.
This is clearly on their minds. How do you cap long-end yields in the Treasury market when you have real competitive pressure from the issuance from big tech? There also is a question of how do you solidify no forward guidance, this concept of a very different Fed with a renewed focus on inflation. And that's Citadel's point, and the reason why they're expecting a rate hike this week, even though a lot of people do not have that as a base case.
That Fed meeting begins later this morning. Other surveillance this morning, potential descent in the ranks.
Walsh wants to indicate that he is in control. He doesn't want to look like he's being pushed around either way. I think you would get at least 1 dissent. We would guess 2 probably if Walsh keeps rates on hold this week. There's an irreducible level of uncertainty here because we have no strategy, no playbook from Walsh.
So here's the latest this morning. The Fed Chair Kevin Walsh heading into his second policy meeting later on today as Fed Chair. Strong labour market data and renewed pressure on inflation, injecting fresh uncertainty into tomorrow's decision. Jonathan Pingle of UBS predicting a family fight, writing, we see the FOMC on hold this week with 3 dissents as a base case, although we wouldn't be surprised to see 4. Jonathan joins us now for more. Jonathan, good morning.
Thanks for having me.
Is Powell one of those 4?
No, I mean,
that would be controversial.
Yeah, it would be. He left in his last press conference pretty strongly in the sense that he would be supportive of the chair. So I'm assuming, and actually one of the reasons I think this rate decision really is Kevin Walsh's decision to make is in part because you've got a certain amount of division on the committee, but I do think Powell would go wherever Walsh goes, and probably Philip Jefferson, which sort of makes Walsh himself deciding the swing votes on the committee.
So where are the dissents coming from?
Well, the hawks on the committee, and I wouldn't be surprised if there was a
Logan Hammock. There's 2. Give me 2 more.
Logan, and I would say Kashgar is assuming a hike this year, and I also wouldn't be surprised if there was some demonstration of independence by, say, a Lisa Cook or a Michael Barr.
What do you think is the main driver of it right now, especially given that inflation pressures may have peaked at least for the next couple of months as a result of where oil prices have been?
Well, I mean, they'll have to take the temperature in the room, of course, right? Because they may need to turn up the air conditioning in the family fight here, right?
Understood.
But when we look at the committee and what they're gaining and what they're losing is Kevin Walsh has really talked tough about, fighting inflation, right? So at some point he might need to put his money where his mouth is. And then there's a number of committee members that, essentially they're kind of losing patience at just the year-over-year rates remaining elevated, right? So I do think this is a closer call than, if you looked at the Bloomberg consensus, there's almost every economist expects them on hold. And I suspect the odds are probably higher than that for a rate hike. Because I do think there is this lingering tension of, how are they going to get inflation back to 2? Year-over-year rates look sticky. I mean, we think inflation has passed the peak and the data is going to bail them out. So I've got the Fed on hold for the rest of the year, but I have to say it's not high conviction.
Do you think that some of the volatility and the incredible gains that we saw in certain tech sectors was due to the Fed's policy leading up to this year as a result of some of the rate cuts last year and the fact that they have not been restrictive enough?
My guess is that this tech investment, I mean, it's been relentless. It looks pretty interest rate insensitive to me. I mean, we can see how it's been financed. A lot of it's been financed out of free cash flow. I mean, they are taking on more debt now. But given the optimism in this sector, my guess is, in a way, you probably needed 2 interest rates for the economy. One for the AI tech CapEx, which probably should be a really high interest rate if you wanted to slow it, versus everybody else who probably doesn't really need higher rates at this juncture.
Jonathan, there's one name you didn't mention, which is Waller, which seems to have some pushback on the Fed chair, according to this Wall Street Journal article about this dinner they had. But also the article talked about a quote Waller said this month: "Sternly staring at inflation till it melts before a withering gaze is not an option." Do you think potentially he dissents?
My guess is, given his speech 2.5 weeks ago, that he's kind of backed himself into a corner. I mean, he said he laid down a very specific marker for the decision to hold or not, and the data clearly met the marker. So I think rhetorically he's kind of backed himself into a corner. But his disagreements with the chair's views, they came out in that Q&A. I mean, there's open questions about, you know, what's going to come out of the communications process, the task forces, you know, how you think about forward guidance. And Waller does not seem fully on board with some of these changes.
Do you think that's healthy, or do you think it disrupts the transmission of monetary policy?
Which, the disagreements?
The disagreements in the public, the way it's playing out this morning.
In the grand scheme of things, I think it's probably healthy. I think one of the problems we're having, though, is the lack of forward guidance from the chair has kind of spilled over into a lack of understanding the reaction function, what they're looking at, what the risks he might think are. And given the fact that he can push around sort of the median of the committee at the moment, I mean, he's going to decide policy for the next few meetings. And we really have no idea how Kevin Warsh thinks about monetary policy. I mean, everyone walking around saying they think they do, but I'm pretty agnostic.
Is that where your low conviction comes from? That you say on the one hand, I say hold, but it's low conviction because of that? Is it just that? You don't really know what the Fed chair stands for?
That is the big source. I mean, if we knew what the reaction function was, if he said, hey, I'm going to follow a Taylor rule, he doesn't have to give us any forward guidance, but we would know sort of how to weigh the incoming information. If we knew what he was worried about and the risks, we could take that into account. But he's really offered very little insight, and you know, he's also written very different things at different states of his career. So it's just very hard to know, like, how is he thinking about policy now?
John, good to see you. Appreciate
Thanks for having
Thank
me.
you. Super smooth as well about the temperature in the family fight. Bit of a family fight in here in the commercial break. Jonathan Pingle there of UBS.
Well, over the temperature of the...
Anne-Marie actually wants the room cooler, just to be clear.
Yeah, well, it's a little warm, and typically it's a little cold in here, and usually guests come in and they say, woo, nippy, and some people say, yes, see, and other people are like, but it's actually nice.
Some people.
I, of course, don't have a view. Up next, we'll catch up with Stuart Kaiser at City. I don't have a view on it at all. Not this morning. I haven't said a word.
That's right, ever.
I never have a view.
Never. Oh, sure.
Jason Thomas of Carlisle joins us in a moment alongside Matt Hornback of Morgan Stanley. The second hour of Bloomberg Surveillance is just around the corner.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets.
because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars, Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This really is a live meeting. I think it's tough to tell what they're going to do.
We have no strategy, no playbook from Washington.
That's what makes it all the more confusing because there's no forward guidance.
It's live, but I don't expect that they will make a change. This clear divide between the hawkish and more dovish members is likely to result in policy simply remaining steady.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now. And your morning starts right here in South Korea. Your scores look like this. We're down across the board. The Kospi, negative 11%, the biggest one-day loss since March. SK Hynix, Samsung, battered, and the chip rout continues stateside as well. The NASDAQ, check it out, underperforms. The S&P, the NASDAQ, the Russell, down across the board. The NASDAQ this morning, negative by 0.9.
Yeah, this is a queasy overvaluation story right now because already, even though we've seen massive declines, almost half of SK Hynix's value taken off in a month, as John was mentioning earlier, you still are up a significant amount so far this year. So at what point is this a valuation scare? At what point is this a fundamental challenge from cheaper technology that's coming from the likes of China? That ultimately is going to be the question that determines how far some of these names have to go.
We went through the recipe for a sell-off in tech, and you've got all the ingredients lined up. Extended price and positioning, tick, right? Competition coming from China, potentially, and questions about financing the ecosystem. That's on the table as well in the last 24 hours. Let's talk about number two. Let's talk about the competition potentially coming from China. And an example of that, to take the temperature of it, just pick out ASML. We could have some competition for that Dutch maker of semi-equipment. That stock was down yesterday by 8.5%. It's down again today by 2.6%. That's the European tech giant. How much of that competition is actually real coming out of China?
Well, the information has this report basically that China is making their homegrown lithography machine, which would basically mean that they don't have to buy from ASML. Right now, what they're buying from ASML is 8 generations back because of export controls from the United States that bar them from getting the most advanced machines. We've seen these risks before, though. This is a little bit different because this is in the hardware, but DeepSeek, Kimi K3, now this unnamed Chinese company that are apparently producing 5 and 20 next year. A lot of questions because there's not a lot of answers about actually what this company is, but it could potentially be a risk.
It's a risk, and it's a dominant factor. We've talked about the margins of some of these companies, 85%. That's an invitation for competition. That's what people say when they look at that situation, that those margins aren't sustainable because you will get that competition eventually.
You know, Jason Thomas, who's coming on later, talked a lot about that, how when you have margins that are too high, that is essentially saying, please, disintermediate us. Please disrupt us. Please come into this market. And that is what you see considerably time and time again in the commodity space. And that's the reason why this tends to be a cyclical area. Now we're getting some visibility about where the competition could be coming from. These business models are fundamentally changing, whether it's in the chip sector or whether it's in the hyperscaler sector. Suddenly, it is capital intensive. It requires your money for us to burn. And guess what? There is more competition, and this changes the narrative and some of the economics.
Which is why the likes of Microsoft and Meta are in a bear market going into earnings just a few days away. Over the next few days, mega cap tech on deck in a major way. Coming up this app, we'll catch up with Stuart Kaiser of Citi with the sell-off in chips outweighing falling crude prices. We'll speak to Jason Thomas of Carlyle, warning the funds financing data centers are running dry, and Matt Hornback of Morgan Stanley expecting the Fed to remain on hold this year. We begin this hour with stocks struggling as the round in chip stocks deepens. Stuart Kaiser of Citi writes the bar is clearly high. The start of 2Q has been solid, but the average stock is down on report day. Stu joins us now for more. Stuart, good morning, good to see you.
Good morning, how are you?
Is it just price and positioning, or is it more than just that?
I mean, I think it's mainly price and positioning. If you go back to when this weakness started, it actually was kind of late May, early June was the initial kind of shot across the bow, and that was definitely supply driven, right? That was pre-SpaceX IPO, and then you had Google coming with a secondary and some of the other mega caps. So if you ask me, I think it was really a case of supply that started this. Fundamentals doesn't feel like it's driving it quite yet, but these companies clearly the market is telling these companies you're failing to do a couple of things for us, right? Number one, you haven't made a compelling case for what the ROIC on these investments is going to be, so we're going to question that. Secondly, you haven't really communicated what the glide path on this spending is going to be, right? You just keep up in the ante. Talk to us about the fact that you're front-loading this investment because of the potential return on it and what you believe sort of medium-term that spending is going to look like. And the companies, I'm not saying they're not doing a good job of it. The market is telling them they're not doing a good job of that.
Alphabet did an okay job of putting up the growth. I think that was what was unusual about Alphabet. They put up the growth numbers. And we've gone into that print and we said, if you're going to raise CapEx, you've got to put up the growth. They put up the growth, but people still focused on the CapEx. How high, with that in mind, how high is the bar for Microsoft later this week in the next 24 hours, if that was how high the bar was for Alphabet?
Well, I would say for Alphabet, one of the things they did is they left it kind of squishy, right? It was significantly. There was not a clear forecast, again, on what the glide path of this spend looks like. So the growth was there, but they left uncertainty on the table by not giving kind of more clarity on the spend. And the market is not happy with that, obviously. You see it in the credit markets as well, right? Credit spreads on all of those companies, while still very low. I mean, these are credit spreads in the 50 to 70 basis point range, but they're all up sort of 10 to 20 basis points. And then you have Oracle, it's well over 200 now. And the starting point of Oracle a year ago was again in the 60 to 70 basis point range. So I think for Google, I agree with you. The spend looked good, and it should be good for everybody else that receives that spending. But they clearly did not provide the clarity that the market was looking for there.
The playbook over the past couple of years has been every dip is buyable, and just wait for a dip that looks somewhat exciting, and then the bulls start coming out. And certainly we are seeing some bulls come out. JP Morgan, the group led by Andrew Tyler, said that right now it's seeing material upside as a result of this mini correction. Max Kettner at HSBC, are you going to turn bearish because of the reaction in stocks? No. The mini correction in the past week and a half, the sell signal in our sentiment and positioning framework has now disappeared, so they are now more bullish. Do you agree?
Look, I agree to some degree. Our view is you want to add risk, but we're talking about putting a quarter of the risk you might want to put on. So we're sort of very cautiously kind of stepping in here. And the reason for that is how these trades have been behaving. If you look at price momentum as a factor, the drawdown has been exceptionally large. And the correlation there is just wrong way. So basically the longs go up and the shorts go down on the same day. That's just not how you tend to assume equities will behave, right? So if you think of tech stocks, same region, same market, same sector, negative correlation. That is not how you kind of risk model and manage a portfolio. So our view here is, yeah, I agree. There is an interesting entry point, but we would be super, super cautious about that and really do it in a small size to start off.
There was this theme that the tech sector was rate insensitive and some of their borrowing would come regardless of where the bond backdrop was. Do you think that right now we're challenging that actually the backup in rates and the backup in borrowing costs more broadly is 100% part of the reason why people are more skeptical around tech spending?
I think so. I mean, you see it in the credit spreads, first off. And second, you hear a lot of bond investors saying the supply from investment-grade credit is going to get U.S. Treasury yields higher, which seems like the tail wagging the dog. But how has been explained to me is basically, look, you're talking about incremental supply into the system, and it's very chunky, and it can move it. So I think if you're having the conversation that, mega cap tech issuance is going to move the Treasury curve, then yes, the market is telling you there's an issue here with financing, or maybe it might not be an issue. It may just be, hey, we have to ask the question, and we have to see what the feedback loop looks like on that.
You note that the tech earnings are sharing the stage this week with the Fed. What do you think is more important?
Tech earnings, I think, is more important at this point. The Fed is, I don't want to call it a wild card, but there is more, the lack of consensus on what the Fed is going to do is exceptionally high right now. So I think that matters. But big picture, even Chair Warsh has mentioned that the degree of AI spending could impact Fed policy. So even they'll acknowledge that kind of rush of spending is going to impact them, unless the Fed does something unexpected, i.e. hikes rates. I would expect that the mega cap tech earnings to be a little bit more market moving.
Stu, you're going to stick with us. I'm happy to say Stuart Kaiser there of Citi is going to talk more about the Federal Reserve in just a moment. The next couple of days, the Fed's on deck. Meeting starts later on this morning. Two-day meeting concludes tomorrow. Then tech earnings start to come through. Not from the US. The focus might start in South Korea. This morning, the Kospi's been battered. Likewise on the Samsung story, the SK Hynix story too. SK Hynix earnings will be top of mind for a lot of investors going into the next few days.
Do they matter? I mean, ultimately, if they come out and they report unbelievable margins, let's say they've got 90% margins, which is almost unthinkable, right? Let's say they talk about the leeway going forward, the customer demand just absolutely through the roof. Does that stave off the declines that we've seen over the past month since June, 47% decline? Does that encourage people to come back when it's a levered trade that seems to be hinged to who knows what? I mean, this is a very difficult trade to get right, even if you understand the fundamental story.
We've seen the movie a few times. Intel, great numbers. Stock sold off. So the same with Samsung. Fantastic numbers. Stock didn't rally. You could see the same thing with SK Hynix. I think we've already learned the lesson about price and positioning. What's new to me, and that's what I'm looking for, what's new the last 24 hours, that people have started to question the fundamental story just a little bit more. Now, I don't know whether that's a market move looking for a narrative or if that's actually a new story to get your hands around. Some competition coming from China, some questions about financing.
I think everyone agrees with you. They aren't sure how to weight these things, whether it's fundamental or whether this is just something where everyone's looking for an excuse to sell. And ultimately, the Chinese story is not going away. It hasn't gone away. We keep getting this peppered in. At the same time, Kimi K3 has seen massive kind of exponential types of adoption as companies look for cheaper ways to model. That's not the semiconductor area. Still, it is notable to see some of the technology taking off.
The Nasdaq this morning is negative by 1%. Let's get you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. France and Spain planning economic aid for the areas hit by massive wildfires. Spain's Prime Minister saying the affected areas will be declared emergency zones, opening the door to financial aid. In France, President Emmanuel Macron saying the government will do everything it can to support displaced people and businesses. UPS shares rising in the pre-market, the company reporting better than expected second quarter earnings as it shifts to higher margin package deliveries. UPS also raising its full year revenue forecast. The FAA proposing inspections of several Boeing 737 aircraft seats operated by U.S. carriers. The regulator saying some seats may not have been properly installed, risking injuries during turbulence or an emergency landing. Boeing is set to report earnings this morning. And that is your Bloomberg brief. John.
Vonnie, thank you. The hits keep coming for that company, don't they?
For Boeing?
Right.
Well, how much is it true that every time there's any problem, it's like there was a lot of turbulence on my plane from Cleveland to New York City, and so people are going to blame the seatbelt. I mean, how much is
the
it
voice
awareness?
of someone who complains? Like, what is that accent? Is that just a generic accent of someone who complains about their seat on a flight? Where does that come from? Where have you found that accent?
In my drawer.
Okay. All right. I can move on. No problem. Up next on the program, the president calling for cuts.
Kevin's fantastic, but he's got a board, and the board members are very political. Rates should be lowered. We should have the lowest interest rate in the world.
Bloomberg's Tyler Kendall joins us next, and we'll have more from Stu Kaiser of Citi. Live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Kospi down today by close to 11%, the biggest one-day drop since March. That stock market has been moving in one direction for most of the year, but it's run into some real volatility. On SK Hynix, we've cut that stock in half, losing half of its value in a little more than a month. The stock is down again 16% today, down by close to 15 on Samsung. Here's the follow-through. It's negative for the Nasdaq. We're down on the Nasdaq 100. That's where your underperformance is. A few days of weakness for semis. It continues. We're down by 1% on the Nasdaq 100. Concerns about price and positioning, concerns about competition and capacity, concerns about the financing of the broader ecosystem. This came from Cam Dawson of New Edge, speaking to us earlier on this morning. The semiconductor profit cycle depends on 2 big factors. Hyperscalers continuing to spend aggressively and limited new competition entering the space that could challenge margins. Markets seem to be questioning both of these factors. That's the challenge this morning.
You see it on the financing side of things. You're seeing this potentially coming from China, and you can see this in terms of the one sole winner, the ballast in the tech trade, which has been Apple. Initially, that was pilloried for this idea that they were not spending enough on artificial intelligence. They were falling behind, and suddenly now they're the golden child because they're not doing this kind of mass spend that you're seeing everywhere else. And so you could see this sort of bifurcation as people clearly get nervous about both of those things.
That weakness now looks like a strength going into earnings season this week. Let's turn to the bond market as well. 2s, 10s, and 30s. Yields declining just a little bit. And I stress just a little bit because we've had quite a big move in crude in the last 24 hours, and that move continues this morning. 2s are down by 2 basis points, down a single basis point yesterday. We're around 430 this morning on 2s. 10s down 3 basis points to around 462. Yields have repriced higher, a heck of a lot higher since this war started. Crude's much higher too over the same time period, but growth expectations have held in there. Unemployment's close to 4%, and resilience for the broader economy is still key. Now, I know we sound like a broken record, but we keep stressing this point because it's important. When we talk about the scare in tech, when we talk about the shock in energy and the repricing in rates, we're still not there yet, talking about a broader growth scare. And Bramo, to your point, because you raised the importance of earnings outside of the tech names, I think you see that in most of the earnings so far this morning.
It's been beat. We got first, of course, UPS. Then we got Coca-Cola. We got Royal Caribbean. We've gotten reports coming from PayPal. All of them beating expectations. CapEx plans going up. So you start to look at this and you say, okay, well, is this just the CapEx coming from big tech that somehow is filtering into these companies? Is it productivity that's filtering into these companies? Or is it the consumer that just keeps on spending? Are they spending because of the wealth effect, or are they spending because they just feel good and things are kind of humming along? These are the questions the Fed needs to dissect and understand. And to me, I'm looking at this and I see a resilient economy that continues to grow despite concerns about oil prices.
Full fat, full sugar. Coke
Let's
economy.
go.
Yeah.
Let's go float on a boat and drink Coke.
Okay. You just come up with that one too. You're having quite a moment. Have you had some Coke this morning?
The sugar-free soda. No, I have not. I've had coffee and water, okay?
Okay. Fully caffeinated, without a doubt. Coca-Cola up by 3.6%. Let's talk about this economy and the prospect for hikes. Under surveillance this morning, the president calling for cuts.
Kevin's fantastic, but he's got a board, and the board members are very political. He wants to do the right thing. I know what he wants to do. But you need the consent of some people that have perhaps bad intentions. Rates should be lowered. We should have the lowest interest rate in the world.
So here's the latest this morning. The president still confusing rates and credit. The president renewing pressure on the Federal Reserve ahead of tomorrow's interest rate decision. The president taking aim at the committee surrounding Fed Chair Kevin Warsh. Bloomberg's Tyler Kendall joining us after traveling with the president on Air Force One yesterday. Tyler, welcome back. What is the latest in this big debate down in Washington?
Well, John, at this point, President Trump appears to be giving Fed Chair Kevin Warsh his support, as the White House has given him some time to get his feet under him. Though, as you heard, President Trump appeared to question the motives of some of those members on the FOMC. Though, of course, we've heard from the more hawkish members that they are focused on the economic fundamentals and concerns that inflation has been over their 2% target for 5 years. Because as officials head into their policy meeting, they're confronted with a resurgence in price pressures as the conflict in Iran continues. And while President Trump said yesterday that there's a, quote, good chance something will happen to ease the tensions in the Middle East, we saw nearly 2 weeks of consecutive strikes, and the threat of escalation still hasn't been taken off the table. Then, of course, the other thread that we've been following and that you've been discussing is this robust investment in artificial intelligence, with few signs of slowing down. And in fact, the White House has encouraged it. John, yesterday I asked President Trump directly about competition when it comes to China on this. He said that the U.S. is leading AI development around the world and that he would like to keep it that way.
Tyler Kendall with the latest in Washington. Tyler, on the Federal Reserve and a whole lot more. Let's talk about this Federal Reserve. This in the Wall Street Journal this morning. Lots of people talking about this piece from Nick Timmeros. The headline, Kevin Warsh wanted a good family fight at the Fed. He's getting one. On the evening of June 15th, after the first day of his first policy meeting as Federal Reserve Chairman, Kevin Warsh sat down to dinner with the 18 officials who set interest rates alongside him. Governor Chris Waller, a former economics professor with a reputation for saying what others won't, put Warsh on the spot, according to several people familiar with the dinner. What's the point of all this, he asked. Tell me who you're putting on these groups, he said, and I'll tell you what they'll say. There were no brilliant ideas out there that everyone had somehow missed.
This is very interesting because basically you have Governor Waller saying what everyone has been almost saying and whispering, whether it's on Wall Street or in Washington, D.C. What is the point of these task force? It does feel like for some individuals, it is a punt for Kevin Warsh. And when you know the personnel running them, you can pretty much understand what the policy is going to be, especially given the names that are running these task force and their breadth of work in the industry for years and decades.
Stuart Kaiser of Citi still alongside us. Stu, with all in mind, the Family Fight Volume 2 may be on the table in the next 24 hours. I don't know. What do you expect the outcome of this Federal Reserve meeting to be?
I mean, from my perspective, we hope nothing done. I think for most equity investors, no change to rates for the rest of the year is probably where you want to be. I think you would argue the Fed's in a pretty good spot, 4.2% unemployment, and they're coming off a pretty friendly, CPI print. So a lot of this noise, frankly, is being self-created, and it gets into the idea of communication. Chair Warsh does not want to communicate, or so he says. The problem is he's got a board that loves to communicate, and if he's saying nothing and they're saying everything, it puts him kind of on the back foot in terms of managing market expectations, et cetera. So look, to me, the data justifies them kind of staying on hold. I'm not an economist, obviously.
Sure.
Andrew Hohenhorst at Citi's going to make that call. But from an equity perspective, the data that would get them to hike or the data that would get them to cut is probably not equity friendly. So we'd be pretty happy just kind of staying where we are.
So to be clear here, you'd be a seller on hikes?
Yeah, and the market would be as well, right? I mean, you're pricing call it a 30% chance.
Because they're not the good kind of hikes. Because we've talked to you about this in the past. That the economy's doing well and the interest rates are going up. That's not a bad thing, because it speaks to a better backdrop. Is this moment different?
Look, I think if they were hiking because, I don't know, you were seeing, really large productivity growth or very large wage growth, for instance, maybe you'd argue that was a good hike. But here it would seem like they would be arguing that the inflation risks are growing in the background and that they want to kind of nip that in the bud ahead of time. Honestly, I think the narrative for most clients is they're talking hawkish so they don't have to hike, i.e. they're trying to manage that expectation to avoid actually having to do a hike. So for that reason, I'd be surprised if they actually did hike, especially with the market priced where it is. If you were going into this meeting and the market was pricing a 70 or 80% chance of a hike, that puts the Fed in a much different situation than if the market's pricing, call it a 30 to 35% chance.
If they don't hike or potentially even give an inclination that they may not be poised to hike rates so significantly in the near term, do you think that the rally in tech reasserts itself?
You know, look, tech is the market at this point, right? I mean, it's such a big share of cap. But yeah, I think if you have September priced at call 75%, and if coming out of this meeting, the odds of SEP are significantly lower than that, I think that is probably a net positive for equity markets. But I think we're playing on the margins here a little bit. And look, the markets can't go up without tech going up, right? So in that sense, yes, I do think you would get tech higher. But I think, look, just dialing up and down the odds of a September hike a few basis points, I don't think is going to be enough at this point.
You know, earlier in the year, people were saying that this market was rate insensitive. And suddenly the market seems to be rate sensitive again. What changed?
Not too much, other than the issuance. I think the issuance change. The part of the rates curve that we're actually more concerned about is way out there at the 30-year point. And what's changed there is you've had global 30-year yield significantly higher, and you have people talking about, AI not being deflationary, AI actually being inflationary. So that may be sort of the one thing that's kind of changed in the background is the macro view on AI was this is going to be major productivity gain, margins go higher, but I get a lot of layoffs. That's sort of evolved into something that's more like the tokens have gotten expensive, the layoffs are delayed, and this is going to be inflationary rather than deflationary, at least chronologically in order. And look, if you think it's going to be near-term inflationary, and I think you might argue the Fed has very little ability to influence CapEx spending from the Mag 7, that means you have a little bit more of an inflationary impulse coming in, and that should get yields a bit higher.
Stu, it's good to see you. Thank you, buddy. Stuart Kaiser of Citi. Good final point there, the long end of the curve. At times it's felt untethered. For much of the last several decades, it's been anchored by a bunch of things. Now it's anchors away. Germany spending, they were known for fiscal discipline. Japan was known for deflation, they're now known for inflation, and they've got no idea what to do about it. They might have to hike interest rates. I think the Japanese officials themselves are confused right now, and that confusion is spilling out in public too. Then in the US, the biggest companies on the planet, based here in America, used to buy themselves, now they issue equity, now they issue debt. All of those things coming together, putting pressure on the price of capital.
You know, there was a time, and there were decades when people couldn't get incentivized to spend money, to have actual CapEx plans. Suddenly, everyone wants to spend. This is what industrial revolutions look like, and it is a sea change from where we were in financialization, where suddenly you just park your money in the market, hope for gains, and put it back into the market. It is a new era.
That's the competition for capital right now. Up next, we'll talk about it with Jason Thomas of Carlyle, warning the funds. Financing data centers are running dry. Plus, Yahira, how's your morning movers? Chinese competition fears rattling the chip trade.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
Making money isn't about drowning in emotions.
It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Equities negative at the index level, not too much disruption on the S&P, we're down a tenth. Bit more disruption on the likes of the NASDAQ, we're down by 1%. The S&P still around 3% from all-time highs, no big drama there. Some drama in chips though. So bizarre to see what chips are doing. Chips are down by more than 20% since the high on June 22nd. But year to date, they're still up by more than 60, which just tells you what a massive run some of these names have had.
They had unbelievable, insatiable demand coming from the hyperscalers that had unbelievable, insatiable capital coming from all sorts of investors. Now investors are saying, maybe not so much. And then there's a potential competitive edge from China. All of this coming together, giving people a reason to sell. Whether it's legitimate or whether it's just something that is a positioning issue remains to be seen.
Is it a price move looking for a narrative, or do we actually have a fundamental story here? We'll debate throughout the next couple of hours right here on Bloomberg TV. As we count you down to the opening bell, 2 hours away, let's get you some of those single names, some morning movers. Yahara has more.
Hi, John. We are
Yahara.
seeing selling across the chip sector this morning, with ASML and Applied Materials all falling after this report that China is beginning to mass produce certain chip-making machines. And while we don't have a lot of details, and I think Anne-Marie has done a good job introducing some skepticism to this report, as Lisa said, investors are using this as a reason to sell, trim exposure to the most crowded trade in this market. And I thought MoMeQ put it best earlier, saying that anything that puts a dent in the perception of perfection in chip stocks is going to get a market reaction, and that is what we're seeing today. Meanwhile, we are seeing it again this morning. Earnings, this earnings season, good results, not enough to satisfy investors. We're seeing Royal Caribbean shares down 3%, even after it delivered a beat and a raise. But this commentary from management is not helping, saying that geopolitical tensions that have dragged on are starting to hurt bookings. And it turns out all those World Cup celebrations were good for Coca-Cola. Those shares up 4.4% after the company posted a beat and a raise, saying its role as a major sponsor in the tournament helped boost demand alongside strong demand for its lower sugar drinks like Coke Zero. John.
Yahara, thank you. Appreciate the update. Thank you. More from Yahara in the next hour or so. Another beat just crossing the wires, this time from Boeing.
Yeah, their free cash flow actually came in positive $631 million versus the estimated negative $331 million. So another beat. This is a very different type of story with a very big backlog and some other production issues. Nonetheless, looking at overall just revenues that completely beat, they talked about how they have $715 billion of a backlog.
Not bad, eh? Not bad. Quite a pipeline for that company if they can actually build the planes quickly enough. The stock is down by about 1% in the pre-market. On our radar this morning, the tech sell-off deepening following reports that China began mass-producing its own chip-making tools. The information reporting the advanced machines will raise competition with the European tech giant ASML. Elsewhere, Taiwanese prosecutors detaining an NVIDIA employee as part of a probe into the alleged smuggling of AI chips into China. The staff member is being held on allegations of forgery and breach of trust. NVIDIA has not not been accused of any wrongdoing. And finally, this is a big story, potentially. PJM, the country's largest power grid operator, warning data centers may face involuntary outages. The company telling stakeholders that sites failing to secure enough power may be temporarily dropped from the grid as soon as the middle of next year.
This highlights how much pressure some of these utilities are coming under. They're coming from political pressure, with the politicians saying you cannot raise prices and you have to cater to everybody during incredible heat waves, while also trying to cater to data centers that are looking to build out. And they're saying, if you want this, you need to pay up. And what they're seeing right now is some difficulty doing that in the near term because their emergencies are very near term. They're facing shortages and outdated technology, and they have to upgrade it at the same time that everyone's screaming at them, do better, do more, to give us more.
This is why the Trump administration actually got ahead of this months ago when they were basically telling these tech companies, you're going to have to subsidize some of the electricity bills for a lot of customers that are living by these data centers. At the same time, there's tons of issues with some of these data centers, especially when it comes to the high intensity and the heat, the cooling that's going to be needed for a lot of these data centers. This is going to be a massive political and logistic problem for years to come.
It already is going into the midterms, a major talking point heading into the November midterms. Sticking with the AI build-out and the cost of it, 4 of the Mag 7 reporting earnings this week. Alphabet setting the stage, raising spending plans ahead of Microsoft, Meta, Apple, and Amazon, all scheduled to update guidance in the coming days. Jason Thomas of Carlyle warning the pot of money financing data centers might already be running dry, writing the hyperscalers' free cash flow has now been exhausted. Over 80% of the projected capex over the next few years will have to be externally financed. Jason joins us now for more. Jason, welcome to the program. I always enjoy your research, you know that.
Thanks
I think it's great that you publish it on the website as well, at least some of it. Just share with us where we are now and how increasingly dependent we might be on capital markets, and also how wide open that window might be for some of those companies.
Well, I think what's interesting is that in the real economy, we have seen signs of crowding out for the past several years. And that is essentially the AI data centers bidding away real resources from the rest of the economy. You can think of course, grid connections, cooling systems, engineering talent, and then, construction workers. It's remarkable that since the Fed started raising rates in 2022, real estate development, traditional, commercial, residential, down by about 12%, but yet construction employment has risen 3.7 times as much as construction payrolls. But now this is something that is, of course, of great interest to market participants and market themes, because in the past, this was all, for the most part, internally financed. It was the operating cash of the hyperscalers that was paying for all of this. Now that pot of money has largely run dry. We saw Alphabet moving into negative free cash flow for the first quarter since they went public in 2004. And so on a prospective basis, you have investors, portfolio managers, that have to decide, is this trade, is AI data centers going to consume almost the entirety, or certainly a large portion, of their incremental risk budget over the next 3 to 5 years? And I think when you see the upward move in yields, some of the uneasiness we see in the markets, I think this is a genuine question, and it may not be quite as easy as many suppose when they looked at those spending projections, $5.5 trillion between now and the end of 2030.
Well, Jason, let's get into that question. So to your point, they've crowded out parts of the real economy. Markets in America, as you know, very deep, very liquid. Do they have the potential to also crowd out capital markets too? And you touched on maybe the pushback that started to emerge just on the margin. How vulnerable do you think parts of capital markets are to the issuance we might see, the capital demands of these companies?
Well, I think what's interesting is that you don't need to be bearish on the prospective returns, the expected returns on data centers, on AI more broadly. All you have to be is especially conscious of prudential risk concentration limits and how much of your portfolio you want concentrated to a single risk factor. Secondly, what we've learned this year with chips, why is the broader semiconductor complex memory chips selling off? Ironically, it's because they're making too much money. When you look at Samsung's guiding towards 19-fold year-over-year growth in earnings, companies traditionally with 20 to 30% operating margins moving into the 50 to 80% range. when you look at just the BLS data, loaded circuit boards, the GPUs, plus the high bandwidth memory, then the capacitors, the labor necessary to construct them, that's up 160% year over year. So that shock, that positive profit shock, price shock to that space has raised a lot of questions about is there profitability available downstream? Can the infrastructure layer, the hyperscalers, neoclouds, recover those costs in compute rental rates? Can then the frontier labs and the models that are renting that compute actually pass on those costs? And I think that this is much more complicated because people, instead of thinking in terms of an AI trade, are a lot more focused on the links in the value chain and accounting identities, and how excess profitability in one space actually makes the world much more complicated downstream from that.
You have an interesting thought, Jason, in your piece, where you think that part of the reason why valuations got so heady earlier this year, particularly in places like memory chips, was because of some of the actions that the Fed took. And this was kind of akin to 1998 in your view. Can you talk about why you think there is this connection between Fed policy last year and the tech build-out and the tech valuations that we saw earlier this year?
Sure, I do think it's quite analogous to 1998. And that year, you had, of course, LTCM failed. You had the Russian debt default. The economy was doing very well. Real GDP growth was about 4%. So this is the economic data. We're not suggesting that it was time to cut rates, but there was worries about spillovers from financial markets. The Fed cut rates 3 times. The next year, fixed investment in telecom rose 75%. Over, I think it was the next 18 months, where from 98 to the peak in early 2000, the NASDAQ tripled. So I think that this was a lesson that when you cut rates, rate cuts are a very blunt instrument. You don't get to channel who benefits or how the lower rates are used in the economy. When you're cutting into a concentrated CapEx boom, you're bringing coal to Newcastle. You're taking what is already probably above trend fixed investment growth, capital accumulation, and causing it to go vertical. And that really is quite similar to what we saw in the first 6 months of 2026, following the 3 rate cuts last year, where compute investment in the United States went vertical. You know, the growth as a share of GDP was 63% between September of 2025 and what we expect to be the results through June 30, 2026. So I think that is, when you're in the midst of something like this, these sorts of CapEx booms only come around once every 25 years. This could be something that we haven't seen in roughly 100 years. Maybe the last time we saw capital accumulation on this scale was electrification in the 1920s. When you're in that kind of environment, you have to be a bit more conservative about the rate cuts. And I think that the discussion today, and I certainly don't expect a rate hike tomorrow, but I think the discussion is not really about hiking rates. It's about whether they should take back those cuts that happened last year.
I am wondering, though, Jason, just to kind of bring together the point you were making about correlations and looking for uncorrelated assets, can you put this genie back in the bottle, or has everything been reduced to an AI trade? That if you do get some sort of reversal of some of the high valuations, you also take away a lot of the strength in the economy that has supported a lot of other themes as well?
Well, I think that the issue today, when it comes to rates, is really that, you know, we've been too focused on technocratic details. You know, right now people are talking about how there's going to be revisions to PCE, and you know, it's that kind of discussion. But what we've learned over the past year is that if the central bank won't deliver price stability, voters will take matters into their own hands. There's been a 27% cumulative increase in the price level since 2021. Many politicians are, of course, campaigning on an affordability theme. And that affordability theme, in many ways, is suggesting that this increase in prices is a market failure. And they're recommending very aggressive public intervention into markets. And so I think that rather than look at revisions and like, oh, don't worry that your grocery bill is up 30% because there's going to be downward revisions to financial services and legal services and the new PC report, so everything's fine. Instead of taking that approach, I think that the Fed should more clearly communicate that ultimately they are accountable to voters. We spent so much time talking about Fed independence, the independence from political influence on their decision making. But I think we should probably spend more time thinking in terms of accountability. And voters have been upset about excess inflation, cumulative increases in the price level very consistently for a long, long time. And so I think, again, it's not just this genie back in the bottle. I don't suspect, I think this has got a momentum of its own and it's going to play itself out. I don't think rate hikes would do anything to undermine that. But the rate hikes would send a very important signal that the Fed is, again, ultimately accountable to voters and that they take their price stability mandate very seriously.
Jason, do you think that it could potentially also cap longer-term yields in a way that it hasn't been able to do so over the past few months?
Well, I do think the upward move in yields partly reflects the experience. When you look at TIPS yields, 2.4% at 10 years, almost 3% 30 years, a lot of that, I think, reflects the beating that TIPS investors took in 2022 to 2023, losses of 20, 30% in some cases. TIPS provide a hedge against inflation. They do not provide a hedge in the increase in real rates necessary to actually stabilize inflation. And so I think that the real term premium, what we've seen increase over the past few months, is something that ultimately could come down if you have a signal from the Fed that they're going to be more serious about their price stability mandate. And of course, when you think about where financial markets are tight today, if there's any evidence of that anywhere, it is, of course, in mortgage finance. And because we have 96% of outstanding mortgages in the United States that are long-term fixed rate, it is the 10-year that is the key reference rate there. And so, it could be that rate hikes, or at least the signal from hikes, actually do cause some of those reference rates, those 10-year yields, to come down a bit and actually improve mortgage finance and home buying affordability.
Jason, appreciate your time. We could talk to you all morning. Jason Thomas there of Carlisle. Jason, thank you, out of Washington, D.C. this morning. Let's get you an update on news elsewhere with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. JetBlue reporting second quarter results that beat analyst estimates as strong demand helped offset high fuel prices. JetBlue saying our second quarter performance reflects the strength of our Jet Forward strategy and the focused execution of our crew members. Coca-Cola shares rising in the pre-market. The company reporting second quarter earnings that beat on both the top and bottom lines. Coca-Cola raising its full-year outlook, saying its World Cup sponsorship helped bolster demand. NVIDIA is set to invest $5 billion in AI startup Safe Superintelligence. Sources telling us here at Bloomberg this will mark one of the chipmaker's biggest bets of the AI boom era. The deal will give the company access to NVIDIA's next-generation Vera Rubin platform. And that's your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in the next hour. Up next on the program, bracing for a surprise.
This really is a live meeting. I think it's tough to tell what they're going to do. I think they ultimately hold. But the risk that we do get a surprise is much, much higher.
That conversation up next with Matt Hornback of Morgan Stanley.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The Fed's two-day meeting begins later on this morning, under surveillance this morning, bracing for a surprise.
This really is a live meeting. I think it's tough to tell what they're going to do. I think they ultimately hold, but the risk that we do get a surprise is much, much higher. Even if they do hold as we're expecting, the market can maintain this kind of upward slope of Fed pricing. We just keep pushing it out.
So here's the latest this morning. The Fed's two-day meeting kicking off later on today. Markets widely expecting the central bank to hold rates steady, but a surprise hike by Fed Chair Kevin Warsh is not completely unstable. Matt Hornback of Morgan Stanley writing, we expect the Fed to stay on hold. That said, inflation has to perform in the coming months, or the Fed will switch to hikes later this year. Matt joins us now for more. Matt, good morning.
Good morning.
How much dissent are you expecting tomorrow afternoon?
Well, it's interesting. I mean, we are expecting a couple of dissents coming out of the committee. But I do think that you could make the case that there may not be any dissents, actually, John. Because in the end, if we look at what has happened since the June FOMC meeting, where there were no dissents, the data has been better. The inflation data has been better. The labor market data has been somewhat disappointing relative to the trend that we had seen in March, April, and May. And so if they weren't willing to dissent in June, why all of a sudden the change of heart? I mean, crude oil prices are roughly where they were going into the June meeting. They're obviously a lot lower than they were 3 months ago. What's the rationale to dissent? You can make the argument that there will be no dissents tomorrow.
Beth Hammack, Cleveland Fed president, making a statement on LinkedIn, going into the quiet period, which was interesting timing, making the statement, the suggestion that companies in her district are telling her that prices are too high, and perhaps ultimately this Fed should do something about it. What was your reaction to that piece?
I think people have thought prices were too high for 20 years, John. The real question is, have the increase in prices that we've seen over the past 5 years fed into inflation expectations such that people continue to expect inflation to be running very, very hot for a very, very long time to come? There's not a lot of evidence to suggest that that's the case. And when you look at markets, just look at 5-year forward, 5-year break-even inflation rates, right? The Fed publishes this measure. It's on the Bloomberg terminal. It's been very stable since the Fed hiked rates in 2022. Where is the need for the Fed to get inflation fighting credibility? It already has. I don't see the rationale for a rate hike on Wednesday to solidify credibility the Fed already has. It doesn't make much sense to me.
Well, does it still have it in the same way? And I ask this because I'm looking at long ends of the yield curve continuing to rise, and this feeling that right now in markets, people are pricing in more than a 70% chance of a September rate hike. If there are no dissents, do people take back some of that pricing of a potential rate hike ahead?
Absolutely. The thing that we have to recognize is that real rates have gone up a lot. Financial conditions have already tightened a lot. The big question facing the Fed today is, have they tightened enough? And I just don't think that they have enough information to say one way or the other.
Does it behoove them, though, to take that pricing out of the market, to give a sort of dovish signal at a time when the market is doing the work for them and could potentially get inflation lower without them even having to act, as long as there are dissents, as long as there is this family fight?
Gosh, I think if they were being that clever, then we've got a whole nother situation on our hands. I mean, do they manipulate the dots to try to get a certain outcome? I think the answer has always been no, right? They do, of course, look at the statement language. They have a message they want to convey to the public, but are they going to play games with the public's perception of, I think the answer is no. I think they have a clear mission. They've made that very transparent to the public. They want inflation to come down. Interest rates have gone up a lot since Chairman Warsh delivered that message at the June FOMC meeting. The question they face today is, have those rates gone up enough to help inflation come down in the manner that they would like to see? It's only been 6 weeks. I don't think they have enough information in hand to say one way or the other with confidence, which is what I think you need to have if you're delivering a rate hike that isn't fully priced in by the market. You need to have confidence that you're doing the right thing. I think the answer is that they don't yet have that confidence. We don't think they're hiking rates.
But at some point, if inflation doesn't come down quick enough this year, don't they have to hike, or they just look like they're talking out of both sides of their mouth and not delivering? It's just empty promises?
Absolutely. If inflation doesn't come down in the way that they would like to see, rate hikes are on the table. I mean, that's what we're saying at Morgan Stanley. Our chief U.S. economist, Mike Gapin, is making that point very, very clearly. He happens to believe inflation will come down such that the Fed isn't going to deliver rate hikes this year. It's a view based on a solid rationale. The issue that we face today in this moment for this meeting is, do they have enough information to say with confidence that financial conditions haven't tightened enough? And I think the answer is clearly no.
So, Matt, just quickly, do you expect that gap between the two-year yield and the policy rate just to be sustained for the time being?
For the time being, absolutely. After this meeting, we're going to get 2 rounds of economic data before the Fed has to make a decision in September. That is a lot of economic data that will inform their decision in September. We think the data will come in and tell them they don't need to hike rates. We'll see.
Matt, it's good to see you. As always, thank you, sir. There's a base case, and then there's a conviction level around that base case, and it varies. Based on the conversations we've had so far this morning, consensus is clear, it's hold, but conviction around that hold, it's different at different banks this morning.
Yeah, how do you keep alive the potential of a September rate hike if you have no dissents? And I think that is sort of a key question. Maybe it's, too deep, but it's what I'm thinking about.
Up next, we'll catch up with Mark Lehman of Citizens, Matt Bryson of Wedbush, the former Kansas City Fed President Thomas Hoenig, plus we'll catch up with Oksana Aronoff of JP Morgan Asset Management. The third hour of Bloomberg Surveillance, just around the corner.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology. I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The good news for tech seems to be priced in.
They've got the strong earnings, but the market wants more than that.
When the market stops rewarding good news, you have to pay attention.
We're still positive on tech longer term.
Going long U.S. equities just outside of the mega cap tech, I think, is a great place to be.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this from South Korea to the US. Over in Asia, down across the board in South Korea, the Kospi negative by close to 11%. The worst day of losses we've seen since March. On SK Hynix, down by 16. That stock cut in half over the last month and change. In the US, equity futures shaping up as follows. Just about positive on the S&P 500. The clear and evident weakness, the epicenter for it is in tech, it's in semis. The Nasdaq 100 this morning is negative by 0.8.
The MSCI World Semiconductor Index has fallen 13% so far this month. That is potentially the worst performance since 2022. Not exactly the momentum type losses we're seeing that track back far further, but it is up 33% on the year. And it kind of goes to your argument here, which is ultimately this is just taking some of the chips off the table, sorry for the pun, after a pretty robust year. Question is, how far have we gone and how much more is there to fall potentially, as you do have a couple of threats coming down the pike? Right, how sustainable is this? And when it comes to the threats, we've seen this movie before coming out of China. We know that they want to obviously ramp up what's going on in AI, but this one is interesting because this is going down to the hardware, which would be able to make some of those very advanced chips. When it comes to ASML, basically they're trying to copy and paste. China is working on a very outdated version of ASML. The information says that they have a homegrown version. We don't know a name. Potentially they're trying for 5 this year. I'm just a little skeptical because there's just not enough information. But of course, you have to treat this potentially as a credible threat.
You're right to be skeptical, but it's enough, sufficient to spook a market that's run up so much, particularly for the chip names over the last year or so. Need to turn to the bond market as well. Check it out. 2s at the moment, down 2 basis points. 10s down 2 as well. Some more issuance coming later on today from the 7-year, I believe. The 5-year a little bit softer than anticipated, weaker than expected yesterday. The 2-year this morning down 2 basis points to 430. 10s around 463. Yields still elevated, even with the decline in crude over the last 3 days or so. Heading into this Fed meeting that starts later on this morning.
Yeah, the $44 billion of 7-year notes will be an interesting test of market demand at a time where CapEx concerns are increasingly competing with government issuance. And this goes to the question that we're seeing in tech names. Suddenly, when everyone wants money, people who have the money to give want a bigger premium for it. And at what point will that cap some of the ambitions that we're seeing, not only from big tech, but also from governments around the world? This is going to be the angst that Fed officials have to deal with. It's not just about this question about oil prices, this question about inflation. It's a question about capital and exactly how you reduce prices and what is the appropriate level at a time of incredible growth in CapEx.
And capital markets, to some extent, are pushing back. Concessions for primary offerings are a little bit bigger. Spreads in the secondary market are a little bit wider. I don't think it's dramatic. We're still sub 300 on high yield spreads, but it's moving in a direction where things are getting a little bit more discerning.
Almost every single tech issuance so far this year has underperformed. And now you have tech names that have an investment grade ratings that are trading like high yield bonds. It raises a question about how long that can go on before that crimps some of the CapEx plans of these companies.
Your week ahead looks like this. Later on this morning, then 2-day meeting begins. Federal Reserve meeting concludes tomorrow, and then the tech earnings bonanza kicks off. We get Microsoft Wednesday alongside Meta, Thursday Apple and Amazon, and in South Korea we'll hear from SK Hynix as well.
And when you hear from SK Hynix, what the previews are talking about is they are going to do incredibly well. But what we've seen in the past few reports from some of these chip companies is that you can surpass the bar, but you can still be penalized when it comes to the market reaction. That bar is ever so high for this company going into it.
Seen it with Intel, seen it with Samsung, seen it with so many other names as well. That for the chip sector, even for the likes of Alphabet, for the hyperscalers, you can put up good numbers, but you need to do so much more than just that for this market right now.
What can they do? I think increasingly that should be the question. What can they do to get a good reaction in markets? Because ultimately, if you crimp CapEx, that potentially is crimping ambitions. If you deliver incredible earnings, it hasn't been enough. Is there anything that they can do to bring investors back?
Nasdaq futures negative by 0.75%. Coming up this hour, Mark Lehman of Citizens will join us with tech stocks facing a fresh wave of volatility. Matt Bryson of Wedbush will join us too with chips selling off on rising global competition. Plus, we'll catch up with the former Kansas City Fed President Thomas Hoenig on how the Fed can avoid hiking rates. We begin this hour with stocks holding steady and tech sliding on financing fears and reports that China is producing its own semi-machines. Mark Lehman of Citizens writing, this is a classic worry for the markets. We saw it over the years in all aspects of tech. The risk is high. The results rarely bear out the extreme fear. Mark joins us now for more. Mark, good morning. Good to see you. You like the upbeat view on everything because you spend too much time around these guys. Then you come to New York and we bring you. Shall I go through the long list of fears right now? Competition from China, right? That's one. Financing concerns are another. Price and positioning, that's one more. Would you put weight on any of those things this morning?
Well, I think they're all valid. I think every investor is thinking about that. That's why I've seen the huge gyrations in the stocks. And the year-to-date numbers, despite the last month, are still quite good, especially for the semiconductor stocks. But I do think when you have this kind of explosion in terms of supply and does demand stay as high as we expected, you're going to have this kind of volatility. And I do not expect that to abate even after this week's big spate of earnings coming up.
Well, let's try and talk about fundamentals. When we saw the kind of margins we saw at the likes of Micron, some people did push back and say that's not sustainable because capitalism will do its thing and competition will come. Are we seeing that competition arrive? Or is it just too complex to come up with the kind of competition you need anytime soon?
I'd say both. I've been around a long time. I remember when Micron was a $100 million company, and we talked about these incredible waves of demand and supply that they get, and this goes back to the early 90s. It's no different now. The difference, of course, is the stakes are higher, the technology is greater, and the ramifications of it and the profitability is that much bigger. We have trillion-dollar semiconductor companies, which we didn't even think would ever happen. So competition's on the horizon. Those kind of profits will spur that kind of competition. But I also think the demand and the opportunity is so vast that we'll be talking more about that than the fears.
With these questions persisting, is there anything that big tech can do in their earnings reports to bring investors back at these valuations?
I'm not sure, Lisa. I think these earnings kind of speak for themselves. I think they're going to be very good. I think they're going to have nice outlooks for most of the companies. But what they're going to talk about takes years, and what kind of profitability that they're drumming up is going to take a long time to come to fruition. That's why Apple is outperforming lately, because they're kind of slow and steady and doing kind of the tortoise thing, where a lot of these other companies are the hares. And I think that spate of earnings that we're going to see this week won't quell any of those worries. I just think the long-term outlook is so good that you're going to have these kind of yin and yangs for so long, because this opportunity is so vast. You're also seeing it in other parts of the market, right? You're seeing these other companies beat earnings quietly, if you will, because they're not as exciting, Coca-Cola and others today. And they're using the kind of data center, they're using the data centers and the AI to power their earnings, and we're not even talking about that.
Well, some people are. Morgan Stanley's Mike Wilson has been talking about how you are going to see margin expansion at non-tech related companies because of AI adoption. And you can go and see that in some of the earnings now. I just wonder, though, it's at a lower cost. We have shifted from token maxing and trying to explore and throw money at this to see what it looks like, to rationalization, reducing costs, looking for cheaper models, open source types of models. How does that change the calculus and, frankly, the mood where you are in San Francisco?
Well, it enhances the opportunity for more companies. This is not going to be just OpenAI and Anthropic, and I think a lot of people simplify that to think that. There's so many adjacencies that are going to be benefited by it in all the parts of the economy that you just talked about, whether it's in the services business, whether it's in the manufacturing businesses, whether it's in any business, frankly, that you're using that. We see that in Citizens with our Reimagine, where we have 50 use cases, and the cost saves and the opportunities are so much vaster than we even thought a year ago. So I think companies are just beginning to understand that there was this whole fear factor going into it, that I'm not going to be able to understand and use the AI narrative for my own company. That is quickly abating in every boardroom, and now it's like, let's do more. And I think you're seeing that in the results of these companies, even in its infancy of its usage.
Are you concerned about the threat from China? I know you think AI is leading, the United States is leading the AI race,
Yeah.
but China seems to be right there behind us.
A year ago, I wouldn't have said that. I'd say lately, yes. I think they're definitely catching up. Are they there? I'm not sure they're right on top of us yet. They'll have lots of solutions. We talked about this immediate fear for Anthropic and OpenAI 6 months ago, that it was quickly going to overtake them, and that we don't even talk about that. So I think there's just lots of room, Anne-Marie, for more players here. The cheap China threat has always been the case. I don't think it's any different here.
But China has a government that is injecting tons of money into these companies and picking winners and losers. What do you think? What is the view from the West Coast of this administration potentially doing the same with our AI champions?
I think there is that fear. I think we see it in the news stories, but I don't think we see it in the results. I think we are the innovation engine for the globe. I think the China fear, not just because of their technology innovation, but their politics, I think is on top of that. And I think here we have our own issues, but we have the best technology in the world, and we're not slowing down.
How expensive is San Francisco real estate right now?
More expensive than yesterday, today.
It must be pretty wild, the amount of wealth that's been created in some of these places.
It's a problem, and I think Mayor Lurie and the rest of the politicians in San Francisco are trying to find solutions to quickly ameliorate that, but real estate doesn't ameliorate itself quickly. As you know, these take a long time to build. We're trying to dumb down some of the regulations that we've had. The administration is doing everything in their power to do so. But it's always been, when I moved there 35 years ago, it was the most expensive place to live, and it hasn't changed.
I have no doubt. Is it harder to attract talent, given how expensive it is right now?
It's more expensive to attract talent.
I bet.
It really is. So I don't think that's going to slow down, because people want to be there. There's that kind of vibrancy, despite what you read sometimes in the media. The vibrancy of innovation has not slowed down.
And you've got to serve these clients too. Business must be booming right now.
Business is very strong. I think we've heard that on other speakers lately about how good the other parts of the ancillary parts of the economy are doing. I do think the economy is doing well. I do think AI is lowering the cost. I think there are huge political and social ramifications to that, but it's not slowing down. The fears of this gyrations in stocks, I think, will not slow down at all. The demand is going to be there. The supply is the question mark.
Mark, thank you, buddy. As always, thanks for being here. Mark Lehman there of Citizens. Just taking the temperature of the AI ecosystem and the price of real estate in certain cities on the West Coast right now.
Yeah, have you seen some of the price increases in different places? I mean, you can imagine that if someone who's 26 who graduated from Stanford or didn't graduate from Stanford to go start his own startup now has $100 million, and you can buy whatever you want. That's what you're competing against.
The price of whatever they want is going up. Yeah. Let's give you an update on news worldwide this morning with your Bloomberg brief. Vonnie has more. Hey, Vonnie.
Hey, John. Thank you. President Donald Trump voicing support for Fed Chair Kevin Warsh.
Kevin's fantastic, but he's got a board, and the board members are very political. He wants to do the right thing. I know what he wants to do, but you need the consent of some people that have perhaps bad intentions. Rates should be lowered.
Investors widely expecting the Fed to hold rates steady tomorrow. There is a small chance of a surprise hike. NVIDIA is set to invest $5 billion in AI startup Safe Superintelligence. Sources telling us here at Bloomberg, this will mark one of the chipmakers' biggest bets of the AI boom era. The deal will give the company access to NVIDIA's next-generation Vera Rubin platform. Severe storms and an expanding heat wave disrupting travel across the Midwest and East Coast, leaving more than 500,000 customers without power. The heat wave is expected to shift west, sending temperatures across California soaring. And that is your Bloomberg Brief. John.
And Vonnie, thank you. More from Vonnie later this hour in about 30 minutes' time. Up next, we'll get you some morning calls. Plus, we'll catch up with Matt Bryson of Wedbush with chip stocks hit by a 1-2 punch of financing fears and China competition concerns. From New York City this morning, good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Anything that puts a dent on the perfection of the chip stocks will cause a market reaction. A while ago, we were thinking the upside could almost be infinite, and obviously that is not sustainable. It's losing patience with the story of invest today to hopefully win tomorrow, and we're not really seeing the end in sight.
That was Mike McHugh with PSP Growth weighing in on this situation in the tech sector right now. Underperformance on the Nasdaq, down by 0.8% on the Nasdaq 100 this morning. Everything else is okay, and we've stressed that a number of times over the last few weeks. The Russell just about unchanged, the S&P likewise as well. Lisa talked about the outperformance you've seen on the equal weight. The real economy stuff, that stuff is still all right. It's resilient in the face of these shocks. So let's call this a tech scare, and let's get into this tech scare. The things we're talking about throughout this morning, competition from China, capital concerns, all of that is valid. Absolutely, without a doubt. And it's not just those two things, it's others too. And the bar is high for price and positioning going into these earnings stories later this week.
And it's not a fundamental challenge to the story of AI. If anything, what you're seeing in that sort of divergence, bifurcation between big tech and the real economy, maybe is what Mike Wilson and what we were just hearing moments ago from Mark Lehman, is that the rest of the world is actually gaining efficiency from artificial intelligence, which is what you need for the tech trade to continue. It's just that the tech story has changed, and at what point will it stabilize to a level where people can understand and rationalize valuations where they are?
That resilience in the so-called real economy is keeping yields elevated. That's one part of the story. Yields are elevated across the curve. 2's out to 30s, 2's at about 430. But that's not the only story. Supply's an issue as well. That competition for capital. It's not just the Treasury alone now issuing tons of debt. It's others as well competing with the Treasury. And you can see the debt, just the pushback starting to emerge. I don't want to go over the top with this. I know you don't either. It's just on the margin, but it's notable.
People have the leverage, if you're an investor, to demand more yields, and they are doing that. And suddenly, that is a very different scenario where every time you saw yields creep above 5% on the long end, everybody would crowd it and buy. That's not happening in the same way.
That's the bond market, and you're not seeing much of a rally off the back of these moves in crude. So let's finish on crude. WTI and Brent. Brent crude around 87. WTI around 81. We're down more than 1% this morning. We've given up some of the sell-off in the session so far. We've had 3 days of weakness on a crude price, 4 days of, what, a cessation of strikes? Yeah. We've hit pause a little bit? Okay. Where are the talks? The president says the talks are happening. Where are the talks?
Well, I think it's hard to understand whether talks are happening directly between Tehran and Washington, but there are mediators like the Qataris and the Omanis that are trying to establish some ground level for there to be a longer cessation of hostilities. I would say the most interesting talks right now, which could potentially open the door for longer-term talks, would be between the Omanis and the Iranians right now on potentially opening up this middle passage of the Strait of Hormuz. Remember, we have the northern and southern passage of the Strait of Hormuz, potentially opening up the middle passage, which would mean a lot more vessels can move. There's a lot of issues with this, though. Conventional wisdom is that this has been mined by the Iranians, so you're going to need to demine and sweep this strait as well. But if you're looking at any talks that matter to this market, it would be those.
Brent this morning, around 87. WTI, around 82. Let's get you some morning calls. That's the price action. Your first call from TD Cowen, downgrading Intuit, highlighting AI risk and intense competition. That stock with a bounce this morning, up by 1%. Your second call from RBC, keeping an outperform on Tesla, saying a combination with SpaceX would create a compelling vertical integration from orbit to ground. And finally, UBS kind of gives price target on Amazon ahead of earnings. The analysts expecting higher long-term CapEx assumptions. That stock is up this morning, but we're on CapEx watch over the next few days. Let's stick with tech. Microsoft, Meta, Apple, Amazon, all reporting in the days ahead, delivering another test for the so-called AI trade. Matt Bryson of Wedbush writing, the hyperscalers and cloud service providers are best positioned to understand the likely payouts from their AI investments. I'd rather be on their side versus fading their view. Matt joins us now for more. Matt, that's punchy. What did we learn from Alphabet last week, and how does that inform your view, at least, of what we might hear from these names this week?
Yeah, I mean, Alphabet told us that they are spending more today. They're looking at spending more in 2027. From my perspective, that tells you that they see the value in investing in AI, even if it's there are more concerns in the investment community.
Matt, would you draw a distinction between companies that are on the offense and spending all this money and those that seem to be on the defense? How would you put one name in one bucket and the other in maybe the other bucket?
It feels like the companies that have had large investments in data centers, so the AWSs, the Googles of the world, that they're the ones who are willing to spend. And you look at like an Apple, we've all seen the reports about how they've struggled a bit to get their own AI chips up and running. They've never been a large data center customer, not as large as the cloud players. And so I think it's more that the ones who are investing, they were just already there.
So going forward, do you think that right now hyperscalers pose the greatest opportunity for people, and that semis potentially have gone too far because they potentially are more cyclical, or where is the trade at this point?
I mean, so I'm a semiconductor analyst, so I'm a man with a hammer, and I'm going to use that hammer. But more seriously, with the semis, I think we're in an environment of shortage. And I think what you're seeing is that the return on these AI investments looks so good that their customers, the hyperscalers, the neoclouds, they can't get away from spending. I was at the AMD's event last week. The neoclouds I was talking to, they're seeing full returns on investment in 2.5, 3 years. And so it makes sense to build out.
How much do they depend on the flywheel of the OpenAI and the Anthropic trains? The idea that they keep trying to get as much compute as possible, hoovering it up, even though they don't necessarily yet have the revenues to support that, and need the backing of the likes of NVIDIA to make those commitments.
I mean, certainly on the hyperscale side of things, that plays into their investment decisions. With these smaller neoclouds, I mean, they're looking at smaller AI customers. So they're building out $50, $100, $500 million data centers. They're not spending billions and billions. And so that's telling you that there's real demand beyond the Anthropics and OpenAIs of the world.
When it comes to real demand besides those OpenAI and Anthropics, Matt, how concerned are you about the threats that are coming out of China?
So I think if you're talking about cheaper models, at least from a semiconductor perspective, it's a good thing, right? If we bring down model costs, that creates more adoption and it drives more data center consumption, at least over time. If you're talking about the threat of chips or what China's doing in chip development, YMTC and CXMT, they've been around for a long time. Even as CXMT got a lot of money from the capital markets, they've always gotten support from the Chinese government. I don't think money's been their issue. So I just don't see a whole lot changing there. And if we move over to the news about China advancing on the DUV front, I mean, they were able to get DUV machines previously. They're still behind on lithography. They still can't make the most advanced semis. Nothing, in my view, has changed there.
I'm not used to seeing Wedbush and seeing that color palette. Are you?
No.
Right? Usually it's like loud colors. Did he leave anything behind, Matt? Like jackets or anything like that? Any merch?
He didn't leave any for me specifically. But maybe I should go raid his office.
I don't suppose you'd want it anyway. Matt, it's good to see you. Appreciate the update. Matt Bryson there of Wedbush. Of course, I'm talking about Dan Ives.
Of course.
He's no longer with the firm.
I was about to say, it doesn't really represent the
I think Wedbush, and I just think these like loud colors because of
with lots of patterns.
Right, yeah.
Highlighter color everywhere.
Clashing.
Yeah, exactly.
Fluorescence.
The more clashing, the better. When his wife tells him to not leave the house, he's like, that means I'm doing my job well.
Right, that's
exactly.
the gauge.
Yeah, not exactly, cream.
It's not how it works at Casaferro. NASDAQ futures this morning, down by 0.8%. Coming up, former Kansas City Fed President Thomas Hoenig as the Fed's two-day meeting kicks off, plus Yahaira has your morning movers. Circular funding fears weighing on the chip makers, competition for capital, competition from China, all of that, as Bramo would say, a bit of a toxic brew for the tech trade. ASML down 5%, Applied Materials down 4%, Intel down another 5 percentage points. The opening bell, 60 minutes away.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting, rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
60 minutes out from the opening bell, equity futures doing better. We're positive by 1/10% on the S&P. We're negative on the Nasdaq still. We're down by 0.7. Within that Nasdaq, within the tech trade, chips have been struggling for the past few days. They've been struggling since the highs of June. We're down by more than 20% since then, and we're down again this morning. Let's unwrap some of this, unpack it all. Let's get your morning movers, your single names. Yahara has more. Hey, Yahara.
Exactly, John. We start right there with the chip sector selling off this morning, and these are some of the individual names falling. Intel, ASML, after that report that China is beginning to mass produce certain chip-making machines. And while we don't have all the details, investors are using this as an excuse to trim across the chip ecosystem because it adds to the jitters that investors have already had, whether all the billions of dollars being poured, hundreds of billions of dollars being poured into AI, whether all those investments will ultimately pay off, and whether they are needed if we eventually get cheaper models and cheaper chips. Meanwhile, it turns out that the World Cup was a big boost for Coca-Cola, so Spain not the only winner there. Shares are up nearly 3.9% after it posted a beat and a raise, saying its role as a major tournament sponsor helped boost demand alongside strong demand for its low sugar drinks like Coke Zero. And we are seeing shares of Boeing fluctuating this morning, but still up about 0.5%, trimming some of the gains after it posted better than expected cash flow, and that is helping to overshadow an earnings miss and another charge tied to the long-delayed Air Force One program. It's a project that has drawn repeated criticism from President Trump for being late and being billions of dollars over budget. John?
Yahara, thank you. That stock up this morning by 0.6%. The broader equity market positive by 1/10. The two-day meeting for the Federal Reserve kicking off later on today with Michael McKee looking ahead to all of that from Washington. Mike, the focus. Things have shifted just a little bit. That Wall Street Journal report that dropped overnight suggesting that we've had the family fight already. And Mike, that family fight was the middle of June.
Yeah, Chris Waller apparently telling the new Fed chair, Kevin Warsh, that he's not sure what the point of the task forces are. Well, we'll find out as time goes on, and we'll certainly find out whether they had a big family fight once this meeting is over. It does begin in about an hour or so, and we'll see what we get at 2 p.m. tomorrow afternoon. Now, here's the interesting thing. 87 of the 88 economists who participate in our Bloomberg survey say the Fed is going to leave rates on hold. And that is the general consensus, although there's an economist meeting here in Washington, and everybody's asking me, well, what do you think the odds are that they could surprise us? There are a couple of economics firms, Citadel out with a note last night, and, of course, our friend Neil Dutta at Renaissance, high-frequency economics, who say the Fed will raise rates. Investors still see about a 36% chance of a hike in the futures markets, and at least two dissents are forecast, probably Hammock and Logan. So where does that leave us going forward? Well, does Kevin Warsh offer any kind of guidance if they're on hold about what they might do in September? Because the market is betting on a September rate cut right now, 100%. B of A, JPM, BMO, Goldman all see the curve rising in anticipation of a move if the Fed holds today. So they get a rate increase anyway. And then what do we hear from the other FOMC members? Once this is all over, Chris Waller will get particular attention if he schedules a speech. But a lot of people are going to be looking to count noses and see where we might be for September. The view is that either they cut this time or they cut in September. But right now, odds are definitely leaning in favor of the next move being a higher rate.
And Mike, dissent is not new. We've seen it from regional Fed presidents time and time again. Not new, you've covered the institution for a long time. Dissent on the board, that is slightly more unusual. Division on the board gets your attention, Mike. What do you make of this division? Do you think that's just the press making too much of it, or is something else happening here, Mike?
I think it's the kind of normal dynamics you would see from a new leader taking over any kind of business and coming in and saying he wants to make major changes. The people who've been running that business basically saying, well, what's wrong with what we've been doing? But if it continues to spread like that, and we'll have to see what these various task forces come up with, then Kevin Warsh has got a problem. He doesn't want to lose the board before he even really gets into office. So I would imagine there's going to be a lot of persuading going on, a lot of efforts to persuade as much unanimity as possible in this decision. Not sure it is possible with a couple of the hawks.
Mike, appreciate it. Thank you, sir. Michael McKee down in Washington, D.C. This headline caught my eye. Dropped just moments ago across the Bloomberg terminal. Visa comes from Visa to cut 7% of its workforce, totaling about 2,600 jobs. The latest from Visa. Bramo just moments ago.
Yeah, and this comes along with their earnings. A real question here about how much this is tied to efficiencies, how much this is just simply as a result of the business. I want to understand whether we're going to be talking about this potentially as an AI trade, or whether this is something that goes to just overhiring in the past. But this comes alongside a lot of the card players reporting better than expected earnings, so not coming at a time of thrift.
One to watch. We'll get you more on that story in just a moment. The stock is up at a pre-market by some 2%. Let's get back to the Fed. The president putting some pressure on the Federal Reserve ahead of that rate decision tomorrow.
Kevin's fantastic, but he's got a board, and the board members are very political. He wants to do the right thing. I know what he wants to do, but you need the consent of some people that have perhaps bad intentions. Rates should be lowered. We should have the lowest interest rate in the world.
The former Kansas City Fed President Thomas Honig writing the following: I suspect the pressure will be on from the administration to avoid raising rates, especially given that an election is within 100 days. Thomas joins us now for more. Thomas, welcome to the program. Are there political considerations on that committee that you've been a part of? Is that part of the conversation?
Well, I doubt it's directly part of the conversation, but the pressure is certainly there. And I think, I would be mildly surprised. I've heard when Mike was talking, I'd be mildly surprised if they did raise rates. I'm with the majority of the economists. And for several reasons, of course. Number one is that the June inflation numbers were down, even though the war re-engaged and energy went up. It's now a pause. It's coming back down. And so there's uncertainty about whether inflation is under control or not. I think that's important. I think also that the rest of the yield curve is higher. So the Fed, the FOMC has an excuse if they want to say, well, we need to wait 7 weeks, we get more data, and therefore we're going to hold off. And the final thing I would say to you is, the yield curve outside of the very short end has increased. So there is some rate increases in play here that I think the Fed should take advantage of. And lastly, the growth in the balance sheet has slowed, and that will be something they might point to. So I think that political is kind of in the background. I think I'd be very surprised if they raised if there's any doubt about it, and I think there is some doubt. So
well, let's talk about
that's how I would look at it.
Why there's even a conversation this morning. Thomas, as you know, the overwhelming majority of people agree with you that this Fed will keep rates on hold, but their conviction levels are slightly lower than they otherwise would be because it feels like we've broken away from that post-GFC hand-holding that just dominated things, where the Federal Reserve would tell you exactly what they're going to do ahead of time before they do it. Why have things changed, one? And two, do you think that's a good development?
Well, personally, I think it's a very good development because you don't, I was in many meetings where up to the last minute you weren't quite sure given all the uncertainties, and there's an enormous number of uncertainties in the economy today. So why would you promise the market something if things were to change? So you're wise to do that. Now, I think there's a difference between giving forward guidance and explaining why you did something. So I would think, and I would expect a responsible FOMC tomorrow afternoon to explain themselves. Here's why we didn't change, or here's why we did change, and leave it at that. You don't have to project out 3 weeks, 3 months, and I think that's a good thing on Kevin's part.
Thomas, do you think that it's wise to make the press conference optional, or do you think that that just introduces more conflict with potentially signaling ahead of a meeting that it's going to be a live one or it's going to be one of import?
Well, I don't know if I would do it on an as-need basis. I would do it less often because I've watched every one of those press conferences and they get pretty stale when they're, when it's obvious why they've done something. But if they did it every other meeting like they did in the past, it gives them an opportunity to exchange views with the press in there or answer questions. That could be productive, but every meeting seems to be too much.
At this point, Thomas, do you think that it is clear to you what the potential reaction function is from the Federal Reserve, or do you think that that's really been called into question as a result of a lack of transparency?
I don't think it's been caused by a lack of transparency. I do think that it is difficult for the FOMC to anticipate what they should do. I think it gets them in a lot of trouble. It actually reduces their options in the decision-making process, and how can they possibly do that? You're supposed to have this meeting so that you can exchange views, have a discussion, and make a decision. When you made the decision ahead of time, or when the chairman, by signaling himself or herself, have made the decision, it ties everyone else's hands, and I think it really reduces trust within the FOMC itself.
How hard would it be for them to hike rates in September, given the election in November?
I think it'll be very difficult. I think they're waiting now, and they have their reasons. If they do wait, I think, as I explained, those will be the reasons they give in September. I think it'll be even more difficult for them to raise rates, and it's close enough to the election that why not wait until after the election will be kind of the unspoken truth going on in that September meeting. Now, everyone's saying they're going to raise rates or act. I'm not so sure.
When the Fed chair sits down with his colleagues, is it giving him cover that some of these individuals, even before the meeting, are coming out and saying that inflation is a concern, that you have these hawks? Would it be useful for him if they dissent? Because then he can go to the White House and say, I tried my best, but I'm getting bamboozled over here.
I think for a chairman, he wants to be on the winning side in every instance, and so if there's nothing wrong with dissent, and I don't think Kevin's afraid of that. I hope he's not. As long as he carries a majority, and that would be important. In some policy groups, that's fine to have the chairman on the losing side. But in the Fed, the culture has become the Fed is led by the chairman, and he listens to everyone. He finds a consensus, but he will set the policy out, and the majority will accept the policy. And if you lose that, I think that the chairman's own credibility, his own, shall we say, force on the committee would be weakened.
Thomas, it's good to see you. We appreciate your experience and your input, your insight this morning. Thank you. The former Kansas City Fed President Thomas Honig there weighing in on this Federal Reserve. Do a news conference, make it short. Who says it has to go an hour? I'm totally with Thomas. Like, why does it go 60 minutes?
Yeah,
why does it go 50 minutes?
So should he just then say, okay, after you've gotten a bad question, forget it, we're done? I mean, it's sort of like...
read the statement, explain the consensus behind the decision, and then take a few questions and move on. Mike McKee's going to send me hate mail.
A few?
You don't have to go through everyone sitting in the room.
Why?
Because you don't.
As a journalist, I think we should be promoting that.
Look, I think if you stop that, though, then suddenly people will say, well, what are you afraid of? Why are you taking more questions? Are you afraid
That's fair. Maybe
Well,
come up with better
questions.
That's what I'm
In
afraid
fairness, Kevin Warsh has a task force for that, and he probably can unveil that.
Should be afraid of receiving the same answer.
Yeah, well, you know,
we can find consensus.
Exactly.
We'll do less, all right? Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. A flood watch has been posted from western Massachusetts to northeast Maryland, including New York City, through Wednesday, with heavy rain forecast to drop as much as 3 inches. New York City's Emergency Management Department advising residents to allow extra time to get around due to the risk of road closures and flood underpasses. Meta and BlackRock are teaming up to develop and own a data center campus in El Paso, Texas. The joint venture will feature 1 gigawatt of compute capacity to accelerate Meta's AI models. BlackRock would hold an 80% interest, with Meta retaining the remaining 20%. And Visa is cutting 7% of its workforce. That's about 2,600 jobs. The cuts will primarily affect the technology and product teams. According to a memo seen by Bloomberg, Visa's CEO is seeking to make the company more efficient as it competes in an increasingly tough payments industry. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thank you. That stock is down by 2%. Bramo, you're tracking that one.
Well, I actually now have read the story, which came out a bit ago, and it says it's not entirely as a result of artificial intelligence. This comes as it tries to become incredibly more efficient. This is an incredibly competitive area. We've already heard from places like Block and PayPal. They have also done similar cuts. Block was very vocal about it being tied to AI, with 40% of their work staff earlier this year being cut. How much is this a result of quickly moving technology in specific fields? And it's not to say that AI is going to eradicate jobs, but it's going to transform the way that certain things are done and the way that efficiencies can really be borne out.
That stock is higher by 2.1% in the pre-market this morning. Up next, we'll set you up for the day and a week ahead. Plus, we'll catch up with Oksana Aronoff of JP Morgan Asset Management, saying Fed Chair Kevin Warsh is vying for credibility in the market. That conversation up next.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
My guess is that this tech investment, it's been relentless. It looks pretty interest rate insensitive to me. Given the optimism in this sector, my guess is, in a way, you probably needed two interest rates for the economy, one for the AI tech CapEx versus everybody else who probably doesn't really need higher rates at this juncture.
That was Jonathan Pingle of UBS looking for this Federal Reserve decision to remain unchanged ultimately tomorrow, but with very low conviction. And I think that's a view shared by a lot of people going into tomorrow and beyond. Equity futures right now, your scores set up as follows, shaping up as follows going into the opening bell. We're positive by 1/10% on the S&P 500. On the NASDAQ 100 this morning, we're down by 0.6. You've seen the tech jitters, the pain in the chip stock story over the last few weeks or so. We're down by 20% plus since the highs of June. And the reasons for it are building and building and building. Is it a price move, looking for a narrative, or do we actually have a fundamental change in the story now with developments in China?
Have they come up with some sort of competitive edge to flood the market with cheap memory chips, which is what's really tanking the Korean stock market in particular? Is there a real problem with respect to financing and pushback from capital markets? Or is this a momentary blip in time? Ultimately, we don't know the answer, but we will get a tell with respect to some of the earnings that we get later this week tied to the semiconductor, to the hyperscalers.
Let's get to the earnings. Not just for the hyperscalers, but the chip names too. SK Hynix reporting earnings in the next 24 hours alongside a Fed rate decision and earnings from Microsoft and Meta. That's going to be a packed 24 hours. Then we'll hear from Apple and Amazon on Thursday. Looking ahead to all of that and a whole lot more, with equity futures slightly positive on the S&P 500 and bond yields slightly lower. The Federal Reserve's two-day meeting kicks off later this morning. Oksana Aronoff of JP Morgan Asset Management writing, Fed Chair Kevin Warsh is trying to establish credibility with this market through the tough talk and the task forces while avoiding hiking. The bigger issue is whether the long end of the curve will buy the eventual cuts. He hopes to graduate. Oksana joins us now for more. Oksana, good morning.
Good morning.
You think it's just a communication exercise?
So first of all, let me start by saying I do think what Kevin Warsh is doing, I don't disagree with it at all. I never thought that forward guidance had much use other than sort of tying the entire Fed to these promises that the market was parsing endlessly. If you ever, actually graphed the dots plot against the Fed funds rate, they were miles and miles apart for a number of years. So there's very limited use to it, I thought. And now you have a Fed that is sort of like this big infighting family a little bit. There's obviously a lot of dissent. And there are sort of 12 unique voting members, all of whose opinions count, especially in the absence of forward guidance, which, as I said, tended to kind of bind them all together. So I don't think that's a bad thing because it allows the market also to kind of focus on the ball, meaning fundamentals, earnings, things that matter, as opposed to what is the Fed going to do in the next meeting. Having said all that, I think the tough talk around being focused on inflation, while it is absolutely the correct thing to do, I think underneath it all, he's hoping he's not going to have to do it because, of course, you've got the administration watching very closely. And I think he's hoping that he can sort of wait out this inflation move up and then eventually try to cut rates at some point next year. But I think the meeting this week is likely a no action, possibly a hike at the next meeting if we continue to see inflation and stronger economic growth, et cetera. But I think the bar for consistent hikes is fairly high. You would have to see consistently higher inflation prints.
You touched on something important, the relationship between the front end of the curve, how you communicate about short rates, relationship between all of that and what happens further out along the curve. What's that relationship like now?
it is very limited at best. So the expectation, even in 2024, was that as the Fed gets to cutting, you're going to see this rally at the long end of the curve. This did not materialize. And interestingly, you could say that, more recently, long rates have been trading with oil, but in reality, they've now disconnected from trading with oil. They're really moving off of the fiscal spend, and that's what the long end really cares about. The fiscal spend, the inflationary backdrop, the supply demand of treasuries, these are the things that are going to determine the level of rates. And what we haven't yet seen, long-term inflation break-evens, the 10-year break-evens have remained fairly subdued. If we were to see those to actually move up, they're actually slightly lower today versus, February or when this conflict started. If they were to actually start moving up, that could be another tailwind for a higher 10-year. And the 10-year has been really kind of bearishly tilted if you think about how it reacts to surprises on the upside. With respect to inflation, with respect to stronger economic data, you see more of a reaction in yields going up than you do in yields going down, for example, when we had the lower than expected CPI print.
So in other words, you think that if the Fed were to hike rates, that wouldn't really materially lower long-term yields?
So that actually may keep long-term yields at bay and keep them from, let's say, reaching that 5% level. If we operate under the assumption that a 5% is more likely than a 3.5%, which I think is true, I think kind of showing the intent to keep inflation in check here does matter. But ultimately, long rates care about the fiscal spend, and they care about the inflation backdrop, and they care about supply demand. And by the way, our largest foreign purchaser of treasuries, right, China, has reduced the amount of treasuries they have from over $1 trillion to about $700 billion. So some of those, trends are underway, and we're not immune to them.
Do you think that hyperscalers and other tech issuers can keep crowding out the market for treasuries and for other long-term debt, given the pushback that they've seen recently?
So when you say crowding out the market,
flooding the market with debt, flooding with issuance, and this idea that increasingly they're in competition with the U.S. government and for other sovereign issuers.
I think there is some substance to that for sure. You've seen over $500 billion of hyperscaler issuance, right? And this is the big issue, is that this capital intensive spend is now hitting the credit markets as opposed to being funded out of their cash balances. And so they absolutely could create competition. The broader investment grade space can create competition, right, for the treasury. So these are the supply demand dynamics that I think are much more important than what the Fed does very short term at the front end of the curve.
Oksana, always good to see you. Thoughtful.
Thank you.
Thank you for being here. Oksana Aronoff there of JP Morgan Asset Management on the so-called, I'm going to say, communication exercise that this Federal Reserve is working through right now.
A lot of people think that it's a communication exercise, and that's the reason why the question that you've been asking, Anne-Marie, is a really important one. If they don't hike rates at some point, have they lost the power of the communication exercise entirely?
Well, you have to set deterrence, right? And you can do that through rhetoric, but then if you don't follow through at some point, then basically you're a paper tiger. That's what it is.
It would be quite a shocker if they hide tomorrow. Relative to expectations, I know that conviction's quite low, or at least has been reduced because we have a new Fed chair who's not willing to communicate in quite the same way. But consensus overwhelmingly is no change at tomorrow's meeting.
It's relatively unprecedented in modern times when there's only a 30% chance or less than a 60 or 70% chance baked into Fed funds rates for the Fed to actually take a move.
Coming up tomorrow, that Fed decision, and this lineup right here. Julian Emanuel of Evercore, Claudia Sam of New Century Advisors, the former Kansas City Fed President, Esther George, Sarah Malik of Nuveen. I think we know what Esther would do, right? She'd vote for a hike.
I think so.
Right, without a doubt.
I think she's,
Esther would hold back.
Come on, inflation.
We'll
what do you
ask her
think?
tomorrow.
Think she'd throw a roll? What do you think she'd do at the family fight?
Food fight.
Oh,
she would
throw bread rolls,
throw
without a
down the
doubt.
towel.
Yeah,
absolutely.
Shut it down. High grades.
Shut it down.
The coverage starts tomorrow. Your week begins tomorrow. A packed Wednesday just around the corner.
What is this? Chopped liver?
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You think she owned the
the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it, you know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands. The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Tech sells off again, 30 minutes until the start of your cash equity trade. I'm Danny Berger. Matt Miller still out. Bloomberg Open Interest starts right now. On today's show, chip stocks tumble again as fears mount over China competition and circular AI funding. Earnings season gathers steam, offering a fresh read on the economy and the consumer. And the U.S. and Iran continue to hold fire as Netanyahu and Zelensky meet with President Trump in Washington. So the stocks we're looking at today, after that painful sell-off in the Kospi, are chip stocks. They are down again this morning. We still have earnings from Apple, Amazon, Microsoft, and Meta tomorrow and Thursday. So again, the Kospi, it fell 10%. That's its second biggest drop since 2001. It's the hundreds of billions of dollars in deals that started to reignite those circular fears. And China making progress with its AI ecosystem. Also want to point out we have a number of earnings this morning. UPS, they reported raising its sales forecast on a turnaround progress. Not good enough. Shares fall 3%. Boeing higher by just under 1%. Surprise positive cash flow, but they did have a $280 million charge related to its Air Force One program. Finally, Coca-Cola slightly raised its earnings guidance after a World Cup sales boost. But the main story this morning, we begin with the AI and chip slump. Joining us now is Bloomberg macro strategist Michael Ball. It really did start and was fueled by the Kospi overnight, that biggest drop since the early 2000s. What do you make of the selling that we've seen, whether there's something fundamental to the story about the China pressure or it continues to be an unwind of momentum?
No, it's mechanical to the max because of all the leverage, especially in Korea. There's a lot of retail guys are getting margin called day after day now as you see the weakness come out at the Kospi. Also, you just had the narrative change, but I don't think that was necessarily a short-term narrative change. It's a longer-term story. It's going to take China a while for the memory stock, especially for the lithogram machines. It's all coming, and we knew it would always be coming. But because of this position was so leveraged and so long one direction, it was only a little bit of catalyst that could knock it down, and that's exactly what we've seen now for 2 sessions in a row.
Does that mean then that the setup going into this earnings with some of these hyperscalers, with Amazon and the others this week, is more constructive because they have been selling into this report?
Yeah, so valuations look interesting now for some pockets and some single names for sure. I think, unfortunately, when I look at the option positioning, it's still very fluid, meaning we're still skewed very negative. It means that dealers and sort of flows are going to chase moves. So if we get weakness, it gets exacerbated by hedging flows. If we get strength, it can also do the opposite, and you can see rallies. So what you should expect is higher vol, and we've already seen sort of negative results in the price action following earnings results. So I would actually think you're still going to skew a little bit negative coming out of some of the hyperscaler earnings.
So it's a busy day tomorrow. Not only do we have some of those earnings, we have a Fed decision too that's going to keep us all busy. Citadel Securities saying that they see Warsh delivering a surprise hike. The market pricing in about a 1 1/3 odds that we do see a hike. Does 1 in 3 sound right to you, or is there a bigger chance you believe that we will get a hike from this?
So I'm leaning that we do get a hike. I think Warsh really wants to establish credibility. I think he has the votes on the committee. I think this is about proving that he doesn't believe in forward guidance, not just saying it. We obviously had a hawkish June statement from him, and we saw in the testimonies in Congress that he was leaning more towards focusing on inflation. The macro backdrop gives him some cover. We have a decent final domestic demand. We're at 3.2%, although GDP itself looks weaker because of the imports. And the inflation, as we know, is just moving sideways. Now, the worry would be that we're going to get weaker inflation coming, and he's going to lean into that the wrong way. But honestly, if he really wants to get the credibility he needs to implement some of these larger changes he has in mind, he has to go now, and I think he has the backing of enough of the committee.
If we don't have forward guidance, though, and he does go now, how will this bond market even react? Because is it a Fed getting ahead of the curve, or is it a Fed worried about inflation? We won't necessarily know, I'm guessing, if we don't hear forward guidance or more thinking from the Fed.
I think the front end will see greater volatility because there's going to be a debate whether he wants to erase these Powell risk management cuts, which, as we know, were about 75 basis points, or if this is a one and done, go now, maybe you don't have to go later, and it just establishes that credibility that the market needs. Honestly, it's a little bit of a flattener, but again, initially, anyone's guess to what might happen tomorrow on the reaction, because his communication will still be pretty limited from what we saw in June, and we won't know how much further they intend to go if they start. And usually when they start, they go a couple of times.
Michael, thank you so much for joining. Looking forward to catching up with you throughout the week. That's Bloomberg's Michael Ball. Let's turn now to earnings of Boeing specifically. Shares fluctuating after the plane maker topped expectations on cash flow. For more, we're joined by Bloomberg Boston Bureau Chief Brooke Sutherland, who covers the industrial sector. Brooke, what did we learn?
I mean, I think the positive free cash flow number here, beating expectations, is really the main takeaway. Yes, you do have another charge on Air Force One, but I think there is some comfort that this is, sort of a long-standing albatross for Boeing and not a new problem. And I think you're seeing a lot of investors trying to pivot into that plane making space as you start to see some deceleration in the aftermarket. That's, the maintenance services, the spare parts. That has been the part of the aerospace market that's really been booming the last couple of years. You've seen a ton of pricing power, a ton of demand, just because we did have those supply shortages of new planes. And I think you're going to start to see a bit more of a rotation toward the plane makers, just as we start to see, some of that momentum decelerate in the aftermarket. We've already seen a number of those companies like GE Aerospace, for example, selling off on what were nominally very good results, but just a lot of concerns about a little bit of a slowdown in the aftermarket.
We also heard from JetBlue this morning, Brooke, citing more demand. How is the turnaround effort going at that airline carrier?
I think they're making progress, and it really echoes what we've heard from a number of the airlines, is that despite the high fuel prices, they're still seeing very strong demand. Now, I think the question is, how does that hold up when we get into the fall? If you wanted to take a summer vacation, you were probably not going to be dissuaded by $50 extra on your air ticket fare. But that might change if it's sort of an extra side trip in the fall. That might be where we start to see consumers express a little bit more caution. And so I think there's a lot of questions about how that demand holds up as we proceed into the fall. The airlines are saying they can hold on to these price increases, that even if we start to see fuel costs, come back down and stay back down, that they will retain this pricing power. But I think, a lot of skepticism about their ability to do that because they have not historically been able to hold on to that.
All right, Brooke, thank you so much for joining. That is Bloomberg's Brooke Sutherland. Elsewhere, UPS boosted its sales guidance for the year as it pivots from low-margin e-commerce shipments to more profitable packages. Bloomberg's Matthew Griffin joins us now. Matthew, I was looking at the Jefferies analyst reaction saying there's not much to pick at with respect to quarterly results, and yet shares are down 4.4%. Is this just high expectations for UPS?
Well, Danny, thanks for having me on. I think it's a sign that UPS really remains a show-me story with investors. So, of course, we have this outlook for the year being higher. We actually have some upside in results in the second quarter, but before the earnings call began, you had some analysts talk about this outlook implies results really going to have to ramp up in the back half of the year. And just now on the call, company talking about maybe some of the pricing increases that they're seeing moderating, as these fuel surcharges come down, for example. And so investors, again, they're getting a positive outlook, but investors really want results from this company after waiting for 18 months for them to turn things around.
Well, part of it does seem to be tied to this Amazon business that they've shed. How has that effort gone?
So far, the early signs seem positive. So we saw margins increase year over year in the quarter. Again, the company raising its full year revenue outlook. Those are the kind of things you want to see if this company is succeeding in ditching these low-cost e-commerce shipments in favor of, for example, complicated, expensive healthcare packages. And Truist says companies executing well, they expect earnings to inflect. Again, though, some of that upside is baked into the back half of the year, so investors, they're going to have to wait a bit to get the final confirmation here. And the stock still trades below where it did before they announced that glide down, as they call it.
So some of the pressures from fuel, they say, are going to start to alleviate themselves. What about other costs, like labor costs for them?
Labor costs, that was another potential negative in the report. So labor costs, they were more than $12 billion. Citi calls that out as being higher than their estimate. Of course, UPS, they had that big contract with the Teamsters a couple of years ago. So labor costs, something that they've been dealing with and having to kind of explain to investors since then. They have been growing revenue. They've been offsetting that elsewhere, but it's still a pain point for Wall Street right now.
All right, Matthew, thank you so much for joining on those UPS earnings. Bloomberg's Matthew Griffin. And later today, UPS CEO Carol Tomé will be joining the close. That's at 3:30 p.m. Let's get a check on markets. Just 20 minutes to play for until your start of your trading day. We are down. It's the NASDAQ down 0.6%. Not nearly as bad as we saw in the Kospi session, but it still is tech dragging us lower today. The 10-year yield that comes in by 2 basis points ahead of a Fed decision tomorrow as Brent crude drops now below $87 a barrel, falling 2%. Let's look at some of the single name movers this morning. With that is Nora Melinda. Hey, Nora.
Hey, Danny. 3 stocks I'm watching for you this morning. Let's kick things off with Royal Caribbean. We're seeing shares down by about 0.1% in the pre-market trade. Now, this comes after the company trimmed its full year estimate for the amount of money that it makes from passengers. Now, that's all despite raising its earnings outlook and saying that trends for its 2027 bookings topped estimates. Now, from here, some job cuts at Visa. So we are seeing the stock pushing higher, up about 1.5%. This is after news that it's cutting 7% of its workforce. That's about 2,600 jobs. This in hopes to be more efficient as it competes in a tough industry. The cuts will affect mostly tech and product teams as it invests in new areas like stablecoins and cross-border payments. Finally, let's wrap things up with Johnson & Johnson. We're seeing shares higher by about 1.8% in the pre-market trade. That's after the company agreed to a $5.5 billion commitment to resolve litigation related to its claims that its talc products cause ovarian cancer. The company still denies that the powder was harmful, but the settlement will help close an issue that's dogged the company for at least 15 years. Those are your morning movers. Danny?
Nora, thank you very much. We'll catch up with you later in the hour. Coming up, Apple and Klarna team up to launch a new leasing program. We're going to bring you the details coming up next. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you every
as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Let's get you some high-interest stories. A look at what's making headlines around the world. President Trump said the U.S. will, quote, take out Pickaxe Mountain if it doesn't reach a deal with Iran. His comments come as Omani negotiators continue talks in Tehran aimed at restoring shipping through the Strait of Hormuz. Oil is continuing to drop as the U.S. and Iran extend their pause in fighting. Israeli Prime Minister Benjamin Netanyahu is scheduled to meet with President Trump at the White House at 11 a.m. Eastern. Trump told Fox this morning that Netanyahu wants the U.S. to stay involved in the Iran war. But first, President Trump will meet with Ukrainian President Vladimir Zelensky at 9:30 a.m. Zelensky is expected to seek additional help to strengthen air defenses against Russian attacks. And in tech news, Apple has launched a new product leasing program provided by Klarna called Apple Upgrade. The program offers pricing options for the iPhone, Apple Watch, Mac, and iPad in online and retail locations in the U.S. iPhone leases start at $17.99 a month. Let's discuss this and more with Bloomberg Tech host Ed Ludlow. And Ed, I know Mark Gurman had reported on this about 10 days ago that we were expecting something of this leasing program. What are the details and what does it help Apple achieve?
Yeah, so in the first instance, it's US only, but it gives the consumer flexibility to, frankly, upgrade, buy, return any Apple device at any time. The new bit's the pricing, right? So for an iPhone through Apple Upgrade, you can pay $17.99 a month, Apple Watch $11.99, Mac $24.99, iPad $11.99. Probably on the handset side, on the iPhone side, you know, the story here is that it's an alternative financing to what the carriers offer. Right, and you know, Klarna, along with a sort of growing field of financing or buy now, pay later options, is muscling in on the home turf of those carriers a little bit, because when we talk about generation to generation handset releases, you know, a lot's made of the price and whether Apple or not raises prices in the environment relative to higher memory or component costs, etc. But the reality is that the carriers often grease the wheels on that market because of trade-ins and the fact that you finance it anyway. So it's an interesting development. I would say I don't know that Apple's shares moving in the pre-market, I wouldn't draw a direct causal link on that, given it, you know, it's already out there, but an interesting move nonetheless.
I mean, part of the reason Apple's move has been interesting is because it's overtaken the market cap at NVIDIA for the first time. It looks like since May of 2025 that it yet again is larger than NVIDIA. Just given that NVIDIA and the other hyperscalers have been hit as spending increases and Apple hasn't been increasing its spending. Ed, what do we know about continued progress with Apple's AI plans and maybe how they stand out in this market, because they have not been committing to spending to make that happen?
Yeah, so I mean, we're showing the year-to-date chart, right, which is Apple's gain of 24%. And part of it taking the title of world's most valuable company is that Nvidia's downtrodden and has been under pressure of late with the chip stocks entering a bear market, etc. But the stock is interesting. It is the outlier relative to the hyperscalers because it doesn't have the capital expenditure story. You'll remember there was a time where Apple was under a lot of pressure to demonstrate that it was willing to spend on talent or R&D to get going in the field of AI, but it's completely insulated from now what is CapEx concern. And the stock's been given credit for that. You know, it's been not just insulated, but sort of cheered as saying, okay, we like that story. It's in an environment, again, where when earnings roll around this week, the story will be about the environment of higher component costs. But typically, Apple is the master of the bottom line. And it will be really interesting to see how they've managed that and the trajectory of the stock thereafter.
Just given that, Mark Gurman also reporting this morning about new home products, a new wave of home products tied to Siri AI. Ed, what do we know about that? And again, how this fits into this wider narrative of Apple?
Yep. Yeah, Mark Gurman's been busy. Yes. Biggest home push yet. You know the market. It's taking on Google Nest and Amazon Echo devices. And there's a lot of detail in here. So basically, Apple is coming with a new smart home hub, a new Apple TV design, and a new HomePod Mini. The Apple TV and HomePod come in the fall, according to Mark's reporting. The smart home hub comes between October, maybe early next year. And the main point is that now that they've made some progress with Siri AI, they want a device at the center of the home where you can leverage it in the same way that you communicate with Alexa via Amazon Echo devices. We're an Amazon Echo household. On the AI side, the software side, it's just not there. On the hardware side, it's easy. So it'll be interesting to see. Mark has some limited details on how they'd price those relatively aggressively for Apple entering that market. But, again, like the stock being up 0.7%, is it a huge needle mover for Apple? No, but it's a very serious push if Mark's reporting is accurate.
And hopefully we'll hear more details when Apple reports its earnings this Thursday on the 30th. Ed, thank you so much. Bloomberg Tech host Ed Ludlow. Look out for Bloomberg Tech, 11 a.m. every weekday. Coming up, more corporate stories. Visa cuts 7% of its workforce as it doubles down on AI and digital payments. That's next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Hu, reporting from America's biggest military shipyard. This is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Visa is cutting about 2,600 jobs, roughly 7% of its workforce. The payments giant is looking to streamline operations and reinvest in areas including AI, stablecoins, and cross-border payments. For more, Bloomberg consumer finance reporter Paige Smith joins us now. Those are broad level, some of the justifications they gave. What exactly is Visa doing here?
I think substantively it comes down to this moment in time where the payments industry is really dynamic and evolving very quickly. And there are a number of firms basically trying to make tough decisions about how to allocate their capital and where to really substantively make those investments. And, according to the memo that we obtained, Visa called out some really high growth opportunities for them to really allocate their people to sort of reinvest some of those savings, I suppose. Those are areas like stablecoin technology, agentic commerce, and, also just growing and evolving consumer payments that we rely on every day.
What are the low growing areas then that they're backing away from?
I think it would be fair to say that it's a competitive dynamic, right? Okay. So these are sort of internal deliberations about where it would be most valuable to invest.
So they, like a lot of companies in recent days, including PayPal and Block, you talk about in your report, have kind of said, oh, we're using a lot of AI, and so we're becoming more efficient. I mean, it must be difficult for you, but how as a reporter do you kind of distinguish what is sort of the AI theater and what is true productivity gains that means they need fewer workers?
I mean, I'll speak for myself personally. When I look at these firms, it's sort of, I look at, first of all, just how mature they are as entities, and also the ways that they have historically talked about AI. So you talk about a company like Visa, where they have spoken about how they've used artificial intelligence in fraud and security capabilities for years and years. And to be totally frank, I don't think that all companies have been using that kind of language, and as they've spoken with reporters and with the public generally.
And again, PayPal, you've also been reporting on, they beat their earnings estimate, but maybe just to underscore how competitive it is, there's still those deal rumors swirling around PayPal. Yes. PayPal, just how difficult is this landscape right now that sure you can have a good quarter, but maybe you still get bought out?
I think it's incredibly difficult. And you also, to pull in even another company like Block, for example, that earlier this year they announced a major job cut as well. So it's sort of like these are all firms that are competing for the same consumers, the same customers on a business standpoint, from a business standpoint, and it's tough out there, and we're watching all of these companies very closely to see how the landscape develops, who wins, who loses, what deals happen, and frankly, what deals don't happen.
I mean, I was even just thinking about that Apple news we had earlier, that Klarna's helping them doing financing. I mean, that's also, a buy now, pay later, but it's a UK firm. There's also been Brazilian firms who are fintech that have listed in the US. How much of it isn't just US competition, but is very much so international?
So we've reported pretty extensively on this, actually, of these entities that are moving into the US, and again, also trying to vie for the same customers. Right. So it's like they're certainly, to keep it all in perspective, right? Like the American consumer pie, if you will, is huge. There are a lot of pieces to go around, and there are a lot of different services to go around. For example, I have a primary banking relationship, but I might also have a buy now, pay later relationship with a few providers. I have a couple of credit cards. Like there are a lot of different opportunities to gain the same consumer, but it's still really competitive, and your terms and your opportunities and your incentives need to be very, very competitive to vie for those consumers.
It's so interesting. Again, excellent reporting throughout all of this. Thank you so much for joining us. That's Bloomberg's Paige Smith. Let's get a check on your equity markets. Just minutes to go until your opening bell, and it continues to be that follow through from a very negative Kospi session, one of their worst since the early 2000s. Even so, it is an S&P that continues to gain. We did ever so slightly gain yesterday, except for tech. And then meanwhile, yields are coming in, so that's helping the overall market. Yields in turn are being helped by Brent crude down 2%. Even so, still a 1 in 3 odds that this is a Fed that hikes tomorrow. Coming up on the show, Katrina Dudley discusses whether this week's drop is a healthy reset or a sign that investors are truly questioning the AI trade? That's to come. This is Bloomberg Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Moments away from the start of trading, you are watching Bloomberg Open Interest. I'm Danny Berger. Just seconds until we start your trading day, and we are flat on the S&P 500, NASDAQ 100 futures. Those are down 0.8%, again, after an ugly session, a decline of more than 10% from the Kospi. It's the same things that we had in yesterday's session, concern about spending, circular finance, and at the same time, the advancements being made from China. Eagle Rock opening the bell down at the New York Stock Exchange. They do land and resource management, which I guess is important in this day and age where everyone's building a data center on the land that we have. Pretty cool. Down at the NASDAQ, we have Wrexham, the CEO over here. I can't remember his name. I know he came from AC Milan, I want to say, when he came to Wrexham, ringing the opening bell. The NASDAQ, down at the NASDAQ, I should say, Wrexham and Liverpool are going to be playing a friendly at Yankee Stadium tomorrow, a preseason game, and we will be speaking with the Liverpool FC CEO in the next hour, so that is one to pay attention to. What we're now paying attention to in this market is the chip and tech stocks. They continue to sell off this morning. They're down. We're going to have earnings from Amazon, Apple, Microsoft, and Meta. That will happen tomorrow and Thursday. As I mentioned, the Kospi fell 10% today. It's the second biggest drop since 2001. Hundreds of billions of dollars in deals have started to reignite fears of circular funding, all while China makes progress with its AI ecosystem. Some numbers on earnings to also look out for this morning. UPS raised its sales forecast on a turnaround progress. The market wants to see more, though. Boeing reported a surprise positive cash flow, but also a $280 million charge related to its Air Force One program. Coca-Cola, the lone gainer on that board there, slightly raised its earnings guidance on stronger sales volume, also helped by the World Cup. In general, though, we have seen high beta momentum stocks getting hit hard lately as fresh AI concerns spark a rush out of this year's biggest winners. But history does suggest that sharp momentum sell-offs can create attractive entry points for longer-term investors. Quite a few different charts we're looking at there. That's as long as the underlying fundamentals remain intact. We did have a chart for you showing that momentum has had one of the biggest crashes in recent times. So let's bring in Franklin Templeton, Senior Investment Strategist Katrina Dudley. Katrina, has something changed for you around the fundamentals? Is this something different with China threat and more spending, or is this just a momentum crash and it's as simple as that?
Look, let's have a look at what happened in the last week. And if we look at a bullish indicator, and about 45% of investors were bullish, that number's come down to 29. Where it really is that buy indicator, so we look at post the tariffs, actually, if we go back, and that number kind of gets down to 20, so 20% of the market is bullish or investors are bullish, that's a really strong buy signal. So we're kind of a little bit in that no man's land, so it's hard to kind of say, hey, do this. But let's take a look at what's happening and what's driving markets. We've been talking for so long about this broadening trade, and we've really seen a broadening of the market. And number two, we have seen earnings growth. I appreciate all of these negative headlines that are coming up about AI, the circular trade, but you just talked about it. UPS, good numbers. CSX last week, Norfolk Southern last week. These are companies that are real industrial companies that are, drivers of our economy, and they're saying that things are actually doing well. They're beating estimates and raising. If I look at 2026, we've got 17% earnings growth. 2027 is 16. So the earnings growth is there to support the market. Valuations are reasonable. So I really just don't see that we're in for a crash.
We're looking at a chart here that I wanted to bring up because we have seen Apple's market cap surpass that of NVIDIA to become the world's largest stock again for the first time since around May of last year. And before, it was the earnings that were really propelling us were AI, it was the chip makers. And Apple notably is a company that has not been spending. It's not a picks and shovel. It hasn't had huge numbers in capital expenditures. Has what's important for this market changed?
I think that what is important for the market is, number one, the consumer. We are still a consumer-driven economy. And I know we've been talking so much about AI, but realistically, it is the consumer that drives the US market. And Apple is tethered to that consumer. You think about Amazon, the services that we consume there. We look at the iPhone sales and everything. So they are a play on the consumer, and I think that that's what's been reflecting is this strength of the consumer is something that is really standing out to us. We've got a resilient consumer, we've got a strong economy, you've got reasonable valuations, and you've got earnings growth. I don't think there's much else you could ask for in this market, and so many people I know that are focusing on this AI circular trade. We think that if I have a look at one of the data points that we've been focusing on is the revenue that is coming out of these companies, and we're looking at that relative to depreciation spending, and that's actually in positive territory. It's a good sign.
Well, I know Mike Wilson of Morgan Stanley had a piece out yesterday saying that finally AI is going to start paying off for companies that are using it, and margins are going to expand. Are you expecting that too? Because it's something we've been watching out for, and we haven't quite heard it in earnings. You do hear someone like a Visa saying they can let go of people because they're increasing AI efficiency, but is that starting to show up? Are you trying to pick out the AI winners at this point?
In terms of the ROI, there's two places we're talking about ROI. We're talking about ROI in terms of the CapEx spending, and you're right, we're also talking about ROI at enterprise customers, and I think that that's something which we've always expected to be longer, because it's not suddenly that, we're in a regulated business where I work, and so we can't just suddenly change all of our processes. We've got to go through there, we've got to test and do all of that, but we're seeing efficiencies from introducing AI. We introduced it to our sales force. They've got a 10% uplift in their efficiency. So we're starting to see these pockets of efficiency come through. The spending numbers are still there, so I'm not sure that you're seeing significant positive ROI, but you're not seeing a huge negative amount of spend without at least some offside on the cost side.
I was going to say, I happen to know that you use AI a lot, and you experiment with it a lot too.
We do, and that's what we've been encouraging all of our investment teams to do. And I think people are at different points on their journey, and we want to be respectful of that. But we're really starting to bring all of our investment teams along. And what we're seeing is that it creates efficiencies. That means you can, the simple cases where you can digest an earnings call faster. But now we've actually seen some really innovative use cases within our investment groups, and that's where we're going to start to see these efficiency gains come through. And that's really positive because it drives, the opportunity for more alpha from so better performance. It also drives, more asset growth for our investment teams, and we're an asset manager, but also drives that efficiency.
Well, if the threat isn't going to be coming from earnings and those look robust, could it come from higher rates? This market pricing in a 1 in 3 odds the Fed hikes. Citadel Securities coming out saying that they expect Warsh to hike. Could that be something that also hampers this rally?
Yeah, that is actually the one concern. It's rates. It's really that 5% level that we've been focused on, because at that 5% level on the 10-year, we do expect some degree of rotation because you've had such strong performance of the equity markets, and then that kind of attractive yield on the, in the fixed income. In terms of going into the FOMC meeting, I would put it as, I hate to say a coin toss because it's really not helpful. You're looking at 1 in 3. I think that's about what the market's telling you. Right. We're trying to balance out, his comments about price stability and wanting to restore price stability. You've seen the move in oil prices up 40% in the last 2 weeks. So, those inflation concerns are starting to come back into the market, and that's what we think is the concern going into the meeting, that you could see a small rate hike as he kind of, stamps and says, I'm really focused on price stability.
All right, Katrina, so lovely to have you on. Thank you so much for joining us, as always. Franklin Templeton's Katrina Dudley. About 8 minutes into your trading day, let's get a check on your equity market. And we are looking at broad losses, not broad losses, rather. Most of the stocks are up, but only 136 are down. But we are declining about 0.1%. That is different from the future session where we were gaining. On the upside, you do have some of the earnings we're going to be getting this week. Apple, one of the performers. Microsoft is up there. Berkshire Hathaway, Coca-Cola reporting earnings that were strong. You see a lot of consumer discretionary doing well. So the thing that's dragging us down are the chip stocks. And again, that is just a bleed through to what we saw in the Kospi trade when it fell more than 10%. So Micron, AMD, NVIDIA, Broadcom, all doing poorly. NVIDIA no longer the world's biggest stock. That crown goes back to Apple. With the different sectors that are declining, only a few of them are down this morning. Only 2, I believe, are down there. That is correct. Industrials and infotech. Again, it's the chip stocks that are dragging us lower. Consumer staples, healthcare, materials. A safety feel to this market, a play for safety, also helping that. Again, we had good earnings from the likes of Coca-Cola. Coming up, we're going to talk more about earnings. Boeing surprises investors with a major cash flow beat, but book a big charge on Air Force One. We're going to speak with Megan Welch of BGL. That's coming up next. This is Bloomberg Open Interest.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC. Africa CDC is the leader in terms of public health in Africa.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get you some top calls now. With that is Bloomberg's Nora Melinda on the Analyst Action. Hi, Nora.
Hey, Danny, I've got 2 downgrades and a price target cut for you this morning. First up, let's take a look at Bank of America downgrading Exxon to neutral from buy. The analysts over there saying they see potential downside if a deal is reached in the Middle East. Shares of Exxon still higher by about 0.4% this morning. Next up, looking at TD Cowen downgrading Intuit to hold, citing a challenging setup and a lack of confidence in growth. The stock's still in the green nonetheless, higher by about 3.4% right now. And finally, Tesla's price target cut by $20 at RBC Capital Markets. The analyst saying a potential merger between Tesla and SpaceX could be difficult to replicate. Its price target slashed from $500 to $480. Shares down about 1.7% this morning. Those are your top calls. Danny?
Nora, thank you very much. Let's get back to this morning's earnings. Boeing beating free cash flow estimates for the second quarter. That surprise, though, did include a new $280 million charge for the Air Force One program, which is years behind schedule and billions over budget. Shares, though, are up 2.25%. Joining us now is Megan Welch, Managing Director at BGL, where she leads the firm's aerospace, defense, and government services practice. Megan, so great to see you. Thanks for stopping by.
Absolutely. Thanks for having me.
Can I just get your first take on these results?
You know, even though the results were imperfect, I think they were very telling and sent a really positive message to the middle market. So the commercial aerospace market is transitioning from a story about recovery to a story of growth, albeit constrained growth. You know, the free cash flow was a surprise to the market, and I think that really tells the market around Boeing is coming back on their production rates that they have, and a lot of the risk, though, is getting pushed down to their supply base. So there's a real demand signal from Boeing. They're being able to increase their production rates, and it's a very positive story overall, despite the charge off on the defense side.
See, that's really interesting because you note this in your reaction to these earnings, that the bottleneck doesn't rest with Boeing anywhere. So where is the bottleneck, and what would it take to change that?
That's a good question. So the commercial aerospace supply chain is very complicated. There's lots of players, but really anyone who has spec-in positions or any kind of content in the forgings, castings, specialty materials and component sectors, they're really, really squeezed right now with record build rates at Boeing, and that's where we're seeing a lot of the bottlenecks. And it's created huge opportunities in the middle market M&A because it allows more consolidation, more opportunities to grow in projections, but that's where a lot of that bottleneck lies in commercial aero.
Does that M&A happen in the way of like a Boeing buying more things, like it did with Spirit AeroSystems buying that back, or is it happening on a lower level?
So that was a much larger transaction. The Spirit AeroSystems was very defensive. That was Boeing's way to really get control over their quality and to regain the trust of all of the regulators and the FAA. And so to be able to do that, they had to bring it back in-house and be able to get more control in their production and become less of an integrator. What we're seeing now is the production and the supply chain that supports the commercial aerospace market is vast. It's a lot of smaller middle market shops that have working capital needs that really require them to kind of lean forward to be able to meet these build rates that Boeing has. So it's a little bit of a different scale. Spirit was totally defensive, but it was a great move for Boeing, even though it did hit Boeing's cash reserves and it did hit Boeing's kind of commercial recovery inflection point.
So then what does M&A look like from here on out for more of the middle market players?
I say this a lot, but I think M&A in the commercial aerospace market is starting to hit its stride. It's in the very early innings of a super cycle. We've been seeing a lot of M&A interest on the aftermarket, and that's kind of repair of older planes that are still flying. But on the new build cycle, now that Boeing has been able to regain the trust of the regulators, be able to self-certify in certain instances on the MAX, they're starting to ramp up their production and opening up the new facility up in Washington. It's really sending a signal to the market that game on, production is ready to go, and we're going to start to hit, those max production numbers that we wanted to hit back in 2019.
Two tailwinds, forgive the horrible pun for the plane industry, but two tailwinds that seem really positive for Boeing and really the entirety. And I know you had a lot of these discussions when you were out in Farnborough at the air show recently. You have a consumer that's still traveling and a lot of demand, especially for the more premium type demand in airlines. And then you have countries that want to spend more on their defenses. How has that been shifting the mix of demand in the overall industry?
Again, I think demand is kind of coming from both sides, right? So there's more about this constraint. Who is really playing for the constraint that they have on the supply side? So people that have access to commercial aero and defense are really sitting in a great spot on one hand, but also in a constrained spot on the other, because how do you shift your priorities? How do you determine where you're going to be able to supply to, whether it's defense or commercial aero? But it's Boeing is benefiting from the defense boom as well, as you saw. I mean, defense was up, I think, 13% in this earnings. I think it's going to continue to drive a lot of opportunities for Boeing in the long run.
Well, this is not an administration that's shy about trying to tell companies what they should be doing or take stakes in companies. Obviously, the FAA had been previously more involved with Boeing. In the past, they've ceded control back to them for certification. How does that evolve? How do you see this administration's involvement as they do push for more defense spending, as we run out of ammunition, as we continue the war in Iran?
It's a tough situation that we're in from a national security perspective. Defense spending is going to continue to grow, and we're going to continue to have those demand signals. But there needs to be a real signal shift at the White House. And we're starting to see that with Hegseth and some of the actions that Feinberg's doing in the Office of Strategic Capital. But showing those long-term demand signals is critical to the middle market and critical to the supply chain to be able to show longer-term demand and flexibility around contract structures. I think the Air Force One program and the charge-off for Boeing is a perfect example of how firm fixed price contracts with defense often become overbloated, overcost, overrun, and super delayed, and that results in these massive charge-offs.
Megan, this has been so interesting. Thank you so much for joining. Really appreciate your time.
Absolutely.
Megan Welsh of BGL. Coming up, beverage stocks are moving higher this morning as Coca-Cola raises its full-year outlook on stronger World Cup sales. All the details for you right after this commercial break.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest. A quick check on your equity market because we continue to decline, down now at 0.25% at the lows for the morning. The Nasdaq's down 1.6%, on the verge of entering a correction. The Russell 2000 index also down 0.5%. At the same time, Brent crude, that falls, as do your 10-year yields, down about 3 basis points. Nvidia having a rough day, no longer the largest company in the world. That belongs to Apple now. Micron down 10% after the Kospi's 10% fall. Visa up 0.5%. They're letting go about 2,600 employees as they pivot to more high-growth areas for the company. And then PepsiCo and Coca-Cola, both of them are higher after Coke's earnings up 6.4% with strong results, a slight lift to their forecast, thanks in part to what they saw from World Cup sales. Let's get more on those earnings. Bloomberg consumer reporter Red Brown joins us now. Red, was this just thanks to the World Cup that Coke beat?
No, I mean, I think obviously that's going to be a big impact, especially in their most important market, which is North America. It accounts for around 40% of the sales in the last quarter. Obviously, there's a lot of people in North America celebrating the World Cup. But if we look at the results, it's pretty broad-based. So they saw growth in all of their operating regions. So I think what their company will probably say is that this is more of a factor of sort of the long-term strategies that they've been putting in place, making sure that they have the right sort of product mix, making sure they have products in the right sizes. That's a very important part right now for people, especially as they feel the pinch on their wallets. That will still kind of attract people depending on the price.
Well, one of the interesting things I thought you and the team wrote about was this pivot to sugar-free soda. I myself have a Poppy every now and then, but it has gotten more competitive. I think what Pepsi bought Poppy, the sugar-free soda, is just how big of a growth area is that for them away from like the traditional sugary sodas that we're used to?
Yeah, definitely. That's a really important factor here as people become just more health conscious. We see this in other markets as well, from, you know, across the consumer sort of spectrum between alcohol and you know, beauty and skincare, all these things. People are very worried about their sort of, or not worried, but are very attentive to their appearance. And this is, yes, certainly going to be one of these drivers, these innovation pipelines that all of these companies need to sort of pay a lot of attention to. That is definitely where the consumer is heading. And I think we also see that with the smaller sizes as well, right? So, you know, obviously you're getting less sugar, even if you are maybe in, cheating with a full-bodied Coke, if you will.
A full-bodied Coke. Well, I guess full-bodied Coke, though, also has real cane sugar in it now, right? That was something, what was that, early last year when the president wanted it, and Coke, in one of their earnings releases, said that they were offering that now?
Yeah, right. No, so, I mean, look, it's incremental sort of gains on, like, how can we make sure that we still have the same branding and product that people are familiar with, but maybe if it's marginally healthier, that might draw in people at the sort of margins.
I always think, okay, so they benefit obviously from World Cup, more sales because people are here in the U.S., but they sponsor so much, and presumably sponsoring the World Cup, especially the most expensive World Cup that there ever has been, is really expensive to them. I mean, how do marketing costs figure into all these?
I think it's, obviously, yes, you're right. It's a great point that it is expensive to do this, but if you, during the earnings call, they were really sort of spent a lot of time just in terms of the number of impressions and that they were able to generate from this. I think it was something like 9 billion views on their videos that they were able to create with 2,500 content creators. So it does seem like this does pay off, right? Like if you're able to get that kind of sort of attention, I think any brand would bend over backwards to make sure that they could get that many of eyeballs on their products. And some of the commentary during the call made it seem like that is going to have these sort of longer term effects, right? Like so people have kind of either reconnected or deepened their connection with the brand. There's another aspect of that they spoke quite a bit about is the amount of data they're able to generate from these impressions and these views and things like that as well, which does help them sort of spin this forward as well. So it's not just like it's helping you in this quarter. There's going to be some longer term benefits as well if you're able to kind of take that insights that you got, put them into product innovations, put them into future marketing campaigns, and continue to sort of, get dividends from this investment.
By the way, a lot of consumer stocks, especially the Pepsi rallying this morning too. Is there some look through from these results into other consumer companies and the ability of consumers to continue to buy and continue to spend money on these items?
We're early days in the earnings season. We'll get a little bit more of that view, especially with Procter & Gamble tomorrow. So another one of these sort of name brand companies that are going to have a view into every segment of the population. So maybe a bit too soon to say how much we can read through with Coke, but I think as the results trickle in over the next week or so, we'll definitely get a better view.
Well, I hope you've blocked out time on your calendar for us, because I'm
Yeah.
sure this is not the last conversation we'll be having in near term. Thanks so much, Bloomberg's Red Brown. Coming up in the next hour, we're going to speak with Meredith Whitney on just this, the health of the consumer, but also AI, plus banking M&A. Plus, we'll speak with Ben Zweig from Revelio on the AI labor market, and Liverpool Football Club CEO Billy Hogan will be joining me in the studio. This is Bloomberg Open Interest.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see, the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent. But when she's here, she can have her app open, and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
inside the Capitol Rotunda right now, a ceremony being held for longtime South Carolina Senator Lindsey Graham. The funeral service is set for this afternoon at the National Cathedral. Among those invited, Ukrainian President Volodymyr Zelensky, who's been meeting with President Trump at the White House. Here's ABC's Jay O'Brien.
Graham was instrumental in just the final days of his life of pulling together the support in the Senate for a sweeping Russian sanctions bill that the Senate is expected to take up as soon as today. That bill now bears Graham's name. Also in attendance here, Israeli Prime Minister Benjamin Netanyahu. Graham, who was known for his hawkish foreign policy, was a fervent supporter of Israel and wars in Gaza and later Iran, and he long pushed the U.S. to take military action against the Iranian regime.
A pause in the airstrikes between the U.S. and Iran overnight as diplomatic efforts take center stage. Today is the start of the 6th month in the war. At least 4 tornadoes reported in the Midwest. ABC's Alex Perez is in Menasha, Wisconsin.
In nearby Appleton,
Oh, my God.
debris sent flying as a tornado moved through.
Debris in the air!
AccuWeather storm chasers are tracking the destruction on the highway.
There's massive debris flying in the road.
Cars mangled in sheet metal.
I hope they're okay.
The storm exploding transformers.
Let us go.
Down power lines, leaving more than 500,000 without power across the region Monday as the storms rolled through.
In Japan, the southern part of the country, a major earthquake.
A 6.8 magnitude quake hit just off the southern coast around 4:30 in the afternoon. That was followed by at least 2 smaller quakes. This is about 500 miles southwest of Tokyo. Remote cameras from the area show how strong the tremors have been, and they went on for some time.
ABC's James Longman. In France and Spain, more than 300,000 evacuations because of those fierce wildfires. You're listening to ABC News. For a dozen years, Walmart has been the biggest company in the world. However, it appears it's not anymore.
At least not according to the Fortune Global 500 ranking released this morning. Amazon is number 1 this year, with revenue surging 12% and surpassing $700 billion. Behind the online retailer is former number 1 Walmart, followed by China's State Grid, United Healthcare Group, and Saudi Aramco. Apple comes in as the world's 6th largest company by revenue.
ABC's Jim Ryan. The man who's already pleaded guilty to murdering 4 University of Idaho college students now says he didn't do it. Brian Koberger seeking to withdraw his guilty plea, claiming he was coerced into making a confession.
Koberger, a former criminology student, had researched false confessions just months before the murders, writing a paper focusing on procedural injustice in the American system that has produced many false confessions. Critics suggest his paper could show that Koberger always planned to claim a false confession to manipulate the system. Either way, legal experts say withdrawing a guilty plea after sentencing is unlikely to succeed.
ABC's Hannah Battah. Singer Ariana Grande is suing dozens of hackers for leaking her previously unreleased music and for personal information on the dark web for profit. She says she's been the victim of years of cyber scams and hacking. Here's hoping you're not flying today. 1,300 cancellations, 1,700 delays at the nation's airports due mostly to the weather. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube and streaming live at Bloomberg.com as well. We got red and green on the screen here today. It's Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence Program. Coming up, we're going to check in with Elena Shirley-Atieva. She's a senior U.S. economist at the Conference Board. Get her thoughts on some of the consumer confidence coming out and what we might hear from the Fed later on this week. Rob Carolan's going to join us, Bloomberg meteorologist, get the update on got some pretty nasty weather coming up into the East Coast, and we'll get the latest there. Plus that crazy heat in the Midwest. It seems like all the way from the upper Midwest all the way down to Texas, just brutal. Mandeep Singh, Global Head of Tech Research, he's coming on. He's at Bloomberg Intelligence. We're going to get a preview from some of the big tech earnings coming out tomorrow and Thursday. And Christina Hooper, Chief Market Strategist at the Man Group, get her thoughts on these markets here. Jody Lurie, Bloomberg Intelligence Credit Analyst. She follows all the fun stuff like the all the leisure stuff. So we'll get her thoughts on some of the Hilton earnings and maybe what we can expect from some of the cruise lines and that kind of thing. So a lot coming up here. Let's kick it all off with John Tucker and a Bloomberg Business Flash.
All right, thanks, guys. This flash brought to you by IBKR. Trade election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. So the semiconductor sell-off deepening, and investors continue to rotate into the more economically sensitive sectors. An index of the semiconductor stocks, the SOX, down 5% this morning. So from its June peak, this index is down 25%. And just because I got bored, I was graphing the NASDAQ, and from its peak, let's see, the high was on June 2nd, and right now from there, it's down close to 9%. So, you know, technical correction, not too far off. Information technology, again, the worst performing major industry group in the S&P 500. Now, reflecting that rotation, the consumer staples and healthcare best performers. And in the Dow, paint. Sherwin-Williams, paint. The leader in terms of the index points was up about 7 points after beating estimates, also raising its forecast. Meantime, Cam Dawson at New Edge Wealth says, you know what, the semiconductor stocks could have further to fall.
Effectively, these stocks got so overbought by the time you got to the middle of June that even though we've seen things like a 40% drawdown in something like SK Hynix, you're technically not oversold yet. So if you look at a name like Micron, yes, it's down over 20%, but it's still 40% above its 200-day moving average.
Well, Nasdaq Composite Index down 269 points, a 1% decline. S&P 500 down 14 points. The Dow up 384 points. There's just too much stuff to keep track of. Now we got to know about DUV, not the DMV, the DUV. Immersion deep ultraviolet lithography machines. So this is a technological breakthrough that could accelerate the growth of China's computer chip industry. They use ultraviolet light to etch microscopic circuits onto silicon, and that's like the reason for the latest sell-off because competition from China with this new technology.
So DeepSeek, Kimi 3, and now what is the acronym again?
Immersion deep ultraviolet lithography machines, DUV. So put that in your pipe and smoke it. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. A little bundle of joy there. John Tucker joining us.
Wasn't being negative.
No, not at all.
Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. Streaming live on YouTube as well. As John was just reporting, you got some red and green on the screen here. Let's get a look and see what's happening out there in the world with some stock movers. We can do that with Bailey Lipschultz from Bloomberg News. Bailey, what are you looking at here?
Yeah, let's start with the green, Paul. Coca-Cola, ticker KO, right now up 6.6%, trading at an all-time high. If it closes there, the best day since February 2009. Wow. So quite a long time. Beating expectations really across the board, raising their guidance for the full year. The big thing analysts are calling out is the fact that this was a volume-driven beat, so you're actually selling more goods. It's not, peak pandemic when these companies were raising prices.
I love the smaller cans.
Oh, you're a small can guy?
Yeah, absolutely.
Why? Because you don't want to drink that much Coke, and this limits it?
I don't. In a typical sit-down, I don't want 12 ounces.
Mexican Coke or?
I love the Mexican Coke, but I don't want to pay the premium, except when I go to Chipotle. I'll get it there.
He likes the smaller Cokes. They mix better with the rum.
Thank you, John Tucker.
There you go.
Let's get down to the facts here.
Brass tacks. All right. What else you got here?
Yeah, looking at the weakness, JT mentioned chip makers under pressure again. The Philadelphia Semiconductors Index down 5.6%, on pace to close at the lowest level since early May. Again, down more than 25% from its peak, but still year-to-date up 55%. This does come amid concern around China's progress on this advanced chip making, also just circular financing, which we saw yesterday with that NVIDIA OpenAI contract. And let's be honest here, a risk-off sentiment move. So we are seeing Micron down 10% today, ticker MU. Coherent COHR down 14%. Lam Research down about 10%, ticker LRCX. So a lot of pain in high-flying companies across the ecosystem of AI and chip makers.
All right, and last one.
The secret AI company, yes, Scarlett, Corning, ticker GLW, down 19%. Oof. If it closes there on a closing basis, because this is where the numbers get fun, worst day since July 2002, which I think was the last time we had a bubble. Corning, I'm pretty sure, but 08 happened, I guess. Corning, third quarter sales outlook shy of what analysts were looking for. Again, this is a company that makes glass and fiber optic cables components that can kind of power the AI build out. That's why they've been a big winner on a 12-month basis, still up 110%, though the stock from a June 29th closing high, as I wait for my terminal to load, down 55%. And Corning, Paul, if you remember, is still about a $100 billion market cap, so it's a big company.
And it's doubled over the past 12 months, so I'm a glass half full guy. Yeah, so, and Corning, I don't know what came first, Corning the company or Corning the town in New York?
Well, they're based in Corning.
That's what I'm saying. Which came first?
JT, is it named after it?
Yeah, well, no, no, I think the I don't know, but they made the mirrors for all the famous telescopes, like Mount Palomino.
Okay,
there's the other stuff part of it.
Exactly, Bailey. Thanks so much. Appreciate that, Bailey Lipschultz, with our Stock Movers. And for more conversations like this, subscribe to Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's go to Elena Shuliatieva. She is the economist, senior economist at the Conference Board. Elena, what are you looking for with our Fed this week here? What are you looking for from Mr. Warsh?
Well, I'm looking to hear some reaction function explanations, hopefully at the press conference. There will be little information probably in terms of the rates action. We expect no change in interest rates. But what will be really interesting to see is how they voted for the decision, how many dissents, if any, will be in the policy statement. So these are the key things that we will be watching in order to understand what to expect at the next upcoming meeting in September.
Yeah, we'll see just how extensive this family fight that he keeps talking about might actually be. Yelena, we also want to get consumer confidence. The Conference Board's latest gauge of confidence unexpectedly falling to 90.8. What does that reflect, given that for the most part, a lot of people thought in July that the war had been coming down and was no longer an issue?
Well, it was more nuanced than this. So remember that the previous number was revised up slightly, but overall consumer confidence moderated slightly in July, continuing a general downward sloping trajectory since late 2021. If you look at the labor differential, it was still depressed. Consumers continue to assess labor market conditions as there are not that many jobs available, so there's nothing really much changed in this perspective. But you mentioned gasoline prices, and the report really highlights how sensitive consumers are to gasoline prices. So on average, in July, gasoline prices are still 10 cents lower than they were in June, and consumers took a note of that. If you look at spending plans on services, they picked up slightly, and consumers were planning to spend a little bit more on going out, on traveling. So consumers definitely took a note of that. It's just not reflected in the headline number.
Yelena, thanks so much. Appreciate getting a few minutes of your time. Yelena Chulyatieva, she's a senior economist at the Conference Board. Lots of crazy weather out there for sure. In the complete central part of the country, it's under that heat dome. Just crazy numbers out there. And here on the East Coast, we're going to get some pretty heavy rain over the next couple of days, and there's some New York City is facing some flooding risk as well here. Rob Caroline joins us. He's Bloomberg's meteorologist. Rob, talk to us about what's happening here on the Atlantic coast here, kind of the mid-Atlantic coast over the next couple of days.
Certainly, Paul. We've got an area of low pressure which is moving across the Ohio River Valley right now, and it's going to team up with a line of showers and thunderstorms that stretch from Pennsylvania into the eastern part of New York State, though to the west of the Hudson River Valley in the city right now. That system's going to coalesce, and what's going to happen is kind of an unusual event. It's something we usually see the fall into the winter and spring. The upper level low is going to cut itself off from the jet stream. That's going to delay the storm moving offshore. So it's going to leave us several rounds of showers and thunderstorms, some of which will develop this afternoon from Washington up through New York and towards Boston. And then we'll see more later tonight, tomorrow, and during the day on Thursday. Big problem when you get a cutoff storm this time of year, you're dealing with tropical moisture coming up out of, say, the Gulf or out of the southern United States. So some of these storms are going to produce an awful lot of rain over the period of time that they're occurring, and we're worried about flash flooding. We had some issues in New Jersey and also on Long Island a couple of weeks ago, and we're worried about a similar setup, particularly from southern New Jersey up through New York City and then into western New England.
Are there threats of tornadoes this time around? I ask because it feels like when I was growing up, tornadoes were not a thing in the New York tri-state area. Now it very much feels like it's become something we need to watch out for.
No, we're not concerned about tornadoes with this round of thunderstorms, Scarlett. The issue is it's a much slower moving system. The energy isn't going to be moving quickly. In order to get tornadoes, and we've been seeing some this year, it's been due to very strong weather systems diving down from the Great Lakes, a lot of energy in the upper parts of the atmosphere moving through swiftly, and the winds change in direction from the surface as you go up in the atmosphere. This system's going to be very sluggish. So it's not going to have the ability to spin up tornadoes. The big problem, we really do think, is going to be tropical downpours. We're going to have thunderstorms that are going to be like what we see in Florida in the afternoon with that, they're moisture laden. They put a couple of inches down over several hours. And especially in the urbanized areas with the concrete where it doesn't run off well, we are really concerned about the problem with that water accumulating and piling up and causing issues for commuters.
All right, Rob, thanks so much. We really appreciate a few minutes of your time. Rob Caroline, he's Bloomberg meteorologist, and we all have here in New York City, images from storms past of the subways getting flooded and water coming from all parts into the subway. That's always a fun time for the commute. Red and green on the screen here, led by the NASDAQ, off 1.4% today. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start off with the NASDAQ Composite Index. Now down over 9%, below its June high, so that's closer to correction. It kind of touches on the whole theme of the risk-off with technology. The semiconductor stocks, again, leading this risk-off sentiment. The semiconductor index, the SOX, down over 6%. This kind of follows the clobbering that the Kospi took overnight in South Korea. The new added worry is that China's using new technology to advance its chip industry, so there will be a lot of competition there. S&P 500, 19 points lower. The NASDAQ Composite Index, 322 points lower. That's down 1.3%. And then you have this rotation into, I don't know, what do you call it, old economy stocks. So that's reflected in the Dow, up close to 400 points, 52,606. Visa eliminating about 2,600 jobs. The CEO there trying to make the firm more efficient. Apple becoming just the second company. So that's not all bad news from John Tucker. The second company ever to achieve the $5 trillion market valuation. iPhone maker shares rising today, pushing the company's market cap to above $5 trillion. Let's see, if it closes above 343 cents, it'll cross that threshold. Right now, 337.87. So, we'll see. S&P 500 again, 21 points lower. And we check the markets for you. Too much?
No.
Okay.
Keep it up.
All right. I can't. We check the markets for you all day long. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker. And, of course, he gave us the headline about Apple and that $5 trillion market cap, which is, for the first time for that company, pretty incredible. We want to get to the tech headlines overall because the one that catches my eye, Paul, is the NASDAQ 100 heading for a correction, a 20% drop from its peak. The AI world is 10%. Excuse me. Bear market is 20%. Yep. Oh boy. Okay. Nevertheless, almost down 10% from its peak. And this, of course, right before the heart of earnings season from the rest of the hyperscalers.
Yeah, we're gonna get Microsoft, Meta Wednesday, Amazon Thursday.
Okay, so let's bring in Mandeep Singh. Mandeep is our global tech research head here at Bloomberg Intelligence. Mandeep, is this just nervousness, positioning ahead of the earnings, given what we heard from Alphabet, kind of resetting people's expectations?
I think it's more of a recognition that all of these hyperscalers are going into negative free cash flow territory now, and it's going to happen for everyone. So it's the market expressing its nervousness around that negative free cash flow and really not enough ROI to justify all this increase. There is ROI. We saw that in Alphabet's print, but the market didn't feel like this was enough to give them a pass and, for the stock to go up. I think, at the end of the day, this is a multi-year technology spend, and you are going to see phases of nervousness around, are we spending too much right now? Mm-hmm. But overall, everyone feels they have to invest. There is no way out of it. And, this is another one of those phases where you will see a correction, but it's not going to be meaningful.
So you and your team, you've got all your little financial models out there. How long are you forecasting negative free cash flow for the Metas, the Amazons, the Googles, the Microsofts, and if so, for how long?
At least through this build-out phase through 2028, 2029, where we will see CapEx increases, and we are talking about an annual CapEx of $1 trillion from these 5 hyperscalers starting next year, which is going to grow at least, low teens for the subsequent 2 or 3 years. So through 2030, they will be in negative free cash flow.
That's what I signed up for.
That's exactly it, right?
Yeah.
That's exactly
free cash flow, recurring revenue.
Right. I mean, it's causing a rethink of the tech sector completely because, as Paul said, this is not the profile of these investments. What kinds of tech companies in the past have had negative free cash flow and done well?
Well, look, the tech model has been asset light for the most part. So your largest companies like Google and Meta didn't have an asset heavy model. And so from that perspective, it is slightly new territory for these tech companies. But with that being said, they are growing top line 20%. So when you look at the likes of Alphabet at a 400 billion plus top line growing 20%, if anything, their top line growth will accelerate going forward. So that's the basis for why people should have an appetite to fund this, because we've never seen these kind of companies before that will have top line of 500 billion compounding at 15-20%. And these companies are becoming stronger and stronger. There is a reason why they are able to self-fund this build out, because of the strong balance sheet. And everyone feels like once they taper their capex, which there will be a digestion phase eventually, they will be printing. If tomorrow, let's say Alphabet and Meta and Microsoft decide they want to scale back their capex, they will start generating free cash flow of 150, 200 billion. That's not a problem. But then does that position them well in that AI race where we are competing globally with everyone now with Chinese models? Yeah. No. And so that's what everyone is after, is that prize of AGI, and where do you stack up in that race?
Once again, as he usually does, John Tucker confused me today with one of his stories. Some Chinese BUV. What is
DUV.
That? DUV?
Yeah.
What is it? What do I have to worry about that now?
It's, look, across the board, there is competition. So we are talking about how open weight models can have a bearing on the Anthropics and OpenAI's in terms of their outlook. Then you have the semi-cap equipment companies like ASML right now that have a monopoly in terms of how TSMC has to rely on ASML to get their equipment. Well, China is able to produce a portion of what ASML sends, that's the DUV machine, where they have developed their own machine. And we know the Chinese approach is just flood the market with the lowest cost. That's what they're trying to do with the open weight models to reduce the token costs. It's the same thing with the semi-cap equipment, the DUV tools that we're talking about here.
Oh, I'll wait for the movie.
I think we have no choice but to wait for the movie. Very quickly before we let you go, the big earnings that come out on Wednesday, Thursday, what's the one company that you'll be laser focused on?
Meta. I mean, to me, even today, the news we saw with BlackRock, they want more of the stuff to go off balance sheet. They want to develop a cloud business. They don't have one. So the ROI question is the most prominent for Meta because they don't have a model. They don't have a cloud business.
All right, good stuff. Mandeep Singh, thank you so much. Mandeep Singh is our global head of tech research here at Bloomberg Intelligence. And on that note, with earnings coming up, let's bring in Christina Hooper, who joins us in studio. Hey, Christina. She's the chief market strategist at the Man Group, joining us to give us her take on the markets overall. We've got a super pivotal week. We've got central bank meetings galore. We've also got these big tech earnings. What will set the tone here for the third quarter?
I do believe a lot of it is going to be set by the Fed because there are so many unknowns. This will be the second FOMC meeting for our new Fed chair. So he is still very much putting his imprint on the Fed. And so I think that will be an important part of setting the tone for the third quarter.
What should he say? What do you think he will say? Or will he say nothing?
Well, he'll certainly say less than Jay Powell.
Okay.
We know that, right? So the radical transparency of the Powell years is over, and we're going to get something less. I do think he will articulate concerns around inflation because so many FOMC members are concerned about it. Before that blackout period, we heard from a number of them. And while there was something of a reprieve when there was a ceasefire, that, of course, has largely ended. And I don't see, and I'm sure many of them don't necessarily see an end in sight anytime soon. And so that's a concern, as well as AI, CapEx-driven inflation, as well as tariff-driven inflation. So there's a lot to be concerned about.
There is a lot to be concerned about. And of course, it's not just the U.S. that's holding a central bank meeting. We've got the Bank of Japan and the Bank of England as well. I mean, the Fed obviously matters more than those other two institutions for investors in the U.S. But how do you think they will influence each other, if at all?
So I actually think the ECB will have some influence because they came out last week and essentially gave us a hawkish hold. And I think that's what we're going to get from the Fed. And I don't think the Bank of England is as concerned about inflation and doesn't need to be, but we'll likely get something akin to a vigilant hold from them. Now, the Bank of Japan is something of a different entity in that it has this longer-term goal of normalizing monetary policy. And so it's going to be trying to incrementally hike rates in a way that's not disruptive while this entire inflation backstory plays out.
While the Fed waits and sees, maybe the bond market's not. Yields have been rising here. How much of a headwind is that for the stock market just in general?
I think it's a significant headwind, especially for tech, because that's the long duration or longer duration equities, right? And especially now when we have tech companies that are going to be waiting on pretty significant revenues coming from their AI investments. That, I think, makes it a longer duration stock than it was just a few years ago, or stocks than it was a few years ago. And so anytime we see rates go up, especially on the long end, that tends to exert downward pressure on those longer duration equities in particular. So I don't think it's good for the stock market in general. It's particularly bad for tech, especially the AI related. Now, you know, we've been talking a lot about AI. Keep in mind that Bain came out not too long ago with a forecast saying that these companies, the hyperscalers, will need to get to $2 trillion in AI-related revenue by 2030 in order to make this essentially sustainable. I mean, that's a pretty significant hurdle if they need to get anywhere near that.
And that's kind of coincides with what Mandeep was saying in terms of the CapEx spend. Yeah. It's not just this year. It's not just next year. It's
2028, 2029. I mean, we're going years down the road. So that being the case, higher rates for now, it doesn't sound like it's going to discourage these hyperscalers from borrowing money in the debt market. They need to get this money one way or another.
Well, I mean, it certainly does beg the question, will we see some kind of strategy change? Will we see some of the U.S. Hyperscalers adopt more of a Chinese approach, which has been invest less, invest thoughtfully, look for ways to cut corners, essentially, have less expensive technology? And keep in mind that so much is so expensive, particularly chips, right? We saw Apple just a little while ago raise prices on its laptops because chip costs had gone up so much. So when you're a hyperscaler, you're buying a lot of chips. So think about how much more you're spending to get the same kind of build out that you got last year. And of course, you know, these GPUs, there's so much that can become rather obsolete quickly. So we might see a more thoughtful, measured approach to AI investment in the future. And certainly that would coincide with more in the way of not in my backyard movements, pushing up against it because of electricity usage. There are all kinds of forces that could conspire to change AI investment strategy.
Christina, thank you so much. Always a pleasure and great seeing you in studio. Christina Hooper is Chief Global Market Strategist at the Man Group, joining us in our Bloomberg Interactive Brokers studio. We have red on the screen. I was almost going to say green. That's the case if you're looking at the Dow, but the NASDAQ and the S&P 500, big declines, especially when it comes to the NASDAQ, down 1.2%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So the rotation from tech and other market stuff, that continues. The Dow green with stocks like Sherwin-Williams painting the picture there. Their earnings pleasing investors. Then the semiconductor stocks getting pummeled again. All sorts of worries there, including competition from breakthrough technology being advanced by China. Also makes for a pretty tough setup as we head into earnings from a bunch of the mega caps. So you got Microsoft and Meta Platforms, that's tomorrow. Apple and Amazon, they report on Thursday. I got to pick on SpaceX just because I can. Those shares have now erased 1/5 of their value since their market debut. And, of course, the Fed, starting the two-day policy meeting today, Terry Weissman at Macquarie says they are on the path to tighter policy.
I do believe they're going to be raising rates. I believe it's going to happen at the latest in October. There's a tail there to maybe moving it into September. But the only reason I would even I am entertaining October is because the personal consumption price index revisions are coming out in late September.
So you got to wait for the data. S&P 500, 9 points lower right now, 7403 on the index. The Dow up 358 points, 52,569. And the Nasdaq Composite Index, 231 points lower. That is down 0.9% right now. Oh, there's an auction of Harlan Sanders stuff. Who? Colonel Sanders, the founder of Kentucky Fried Chicken. You can bid on his pressure cooker and also a 1964 personal planner with handwritten herbs and spices recipes. So the Colonel sold Kentucky Fried Chicken in 1964 to a bunch of investors, but he retained the
original
title.
recipe?
No, he remained kind of the spokesman, the goodwill ambassador for the company. He served in the U.S. Army as a young man, but the Colonel title, that comes from the governor of Kentucky, who conferred upon him the honorary title of colonel.
So he was not a colonel in the military?
No, it has nothing to do with military rank. I think it was like the Kentucky whatever. That was in 1935, so.
Okay. More news you can, I guess, use. I don't know.
But then, of course, I immediately thought of Christopher Walken's portrayal of a colonel on SNL. You'll have to go look that up because I can't explain. I'll get fired if I explain it on the air. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
Hey, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and Bloomberg.com as well. Some of the leisure companies reporting some numbers today, Royal Caribbean, Hilton. Let's break it down with Jody Laurie. She is the Senior Credit Analyst at Bloomberg Intelligence, following these companies. Let's start with Royal Caribbean, Jody. Some pretty good numbers, I think, from Royal Caribbean, right?
Yeah. Paul, I mean, I think that it was not so surprising, but at the same time surprising. I think a lot of people were sort of anticipating that the Middle East would have a much larger, more pronounced effect. It's not saying that it doesn't. It's been, I think, well televised, plus the fact that you benefit from the fact that Carnival reports a month before. And so I think a lot of people have time to digest that and expect Royal to perform a certain way. We are seeing that bookings are strong. We're seeing that consumers continue to spend. And I think what's so interesting about Royal is they're leaning into the loyalty credit card arena, and they've been sort of talking about how that's been positive.
When you look at the cruise space, where does Royal Caribbean fit in with Carnival, with Norwegian Cruise Line, with Viking? I mean, walk us through in terms of loyalty, in terms of the kinds of consumers they attract, and in terms of the scale that each of them can achieve.
Right, Scarlett. So Carnival's the largest in terms of number of ships. Royal is second to that, and Norwegian's a bit smaller. Viking's a little unique in that they focus primarily on river cruises, although they do have some ocean cruises. Royal is actually entering into the river cruise space as well, and they've seen some good traction in terms of bookings. But I think what's so interesting here more than anything is that you have different types of consumers. You have the consumers that will cruise no matter what the company is. They just like cruising and they base it off of the destination and type of ship and what they're feeling that day. You have the consumers who are really dedicated to a specific brand and won't go outside that brand. I think the cruise line's goal is first to sort of attract consumers who wouldn't necessarily cruise into cruising, and then once they have them there, sort of get them dedicated to their particular brand. Now that we have much more digitalization, much more AI, I think a lot of what the companies are trying to do is extract as much personalized data so that they can really pinpoint to the customer what they think that they want to achieve with their vacation.
All right, I'm going on a Viking cruise in the fall, and I will report back on that river cruise in France. I lost a bet, let's be honest.
Are you going to expense that?
Yes, exactly, on my expense account.
It's no kids, no kids.
Yeah, exactly. Just switch gears and look at Hilton Hotels. I thought the numbers were good, but I see the stock trading off today. Tell us about Hilton. What's going on in the hotel business?
So Hilton actually, it's interesting because I thought that it was relatively strong, all things considered. You didn't see as much of a bump necessarily from the World Cup. They did say that they expected third quarter to see a bump as well. What's particularly interesting is if you look at occupancy rates, the ones that were negative this quarter were actually the highest end. And so that sort of speaks to perhaps the highest end earners either not traveling this quarter or maybe perhaps trading down. Hilton sort of hinted at that conversation on the prior call, talking about how consumers might be looking to sort of shift down a little bit in terms of their preferences, and I think we're starting to see that play out. What is interesting, though, is that they said that the AI boom is going to help middle and lower income consumers. And that's something we haven't heard in a while. Lower income consumers have gotten beaten down on quite a bit. And for obvious reasons. We have inflation pressures. We have a lot of sort of factors that are feeding into lower income consumers, pulling back on vacations. Yeah. But Hilton sort of hinted at that actually not necessarily being the case as much, which I thought was kind of interesting.
Yeah, I don't get how that happens. And have we heard that from other companies, that the AI boom will help these two cohorts?
I mean, I think, Scarlett, it's more of a function of, the same thing how last year we talked about how the pareback of government spending was going to negatively affect a lot of hotel companies. You now have these projects, these larger projects, and these potentials for expansion into other regions, perhaps attracting individuals to work there or to be there. And so I think that's sort of the concept behind it is anytime you have project booms that can kind of help hotels, at least temporarily, potentially. But it will be interesting to see how it sort of translates and if that's really the case. Now, I will say that for both companies, the Middle East, Royal and Hilton, the Middle East was clearly the area that was the weak spot and certainly something that they touched on, not surprisingly. And it's certainly something that's been a lagger for both the companies and has extracted some value away from what they've done.
For the hotel industry, is the industry adding net rooms or, are they still building new hotels and stuff?
They are, Paul. They are. The industry is still very much growing. It's still expanding. You have the large brands like the Hiltons, the Marriotts of the world, but you also have a lot of independents. Now, there has been some consolidation. You've also seen some independents teaming up. We have some companies out there like Mr. and Mrs. Smith, which Hyatt bought, which is sort of helping to sort of expand access into independent hotels. And I think what we're sort of anticipating or what we're sort of watching for is whether traditional hotels kind of get a little bit more, growth or momentum in them as Airbnb seems to be not as popular as it once was. You also have some areas that have taken back from Airbnb or allowing it. And so I think that if that continues, you might see traditional hotels do well.
All right, Jody, thank you so much. Appreciate that. Jody Lurie, she's a senior credit analyst. She follows all the leisure industries, think hotels and cruise lines and casinos and all that kind of good stuff. She does that for Bloomberg Intelligence.
Aren't you going on a cruise at some point?
Yes, in the fall,
yes.
October. So, yep.
And Viking.
France. Viking.
So this is a new thing for you because you've never been one of these cruisers.
I never did been on a cruise, so I've been told you have to crawl before you can walk, and a river cruise is kind of like the crawling part of the analogy. We did get the all booze included package. You're darn right we did that.
Yes,
Paid
smart.
up for that, let's be honest. More coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. Paul Sweeney, Scarlett Fu, and John Tucker with you on Bloomberg Intelligence. It is earnings season, not just in the U.S., but around the world. And a big titan of the luxury industry, luxury fashion industry, luxury apparel industry, reported earnings this week, LVMH, based in Paris. And the surprise here was that the fashion unit, the biggest unit, home to Louis Vuitton and Dior, reported sales growth, returning to growth for the first time in 2 years. So let's bring in Deb Aiken. She is our luxury goods analyst joining us from London. Deb, what happened that allowed LVMH's biggest unit to return to sales growth when you've got China still as a source of stalled demand and also a lot of issues in the Middle East with the conflict, perhaps calming some of the buying impulse there?
Mm-hmm. The US is what happened, so that's a nice story. The US is on fire, and particularly so fashion and leather goods, the area that you're questioning. It's the biggest by far in terms of profitability and sales. So it's 47% of the business for sales. It houses so many brands, big brands that we know, like Louis Vuitton and Dior, Celine and Fendi, others. And so the US, as we've seen actually with Richemont, particularly with jewelry, with other competitors which have started to report across this sector, the US is on fire, and it's been so for about 3 or 4 quarters. So we will ask later on, what about the state of the high-end consumer in the US? Well, for us, it's just really pushing ahead. But other than that, there were parts of Europe, there was Japan, and particularly Asia, where the whole fashion and leather goods business did better than expected as well. And I think that it's on the icons, it's on more creativity, and Dior is really helping out with Jonathan Anderson's first collection there, and that's doing well across soft leathers, footwear, and also the apparel side of the business. Women's wear doing very well too. So that's how we get to Q2 return to growth and an expectation for a better second half for fashion and leather goods.
Talk to us about the Middle East, because we all have, you know, whether it's from TV shows or movies, all the fast money in the Middle East and spending wildly on luxury items. Talk to us about the Middle East for a lot of these big luxury companies.
So the average luxury goods exposure to the Middle East is 4 to 5%. And the expectation leading into 2026 was that we were looking for 6.5% growth coming from the Middle East region. Bigger than that, though, would be tourism, particularly to Europe from the Middle East. And that's what we're missing on the Europe number. So all of the numbers we've seen coming out generally would see Europe a little bit softer than it had been on the tourism side, but local growth is still solid. And the idea is that actually within these numbers, we would have got 4% constant currency sales growth in the Q2, but we came out for the group with 3% because 100 basis points were swept away because of closures in Q1, and on the half 100 bips also. A little bit of closure in the Q2, but I would say with around 50 to 60% capacity reinstalled locally in stores. So that gets us to the minus 100 basis points at group level for Middle East. If we carry that forward, we would say 100 basis points for the full year, and that's what we put out initially when the news broke in March, and with everything that's happened since.
Gotcha. Deb, you had mentioned Japan and how it had seen quite a bit of growth in the quarter. Japan up 14%. There's a separate Bloomberg news story about how shoppers in Japan are driving up luxury jewelry sales to a record because consumers are seeking a haven from inflation and the weakening yen. I think that's so fascinating. Do we have a sense that from LVMH that was the dynamic?
I think Japan overall is 8% of sales, and actually Japan was mentioned across several of the categories as being strength and growth. So fashion and leather goods, also the selective retail side, which houses Sephora, did very well there. And the idea is actually that it's local shopping as well as jewelry, of course, high-end jewelry, high jewelry in particular. Tiffany doing very well, Bulgari doing very well, and doing very well across different regions. But it's about local demand, but also we are starting to see tourists back to Japan also on the back of the yen. They came in 24, they went away in 25, and they're back in 26. So there are some acute and interesting purchases also taking place, benefiting from a weaker yen.
Deborah, about 30 seconds left. Are Chinese tourists, are they traveling to London's High Street, to Paris, Milan, New York? Are they out and about spending money?
It's really interesting, and it's a good read across actually for tourism. So what we see is the Chinese, what we call the Chinese cluster, buying at home on the mainland across Asia and elsewhere. They're flat if we look sequentially and year on year, but actually there's less now being spent as compared in this quarter locally on land and more being spent off land, including coming to Europe. And we also have a lot more Americans coming to Europe as well. So they are traveling, they are spending, they're being more refined in the types of products that they're looking for.
All right. You get the euro down to parity by October, and then we'll be in good shape. Deb Aiken, thanks so much for joining us. Deb Aiken, she's a luxury goods analyst. Yes, we have a luxury goods analyst because there's lots of big public companies out there, and we like to cover them right now. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business, coast to coast, 24 hours a day. Bloomberg Radio and Sirius XM Channel 121 is presented by Golden Crest Metals. More BI coming up right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
This is Bloomberg Intelligence. Good morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are streaming live on YouTube. Paul Sweeney, Scarlett Fu, and John Tucker with you for the second hour of Bloomberg Intelligence. We have a lot to get through this next hour. Of course, we have President Trump talking up Iran diplomacy as the negotiations zero in on the Strait of Hormuz. We're going to check in with Dan Williams. He is our reporter based in Jerusalem. Ken Shea is our senior consumer products analyst. He'll help us recap Coca-Cola's earnings. We're also going to check in with Chris Merrill. He is the global CEO and co-founder at Harrison Street Asset Management on private equity. George Ferguson is our senior aerospace defense and airlines analyst. He will talk to us about Boeing's latest results as well as JetBlue's latest earnings. But before we get to any of that, let's check in with John Tucker for our Bloomberg Business Flash.
Yeah, we're mixed. The major averages right now, Scarlett. Investors leaving tech, rotating into the more economically sensitive parts of the market, which is why the NASDAQ is selling off. The Dow higher from its June 2nd high, the NASDAQ 100 down just about 10%, what we usually define as a correction. Leading declines again, the semiconductors today. The index of semis, the SOX, down 4.9%, just about 5%. This is actually coming off the worst levels of the session, believe it or not. Apple, up 0.3% right now. The market cap now, let's see, 4.966 trillion. By the end of the day, we could see just the second company to reach a valuation of $5 trillion for Apple. It did reach that earlier this morning since pulling back. Meantime, Lori Calvasina at RBC Capital Markets says it may be time to pick up some bargains.
Well, we actually did recently upgrade the tech sector, so I think on a longer-term basis, we're already, fishing around in this space. I think we also need to watch very closely the rate of upward revisions in the semi space, which has continued to be very, very strong.
Right now, the S&P 500 down just 2 points, 74.10 on the index. The Dow up 385 points. The NASDAQ 100, 382 points lower. That's a decline of 1.3%. So hardcore marathoners and runners are spending more to look better when they run. Sales of running-specific apparel have increased to almost $1 billion in the past year. This is according to figures compiled by Circana. The offerings include a $140 T-shirt covered in holes. They call it Moth Tech. The Moth Tech.
There's no technology there.
There's, from a moth's perspective, I guess. The Moth Tech cotton top made by the luxury running brand Satisfy. And this is how they describe this shirt. Quote, it's inspired by cotton that's been in dialogue with time. I love it. With laser cut openings to enhance cooling across heat zones. And you can pair this with Satisfy's $180 nylon Spaso shorts, which have punched out micro perforations for speed and breathability.
I think this just goes to show how much money there is, how much money is sloshing around, and how much discretionary income some people have.
Yep. Well, for runners specifically, but
a certain cohort of runners.
I'm reminded of Calvin Coolidge, his speech when he said, "I choose not to run." Anyway, we check the markets and other stuff.
Different kind of running.
Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash.
All right, John Tucker, thank you so much for that, for the other stuff. Let's bring in Judy LaGrue. She is here with us in studio. Oh, yes, that's right. God, Thank you, Paul.
Yeah,
Thank you for saving
some
me.
bad weather coming here.
Yes, absolutely. Bad weather coming up. Another horrible commute on the way home tonight, right?
Yep.
Oh, great.
Rob Carolan, he is our Bloomberg meteorologist, giving us a weather update. What time should New Yorkers and those in the tri-state area expect the rain to start coming down?
Probably, as Paul said earlier this morning, Scarlett, after about 2 o'clock, we're already starting to see some storms pop up in southwestern Connecticut, but they're moving away from the city. But the atmosphere is becoming more unstable, a lot of moisture to the west, and that is going to feed into the area. I think it is a rough commute home tonight, and it's also probably going to be an interesting commute in tomorrow morning, since we'll be dealing with the after effects of the showers and thunderstorms that we pick up this afternoon and this evening. Again, the area under a flood watch through Wednesday evening. Some areas are going to see in excess of 3 inches of rain over the next 36 hours.
And again, is this going to be a fast-moving storm, or is this going to be one of those that lingers?
It's going to linger, Paul. It's with us probably through Thursday evening. The system is out in the Ohio River Valley. It's going to take its time developing. It'll hit us today, hit us tonight, again tomorrow evening, and then there's the chance of more rain on Thursday, though I think Thursday's rain won't be quite as heavy as what we're expecting later this afternoon and into the evening, and then early tomorrow morning.
All right, well, at least there's that to look forward to. Rob, thank you so much. Rob Carolan is Bloomberg's meteorologist with the latest on these thunderstorms sweeping into the tri-state area here. All right, let's get to Judy LeGroux now. She's been patiently waiting. Sorry about that, Judy. I can't read the rundown, obviously. Give us the stocks on the move that you're looking at right now.
Sure, Scarlett. First, I'm looking at Palantir, ticker PLTR. The shares are tumbling as much as 10.4%, and the company is on track for its worst day in over 5 months. And for the first time since I've done this segment, I really am stumped as to why this movement is happening. But there are a couple hypotheses that we've got. First and foremost, Palantir expects to report their second quarter earnings on Monday, August 3rd, after market close. Oppenheimer analysts particularly are quite bullish and positive on what they expect will be a second quarter revenue beat, an 85% year over year increase, and a raise of their outlook as well. So I think maybe perhaps there's a lot of sort of momentum going into that. But what I found to be really quite interesting on the terminal is that there is an article currently about sort of what's happening with Palantir and the French government. So in June, the French Prime Minister, Sébastien Lecornu, got on Instagram and talked about how France needs its own tools and really put it out there that the country was going to look into severing its ties with Palantir. So understanding sort of the international implications of what that sort of does in terms of other entities looking at Palantir differently is something that we're looking at as well.
Okay, how about Sherwin-Williams?
Sherwin-Williams, paint.
Yeah.
Paint. Ticker SHW. Shares are climbing as much as 8.6%, and the shares are on track for their best day since last October, and they are currently on pace to close at the largest increase since April 2022. And this is coming after the company posted adjusted EPS and revenue that beat Wall Street estimates, and they also raised their EPS guidance for the full year that came in above estimates. Now, what's interesting here is that the company boosted their outlook despite what they themselves called no meaningful improvement in demand. However, Mizuho analysts noted that the sales beat was driven by growth in auto refinish and industrial painting. So not necessarily sort of the home painting that maybe a lot of us assume may be behind their revenue as well. So that is what we're looking at for sure for Sherwin-Williams.
All right, and last stock?
Sure, Coca-Cola. So Coca-Cola definitely on everyone's mind today. Ticker KO. The stock is trading higher as much as 7.2% on the day. The stock is currently trading at an all-time high for its best day in almost 6 years. So this is, again, another earnings-based move after the company raised its organic sales outlook for the full year. And the company also now sees organic sales growth of about 5%, which came in above analyst estimates. And a lot of this is driven by sort of the sales demand that came as a result of the company serving as a major sponsor of the FIFA World Cup. Yeah. So Bloomberg analysts really pointed to Coca-Cola's dominant market share as what drove the beat, but warned that achieving the new forecast may require the company to step up on product innovation and marketing. So looking at analyst comments on this as well.
Judy, thank you. Judy, thank you very much. Appreciate that. Judy LeGroux. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Right now, we want to get down to Washington, D.C. Dan Williams, he is a Bloomberg News reporter based in Jerusalem. He is in Washington, D.C. at the White House. Dan, we know Prime Minister Netanyahu is in Washington for the funeral services for Lindsey Graham, and presumably he'll have a meeting with the White House, or has had a meeting with the White House. Can you give us the latest on what's happening in D.C. from your perspective?
The Prime Minister has now arrived at the White House. Unlike previous meetings when we might have expected him to be greeted at the door in full view of the press, perhaps for him and his host, the U.S. President Trump, to answer questions by reporters there or in the Oval Office, this was a rather subdued entrance by Netanyahu, as it was by the Ukrainian leader Zelensky before him. Zelensky's also here for those observances for the late Senator Graham. I think the obvious reason for this is that the solemnity of the day would dictate that they should not be joshing with the press, perhaps keeping a solemnity, a degree of grayness around their meetings in accordance with the national mood, certainly the mood on this gray day in the U.S. Capitol. There may be other reasons, however. The Israeli Prime Minister did not bring press with him on his plane from Israel. He may not want the press asking questions about the course of this war in Iran, which appears to be at a juncture, and a juncture which may be dividing the allies, him and Trump, although they launched it together, this war, exactly 5 months ago today. We're waiting readouts, we're waiting comments from either side about what was discussed. For now, there's very little comment. The leaders prefer to keep public attention on paying respects to a senator, a Republican senator, much loved in Israel as he was in Ukraine. Toward the end of the day, however, as this visit by the Israeli Prime Minister progresses, he's due to return to Israel tomorrow. We may hear more about what transpired in that Oval Office behind closed doors.
Very quickly, Dan, what is the number one point that Prime Minister Netanyahu wants to make to President Trump?
Keep your eye on the ball being Iran's nuclear program. Trump definitely seems to be aboard above this. It would appear that the more grandiose hopes of achieving a regime change indirectly through this war have been abandoned. The Israelis worried that a new ceasefire in Hormuz might distract Trump from the prize, which would be the uranium enrichment facilities and stocks still in Iran. It would appear that he's hoping for an agreement on a means of continuing to monitor that, to pressure Iran into ultimately giving up those capabilities. And to judge by comments that Trump made to Fox News this morning, it would appear that he's in agreement.
Dan, thank you so much. We really appreciate it. Dan Williams, he's a Bloomberg News reporter. He is based in Jerusalem, but today he is at the White House in Washington, D.C., covering the visit by Prime Minister Netanyahu to Washington, D.C. Let's switch gears and get back to the market and earnings. We've been talking about Coca-Cola all morning. They put up some better than expected results, perhaps helped by the World Cup. Let's check in with Ken Shea. He's a Bloomberg Intelligence Senior Consumer Products Analyst. Ken, break down Coca-Cola's numbers. They seem pretty good. The stock's up 6% to a 52-week high today.
Yeah, hi, Paul. They certainly were good. We're talking about a mature consumer products company. We're not talking a tech stock here now, Paul. So, 7% sales growth, beat the 5% estimates, comparable EPS up 11. These are good numbers. Consensus was a little bit below that, and a lot of it's because consumer sentiment in a lot of big markets, including the U.S., continue to be subdued. And so there was some hesitation going in, although we kind of knew World Cup was going to give them a lift, and it did, a really nice lift. So it was a high-quality performance. It was very much volume-driven, wasn't so dependent on price as it had been in the past few quarters, and balance sheet got stronger. It was just hard to find any fault in this quarter.
I'm curious about the portfolio of drinks that Coca-Cola now has, because it's not just Coca-Cola or the slim version of it that Paul likes so much, but there's also sugar-free soda, sports drinks, water, because this younger generation seems to not like the sugary soft drinks as much as others in the past. What is the fastest growing part of that beverage portfolio, Ken?
That's a good question, Scarlett. Coke would say to that, part of the benefits of the FIFA World Cup sponsorship is that it gets them close to the consumer and it hears about trends, in real time, gives them a pulse of what's going on in the market. And so what they said today is look in the second half for Coke 00 to get a higher level of promotion. What is that? Well, their very successful Coke Zero, reformulated, is going to have a no caffeine version. That's not exactly novel to the soft drink industry, but it's been probably under-marketed, under-promoted for people like me. I can't drink caffeine after noon or I can't sleep. This is going to be kind of front and center for them in the second half. But to your point, Scarlett, functionality, getting more from your beverage than just hydration is still very key, in terms of consumer demand. They want more protein. Fairlife is a leader, and it was up 18% sales in the quarter. It's really strong numbers. Advanced hydration, that's Powerade. That's getting more marketing muscle now in the second half, so look out for more of that. And I'm sure the company has more innovation up its sleeve, didn't want to share today, but at least those three products, we can look for a higher level promotion in the second half.
So, Ken, do investors and analysts, do they even look at market share anymore, Coke versus Pepsi, or is that just a thing of the past?
Oh, they certainly do, and we get it here at Bloomberg Intelligence by virtue of Circana. Now, you've got to remember that, Circana, it's really predominantly a U.S. tracking, and Pepsi would argue, we're more than just soft drinks. PepsiCo, I think, has probably a wider portfolio of different categories than Coca-Cola does. Coke's still 75% sparkling, 75% brand Coca-Cola. But they're branching out, beyond that. But Pepsi would say, "Hey, be fair. We're more than just cola."
Yeah.
But Coke is gaining share in virtually all of its categories.
Ken, we mentioned how the World Cup was definitely played a role here, but how does a company like Coca-Cola build on that momentum generated by the World Cup, which is a one-time event as far as earnings impact is concerned?
It is a one-time event, but Coke went out of its way to say this morning, look, the consumer engagement that we got from the World Cup, they had a lot of activities beyond that. Innovative packaging. They had games and events outside the stadium going on. They had digital interactivity. They had a lot going on that they feel that there's going to be benefits resonating beyond just the immediate. So we'll look for that. But like I said, Coke's engaged with its consumers, and I think that pays dividends.
All right, Ken, thanks so much. Appreciate it. Ken Shea, consumer products analyst for Bloomberg Intelligence. You have a strong preference, Coke, Pepsi, or you're not?
I don't drink soda.
You don't drink soda?
Right. I will drink seltzer. So soda water.
Okay.
Yeah, but I don't like the stuff that's like dark brown and got too much sugar.
Okay. JT?
Sprite.
Okay. That's a...
And by the way, just a fun fact, you can mix vodka and Fanta orange because we ran out of orange juice in Paris once and
right,
had
and
vodka.
that did the trick.
Oh, yeah. We call them Fatal Fantas. How's that for marketing?
There you go. Very good. News you can use, presumably. S&P up 7 points. The Dow up 460. The NASDAQ down 110 points. We got more coming up. This is Bloomberg Intelligence. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News, with this Bloomberg Business Flash. NASDAQ 100 falling for a fifth day. The Philadelphia Semiconductor Index, that is sinking 5%. Information technology, worst performing major industry group, home to the semiconductors. So that's the big story today. Where are investors going? Rotating into stuff like consumer staples and healthcare. Corning, the worst performing stock in the S&P 500. GLW, the ticker there for glassware, down 18%. Third quarter revenue guidance was just below expectations. This is kind of a derivative play on AI because they make, among other things, fiber optic cable. And the leader in the Dow Jones Industrial Average, paint, Sherwin-Williams. Those shares up close to 8%, positive results for that company. Right now, the S&P 500 has turned higher, up 20 points, 74.33 on the index. The Dow Jones Industrial Average of 559 points, and the NASDAQ 100, 231 points lower. That is down 0.8%, but off the worst levels of the day. Love the story on the Bloomberg. So Cisco and Cisco, two different companies. One is the network services company. The other is the food services company. They've long been confused with each other because of their similar names. Employees of both companies have to explain to people they work at the company with the C or the S. So there was a recent meeting, and it happened that Cisco's chief people officer was there, and Cisco, with an S, the global head of customer experience, he was there. This all led to a LinkedIn post. The two of them with their arms around each other. So now, because of this, the two companies say they may collaborate, actually, on a joint technology project. Cisco,
that's not going to be confusing.
Yeah, Cisco and Cisco getting together. Completely different areas, but anyway, it's a great read on the Bloomberg if you get the chance. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. Appreciate that. It is Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We have some earnings coming out of the payments and fintech space today, and break it down. We're going to go to Dick Shigera. She's a senior fintech and payments analyst for Bloomberg Intelligence. She's out there in San Francisco. Dick, let's first talk about PayPal. I know they reported some numbers that beat estimates. We can talk about that. Talk to us about the strategic opportunities potentially for this company, because I'm not sure if it's in play or not in play, but people are interested in it. Talk to us about PayPal.
Yeah, hi, Paul. Great to be here with you as always. I think the results beat was interesting. 9% adjusted EPS beat shows that the business is executing better than was feared in this tough environment. Volume was strong, transaction margins were decent. Branded checkout growth also stabilized around 2%. And the company's reaffirmed its $1.5 billion savings target, and they've said about $400 million run rate savings by the end of the year. So things seem to be on track, but I think the key issue that remains with PayPal is the core profit driver, which is the branded PayPal button. That has seen single-digit growth, and the context around that is digital wallets like Apple Pay, like Shop Pay, card autofills are all capturing checkout mindshare. So I think the focus needs to shift. Whatever management does, those old days of milking the branded button are never going to come back. So they need to find alternative ways to monetize the network. And that said, the biggest catalyst for the stock right now is the Stripe and Adyen bid. They've made a $53 billion joint offer to acquire PayPal. The board officially hasn't responded to, but one way or the other, it forces the market to value this company appropriately now.
Do you expect the board to have any issues with this deal?
So here's the deal, right, Scarlett? Why does Stripe want PayPal? Stripe dominates the developer-first merchant-side payment infrastructure, but what it lacks is a two-sided consumer network. So the asset that PayPal has, which is its 400 million consumer wallets, the Venmo and distribution that it has, and now the stablecoin and agentic AI rails, all of these are valuable assets, and management is in so many ways communicating that. So the board has shown that this lowball offer isn't where they see the company's true potential. If you pay attention to the words in Enrique's commentary today, the message is clear. They're open to a deal, but it needs to reflect the true franchise value. And management said that they feel confident about the turnaround execution with fast lane or with margin expansion, and they think that'll yield higher long-term shareholder value. And they are willing to do the hard work, or at least go down trying. So these comments are likely reflecting in the share price more than the earnings itself today.
How credible is this buyer? Can you tell us about who this buyer is and who this bidder is and kind of how credible they are?
So Stripe is a very large competitor and a direct competitor for PayPal. They're a private company, and which is why, like, strategically, this asset makes sense for Stripe to kind of acquire. It's just that the offer was a lowball offer. This asset gives Stripe direct consumer relationships. So they do the merchant side of the processing. They have all the AI native companies. They have a wonderful new modern tech stack. But the PayPal's two-sided network, where they have all the consumers and the merchants, that's something that Stripe would, that's Stripe's envy. That's what they want. A consumer wallet, something like a Venmo, which has become a verb instead of a company asset, right? So when I say, okay, let me Venmo you, you understand what I'm talking about. So that's something that Stripe would like to acquire.
To turn its brand into a verb.
Yeah, like Kleenex.
Yes.
I like Venmo. I think it's
or Q-tip.
It's yeah, exactly right. All right, Diksha, thank you so much. We appreciate that. Diksha Garra, she's the Senior FinTech and Payments Analyst for Bloomberg Intelligence. This is Bloomberg.
Now on Bloomberg Intelligence, private markets in focus.
All right, folks, this private market segment is brought to you by Franklin Templeton. Franklin Templeton harnesses the combined private markets expertise of Benefit Street Partners, Clarion Partners, and Lexington Partners. Learn more at ftprivatemarkets.com. Let's check in with Christopher Merrill, Global CEO and co-founder of Harrison Street Asset Management. Christopher, just give us the lay of the land on private equity today from a fundraising perspective, from a deal activity perspective, from an exiting perspective. How is business?
How much time do we have?
You got a good 6 minutes.
It's great to be here. Look, I think the industry is evolving just rapidly. You're seeing big theme, big consolidation right now in the industry and in the private assets world. You're seeing investors want fewer relationships. They want fewer managers. They want managers to bring them as many solutions that they can. Once an investor gets comfortable with the culture, the business, the operational due diligence, it really is on that manager to become more relevant. And so you're seeing a great consolidation in the industry. Our business, we're a $100 billion real assets business, real estate equity, debt, infrastructure. Certainly seeing a rotation out of a lot of sort of other private asset classes into real assets, just given the durability of cash flows. So certainly a lot of positive undertones and good tailwinds within the real assets markets right now.
In the real assets market, which sector or which theme do you have the highest conviction in at the moment?
For us, we've always been, for over 20 years, really focused on sort of demand-driven assets, need-based assets around education, healthcare, storage. Really not trying to time cycles, but really looking for things where these assets are needed in good and bad times. So we're very bullish in the education sector, working on off-campus student housing throughout North America and Europe, as well as on campus with many universities that have deferred maintenance issues, and where we can set up public-private partnerships. We're also very, very bullish on healthcare. We're very bullish on senior housing right now. We've been doing that for over 20 years as well. And there is just a unbelievable demand for space right now and such a shortage of supply. We're seeing 80,000 people turning 80 every month, and really the supply is not there. And, as people age, health needs, memory issues, very hard to take care of a loved one with those issues. And so we've got a tremendous shortage of supply. But then also we're seeing a lot of things around digital infrastructure, data centers, renewable energy. So again, demand-driven assets, resilient cash flows, low volatility, That's really where we're focused, and we're seeing a lot of capital interest from our investors around the globe.
Chris, is the AI build cycle, is it overhyped?
You know, it's interesting. I mean, I think obviously the demand for data is off the charts and growing. And you know, when you look at the end user, what the real issue is when we look at data centers and how we invest, it's really the access to power. And that's going to be the challenge. I mean, power is going to increase, you know, 2, 3, 4 times here in the next 5 to 10 years. And really accessing that power is challenging. And so that's the big issue that one needs to focus on. When we think about how we invest in data centers, we're really looking for good infill locations, access to power, great offtake agreements with some strong hyperscalers. But you know, again, that need for data and what we're seeing again is robust, and it's not going anywhere.
You had mentioned this rotation into private real assets, and it's coming out of corporate private credit. What is the sentiment like on corporate private credit right now? Do people feel like the worst is over? Do you feel that the worst is over?
Well, it's a tough one because it really depends on where are you investing within that asset class. You know, are you in software companies? Are you in industrial companies? You know, we're certainly seeing a rotation into infrastructure and real estate, just given the durability of the cash flow, the tangible asset class. When we look at asset classes around education, healthcare, we've seen how these asset classes do through the GFC, through the pandemic, just very consistent, resilient asset classes. And the challenge really has been the lack of distributions out of privates right now. And that's been a challenge for folks to raise capital. And so when you've got this sort of demand wave, you've got this enrollment increase at public universities, you've got this aging population, this need for space, supply's been just choked off because hard to access capital, hard to get debt financing. So you've got these amazing tailwind right now in these sort of demand-based assets. And I think that's what a lot of people see, right? Inflation protection, resilient cash flows, ability to reprice. And that's where we're seeing a big level of interest and a lot of demand.
All right, Chris, thanks so much for joining us. Really appreciate it. Christopher Merrill, he is the global CEO and co-founder of Harrison Street Asset Management. One of the areas that he mentioned was, you know, university housing. I went to a college where all 4 years housing guaranteed. Didn't even think about it. My 4 kids, it was a disaster. Because
maybe
they all
the first year was covered, right?
First year covered.
Yeah.
And then it's good luck.
Yeah.
And you got this 20, 50, 100,000 kids all looking for apartments in Boulder, Colorado.
I know, where they're competing with professionals, with families for any kind of housing.
You know, so finally after like the first kid, I realized I'm not getting involved. It's your job. You figure it out. You go get all your stuff, you know.
Well, you write the checks. That's how you're involved.
Yeah, exactly. So they learned quickly. But so one more year.
You're almost done.
2 more checks to write, and I'm done. I've been writing college tuition checks for 12 years now. Unbelievable.
You've seen the heart of the inflation go up.
Crazy. S&P up 24, Dow up 570, the NASDAQ down 15. The markets are rallying here as we close out the morning session. A little more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker of the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Consumer staples, healthcare, and material stocks, they're in the lead. And then you have the information technology, worst performing major industry group. So investors continue to sour on the semiconductors. But at this point, we're off the worst levels of the day. And it's not exactly the greatest setup for the next round of earnings. Microsoft, Meta Platforms, they're set to report Wednesday, followed by Apple and Amazon on Thursday. Stu Kaiser at Citigroup Global Markets says there are more than a few signals coming from the recent tech selling.
The market is telling these companies, you're failing to do a couple of things for us, right? Number one, you haven't made a compelling case for what the ROIC on these investments is going to be, so we're going to question that. Secondly, you haven't really communicated what the glide path on this spending is going to be.
Right now, the Dow up 607 points, up 1.2%, 52,820. The S&P 500, that is higher, up 28 points at 7441. It's the NASDAQ 100 that is lower, down 184 points, down about 0.7%. But again, off the worst levels of the session. And then you have to take into account the fall in oil prices. Brent down close to 5% at $84.42 a barrel. I love these stories in the Wall Street Journal where they profile individuals and get these wacky stories. Through years of extraordinary political upheaval, the sound engineer at number 10 Downing Street is who they focused on. He has served as a chiseled omen of great change. This is Tobias Goth's duty was simple. Wheel out the wooden lectern, test the mic whenever Premier was about to resign or make a major announcement. Over the years, fans have suggested that he should be the next prime minister. The 42-year-old is, according to the Journal, their words, kind of hot. So when Andy Burnham decided to break with tradition and make his inaugural address, accompanied by only a minimalist microphone stand, a vocal faction of the electorate went into panic. Absolute fear they weren't going to see hot podium guy anymore.
Did hot podium guy end up making an appearance anyway, or no?
I don't, Larry the Cat was there, but hot podium guy, kind of in the background. So there's a lot of worries that he's not going to be around.
I mean, I don't know. Maybe there'll be another change in leadership at the UK at some point.
It's distinctly possible. What, 7 premieres in how many years?
Yeah.
Anyway, we check the markets and other stuff for you right here. It's a great read on Bloomberg Radio. I'm John Tucker.
Do they include a picture? That's my question.
I didn't look. It's radio.
John Tucker.
I didn't see. So.
All right, that's for everyone else to figure out. Thank you so much.
I think I piqued Scarlett's interest.
Yeah. You did. John Tucker, Bloomberg Business Flash for us there. Let's get back to earnings because we've got earnings coming left and right. Boeing just reported, and George Ferguson is our senior aerospace, defense, and airlines analyst. He joins us now from Princeton. George, the headline here that Bloomberg News has highlighted is that Boeing generated better than expected cash flow in the second quarter, and it still aims to generate $1 to $3 billion in free cash flow this year. It sounds like that is the metric that matters the most to investors right now, isn't it?
It is, right? So I think that it's always super important to generate cash. You can tell if companies are cheating or not, depending on whether or not they're generating cash. They could show earnings and no cash, and then you're like, doesn't matter. But the second thing for Boeing is they want to pay down some of this debt they have in the balance sheet over time, right? They need to get themselves into better rating sort of territory. And so that cash generation will go to, at some point, helping to liquidate some of that debt and tightening up the balance sheet.
George, where's Boeing these days on delivery of those 737 MAX? You've told us in the past that that's really the cash generator for this company. And where are they these days, and where do you expect them to get to?
Yeah, so Kelly Ortberg confirmed that they're at 47 a month about now. We're seeing a little bit less come out the door of the factory, but that they measure these at different points in the production schedule. But they're 47, going to 52 early next year. Another important component of that cash flow story, right? The beauty of this business is it does finance itself as you increase build rate. And so as you increase build rate, airplanes start to, you get ready to cut metal in airplanes. You go out and you ask the customer to start bringing the deposits. And they bring deposits as the airplane moves down the production process to essentially fund the build of the airplane. So when you're increasing build rates, customers are increasing the send of money into the company, and that's what we saw driving cash flow today. When you slow down build rates unexpectedly, customers stop sending that money in, and you suddenly have to finance it somewhere else. So again, this cash generation, a nice positive because customers are submitting cash because airplanes are about to be cut or in the process, and as you boost that build rate, you bring more of that in, which means it should persist if things go well.
Let's talk about JetBlue because that company reported earnings as well. And it looks like it posted a loss in the quarter, but it was narrower than what analysts had anticipated. JetBlue I don't want to call it an also-ran, but it's not doing as well as Delta and United with their premium offerings. But it's been trying to make up for that lost ground. How's it doing in that effort?
Yeah, I mean, yields came in a bit better than we thought. I think they were high single digits, getting close to 10%. I think that's pretty good. It's pretty challenging right now. I think, for a company like JetBlue, the good portion of their business right now is going to be the premium business and any loyalty money they can make. It's never going to be as much as Delta and United. And so they kind of operate from a disadvantage to that standpoint. Again, they do have a bunch of premium seats inside those airplanes, especially Transcon. They have a pretty loyal following, but that back of the airplane basic economy seat, I think, is the challenge seat right now for getting the right price for it. And so, and there's a bit of a scramble, I think, going on now between them and Frontier to try to grab those customers that Spirit Airlines left behind. Now, again, that's not a high-end customer. But it looked a bit better to us during the quarter than we had originally expected as well. So it does okay. Again, we're still, this is still a very challenging environment for them, but looked a bit better than we expected.
George, I'm so glad you bring up Spirit because JetBlue has won court approval to acquire Spirit's LaGuardia slots. It still requires the FAA approval, but it's trying to pick up some of the benefits of a competitor going away. Does that change the game for JetBlue to get these precious slots at LaGuardia Airport?
Well, I mean, I don't know that it changes the game, but it's LaGuardia slots are high-value slots, given the proximity to New York City. This is a core market for JetBlue. You'd like to not only take those slots, but keep competitors out of there to fight for those tickets or those customers. So to me, it'd be a good sign if they can get a hold of them, and probably well on their way if they've already got they've got one approval.
George, I'm not sure if you're aware, but I know you'll value this. I recently became a 1 million mile flyer for United Airlines. Are you impressed?
Very nice. Yes. I don't think I'm there yet. So.
Yeah, that's what happens when you spend 40 years shilling,
I was going to say decades.
Shilling for money all across the global Wall Street here. That's kind of my life.
What did they give you? What did they give you?
Oh, I had the pilot come up to me before we took off, sat down next to me. We had a nice little conversation. He said, you got a little medallion.
Do you get little wings to put on your jacket?
No, but I did get the medallion, which is very...
okay, medallion's cool.
Yeah, it's very cool. So I got a little plaque and all that kind of stuff. So I'm special, George, in case you didn't know that. All right, George Ferguson, thanks so much. George covers all the aerospace and defense companies for Bloomberg Intelligence. He's been doing that for decades and before that. But believe it or not, he is a U.S. Army veteran. He was an officer. Shocking to me. And what's even more shocking, he was in Army intelligence. I mean, you just... don't put those two together, Georgia and Army Intelligence. But there you go. S&P up 34 points. The Dow up 643 points. That's 1.2% on the Dow.
What's leading the Dow?
And even the NASDAQ turned positive. I mean, it's up 1/10%.
Sherwin-Williams, the best performer.
I know. Isn't that amazing? Sherwin-Williams is leading the Dow higher. I just don't think that. We'll take a look at this. Oil lower. We got it below $80 for WTI crude oil.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're streaming live at Bloomberg.com/video. And that's where you'll find all our stuff. UPS reported some numbers here today. I think the outlook, a little disappointing to people. The stock's trading down about 4 or 5% here. Thomas Black joins us. He's a columnist for Bloomberg Opinion, covers logistics, manufacturing, and aerospace, calling in via that Zoom thing from Dallas, Texas. Thomas, I see the stock trading off a little bit here. What did the company's results say about their business?
It says it's still a tough market. They are cutting costs and trying to increase more profitable packages by calling out some of the Amazon business that they had relied on. And this is all to make up for the most expensive workforce in the industry. So that's the path they're on, and they've already they've done most of their initiatives, and now they need to let them play out and see if they're going to work their way through to higher operating margins.
Talk about their relationship with Amazon. I know they're in the process of unwinding that relationship with delivering Amazon.com packages. What's the strategy behind that policy?
The strategy is to not deliver so many of the low cost packages that Amazon likes to dump on other entities, right? Either the Postal Service or UPS or other folks. These are a lot of times lightweight packages that go short distances, and UPS doesn't make much money, and it has a high-cost labor force, again. So it's trying to get away from that. It's not a complete walk away from Amazon. It's more of a glide down, as CEO Carol Tomei likes to say. They've glided that down to about 9% of their total sales going to Amazon. It used to be about 13% at the height of the pandemic. So they're not going to break from Amazon completely. They just want the higher profit packages from them.
So, it's interesting. When I think about it, FedEx or UPS, I think about a big fixed cost businesses, the warehouses, the planes, all that kind of stuff. And I would think you'd want to punt as much volume through there as possible, but I guess UPS is saying we need to focus on kind of the unit profitability a little bit more.
That's correct, and they're also looking to automate more. They've shut down a lot of facilities. In the end, by the end of this year, it'll be 150 facilities that they're shutting down. These are older ones that don't have as much automation, so they're moving toward more automation and packages that cost more. That's mostly in healthcare, small businesses, some businesses. They're getting away really from the e-commerce packages, which have become commoditized.
Interesting. You mentioned kind of just technologies. You have to kind of weave in, and I wonder how the company weaves in AI into their operations. What are they saying about that?
Yeah, they have a pretty powerful network now because they've introduced RFID, which sounds like an old technology, but it actually has gotten so cheap and so small that they can print RFID labels. So these labels that go on the packages can be picked up without having to physically scan them. So that's a pretty powerful tool. And then you marry all that data flowing in automatically into the system, and that's where AI takes that data and breaks it down and works its magic.
What's the company saying these days about maybe its growth strategy? We've heard over the last couple of years kind of how they want to focus on unit profitability, but at some point they need to talk about how they believe they're going to grow their top line.
Right, they're going all in on healthcare. That's a big one. This is where you get into some of the specialized deliveries with cold chain, where things have to remain cold and sometimes at very, very low temperatures throughout the whole network. And UPS has been building on that. FedEx has also entered into this. And small businesses, these are the folks that don't have enough volume to really get those big discounts. So they tend to be more profitable customers. And of course, the B2B, the business-to-business deliveries those are bread and butter deliveries that they won't walk away from. What they are walking away from are some of those e-commerce deliveries, especially the residential ones where you don't have a lot of packages going to one stop. that density where you can deliver more packages at one stop is a key to boosting margins. And the residential deliveries, they're never going to be as profitable as business deliveries.
So talk to us about just the geographic growth. Did they call out, I know they're primarily in the U.S., but they have a pretty decent international exposure as well. Do they call out any area as a potential opportunity or potential problem area?
Yes, they talked about international quite a bit. I think they have some opportunities to do what they did in the U.S. in international, which is to maybe call out some of those low profit packages and concentrate on the higher dollar ones, if you will, and also to automate more and become more efficient. They also talked about some of their trade lanes becoming more normalized. They said that they had growth in their China to U.S. trade lane for the first time in many quarters, and they're working through the elimination of the de minimis packages. I don't know if you remember that whole flap, but that was a lot of volume that was coming through UPS and at a pretty good price too. That went away very suddenly, and they're starting to lap that, so it's looking a little bit better on the numbers.
All right, very good. Tom, thank you. Appreciate it. Thomas Black, he's a columnist who covers logistics, manufacturing, and aerospace for Bloomberg Bloomberg Opinion, based down there in Dallas, Texas. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry revenues. Your top business stories and global business headlines are coming up right now.
From ABC News, I'm Michelle Franzen. On Capitol Hill, a farewell for the late Senator Lindsey Graham, a ceremony held earlier in the rotunda. Lawmakers from across the aisle now paying tribute to the South Carolina statesman who served his country for decades in Congress and in the military. This afternoon, a funeral service will be held at National Cathedral. JBC's Jay O'Brien is there.
Graham will be eulogized here at the National Cathedral by his close friend, President Donald Trump, who has said that the South Carolina Republican was like family to him. Graham died suddenly just about 2 weeks ago due to heart complications. He had just returned from a trip to Ukraine where he met with Ukrainian President Volodymyr Zelensky. Zelensky will be here in attendance for Graham's funeral today in honor, he says, for Graham's steadfast support for his country and its defense against Russia.
Israel's Prime Minister Benjamin Netanyahu also will attend the funeral services. Officials in Japan assessing the damage following that powerful 6.8 magnitude earthquake today centered off the coast of southern Japan. ABC's James Longman has more.
Fires have been reported, thousands are without power, and there are also concerns about landslides. There's a particular focus on a mall where the floor collapsed and aerials from the scene show the roof has caved in too. Local media say at least 50 people are in the hospital with injuries. The Prime Minister has said people's lives are the top priority, and they've set up a task force to deploy for rescue operations if needed.
Wildfires continuing to ravage parts of Spain and France, with hundreds of thousands fleeing their homes and towns and new evacuation orders. Here in the U.S., cleanup underway after tornadoes tore through the Midwest. ABC's Alex Perez is in hard hit Menasha, Wisconsin.
The city of Menasha, Wisconsin, taking a direct hit, prompting the mayor to declare a local state of disaster.
I headed down to the basement, and when I come up, it's like a war zone here.
The view from above shows roofs ripped from homes and businesses destroyed.
Those severe storms targeting the Northeast today, with flash flooding the concern. You're listening to ABC News. Singer Ariana Grande is suing dozens of hackers for leaking her previously unreleased music and personal information for profit. Grande says years of cyber scams and attacks led her to personal data and content being posted on the dark web for significant sums of money. Here's ABC's Hannah Battah.
The lawsuit claims the unnamed suspects hacked into various personal digital accounts of photographers and producers who have worked closely with Grande, leading to the unlawful and egregious theft, dissemination, and exploitation of unreleased content. The lawsuit filed in Los Angeles names John Doe 1 and John Does 2 through 100 as defendants, accusing them of invasion of privacy and violating a California data theft law.
Grande wants the identity of the hackers revealed, and she's demanding a jury trial. Walmart held the title for 12 consecutive years, but the retailer is no longer the biggest company in the world.
At least not according to the Fortune Global 500 ranking released this morning. Amazon is number one this year, with revenue surging 12% and surpassing $700 billion. Behind the online retailer is former number one Walmart, followed by China's State Grid, United Healthcare Group, and Saudi Aramco. Apple comes in as the world's sixth largest company by revenue.
ABC's Jim Ryan. No grand prize winner in Powerball last night. That means tomorrow night's drawing will be worth at least $633 million. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump plays down escalation in Iran as Washington stops to remember a hawk. Welcome to the Tuesday edition as the president urges Tehran to make a deal. Amid meetings today at the White House with Benjamin Netanyahu and Volodymyr Zelensky in town, both to attend the late Lindsey Graham's funeral today. We're going to get the latest on both fronts when we speak with Bloomberg's Tyler Kendall and Dan Williams, who's at the White House right now. Jensen Huang hits the Hill today to make the case for AI just before Sam Altman shows up. We'll cover both with Bloomberg's Mike Shepard. And as the Senate prepares to tackle government funding before the August recess, we'll have analysis from our political panel. All after a look at Wall Street. Suddenly positive now. Let's get a lift from Charlie Pellet. He's at World Headquarters in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Lots of cross currents. I can count at least four. We got the semiconductor sell-off here. We've got oil in the Middle East. We've got tech earnings. And, of course, the Fed. They have begun meeting. Decision tomorrow, 2 o'clock Wall Street time. But, yes, major reversal for equities. Have been down as many as 30 points on the S&P 500 index, down 0.4%. But right now, as you correctly point out, Joe, a major reversal there. S&P now higher by 32, up by about 0.4%. Dow Industrials up 633 points. That is an advance of 1.2%, while NASDAQ is up 29 now, gain there of 0.1%. Major sell-off, though, for the NASDAQ 100 index. Continued weakness in semiconductor names. We've got the NASDAQ 100 index trading near a correction right now. That index is down 0.5%. Everybody's watching the SOX, the Philadelphia Stock Exchange Semiconductor Index, down 3.5% right now. The VIX right at 18. The 2-year 4.26%. The 10-year 4.59%, and the 30-year 5.08%. Gold now at $4,044 the ounce, lower by 0.8%. West Texas Intermediate crude 78.55 a barrel. WTI down 5%. Barrel of Brent 83.83. It is down now by 5.1%. Fed policymakers have begun their 2-day meeting. President Trump saying interest rates in the U.S. should be lower. He made that comment in response to a question from reporters aboard Air Force One. Trump says he knows what the new Fed Chair Kevin Warsh wants to do, but acknowledges Warsh does not make the decision alone. Thomas Honig is Distinguished Fellow at the Marcatus Center. He's also a former president of the Kansas City Fed. He told us this morning he does see the Fed standing pat.
There's uncertainty about whether inflation is under control or not. I think that's important. I think also that the rest of the yield curve is higher. So the Fed, the FOMC has an excuse if they want to say, well, let's look, we need to wait 7 weeks to get more data, and therefore we're going to hold off.
Former Kansas City Fed President Tom Honig interviewed this morning on surveillance. Of course, the Fed decision 2 o'clock tomorrow, Wall Street time. Recapping, S&P up 0.4, major sell-off in crude. West Texas Intermediate down 4.9%. Joe Matthew, that is a Bloomberg Business Flash.
All right, Charlie. Boy, a lot to cover today. This is a pretty wild market, and Charlie will have a lot more on it coming up in just about 15 minutes. You know we're in a different world. I realize it's all about the AI unwind here, and Charlie can't do a newscast without mentioning the socks, by God. But it is a different world when the biggest gainers we're looking at include Sherwin-Williams and Equivia. That's the market we're in. As I mentioned, we'll have more from Charlie coming up as we try to figure out the next moves for the United States when it comes to Iran and Ukraine, and both are coming to a head today, thanks to the late Senator Lindsey Graham. The fact that all these people are in town for the funeral at the National Cathedral that's set to begin 2 hours from now is providing a massive opportunity for advancement in both causes. So thanks for joining us on an important Tuesday edition here on Bloomberg Radio, streaming live on YouTube. Search Bloomberg Business News Live, as we'll bring you to the North Lawn in just a moment. The president will be making tracks up to the National Cathedral, and we'll talk to Tyler Kendall about this in just a moment. He's got meetings in advance of that. Already had one with President Zelensky in town from Ukraine to pay tribute to Lindsey Graham, but also to meet with lawmakers and the president here in his effort to get more defensive weaponry to Ukraine. Benjamin Netanyahu has been vying to get in front of the president, we're told, for weeks, if not months. Finally, the funeral presented the venue to do so. And so we've got an important moment here. We heard from the president already. He dialed into Fox News ahead of the funeral to try to lay down the law here. In one breath, downplaying the idea of escalation, saying that he hopes that Iran takes the deal, but also resurfacing this idea of striking Pickaxe Mountain, which is apparently a new obsession, knowing that hundreds, if not thousands, of centrifuges are reportedly buried beneath what is 450 feet of bedrock, which takes some heavy-duty bunker-busting bombs, likely dropped from an American B-1 bomber, to get there. President says he's ready. Listen to him from this morning.
Bibi's telling me that because he wants me to stay involved. I mean, I don't necessarily. We have the finest, because of Space Force, we have the greatest cameras in the world focused on. We know exactly what's going on. But, no, I heard Bibi announce that. I said, why don't you just tell it to me? Why do you have to announce it to the world? I know exactly what's going on at Pickaxe. It's not a big problem. We took out their nuclear sites, and we'll have to take out Pickaxe if we don't make a deal. If we don't make a deal, we'll take it out very easily.
We'll see about that. Among the opportunities for escalation, including dropping more bridges, in the president's words. Let's bring in our two reporters here. Dan Williams, Bloomberg News Jerusalem reporter, is with us live in Washington. He's at the White House today as Benjamin Netanyahu continues his meetings in the building just behind him. And of course, Tyler Kendall is with us as well, with me here in our Washington bureau. Dan, I'm going to start with you. This meeting that is underway right now will lead to what in the hopes of Benjamin Netanyahu?
This meeting is now well into its second hour. It would appear that Netanyahu, the Israeli prime minister, at the very least, wants to close ranks with his chief ally, the U.S. President Trump. It's worth remembering this is their first meeting since they launched that war against Iran on February 28th. By every account, they hoped that war would have ended within 4 to 6 weeks with victory. That did not happen. I don't think either of them wanted to find themselves 5 months into the war, and today is the 5-month mark of that war. There have been some cracks in the alliance, or at least in the relationship between these leaders, when it comes to Iran, when it comes to second-order issues in the region, such as Lebanon, Turkey, Saudi Arabia, Syria. It would appear that the president has used this opportunity, as you noted, the loss of a major pro-Israel voice on Capitol Hill, not just to pay his respects in the name of a country that really did have very warm feelings toward the late Senator Lindsey Graham, but also to speak to Trump and make sure, to the extent possible, that the bilateral relationship is still on track at a juncture point for this war, given Trump's obvious exasperation with how protracted it's been and with so far failed attempts to wrest back control of the strategic Strait of Hormuz.
Dan, is it possible to characterize their relationship at this point? Benjamin Netanyahu and Donald Trump called each other friends in public, but there's been extensive reporting on their frayed relationship. We heard from Lindsey Graham in some of the filming that was done for a documentary that's being produced that no president ever spoke to Benjamin Netanyahu the way Donald Trump does, giving it to him straight, yelling at him, berating him at times. Are these two actually friends at this point? And what could come from this confab?
The idea that they've had direct private conversations, clashes between them, isn't new. It's gone back several months now. We know that Trump can be churlish. He can be this way to his friends and certainly to his foes. I think the Israelis take it in stride. If we've had previous episodes of tensions, certainly the relationship survived, and I think we can expect the same to happen here. This meeting was held well away from the press. However, the Israeli Prime Minister's office just issued pictures showing both of the leaders smiling broadly alongside each other, and also the meeting very well attended in a crowded Oval Office, crowded despite the absence of reporters, with senior aides to Trump, his secretaries for war, and for the Treasury and for State in attendance, as well as the Israeli retinue. Something significant is being discussed. The question is this a parting of ways over Iran? Is Trump reading Netanyahu the riot act in terms of wanting Israel to accept less that Israel may have hoped for from this war? Or, alternatively, are they discussing potentially a reunification in the fighting against Iran, something none of us will expect it? It's worth remembering that the last time they met was on February 11th, and some 1670s is very close to their chest. This obviously accords with the solemnity of the day with Senator Graham's funeral, but the grayness of D.C. right now is, I think, matched by a deliberate strategic haze in the White House.
Really fascinating and great reporting, Dan. To Dan's point, this meeting began at 11:03 a.m. Per the White House, so we are now in hour 2. Tyler Kendall with me here in Washington as well. Tyler, interesting that the president has chosen in both of these meetings to not invite the press into the Oval Office or whatever venue is being had at this point with Netanyahu. You were with the president all day yesterday. You traveled to Michigan. You talked to him in the back of Air Force One. You saw him in action. What's his demeanor as he's going into, frankly, what could be a pivotal and very difficult, emotional day?
That's a really good point. Having both of these meetings back to back, these leaders coming in and out, but not really getting a readout yet from the White House. Yesterday, President Trump was highly focused on the conflict in Iran, as we were all asking questions on what caused this pause in fighting. What indications has the U.S. gotten that Iran is coming to the table? And to build on Dan's reporting, we were reporting earlier today that it is Iran and Oman that are talking about a potential deal to reopen the Strait of Hormuz. And then once that is potentially in place, then we could see the U.S. resume formal negotiations about potential curbs. The issue is the Strait of Hormuz at this point remains basically stalled, and you also have now dwindling traffic in the Red Sea. And I had asked President Trump about whether or not he was concerned about those Houthi attacks against Saudi Arabia. He said that he's in constant contact with Saudi Arabia, but that so far the U.S. hasn't gotten involved when it comes to the Houthis, but that he stands ready to. He seemed very much to be leaving both options open here. Right. He said he has plenty of time when it comes to the conflict in Iran, but also he's not going to give Iran that much time, and he will resume talks if if he needs to, leading to the comments that we played at the top when it comes to Pickaxe Mountain.
When it comes to Ukraine, Tyler, in our remaining moment, we're going to have an important vote on Russia sanctions later on today. This meeting this morning, combined with whatever vibe or emotion we're going to be hearing and feeling in the room in the National Cathedral, could lead to a very overwhelming vote.
Of course, and Washington obviously stunned over Lindsey Graham's death when it happened, in part because of questions about who will fill that gap left in terms of him being such a huge foreign policy hawk. We have Zelensky going to this funeral, as well as the Finnish president, Alexander Stubb, of course, also a staunch supporter of Ukraine, with Finland on the eastern flank when it comes to more military assistance going to Ukraine. Zelensky says that he spoke to President Trump about Patriot missiles. President Trump told us yesterday on Air Force One that he wants to keep the missiles, but we know these general licenses are going out. This vote, definitely something to watch later this evening.
No doubt. We'll be doing this, of course, on the late edition of Balance of Power. President Zelensky will be meeting with the full Senate membership later on today. Tyler, thank you. You're heading back to the White House, and we'll have more on these meetings when Tyler gets there in our second hour. I'm Joe Matthew in Washington. Thanks for being with us on the Tuesday edition of Balance of Power, only here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. NASDAQ 100 index does remain lower, down another 0.6%. NASDAQ 100 nearing a correction as the chip sell-off continues. The SOX, the Philadelphia Semiconductor Index, now down by 4%. NASDAQ 100 index down 0.6%, with the S&P higher by 28, just about the best level of the day, close to it, up now by 0.3%. Keep in mind, at the worst level of the day, we did have the S&P down by 0.4%, so a reversal there. The Dow pushing higher, up 650 now. That is a gain of 1.2%. NASDAQ Composite Index just about flat on the day, but again, perhaps the big story at this hour, NASDAQ 100 Index lower by 0.6%, again nearing a correction. The 2-year 4.25%, with the 10-year 4.58%, the 30-year 5.08%. Gold is down $31 the ounce. Spot gold now at $45 the ounce, $4,045 the ounce, down 0.7. And West Texas Intermediate Crude Oil, WTI, $78.16 a barrel, down now by 5.4%. Barrel of Brent, $83.33, down now by 5.6%. Earnings news. Lots of companies out with earnings, but we're looking at Coca-Cola shares now higher by 5.1%. It raised its full-year outlook, bolstered by demand last quarter, while it served as a major sponsor of the FIFA World Cup. We saw PepsiCo, its rival, PepsiCo shares up by 1.6%. Again, recapping, the Dow, the S&P, they're both higher. NASDAQ now lower. NASDAQ 100 index down 0.7%. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie. Thank you, sir. He'll be back in about 20 minutes with another check on the markets. Live from World Headquarters in New York, thank you for joining us here on the Tuesday edition of Balance of Power. I've been talking a lot about the meetings in Washington just now with Tyler Kendall, right? We've got President Zelensky, Prime Minister Netanyahu, both at the White House, big stuff. There are 2 other meetings, 2 other visits from, you could call them world leaders, I suppose. They're tech titans. If there was a Mount Rushmore of artificial intelligence, both their faces would be on it. And they're in town here in this 24-hour cycle. It has nothing to do with Lindsey Graham, Iran, Russia, Ukraine. We're talking about Jensen Huang and Sam Altman, both in the Capitol this week for some overlapping but also slightly different reasons. Jensen Huang, who just sat down with Ed Ludlow, great interview last week, and is going to be meeting with lawmakers, unclear if he gets to the White House, to make the case for America's position in the AI race, and maybe even pop open a few open-weighted models while we're at it. He talked to Ed Ludlow exclusively about the race that the United States is in with China, that both are not turning back from. Listen.
My expectation is that China and the United States will continue to advance AI. In the case of China, they're producing more AI researchers than probably all of the world has, in any given year. And so they're producing, if manufacturing intelligence is important, they manufacture the most important version of it, which is the researchers.
Yeah, and what are we doing? At the moment, we're selling AI. Can't get far away from it, far away enough from it on Wall Street, although I will mention NVIDIA just turned positive. But you know the story lately. Talk of a bubble, circular investing, if not firing squad. The market wants to see some results here. And Jensen Huang arrives in town at a delicate moment. He's going to be spending time, we understand, with Senator Mark Warner. Sam Altman will be here tomorrow, also meeting with Warner. But he's got a whole different set of issues to speak to, which is why it's great that we have Shep with us right now. Bloomberg's Michael Shepard with us in studio. It's great to see you.
Great to be here, Joe.
I don't know if he gets over to the White House, but this isn't about regulation or new legislation. This seems to just be getting the buy-in, keeping lawmakers on board. Is that right?
Well, that's part of it,
Yeah.
but he is cautioning against too much of a crackdown against this open weight model approach that has a lot of policymakers here in D.C. very concerned.
Does he believe everything should be open?
Maybe not every last thing, but he really does believe that, you know, a wider dissemination and accessibility for artificial intelligence is a public good. And this is something that was endorsed by, you know, dozens of other big tech companies, as well as startups, in a series of letters and posts over the past week. On Friday, there was that big missive that was signed by Jensen Huang and, of course, Satya Nadella from Microsoft, along with a bunch of other CEOs, getting on board this idea that, look, open weight AI models are actually a public good, that they're a good thing, and that any move to try to counteract China by cracking down or even banning open weight models would be a bad thing. And the reason there is so much focus on this whole open weight versus proprietary models like the ones that OpenAI and Anthropic have been pursuing, where you put a barrier up to the cost. In other words, if you want to use it, Joe, you have to sign in to OpenAI. You can't download the model and just kind of tinker with it yourself. You have to log in and then pay a fee for the tokens, for the usage. The other way, the open weight way, is that, Joe, if you have enough computing power, yes, you too can download that Kimi K3 model. But it is a challenge, and it's a safety challenge, and that is one of the things that they did acknowledge. But they also say, look, the open weight approach does offer some safety benefits.
Interesting when we consider a safety challenge. Sam Altman's going to have a slightly different conversation. By the way, he's meeting tomorrow with Bessent, with Lutnick, with the aforementioned Mark Warner. They want to know what happened with this jailbreak that took place with the OpenAI platform, essentially hacking Hugging Face without anyone telling it to. Mike, will he have an answer?
They have tried to spell out exactly what happened. And their version of events is, look, the model actually obeyed the instructions, but perhaps a little bit too well. It broke out of its so-called sandbox. They had actually removed the guardrails for internal testing, but tried to keep it within this, you know, walled garden, if you will. But it managed to get out, and it was doing what it was told. It was told to find vulnerabilities in AI models, and it went to this repository, Hugging Face, of a lot of different AI platforms, and then went to do its work. It surprised Hugging Face, which at first did not know the source or the origin of this attack, and even OpenAI was caught off guard by it too. So there will be a lot of questions about the kinds of guardrails that are in place and that should be in place for models that haven't yet been released. And of course, this factors into discussions among administration officials right now about exactly how those safety reviews, which they say will be voluntary, should be conducted. And we've scooped, of course, this idea circulating in the administration and pushed by Treasury Secretary Scott Bessent that perhaps there be an industry-led initiative like FINRA for the Wall Street broker-dealer industry.
Just quickly, Mike, do Altman and Wong agree on the establishment of a national framework as opposed to state by state? Are they coming back to Washington on every visit asking, where's the bill?
They would very much appreciate a framework. They don't want it to be too heavy-handed. That is where they part ways with Dario Amodei, who actually favors and put out a blog post yesterday defending open weight AI models, but also urging mandatory safety testing and reviews of models before they're released. So there is not complete harmony within the industry, although there is a broad-based and broad-scale defense of this open weight, you know, the open weight side of the debate here. It will come down in a lot of ways to the devil being in the details. You'll see NVIDIA pushing for less controls, fewer controls on exports of its AI chips, whereas you will certainly hear Anthropic saying we need more controls on those chips, keep them out of China's hands. OpenAI, how it plays that, it's probably not as high an item on their agenda, for example.
If you bump into Jensen this week, let us know.
Absolutely.
I want the story.
We'll see if we can get him in here, Joe.
These two are going to be out later together. I know it. You see,
He may like that idea of a tech Rushmore. I'll run that by him.
Dario would be the other one, right? You get three faces on Mount Rushmore.
Yeah, we need a fourth.
Someone will email me. I forgot someone. But yeah, thank you, Shep, as always. You should see Shep when he puts the leather jacket on. And he's out on the town with Jensen Huang. You have no idea. So the point that I was making earlier is kind of ironic timing, I guess, or strange timing, that we're talking about this revolutionary technology. No one's pulling back. There's nothing but money. China's going, we're going, the race is on. But when you look at Wall Street, we can't get away from AI fast enough. That's why we wanted to spend just a moment with Mike Regan, Bloomberg's managing editor for equities, to figure out how long this might go on for. Mike, it's great to see you. We've got some important earnings, I know, this week when we consider the hyperscalers. We're going to be hearing from Microsoft. We'll be hearing from Meta. I don't know if that helps to answer some of the questions people have. There's a little bit of a bid under NVIDIA since we've just been talking about them, but especially these chip stocks. My gosh, look out below.
Yeah, absolutely, Joe. And then we had to hit that threshold today where it looked like the NASDAQ 100 was actually going to enter a technical correction of a drop of about 10% from its last high. I think at this point, there's a lot of people are just trying to sort out exactly what we're looking at. Is it just a correction in, a so-called crowded trade, an overheated sector, or is it the beginning of something more? And, obviously when the momentum shifts to the downside, a lot of these stories that we see in the news tend to have an exaggerated reaction. There was a report in the Information earlier this week that China was making some progress in building their own certain type of chip-making machines, which really hit a lot of the chip-making stocks pretty heavy. So, for now, I think you're right that, Microsoft, Meta, and then tomorrow we'll get Amazon and Apple will fill in a lot of gaps in information that investors want to see. That said, Alphabet's earnings report last week is still causing some indigestion among a lot of people because, that was their first negative free cash flow since they went public. So, it just shows you how much they are really betting on this AI CapEx to be the future and really illustrates how much is at stake if those returns on investments aren't up to par, up to investors' expectations.
Just can't seem to spend enough at the moment. I guess it says a lot. I was joking earlier when the hot stocks in the market are Sherwin-Williams and Coca-Cola. That kind of informs the mentality of where the trader is today, right?
Yeah, absolutely. I mean, throughout this sort of sell-off in the semiconductor and the big NASDAQ stocks over the last month or so, the overall S&P and the Dow averages have been supported because it's almost more like a rotation into some of the sectors that were left behind because of all this AI mania. So looking at the S&P 500, it's really not that far off of its last record in early June, even though, as I said, this NASDAQ 100 is, teetering on the brink of a correction right now. So it is, in large part, a story about more of a rotation out of these really high-flying tech and semiconductor stocks and into some of the left-behind sectors. The economy's still going pretty good, and people are still fairly bullish about stocks as an asset class. They're just kind of shifting their poker chips around the table.
Including software. My gosh, even Salesforce is up 5%, while Micron is down 9%. That's the rotation even within tech, I guess, that we're seeing here. Mike, come back and talk to us about some of these reports coming up. We should compare notes by the end of the week and see where we are following some of these big hyperscalers. Do we call them Mag 7 anymore? I don't know. I don't know if that applies.
Sure.
Mike, it's good to see you. We'll do that for the sake of this broadcast, indeed. Bloomberg News, managing editor for equities, the big boss on the markets, here on Bloomberg Radio. I'm Joe Matthew in Washington. Hey, Kaylee's back today. She'll be coming in around 1 for the second hour of Balance of Power. And we have a lot more to follow, including our political panel. A good one today, Jeannie Shanzano and Sarah Chamberlain on what in the world is happening on Capitol Hill. Stay with us right here on Bloomberg.
It's 1240 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, yes, NASDAQ as well, all pushing higher. The NASDAQ 100 index, so does remain lower. Weakness in tech, specifically semiconductors. Right now, the NASDAQ 100 index down 0.6%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, hit hard, down 4%. Semis selling off. The S&P, however, overcoming earlier losses, now at 74.42. S&P up 29. That is a gain of 0.4%. Dow Industrials rallying, surging 637 points on the Dow, up by 1.2%. Again, the NASDAQ 100 index down 0.6. The 2-year yield 4.26%, with the 10-year 4.59%. The 30-year 5.08%. Gold down 0.8%, 4,042 the ounce. A major sell-off in crude. West Texas Intermediate down 5.8%, now 77.82 a barrel. Barrel of Brent crude at 82.55, down by 6.6%. So it is an up day for the S&P 500 index, a down day for semis. Lots of cross currents for markets, including oil, geopolitics, tech earnings, and yes, the Federal Reserve. Amy Wu Silverman is head of derivative strategy at RBC Capital Markets and on surveillance this morning. She told us she's looking ahead to the midterm elections.
Midterms isn't going to be about gas prices. It's not necessarily going to be about inflation. It's going to be about anti-AI. I remember in one meeting we step in, and the first thing the client asks is, what do you think of this data center moratorium? What does that mean? And so the point I'm trying to make is, look, what if anti-AI sentiment becomes more than just an election story? It becomes a market story.
Amy Wu Silverman of RBC Capital Markets. And speaking of AI, Meta Platforms and BlackRock plan to build a 1 gigawatt data center complex in Texas. It will cost about $14 billion to develop. That's a lot of juice. A gigawatt, enough power for between 700,000 and 1 million typical homes. Meta Platforms, which reports tomorrow, up now by 0.3%, but BlackRock up by 3.2%. Recapping, S&P 500 index up 0.4%. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie, thank you, sir. He'll be back coming up at the top of the hour, 1 p.m. Eastern. We'll see where the rotation is at that point here in what has been a fraught market full of winners. The indexes are hanging in, but it's also got a lot of losers under the hood. And if you're tied to that AI trade, we see you. We know it can be scary. Again, Charlie will have more at 1 as we welcome our global television audience to the broadcast. We're going to have our eyes on Capitol Hill later on this evening. It's not just what's happening at the White House today, and that's awfully important as the president meets with Zelensky, Netanyahu, on the way to the funeral, of course, for Senator Lindsey Graham. That will start at 2 p.m. Eastern up at National Cathedral. It'll be very important stuff that happens afterward on the Hill. Zelensky today is meeting with the full membership of the United States Senate, and this evening there will be a vote, we're told, on the Russia sanctions bill that will carry Lindsey Graham's name. Remember, just a couple of weeks ago, following his untimely and shocking death, we were asking a lot of lawmakers about whether it should, in fact, carry his name. And indeed, this legislation, a bipartisan bill, has been formally named the Lindsey O. Graham Sanctioning Russia Act. Zelensky is going to be addressing senators at 6 p.m. Imagine the swell of support that this could gather after hearing from him. And that's where we start with our political panel. Bloomberg Politics contributor Jeannie Shanzano is with us, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. With me here in our bureau is Republican strategist Sarah Chamberlain, the president and CEO of the Republican Main Street Partnership. Ladies, great to have you both, and thank you so much for joining. Sarah, do you suspect this passes with even unanimous support? What kind of a vote
I don't know about that. It would pass overwhelmingly, though, without question.
There's been some Democratic concern about the tariff element here.
There has been.
That won't hold this back.
I don't believe it will. I mean, for a couple of reasons. Mm-hmm. Obviously, the president is going to be addressing them. Mm-hmm. Ukraine needs it. And with the final tribute to Lindsey Graham, yeah, right. I mean, he was friends with a lot of Democrats.
Well, that's right. You feel the same way, Jeannie? Is there any way to get something over the finish line more powerful than having someone like Zelensky speak to membership?
Yeah, I think it does pass. Listen, there's 62 sponsors of this bill, 22 of which are Democrats. So I think even without Zelensky going to the Hill, it would pass. I think what they're trying to do is move the House to take this up once it does pass, which is, I think, going to require the administration stepping in and pushing for it. But to your point, there are very real concerns here. Since we are in Odyssey fever, Joe, there are many Democrats who view this as a Trojan horse of sorts that gives the president enormous, expansive power to tariff. So that is a real concern. There is also concern this is the first time that the U.S. is going to be using tariffs as on secondary countries rather than for trade imbalances, rather as a geopolitical tactic. And then also there is concern about Congress ceding its authority to the White House. And this is a real concern because separation of powers doesn't warrant this. And so, you know, you think about something back in the day like the line item veto. The Supreme Court stepped in and said, no, you can't. You may all want to give that power to the president, but you can't do that. It's unconstitutional. So I think there's a long way to go here. Does it pass today? Probably, but there's a lot of questions about this.
Well, I think we just heard from Jeannie why this likely will not receive a unanimous consent agreement. There was a hope. That's probably not your expectation.
It is not expectation as of right now. Who knows?
Yeah.
I mean, DC is crazy sometimes, but no, I think it was going to pass overwhelmingly though, and I think that the issues that she just discussed are going to be put aside.
I want to ask you about a couple of confirmation votes that are unfolding here. 6:30 p.m. a vote to confirm Jay Clayton to be our next DNI. There was a lot of concern following this hearing about, you know, who won the 2020 election. Some Democrats, including Mark Warner, were aghast, but he has the votes.
Yes, he has the votes.
To
So
be
he'll
confirmed. So that's done.
Yes, that should be done.
And then we move on to Todd Blanche. This one's a little more complicated.
Much more complicated.
Enter Tom Tillis, John Cornyn. They want a guarantee on this anti-weaponization fund.
They do, and I don't know if they're going to get it. It's going to be interesting to see. They want it in writing.
Yeah.
They want the guarantee in writing. He has verbally said it, but they want it in writing. So we'll see how this plays
this is the
out.
so-called YOLO caucus. If that, I
Yes.
mean, do we not end up with an attorney general? Do we not renew FISA in that world?
Well, FISA is not going to be renewed anyway till the fall.
Yeah.
So we could go a little bit. He would still be acting attorney general. So we'll see. It's good. That's an interesting dynamic.
Yeah.
And you know, Trump kind of caused this problem himself.
That's right.
To be honest.
Yeah, it's Tillis and Cornyn calling, Jeannie. What's going to happen to Todd Blanche?
Regardless, he does remain acting, but of course he wants to be confirmed. I think if history is any guide, these two guys may fold, but it's hard to tell at this point. We know John Cornyn is very upset by what Trump did in his primary. But, you know, stepping back a bit, they're absolutely right. This should be in writing. They're absolutely right to demand it. And to add another wrinkle here, you've got the Democrats who sent Todd Blanche and the Justice Department a letter requesting information on the subpoenas that the DOJ issued to New York Times reporters. And the fact that that may not have been proper protocol and procedure, as the federal judge just noted, before they withdrew the subpoena. So they're getting a lot of pressure on this Blanche nomination from all corners.
Interesting. Just seeing a headline cross the terminal via Axios. Jensen Huang, the CEO of NVIDIA, meeting with Howard Lutnick amid China scrutiny, a meeting that we have been waiting for, just weren't sure on the timing, and apparently they are behind closed doors right now. I don't know if we can hear from Andy Bashir, guys. I should have asked you to do this. You know when Aaron Rupert puts you on Twitter, you're in trouble. I just noticed the clip from our interview with the governor of Kentucky last night made the Rupert Twitter feed here, and it's because he came in pretty hot. It's the first time I've had a chance to talk with him about Mitch McConnell. And I'd like to hear from both of our panelists on this once we hear from the governor, who sent a letter, and it's actually a couple of letters at this point, asking Mitch McConnell, of course, the former Republican leader in the Senate, now part of the rank and file, I guess is a better way to describe him, to come out with more information about his well-being. He's been in the hospital since June 14th. He's missed 38 votes in the Senate. Here's the governor, a Democratic governor, we should note, of Kentucky.
Well, I think that the Senate needs to take some form of action, and that can be in simply providing the type of evidence that people deserve. that he still has the capacity. You know, if anybody watching this missed 45 days of their job, they would be expected to call their boss, explain why they've been out and what their prognosis is to return, and to do it themselves verbally to that boss. That's all we're asking. The boss here are the people of Kentucky. We have asked this time, if he is not going to respond, for his staff to step up and to be honest and transparent.
Wow. When you've got a governor talking like that, Sarah, what's this going to lead to? How long can this go on for?
Well, first of all, I think he's running for president.
Well,
so I think that's
worst
why
kept
he's
secret,
out
right?
there, right?
Yeah.
But there is no rule against this. I mean, and Mitch McConnell, I mean, former leader, he's due their respect. I mean, he is very much still alive.
Is that disrespectful behavior
I think
or
it's
rhetoric,
a little
you
bit
think?
disrespectful.
Yeah.
I mean, why doesn't he just go to the hospital? Why doesn't he try to do it privately? Why is he out there doing it publicly? Because he's trying to make a point and run for president. And, you know, the August date is ticking quickly here. You know, once
we talked about that.
We did last time I was on. If you get past that August date, there's nothing you do. Mitch McConnell can step down and the seat stays open until.
Well, and Andy Bashir thinks that's part of the gamble here, that they're trying to run out the clock so he cannot call a special election.
And that very well they could be, but I would argue in a special election you still would probably get a Republican. You'd get Andy Barr a little bit quicker.
Well,
so I don't think it really matters, even in a special, unless Massey decided to try to play spoiler in that.
I'm not sure how that would go, but we're going to do a whole special on that with you if it happens. Jeannie, what's going on here? Are you buying these proof of life photos, videos, etc.? Does Mitch McConnell need to provide more?
You really hope that they would. The problem is there's nothing to force him to do that except for the bully pulpit, which Governor Bashir came on. And Joe, I can't believe, I'm going to look and see how many millions of views this got. These are very popular when they get posted. So between this and the Rand Paul, you're racking up the millions and billions, Joe. Yeah.
I know.
But, you know,
Rand Paul was at 1.8 million or something the last time I looked. Jeannie, why is this resonating, though? Why is Andy Bashir resonating? Is it because there's so much mystery surrounding Mitch McConnell, or there are so many knives out for him?
Well, it's a little bit of both, but let's be honest, you know, to the voters of his state, they deserve to have representation in Congress. What is going on? These people are disappearing for months at a time with absolutely no real connection with their voters and their constituents. You know, Americans don't love the Congress, news to both of you. So you want to give them the best of you. And if you can't serve, you shouldn't be there. And I think Andy Bashir is right. He's the governor of the state. He should be allowed, if Mitch McConnell can't serve, to call this special election. And by the way, why are they for a special election? If Republicans are going to win anyways, go ahead and call it. So I think Andy Bashir is right. And Joe, I think he should come on today and every day and keep screaming this on Bloomberg until he gets an answer.
If the clicks keep coming. You know, when you consider the heat that Joe Biden got, this shouldn't be a surprise to anybody, right?
Right. I mean, Joe Biden arguably maybe shouldn't have served his entire term.
Well, I mean imagine if he checked out for 45 days and we didn't know where he was. There would have been a massive outcry.
There would have been, but the argument is, was he all there at the end mentally?
Yeah,
I
right.
mean, so who knows?
Well, we've got a lot of questions.
There is no rules around this.
Yeah.
I mean, Congress is very special in that because the governor is right. If we did this in our real jobs, we would get questioned. But in Congress, both the House and the Senate.
You can't do that at the partnership, obviously.
I cannot.
Tom Kaine had a very similar experience where there was nothing anybody could do.
Right.
By the way, that seems to have calmed down dramatically.
Yeah,
no
he's
one's even
back
talking
and
about this
doing
now.
very well. He's
Having
a member of Main
dealt
Street.
with a bout of depression, which he talked about on the House floor. You know, once this is all done, Cece, that's hysterical. I'm sorry, I got to steal that. Jeannie, when the Tapper tell-all comes out after Mitch McConnell, we'll know what really happened, right?
That's
Jake
absolutely
Tapper.
right. Is that what
All right.
Cece said? I missed it.
Yeah, Cece's very funny. All right.
She's very
so
good.
with all of this said, we're gonna see sanctions passed tonight. I think we've established here. We're gonna see Jay Clayton confirmed, but Jeannie, Todd Blanche will remain acting Attorney General.
I don't know if he will. Again, if history's any guide, Cornyn and Tillis will fold on this. The Republicans have been doing that a long time. Obviously, things have changed. I hope they don't fold because we all deserve to get that in writing. And why not put it in writing if the president has no interest in acting on it?
Sure. Can we get a day with no drama around here? That's never going to happen, right? All right, I just want to make sure. It's almost August. There are no slow news days. Sarah and Jeannie, thank you so much. Our great panel will be back in our second hour with much more to talk about as we turn to the war in Ukraine. Melinda Harding will be joining us coming up right here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump considers additional support for Ukraine as Washington remembers Lindsey Graham. Welcome to the Tuesday edition as the president meets today with Volodymyr Zelensky at the White House, as well as Benjamin Netanyahu, both in town for Graham's funeral, set to begin a short time from now. I'm Joe Matthew alongside Kaylee Lines. She's back today in Washington. Kaylee, these meetings are focusing the president's attention directly on the two hot wars underway.
Yeah, although there does seem to be, at least for now, once again, a detente between the U.S. and Iran. No active firing is taking place in and around the Strait of Hormuz. This has been the case for several days now, and the oil market is reflecting that as we are seeing a plunge in prices. Brent crude now back below $84 a barrel. All that's to say, though, that it's not clear how the diplomatic process is going to move forward in that war. Meantime, in the Ukraine war, it's not just the White House meeting that Zelensky took while in Washington today after the funeral of Lindsey Graham at the National Cathedral. He's going to head to Capitol Hill to meet with senators who are getting set to vote on a Russia sanctions package.
Which will carry Lindsey Graham's name officially, something we'll be tracking a bit later on in the day. It is expected to pass easily. Unclear if they'll get the unanimous consent that some were looking for, Kaylee, but this is a very emotional day in Washington with this service taking place, and the way that it might feed into geopolitics is going to be something to watch.
Yeah, it's very unique to see an individual memorialized, not just here in Washington among a domestic political audience, but with so many world leaders in attendance as well. It's not just limited to the Israeli prime minister or Ukrainian president. We'll be covering that for you throughout this hour. But we also want to check in on the markets. As I mentioned, oil prices are dropping. That means yields are lower, but there's a whole lot happening in the equity market, including with semiconductors. So let's get a check on that now as we turn to Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Kayla Lyons. Welcome back. You hit on two of the four major themes today, oil and semis selling off. But in addition to that, we've also got tech earnings coming up for the Mag 7 over the next couple of days. And yes, there's a Fed meeting underway right now. Decision tomorrow, 2 o'clock Wall Street time. Going to begin with crude oil. You mentioned the sell-off in WTI, $78.81 a barrel now. Crude down 4.6%. Barrel of Brent, $83.59, lower now by 5.4%. Bottom line here, oil lower, stocks higher, but semis are a major weak spot. The S&P 500 index up 38. We now stand at 74.51. That is a gain of 0.5%. The Dow up 1.3% right now. Among some of the Dow names, Sherwin-Williams, Salesforce, IBM, and Boeing all moving higher. Sherwin-Williams, by the way, after earnings, it is climbing now by just about 8.2%. NASDAQ up 0.2%, but the NASDAQ 100 index, the weak spot today, down 0.5%. Semis moving lower. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 3.6%. Your 2-year at 4.26%, with a 10-year currently trading at 4.59%, and the 30-year 5.08%. Again, all of this ahead of the Fed decision tomorrow and Kevin Warsh's news conference, 2:30 p.m. Yeah, count on Bloomberg. We'll have it for you live. Spot gold now at 4,037 the ounce, down 0.9%, and West Texas Intermediate crude down 4.6%, 78.78 a barrel. Weakness in semis. Micron down 8.4%. Intel now down by 5%. Advanced Micro Devices lower by 7%, bucking the trend. NVIDIA, that stock higher by just about 0.6%. Lots going on. Joe and Kaylee, that is a Bloomberg Business Flash.
Lots going on indeed, and Charlie Pellet's on top of it all. Thank you, Charlie, as always, watching the markets for us from New York. As we've told you here in Washington, it is also a day in which a lot is going on, all of it taking place on the day of the late Senator Lindsey Graham's funeral. There were, of course, some ceremonies at the Capitol building earlier today, and there will be a full memorial service for him taking place at the National Cathedral this afternoon. And in attendance at that service will be heads of state, not just leaders of Congress, in which Lindsey Graham spent so many years. The Ukrainian President Volodymyr Zelensky, of course, is here in Washington, as we've told you, as is the Israeli Prime Minister Benjamin Netanyahu, both of whom met with President Trump at the White House earlier today. Those meetings have now concluded, and the messaging, at least from the White House press secretary, Caroline Leavitt, well, brief in nature, Joe, was that they went well.
Yeah, really something to watch the images if you're with us on Bloomberg TV or on YouTube. The ceremony at the Capitol resolving to a memorial service that'll start about an hour from now at National Cathedral. That's why they had to get those meetings in early at the White House. And we're lucky to have Skylar Woodhouse with us, a Bloomberg White House correspondent, with her eyes on both conflicts and both meetings today. Skylar, thanks for coming to see us here in our Washington bureau. The Zelensky meeting we'll seize on first. That actually went pretty quickly here, and he's got a couple of big asks that sound familiar, including more defensive systems, but more support from Washington, period, as we work our way up to a sanctions vote later today. The stars appear to be aligning for Zelensky here.
Yeah, President Zelensky, he said that the meeting with President Trump was, quote, a good meeting. So only time will tell to see, how well those discussions went today. I think for reporters who were over at the White House today, they definitely were, eager to get in the room to ask questions. And the meeting did not open up today, nor did the meeting with Prime Minister Benjamin Netanyahu. So I still think we're waiting for some of those true details, especially from President Donald Trump, and waiting to see if we'll get any sort of readout to learn more about those fine terms and what we can see going forward and how this relates to that sanctions bill.
Yeah, and we'll be watching the True Social feed, certainly. Skylar, it's interesting as we consider these two meetings and the position the leaders find themselves in relation to President Trump. There was a time in the not so recent past or distant past where Zelensky seemed to be really on the outs with not just the president, but others in the administration, including Vice President J.D. Vance. It does seem that relationship has gotten warmer at the same time that for Prime Minister Netanyahu on his 8th visit to this White House has been kind of publicly feuding with the president. Do we have any sense as to whether Netanyahu was able to ingratiate himself a bit more back into the fold?
Yeah, well, I think one thing that's interesting is while President Trump and Prime Minister Benjamin Netanyahu were meeting, we did get some photos of the two leaders, of the leaders or the officials on both sides. It's trying to sort of depict maybe a cozy environment. The two leaders were smiling. But, I think it'll be interesting to obviously see what that actually means and how, the two leaders are going to take the next step with the Iran war. Obviously, leading up to this meeting, there were a lot of reports and so forth around the president using some heavy language as it related to President Benjamin Netanyahu in phone calls and conversations. So I think there's a lot of questions still swirling on what the relationship is like and how it will be going forward.
Interesting analysis from Bloomberg's Dan Williams earlier, who saw those photos that were put out from the Israelis. Pete Hegseth was in there, I believe, along with other officials, suggesting this is a meeting of import. Whether this is a détente of some sort or a breakup remains to be seen. The president's going to speak at the service today. Are we going to hear from him at National Cathedral?
Yeah, I believe he will be speaking later today. It'll be interesting to see what sort of direction he goes.
But
obviously,
also his mindset as he says farewell to a friend who was pushing both of these causes. Right?
Absolutely, and especially former Senator Lindsey Graham. I mean, he was coming back from. Where was he? He was in Ukraine. So it'll be interesting to see how what kind of tone the president strikes today, and if he will reveal maybe any details from the meeting with Zelensky today. But certainly it'll be one thing to watch for sure as the president sort of says goodbye to a close ally of his.
Watching Truth Social.
Indeed, we will. All right, Bloomberg, Skylar Woodhouse helping us cover the White House. Thank you so much. And as Skylar mentioned, it was Ukraine that Lindsey Graham had just returned from just prior to his death. And it's on Ukraine we want to focus now as we turn to Melinda Herring, who is a non-resident senior fellow at the Atlantic Council and is back with us on Bloomberg TV and radio. Melinda, welcome back. And we have a lot we want to discuss with you in terms of the actual conflict in Ukraine. But I would wonder your take first on the legacy of the late Senator Lindsey Graham and what he meant for Ukraine, for Ukrainian leadership, given his relationship with Volodymyr Zelensky, and how he possibly, via the sanctions bill that he helped author and negotiate around and push forward, could alter the course of this war.
Thanks for having me back on. So I think Senator Graham would be delighted today. He went to Ukraine 10 times since the war started. His last trip was to Ukraine. His heart was in Kiev. He had a close relationship with Volodymyr Zelensky. And I think it's important to say that Lindsey Graham wasn't just focused on Ukraine. He cared about free people around the world. So he had a heartbeat for the struggle for global freedom. But Ukraine was very, very special to him. And we see his death has released a lot of energy. There's a strong desire to do something to honor his hard work. There's been a desire to pass another bill that would sanction Russia, and it's named after the late senator, and it looks like that's going to pass on Capitol Hill today.
So what's that going to mean, Melinda? Welcome back. I just wonder the impact of that sanctions bill passing, because it does appear to be on a glide slope here. Whether or not it receives a unanimous consent agreement is another matter. But the president's going to have some new tools here. There are questions about the extent to which he will use them. What do you believe?
Right. Joe, so there is a question about whether he will use them, how good they are. They're not a 10. I'm not going to come on here and look you in the eye and say that the bill's fabulous, but it's a lot better than nothing. So remember, this is an administration that has done nothing on Ukraine since it came back to office. So this is fantastic. But I think more significantly, it will unlock the EU and push the EU to release its next package of sanctions. That's why it's significant.
I see.
Well, so then when we consider the significance of the decision making that this will force Vladimir Putin into, Melinda, if at all, if not, even if it is just a symbol that the U.S. is willing to stand by Ukraine in a more firm manner than it perhaps, to your point, has so far during this administration, where would you be looking for signs that it is starting to affect the behavior of the Kremlin and the way in which Putin is conducting himself as this war continues?
Great question. So it's not a great day in Moscow. There's a lot of things that are bothering Vladimir Putin right now. The first thing that's bothering him are Ukraine's long-range strikes. Ukraine is getting better at hitting oil refineries. It is causing the prices to go up. It's causing fear in people. There's elite fights within Moscow between the inner circle around Putin. So things are not rosy in Moscow, and he has upcoming elections. He also doesn't have enough people. We're seeing pictures of all the heads of state in Washington, and the Finnish president is here, and he's been very, very clear that Russia has a math problem. So Russia does not have enough soldiers to continue this war, and Putin cannot engage in a big mobilization or he has a political problem. Right now, the ratio is every 5 soldiers that are killed on the Russian side, 1 Ukrainian soldier is killed. So things are not rosy in Moscow, and I don't think people realize that Putin is actually in a bit of a pinch right now.
Pretty big score for Zelensky on his way over to the United States. He stopped by the UK and posted from the Portsmouth Naval Base in the United Kingdom that the UK has decided to share what they call its stone cloak technology. That's a system that jams Russian air defense systems, to your point, allowing Ukraine to go deeper into Russian territory. And it begs the question, Melinda, the extent to which Ukraine is relying on the United States as opposed to its European partners.
So, Joe, great question. Since Trump has come back into office, the United States has not given any more military aid. It has delivered some military aid that the Biden administration arranged, but it hasn't given anything new. So we've been sitting on our hands since Trump came back into office. However, the U.S. is still providing intel support, and that's a really big deal. The Ukrainians rely on that intel support for these long-range strikes. So that has to continue in order for Ukraine to prosecute the war.
So the intel support, the licensing of Patriot missiles, which we know were discussed today, Melinda, what else does Ukraine then need from the United States?
So we really need to see the United States go and put another assistance bill into place. The United States hasn't given a large amount of money to Ukraine since 2024. It was April 2024. Ukraine needs more funds in order to keep the war in place. But its most immediate need is air defense. So just in the month of July, the New York Times calculated how many ballistic missiles have been sent into Ukraine. It's 117. And they don't have enough Patriots. Patriots are the only things that can down these ballistic missiles. And just to remind your viewers, ballistic missiles are hitting schools, churches, and ordinary citizens. And we're seeing the number of civilians at an all-time high this month as a result of that increased pressure with these ballistic rockets in Ukraine.
Wow. Missiles for the Patriots are needed literally every day. The quote from Zelensky in a post on X. Melinda, to your point, he was talking with the Finnish president, Alexander Stubb, also here for the services today, where they discussed the prospect of diplomacy. Zelensky suggesting that important meetings for next month are being prepared. What's he talking about?
So what he's talking about is there's going to be a renewed effort to bring a peace agreement to the war in Ukraine, finally. And I think we're going to see Witkoff and Kushner come to Kiev. So they have been invited multiple times. They refuse to go. Witkoff in particular doesn't want to go because, Joe, there are no airports that work in Ukraine. You have to fly into Warsaw or fly into Moldova and then take a car or a train. And it's very uncomfortable. And Witkoff's not a young man. So General Kellogg used to make this trip all the time. But our chief negotiators on Ukraine haven't been to the country. That's a big problem. So I think out of this meeting, it was a very good meeting in the Oval Office. We see Zelensky and Trump, warm smiles, shaking hands. And it feels like we're back in a good place. But I think we're going to see more emphasis on negotiations. And I think the president is going to send his chief negotiators there. And I think the Laura Loomer visit definitely helped with that. But that wasn't the only thing that has set us in this place.
Yeah, Laura Loomer now on the side of Ukraine is one of the more remarkable political evolutions that we've witnessed as of late. Melinda, I also want to ask you, you mentioned how it's not a great day in Moscow, that Putin is facing difficulties domestically. I wonder if we should be considering what domestic pressures President Zelensky is also facing. He fired his popular defense minister. There's been turnover in Ukraine's military leadership. What is the impact of that?
Great question. Yes. So last week, there was big news in Kiev. The very popular defense minister, his name is Mikhailo Fedorov, and he's 35 years old. He's been in office since 2019. He's been promoted. He's a rock star. He's responsible for Ukraine's transformation. So if you take your phone, you can register your baby online. You can get married and divorced online in Ukraine. It's even better and faster than Estonia. And it's because of this defense minister. Wow. So he's fabulous. And no one understands why he was fired. So Zelensky didn't really answer the question. And there have been protests across the country. He's a nerd. I know him. He's not someone who toots his own horn. He doesn't speak English. He's from the sticks of Zaporizhia. He's from occupied Ukraine. But his trust numbers were growing, and Zelensky doesn't like to be overshadowed. We've seen this movie over and over again. You know, it happened with his commander-in-chief, with Zaluzhny, and he sent Zaluzhny to London. But he got rid of Fedorov because there was a real conflict between the Minister of Defense, Fedorov, and the Commander-in-Chief, Syrskyi. Syrskyi was old school. He was in his 60s. They called him a dinosaur. They called him the butcher of Kiev. He wanted to mobilize as many people and fight in sort of old Soviet tactics. And Fedorov wanted to use technology. And he wanted to revolutionize the armed forces. And the two of these guys couldn't communicate. And Zelensky said that he had to be in the room in order to get them to communicate. So Zelensky's defense is, I don't have time for this. I had to fix this problem. Syrskyi, the commander-in-chief, has been fired. Fedorov is no longer part of the government, and they're still negotiating. But there's still protests, so watch this space.
She's an encyclopedia on this stuff and has been to Kyiv countless times, unlike the negotiating team. Melinda, it's great to have you back. We'll see what comes from today's meeting and from the services that will follow, and we'll have an update on the sanctions, the Russia sanctions vote, likely tomorrow, as that's going to happen much later in the day, into the evening, following Zelensky's address to senators. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks again to Melinda Herring at the Atlantic Council. We'll assemble our political panel next. We've got a good one today. Jeannie Shanzano and Sarah Chamberlain on the way in, as we turn our attention to the memorial service and the votes that will follow, only here on Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got a stock market rally underway for the Dow, the S&P, NASDAQ higher by under 0.1%, but the weakness remains in big tech names. The NASDAQ 100 index is now lower by 0.6%, particularly weak semiconductors. Hard hit again today with the SOX, the Philadelphia Stock Exchange's semiconductor index. It is down now by 4%. But the S&P up 0.4%. The Dow is surging. Sherwin-Williams giving a big lift to the Dow Industrials. Right now, the Dow up 1.3%. The NASDAQ 100 index down 0.6% again. The SOX bears repeating, down by 4%. All of this with the VIX right around 18. The 2-year at 4.26%, 10-year 4.59%, and the 30-year 5.08%. Gold at $4,038 the ounce. Spot gold down 0.9%. West Texas Intermediate crude down 4.5%. WTI now sliding to $78.90 a barrel. Brent 83.80 barrel of Brent down by 5.2%. Earnings news: JetBlue shares are surging, now higher by 12.6% after earnings. It reaffirmed its full-year outlook and set a new long-term goal for 2028. A strong demand helped offset high fuel prices. All airlines are rallying today. American up by 2.7%, United up 3.1%, Delta up by 2.9%. They're all getting a lift from lower oil prices. Hilton Worldwide reported second quarter earnings that beat expectations. Demand improved across a range of price segments, but Hilton shares down 2.6%. Marriott, which reports August 3rd, Marriott shares down by 1%. Recapping, S&P now higher by 0.4%, with the SOX down 4%, and West Texas Intermediate crude slumping 4.4%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, we appreciate that. Fascinating market today, and we'll have more on the markets when we connect with Charlie once again in about 20 minutes' time here on Balance of Power. Thanks for making Balance of Power part of your Tuesday here on Bloomberg TV and radio. We've got our eyes on the White House today, where the president is preparing to leave the mansion and make his way up to National Cathedral for the funeral services. The memorial services being held today for the late Senator Lindsey Graham. He will not be the only world leader there. In fact, it's been a very busy day at the White House. Meetings with Volodymyr Zelensky of Ukraine, as we've told you, and Benjamin Netanyahu of Israel. As we wait to hear headlines from those meetings, we want to bring in Tyler Kendall, Bloomberg's Washington correspondent, is on the North Lawn right now as the president prepares to load into those vehicles that you see behind her if you're on Bloomberg TV or on YouTube. To the extent that we understand, Tyler, I know reporters were not inside these meetings. Give us a sense of what was being discussed and how this all plays into the theme of the day, knowing Lindsey Graham supported these efforts to support Ukraine as well as to continue the war effort against Iran.
Right, Joe, there are so many threads that we could tie together at this point as we wait for the motorcade behind me to depart and President Trump's expected remarks later this afternoon at the funeral of Senator Lindsey Graham. Lindsey Graham's legacy, of course, such a large part of it is the fact that he had the president's ear and was a close advisor when it comes to foreign policy and was considered to be a foreign policy hawk. And you had these two leaders here today meeting at the White House that are here in Washington because they were considered to be such close allies with the senator. On the Ukrainian front, we heard from Zelensky. We haven't quite gotten that official readout from the White House yet, but we know that the Ukrainian president asked the U.S. for more air defense systems, including Patriot missile batteries, something that the president told us reporters yesterday on Air Force One he would like to keep for the U.S. at the moment amid dwindling stockpiles, though the U.S. did grant that general license so that Ukraine can produce their own. The White House told us that today's meetings was part of an effort to kickstart the negotiation process again when it comes to Russia and Ukraine, considering that that conflict has and those talks have been stalled at this point for months. And then on the Iranian side, on the Israeli side, excuse me, we did get some headlines out of Netanyahu's spokesperson saying that the U.S. and Israel are fully aligned when it comes to Iran, and we wait to see what happens next in the conflict. Of course, Joe and Kaylee, as you both know, we are currently in this pause in the fighting as the U.S. says that they are resuming negotiations, but our own reporting indicates it is really Iran and Oman that are talking about a potential deal to reopen the Strait of Hormuz before we can even get to any sort of talks about what potential curbs on Iran's nuclear program would look like. All priority right now is on getting commercial shipping back up and running.
right, Bloomberg's Tyler Kendall live at the White House for us, where again, President Trump is getting set to depart en route to the National Cathedral for the memorial service of the late Senator Lindsey Graham. Tyler, thank you so much. And when it pertains to the memorial service for Lindsey Graham, it of course is not the first ceremony we are seeing on his behalf today. There was also one held at the U.S. Capitol earlier this morning, attended by many of Graham's former colleagues, including his former colleague, now Vice President of the United States, J.D. Vance, who remembered him this way.
He saw that the Senate, at its very worst, could be a venue for character assassination. But because he loved people, he saw that the Senate, at its very best, could be a deliberative body geared towards persuading people. So I choose to remember Lindsey Graham as a man who could disagree with you without being disagreeable. I choose to remember Lindsey Graham as a person who could fight with you on one issue, but fight for you on another issue.
And as we remember the legacy of Senator Graham, we turn now to our political panel. Jeannie Shanzano is with us, Bloomberg Politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center, joined today by Sarah Chamberlain, a Republican strategist and CEO of the Republican Main Street Partnership. Sarah, to come to you first, as so much of Washington and the world, frankly, remembers Lindsey Graham today, in the United States Senate, in the United States Congress, how many more of Lindsey Graham's ilk are there?
Unfortunately, not many left. I mean, whatever you thought of him, he was really a statesman. He reached across the aisle, worked with the Democrats. It's unfortunately, there's few and far between, especially after this next round of retirements.
Reminds me somewhat of the funeral of the late Senator Ted Kennedy, where you see a lawmaker drawing world leaders as if it was a presidential funeral almost. But the line that we just heard from J.D. Vance really says a lot. A person who could fight with you on one issue, but fight for you on another. Is that why he was friends with so many Democrats?
Absolutely. And he was there in a lot of their issues,
Yeah.
and he was the whisperer to President Trump.
Yes.
I mean, if the Democrats wanted to deliver a message to President Trump
call
and didn't
Lindsey.
want to go to the media, they went to Lindsey Graham, and Lindsey Graham called up the phone and told the president. He will be very much missed. Whatever you thought about him, he was a very much a senator, a statesman, and both sides will miss him. It's such a tragedy.
Well, and as we consider the liaison he was for Democrats, the liaison he was for Senate leadership with the White House, he also was one for other world leaders. Hence the presence today, Jeannie, of the Ukrainian president, of the Israeli prime minister at his memorial services and then meetings at the White House. How should we consider the way in which the U.S.'s foreign policy and the reaching out to leaders of other democracies that Lindsey Graham did on behalf of the United States, and what will be missing in his absence?
Yeah, I mean, we have experienced the loss of probably the most pro-Israeli and pro-Ukrainian voice, certainly in the Senate and Congress as a whole. I'm not sure we know who can take up that mantle, if anyone, particularly his hawkish views, his protection, and his interest in expanding democracy around the world at a time when democracy is very much under fire. You know, we hear voices, you know, perhaps Laura Loomer can take up this with Ukraine. I'm not sure that carries the same weight at this point. And that's who Lindsey Graham was. And it's a very unusual position for a senator to be in. And he was in it because he carefully put himself in that position. If we go back to 2016, he and Donald Trump were great adversaries. And he worked very, very carefully to gin up a relationship with Donald Trump that seems to have been real, because he knew if he had any hope of moving Donald Trump, particularly on foreign policy, and they were complete adversaries in that realm, that he had to be friends with him and be on the golf course with him and be in the room with him. And he did that successfully, maybe to the detriment of Donald Trump at home, but he did that successfully. And we saw that exactly 5 months ago when the president started this war, which Lindsey Graham was a major proponent of.
We're seeing some shots from inside the National Cathedral now, some live video. If you're with us on Bloomberg TV or on YouTube, Benjamin Netanyahu was just speaking with the Defense Secretary Pete Hegseth before they took their respective seats here, and seeing Mike Pence spend some time with Volodymyr Zelensky. There is Justice Kavanaugh as well, and Ken Vote, as we look at some of the Jamieson Greer as well, members of the administration who are in the room here. Sarah, it's not often you put everyone in a room like this on a solemn occasion. The emotions that are going to be felt when the president's speaking is something that everyone here can share. To what extent is this funeral going to help propel the issues that Lindsey Graham supported?
Well, I certainly believe it's going to, I'm sad to say, help Ukraine. I mean, we know that they're meeting this afternoon, early this evening, and I think that we will see more funding going to Ukraine, more support going to Ukraine, because I do think when the president got iffy on Ukraine, it was Lindsey Graham who's like, listen, we have to continue to support Ukraine. Ukraine is very important. We cannot let Russia take over Ukraine, because then the dominoes could fall with other nations.
Well, so as we consider the Russia sanctions bill that the Senate is expected to have votes on tonight, Jeannie, in the name of putting pressure on Russia and supporting Ukraine, we know that there's 62 co-sponsors. That means it's going to get through the Senate, but Zelensky is likely going to try to gin up more support from Democrats who, yes, most likely by and large want to support the Ukrainian cause, but are concerned that the cost of that is giving the president more tariff power, giving that back to him. How ultimately do you think Democrats will come down as a whole on that?
You know, to your point, Kaylee, the 22 co-sponsors are Democrats. It's 62 are co-sponsoring. That is, you know, a win, even if Zelensky doesn't go up there and advocate for it. I certainly think all the outpouring of love for Lindsey Graham today and remembering him is going to help. But Democrats have a right to be concerned, because this gives the president an enormous tool that he hasn't had. It's an enormous expansion of power. What Democrats have tried to do is support Ukraine without giving the president that power. And of course, it cedes power from Congress, who controls trade, who controls foreign commerce, to the president. And that's a potential violation of separation of powers. So I think we have a ways to go here. It's also, interestingly, the first time in American history that if this passes, and I think it will, Congress is authorizing the use of tariffs as a geopolitical weapon to punish secondary countries like India, like Russia, like China, rather than as a standard trade remedy. And that's potentially in the long term very dangerous. And that's why there is remaining concern despite support for Ukraine.
Jeannie Shanzano and Sarah Chamberlain, we appreciate your joining us here with our eyes on National Cathedral. Many more members of the cabinet have arrived, as we have eyes now on Scott Bessent, RFK Jr., speaking with Benjamin Netanyahu. The Interior Secretary, Doug Burgum, has arrived as well, as we approach a full quorum for the cabinet. This memorial service is set to begin in roughly 25 minutes. President Trump is on his way in the motorcade, and we'll have much more on this straight ahead here on Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew. We'll turn our attention back to the war in Iran. And the latest from Ben Jensen at CSIS coming up next, only on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks continue to push higher. The Dow and the S&P very much in the green. NASDAQ just turning positive, but the NASDAQ 100 index does remain lower. Tech's getting hit hard today. Right now we got the NASDAQ 100 index down 0.7%. A lot of weakness in the semiconductor names as the rotation out of that group continues. The SOX, the Philadelphia Semiconductor Stock Index, now down by 4.2%. So the S&P up 25, up 0.3. NASDAQ, we'll call that now flat on the day, while the Dow is up 628 points. That is a gain of 1.2%. Dow Industrials being led higher by Sherwin-Williams after earnings. The Bloomberg Mag 7 Index up 0.9%. The 2-year 4.27%. The 10-year 4.60%. And the 30-year at 5.09%. Gold, $4,030 the ounce. Spot gold down 1.2%. Crude, a major story today. West Texas Intermediate down 4.1%, back below 80 a barrel. 79.26 on WTI. And Brent below 85, 84.34. We're looking at a drop in Brent crude, down now by 4.6%. Visa is up 1.8%. Visa is eliminating about 2,600 jobs to make the firm more efficient as it competes in an increasingly tough payments industry. Shares of MasterCard, the rival, also based, we've got Visa based in San Francisco. MasterCard shares up 1.7%. Elsewhere in the corporate world, Apple preparing to launch new devices and software for the smart home market, including a hub device with the new Siri AI assistant. Apple shares up today by about 0.7%. Recapping, S&P up 23, up 0.3. NASDAQ now lower, down under 0.1%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, watching the markets for us. Thank you so much. Here in Washington, we're watching the National Cathedral, where memorial services for Senator Lindsey Graham are about to begin. Much of President Trump's cabinet, as well as leaders from the United States Senate, are in attendance. The Secretary of State, Marco Rubio, just arrived. You also find in the audience heads of state from a number of countries, including Ukrainian President Volodymyr Zelensky and the Israeli Prime Minister Benjamin Netanyahu, who, if you are joining us on YouTube or Bloomberg TV, you can see right now is sharing a few words with the Secretary of State and the Secretary of Defense, Pete Hegseth, after meeting earlier today with President Trump at the White House. We did get a readout of that meeting from the Israeli Prime Minister's office, saying that the U.S. and Israel are fully aligned on Iran and that Israel supports whatever path President Trump chooses. And we heard from President Trump earlier today as he did an interview on Fox News about the potential paths that lay ahead. A diplomatic one, yes, but another that could potentially target Pickaxe Mountain.
Bibi's telling me that because he wants me to stay involved. I mean, I don't necessarily. We have the finest, because of Space Force, we have the greatest cameras in the world focused on. We know exactly what's going on. But no, I heard Bibi announce that. I said, why didn't you just tell it to me? Why do you have to announce it to the world? I know exactly what's going on at Pickaxe. It's not a big problem. We took out their nuclear sites, and we'll have to take out Pickaxe if we don't make a deal. If we don't make a deal, we'll take it out very easily.
Yet another reference to Pickaxe Mountain, which is something he's been talking about a lot lately, with reports based on Israeli intelligence that thousands of empty centrifuges were hidden below some 400 feet of bedrock beneath Pickaxe Mountain. We'll see if we get that far, because the fact of the matter is we have a continued pause in hostilities. It's been since Friday that the U.S. was trading fire with Iran, and there are questions about what motivated that decision and about what might come next, which is why we're always lucky to have Ben Jensen with us. He's in studio in our Washington bureau, director of the Futures Lab, and a senior fellow for the Defense and Security Department at the Center for Strategic and International Studies. This is the man counting the missiles as they're fired and procured. And Ben, it's great to have you back, as always, here on Bloomberg. There was reporting, something I was talking to Kaylee about earlier. Admiral Brad Cooper was the one who advised the president to cool it, suggesting that this continued strike against the Strait was not effective any longer. Some suggested that that decision was motivated by dwindling supplies of munitions. What do you make of it?
So first, we always have to be careful about what happens behind closed doors, right? It's like bad high school gossip 50% of the time, maybe 51. So if Admiral Cooper did indeed say that, my guess is what he was really trying to indicate to the president is here are your viable range of military options. And so should you continue to prosecute the war this way, here are the risks the ships will incur because of the interceptors. And I think more importantly, what most people miss is you can't separate the way we fight in Iran from the way we plan to deter China, from the way we plan to deter Russia. Because a lot of the component parts for these missiles are common across multiple missiles. And so Admiral Cooper, given his experience, lifetime of service in multiple combatant commands and at sea, isn't just looking at this in his responsibility as CENTCOM commander, he's also making sure he's giving what we call best military advice to the president, so the president weighs the costs of an additional 30, 60 days of a campaign with an unclear political outcome or transition versus the cost and risk it incurs to deter those other possibilities on the horizon.
So is it fair to say that this isn't about inability to continue potentially heavy operations against Iran? It's the opportunity cost of what that pursuit would mean for other theaters.
See, this is why I love Bloomberg. Nowhere else could we talk about terms like opportunity cost. You hit it on the head, right? So it's not, we absolutely have our capabilities to do this. And people forget, in that initial 30-day campaign, there was a period of time where we switched from standoff precision munitions to we had so decimated their air defenses, we could fly in and drop laser-guided bombs and even GPS-guided munitions. We have got tons of those. So it's not that we can't fight. It's a question of the way you want to fight relative to the military objective. So where a naval voice would be concerned is if I'm going to escort ships through the strait and basically make the oil markets happy again, that means I'm going to have a lot of defensive measures in place to counter Iranian coastal defense cruise missiles, to counter those fast boats, to even counter drones. And most of our munitions are sadly still built to be $1 to $4 million interceptors being shot at a 10 to 20,000, even $1 million. So the cost effectiveness of the exchange decreases the efficacy of the operation. And so that's the real opportunity cost they're juggling. Now, what you're hitting on, I think most people miss too, is that there are actually really interesting ways, should military operations commence, because a pause for me always equals planning and getting in position, that I think we're starting to see. So a lot of people missed how important that Saronic Corsair strike was about a week ago. How important it is that we have Task Force 82nd. So the Army is in the Middle East sinking ships, not just the Navy.
That Corsair is the autonomous boat that we saw in action. We talked about
that. Is cost effective. If I shoot 3 to 5 of those at $1 million a piece to hit an Iranian sub in the pier that's worth $100 to $200 million, that's cost effective fighting. That's a different campaign structure. So I actually think people are discounting the creativity of ways we could prosecute this campaign. It's just a question of how quickly can we scale up those unmanned surface vehicles. How many HIMARS or PRISM missiles are we willing to let the Army shoot and even the Marines shoot while we're still building up our industrial base to recapitalize the over, I think it was 96 hours, 5,200 exquisite munitions used.
Fascinating. So we're talking about Iran so far, and I'm sure we're not done yet, but when you add the cause in Ukraine, this conversation gets to be a little bit more complicated. If interceptor missiles are the commodity, that's exactly what President Zelensky is asking for. I know they have a license to make them. Do they simply need to make their own, or do we have anything to offer?
I think all the above. I mean, sadly, even if we did get that license, it's going to take a year to possibly 2 to 3 to put that in place. This isn't like an IKEA kit where you and I go home, or if you're, hopefully you're better than I am. My IKEA kits usually fail.
That wouldn't work for me either,
Yeah, so the PAC-3 Interceptor IKEA kit is not a build it yourself in 1 day, 1 month, 1 year. And it's going to require infrastructure that's targetable by the Russians. So there's a real cat and mouse game. So it's going to have to be developing additional low-cost interceptors. A lot of this is an intelligence game. So you've heard reporting come out now where Ukrainian commanders will routinely let certain missiles through because they can, through intelligence, tell they're not going to hit something of value or a population center. So that means it's less interceptors to fire at the target. And the real bottleneck here is common for, it doesn't matter if it's a Patriot interceptor, THAAD, a Tomahawk missile, comes down to a few key components. So one, ammonia perchlorate. So it's a weird chemical that allows you to have solid rocket motors or small rocket motors fire. We have only one plant in the U.S. that makes ammonia perchlorate. High explosives. we sadly have only one plant in Tennessee that makes the type of high explosives, turbofans. So the things that are working on a lot of the cruise missiles in particular, we got one plant in Michigan. So it doesn't matter how much money you throw at the problem, there is still a massive industrial backlog and supply chain issue that the Trump administration has recognized, but it's going to take us years to work through that.
And yet they've requested a $1.5 trillion defense budget for the upcoming fiscal year. What you're telling us, Ben, is effectively you could get the money, but you aren't going to be able to spend it very quickly because the industrial base isn't there to back it up.
Absolutely. You will get it in pieces. And to be fair, I think, you know, he doesn't do a lot of media, but Secretary Feinberg has really been the person behind the scenes moving this forward. And that's why you have now not 5, but 7-year deals. And so you have to spend now to get the missiles coming online to scale production. But you're right, it's not going to happen anytime soon, which is why you've seen a separate initiative that's really creative of trying to bankroll cheap munition projects. So you've had 3 announced in like the last year. One was the Air Force's, was like the family of affordable missiles. It almost sounds like a, you know, Honda Odyssey for the family to go shoot someone. But it's affordable missiles. There's a new one, the ground-based affordable missile. So $250,000 or less to shoot a long-range munition that's autonomous. And so these contracts are being structured cleverly to enable competition and allow people to then actually see if we can alter the entire incentive structure for the industrial base. So I have a mix of new players and primes to meet the demand signal in the market.
Wow, really interesting. Ukraine entered the theater in an amazing way over the past 24 to 48 hours, actually striking an Iranian
Caspian Sea
commercial vessel in the Caspian Sea. Are those parts that you're talking about what Iran was delivering to Russia?
Maybe. Mostly what Iran can deliver to Russia right now are component parts for Shahed. So we heard the term Shahed. We've talked about it. The Russians are actually getting more effect out of their own version of it called the Geran, and they're making them rocket-powered as well. So my guess is the Iranians were sending drone components. I don't know, though. But honestly, the more President Trump can do to encourage Zelensky to take those strikes, the more we can do. I mean, why build it when we can buy a Ukrainian one too? They can produce more drones than even they can use in this conflict. So we probably need to start getting more creative more quickly of those weapons pairings matching I'm talking about. Why fire a $5 million missile when a $100,000 drone will do?
Well, and speaking of the cheap drones, do we have a sense, Ben, of how many Iran has left, to what extent they're still capable of building them? Because we have continually heard from President Trump that it's not just their drones, their ballistic missiles, their Navy, all of it has been destroyed, and yet we're still hitting targets, and they still clearly have the capability to at least fire at U.S. assets, even if most of them are intercepted. So what's the actual status of Iran's capability?
So it's so hard to know. I think the president was being genuine, and definitely Admiral Cooper, when they gave the battle damage assessment up front, but that was really striking the conventional Iranian forces and known forces. What Iran has learned from North Korea is to dig, baby, dig. They go underground. So they have entire factories built underground to produce drones, to produce components. And that's what makes it a very huge intelligence challenge. So you never fully are confident you got all of the production sites. So even if you can have an intelligence estimate, say, yes, you destroyed, by definition, destroyed isn't 100%, it can be like 75 to 80. They're still producing more, and because the drones are cheap, they can produce more. We knew even in the initial strikes that we were hitting the launchers, that we never were getting all of the ballistic missiles. What surprised me is the speed with which Iran has recovered the ability to shoot ballistic missiles. So there's definitely some disconnect there that I'm not sure what it is. The scariest one is that Iran also has built its launchers to look like commercial vehicles. So we still believe in the law of armed conflict, so we're not going to shoot something that looks like a school bus. But it turns out it's actually a launcher for a anti-ship cruise missile. So there's a lot of deception involved in this that makes it really difficult to say with confidence what you did destroy. And sadly, Iran doesn't need that much to conduct sea and area denial. They can fire a salvo of 5 to 30 ballistic missiles every month and hundreds of drones every month in intermittent intervals, and it keeps us on a defensive footing. That's the difficulty of breaking that type of defense.
Can I ask before they give us the hook just quickly, what do we need to drop on Pickaxe Mountain to get that far underground? Is that the mother of all bombs, or is it something we haven't seen?
I don't think a Moab would do it, given how deep it is. I think what you're probably going to have to do is fall fall back to one of the true enduring truth, well, the enduring truth of special forces. The infinite design of an operation is relative force superiority, meaning it's probably going to have to be one of the most sophisticated special forces missions in history.
Do you put people down there?
You'd have
in
to put an
tunnels?
outer cordon and basically absorb Iranian counterattacks.
Wow.
While you have specialized engineers and special forces teams go down and either detonate and collapse the mountain from within, or take the uranium out if it's there.
Amazing.
So maybe not as easy as the president is
Yeah,
suggesting it
right.
would be if there's no deal. Ben Jensen, super smart stuff. Thank you so
Thanks,
much
Ben.
for joining us from the Center for Strategic and International Studies. I'm Kaylee Lyons alongside Joe Matthew. We'll see you for the late edition of Balance of Power on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, across Bloomberg platforms. It is Bloomberg Business Week Daily on this Tuesday, July 28th, 2026. There is a lot going on. We think it is the right thing to do, though, an honorable thing to just take you, though, to the nation's capital right now. Of course, there is a service getting ready to be underway at the Washington National Cathedral. A live shot right now. For those listening on radio, we are showing Vice President J.D. Vance, the President, of course, Donald Trump, members of his cabinet, Secretary of State Marco Rubio is there as well, obviously gathered there. There are some leaders in town as well. Prime Minister Benjamin Netanyahu of Israel is said to be planning to attend, so we will obviously keep a watch on this event and, of course, bring you anything that needs to be brought to your attention.
Yeah, big topic of conversation about the life and legacy of the late senator has been his support as a hawk for some of the international conflicts that the U.S. is currently involved in, his support for the state of Israel, his support for Ukraine, and his support for those wars at a time when, in the past couple of years, there have been pressure on Republicans, especially when it comes to the war in Ukraine, not to support the Ukrainian government to the same extent it had been supported.
A lot of big issues, and you wonder who spearheads them going forward. Nonetheless, again, President Trump there and Vice President J.D. Vance at the Washington National Cathedral. All right, folks, we do want to get you, though, to some of the things that we are also focused on this Tuesday, and that is, of course, the Fed meeting getting underway also in the nation's capital. A decision is expected tomorrow. Treasury yields are also down in today's session. This as the U.S. pause strikes in Iran and oil prices fell, playing into, again, that backdrop you were just talking about when it comes to Senator Lindsey Graham there, of course, a service in honor of him.
On the equity side, too, we're watching what's going on with Apple. Shares of Apple were higher earlier, in fact, becoming the second company to hit the $5 trillion mark. We saw a bit of a sell-off in semis earlier today. We saw the Korean Kospi down more than 10% overnight. And yeah, continued pressure. It's kind of the same story over again.
I do feel that. I think our Mandeep Singh's gonna be like, again, guys, I've talked to you about this. We're gonna get into that. We're also gonna talk a little bit about what we got on the terminal among the most read, Citadel Securities, talking about a Fed rate hike, unexpectedly perhaps, from the FOMC tomorrow. So we're gonna get into that. We're also gonna about building out the space infrastructure. Got a great guest on that, the CEO of NebEx. And then we're going to get into a little bit of a sports, because, yeah, the World Cup is over, but FIFA's thinking about money and the next go-round.
Popularity into raising some money, and it's pretty controversial. So we'll speak to a couple of folks about that. Randall Williams, Bloomberg News senior reporter, joining us. Also, Vanessa Perdomo Maglione joining us, too, a little later.
Hey, before we check on markets, something we want to do, bring to your attention, a new feature exclusively for Bloomberg.com subscribers and terminal clients. We'd love to have you participate in our wall-to-wall coverage of some big tech earnings tomorrow. We're talking about Meta Platforms, Qualcomm, and also Microsoft that we're getting. Easy to do. All you have to do is submit questions for our team of analysts and experts to answer live on air. Just head to Bloomberg.com/askradio to send in your questions. Again, exclusive to Bloomberg.com subscribers and terminal clients. Bloomberg.com/askradio, and then just listen to us.
Yeah, check out Bloomberg Radio. You can watch on Bloomberg Originals. You can watch on YouTube. That's starting 4 p.m. Eastern time tomorrow, with the Earnings Palooza kicking off, yes, on a Fed day.
We want you to be part of the conversation, so we're looking forward to you sending us in some questions. Hey, let's get to, though, the market trade on this Tuesday. A lot going on for a wrap-up of what you need to know. Here's Charlie Bell.
Hi, thank you very much indeed. I think you guys correctly identified all four major themes for markets. The semiconductor sell-off, we've got the price of oil slumping, and also tech earnings, and of course the Fed this time tomorrow. We'll find out what they do, and we'll be looking forward to the news conference, Kevin Warsh's news conference, his second, coming up 2:30 p.m. Wall Street time. All of that tomorrow. Right to the numbers, we're looking at gains on the S&P 500 index. Interesting day because we started out way lower with the S&P down 30 points, down 0.4%. Right now, looking at a gain of 0.3%. So the S&P up 21. Now it's 74.34. And The Dow Jones Industrial Average up 594 points, up 1.1%. Sherwin-Williams lifting the Dow today. Meanwhile, the NASDAQ Composite Index down 31, drop there of 0.1%. Weakness in semis. The NASDAQ 100 down 0.8%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 4.4%. All of this with the VIX holding above 18, the 2-year 4.27%, the 10-year 4.60%, and the 30-year 5.09%. Gold, spot gold down 1.1%, $4,029 the ounce. Crude holding below 80, WTI 79.15 a barrel, down 4.2%. Barrel of Brent 84.15, drop there of 4.8%. Among some of the chip makers today, looking at Micron down 8.9%, Intel down 5.4%, AMD lower by 7.5%. Nvidia, though, bucking the trend, it is up by 0.3%. Carol and Tim, that's a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. Hey, two big things I think it's safe to say that investors care a lot about, and that is what we get from the Fed tomorrow and then also the AI trade. We're going to start, though, with tomorrow's Fed decision.
Yeah, I saw this story and I was like, what? And sent it to the whole team. Citadel Securities expects that the Fed will raise interest rates this week. Surprise move, strengthening Chairman Kevin Warsh's credibility in the battle with inflation. Traders, though, Carol, still pricing an unusually high amount of uncertainty about a potential hike this month. Overnight indexed swaps implying an almost 40% chance of a quarter percentage point rate increase this week.
Yeah, we'll see what happens, right? 24 hours from now, we will know. Here with what the economy maybe deserves or needs when it comes to Fed actions, we want to bring in Bloomberg TV and Radio International Economics and Policy Correspondent. He is Michael McKee, and he is in the Bloomberg News Washington, D.C. Bureau. Mike.
His second home.
It is your second home. Whether you like it or not, it is. Hey, U.S. consumer confidence fell in July. Americans' views about current business conditions and the labor market deteriorating. So let's just start first with how the U.S. economy is doing. How is it?
The U.S. economy is doing quite well, considering everything that we've been through. When you start adding up all the shocks to the economy, we have seen the growth hang in there. It's a little bit lower this quarter, but it has been 2% or a little bit better for a while. We're looking at inflation that in the last month came down, and we can get into that more in terms of what the Fed is going to do. But overall, business spending is still very strong, and consumer spending is hanging in there, a little volatile, but hanging in there. So when you think about everything that has happened over the last couple of years, and even go back to COVID, it is amazing that the U.S. economy is as dynamic as it is.
Why is that? So many I mean, I'm not going to say so many things didn't turn out the way we thought they would, but...
Pixie dust.
I don't know. Is that what it is? I mean, what is unique about the U.S. economy or the makeup of the U.S. economy that makes it so resilient?
We don't exactly know. I was just speaking with Raphael Bostic, the former Atlanta Fed president, who said that's one of the things that keeps him up. He says he worries that can't continue, but he can't figure out exactly why it's happening, so he can't find ways that it's going to go wrong. Obviously, as long as we are spending a lot of money on building out AI, you're going to have that business spending there. The question is, what happens when the building is done and the AI companies have to show profits? Can they do that? If not, then what happens to the stock market? Then what happens to consumer spending if stocks go way down? And then at some point, does the war start to influence consumer behavior and people get concerned? And that could be through the inflation channel or just overall in the consumer sentiment numbers that we're seeing.
Hey, Mike, Citadel, as we mentioned, expects the Fed to raise rates tomorrow in a surprise move, so strengthening Kevin Warsh's credibility in the battle with inflation. So how often do new Fed chairs kind of come in, want to take some kind of an action to show that they are in charge when it comes to labor and inflation, or just in general early in on their tenure? And is it important for them to do something to say, I'm in control, I've got this kind of thing?
Well, there's a certain amount of importance to saying something like that, or at least making that impression. I don't think any of the previous Fed chairs would say, I came in and I raised rates because it was important to show that I have credibility, but it is a historical fact that Paul Volcker raised rates 2 months into his term, and Ben Bernanke and Jay Powell raised rates a month into their term, Alan Greenspan as well. So it's, except for Janet Yellen, who inherited rates already at zero, there's been a tradition of very early rate moves by Fed chairs. As a matter of fact, the story is that when Alan Greenspan first raised rates, which was at his second meeting, Paul Volcker sent him a note that said, "Congratulations, you're a real central banker now."
So the question is, does Kevin Warsh become a real central banker tomorrow, like Citadel Securities expects?
It's a really open question. I mean, all meetings are live, as any Fed official will tell you, but this one's perhaps more alive than others because there is an inflation problem out there, and we don't know where we're going with this. We've seen oil prices come back down again after shooting up again. What does the Fed do? Look through it or think that this could devolve into a further inflation problem? And at the same time, you have Kevin Warsh, who is new on the job, but has made it clear that inflation is the enemy number one and needs to be slain. There's also an angle that some people have pointed out that if you if you raise the short rate, then that eases some fears about inflation getting out of control or being around for too long, and long rates come down, which would bring mortgage rates down. And that would, in theory, make the president happy and take that off the table. So there are a lot of moving parts here. And somebody asked me today, hold or hike? And I said, yes.
Good answer.
Well done. As always, Mike, we're looking forward to your coverage tomorrow on the Fed decision. Bloomberg TV and Radio International Economics and Policy Correspondent, of course, Michael McKee. We mentioned at the top a couple things certainly on our mind. We've been watching the NASDAQ 100 trading near a correction as the sell-off in semiconductor stocks kind of turn a little bit ugly, with investors once again questioning the amount of money that big tech is spending when it comes to AI. And we want to go now to tech.
Yeah, I'm looking at shares of Micron right now, down more than 9% just in today's trade. SanDisk also under pressure. I want to bring in Mandeep Singh. He's our third anchor of Business Week Daily.
My husband yesterday said, "Where's Mandeep?" He did. He talked to me last night. He's like, "Where's Mandeep?" all right, I get it.
The people need their Mandeep.
They do.
My dad says the same thing too, by the way. Mandeep is Global Head of Technology Research at Bloomberg Intelligence. The semiconductor trade, got a note from Tom Thornton earlier today. He says he closed out, what did he say? He just said, "I covered most of my semi-shorts today, as well as Tesla." The shorts are doing pretty well if they short it at the right time when it comes to some of these memory names.
They are, but when you look at the overall SOX index, it's up more than 100% in the past 3 months. So, when you have moves like this, there's always, points where you will see some consolidation, some sideways movement. And fundamentally, when you look at the earnings that have come so far, and we'll learn a lot more this week, Alphabet pointed to the fact that they're raising the capex. So it's a positive overall for the semiconductor complex. And everyone's, has talked about how they are supply constrained. So to me, nothing has changed fundamentally. But, the market is always looking ahead. They are sniffing for what could go wrong down the line. And that's what you see.
I have to say, Mandeep, prepping for this, I think we were like, oh, shoot. Mandeep's going to be like, guys, I've answered this question a million times. So when do you, what would...
Maybe tomorrow we'll answer it differently after we hear from other companies, or Thursday too.
Yeah, if there's a capex cut, yes.
Well, that's, what would possibly say to you, okay, now there is a problem? Is it...
Even if the companies that are reporting don't raise their capex, to me, that's a negative. Because as I've explained this before, that because of the memory price increases, every company has to raise their capex targets just to account for how much the memory prices have gone up. So if they're not raising their capex, that's a sign they're cutting somewhere else. And to me, that in itself is a negative indicator that, they're holding themselves back. Why is that? Is it because they're not able to train the latest model, or there is something more to it?
Which company do you think will be the first to either hold or cut?
I mean, Meta to me looks like the one where they don't still have a cloud model, although the indications are they are going that route.
Yeah, we reported that a few weeks ago.
Yes, and so if they come out and say they already have a customer, they're looking for Anthropic to use their compute, that's a positive sign. I expect them to raise the capex for sure in that scenario. And also, there'll be more details around their own model, the Muse model, because with all this open weight news this week and Jensen Huang, coming on X and supporting open weights, it feels like there's a lot of momentum that suddenly there is behind the Chinese open source models. And what that would mean for the overall ecosystem, I think we still have to discern that overall impact.
So the AI circular fears, or circular financing fears, is that legit? Should we be a little concerned about that every time we bring up that diagram and see how interconnected things are?
I think, there is no denying the fact that NVIDIA, with their big balance sheet, is backstopping a lot of this build out. And look, OpenAI doesn't have a balance sheet like Alphabet or Microsoft does. So if OpenAI and Anthropic want to build their own data centers, they need either the hyperscale support or they need NVIDIA support to say, okay, even though you are buying chips from us, I'm backstopping the use. If nobody is there to consume their LLM capacity, I'm going to backstop that.
Why don't they just tap credit markets or investors to do that? Why do they have to have it?
I mean, the cost of capital for OpenAI would be way more than what Google is paying, which is more like 10%.
Okay.
And the return that Google has to earn is more like 20% in order to say it's a good investment. For an OpenAI, the bar will be much higher, and so that's why the cost of capital matters here.
Okay. Interesting.
I'm just looking at shares of Micron, down about 30% going back to June 25th. So
How much is it up?
In a month. Over that time, it's down.
How much is it up this year?
Over this year, it's up 185%. But the thing is like it's starting to look like the same shape that we saw pre-COVID, going into COVID, and then post-COVID, where things revert to normal.
I mean, the big risk factor, again, with all these investments, there's always one big risk factor. And in the case of memory names, I feel it's Apple, because Apple has so much weight when it comes to consumer devices. And if they are able to qualify a CXMT or one of the Chinese providers, then that's a big, threat to all these memory players, because suddenly you have got a fourth provider, and then you have got the largest consumer hardware company looking to use that.
Is that a real threat to the big three?
I think so.
You think so?
What we have learned so far is because there is such a big supply-demand mismatch, that these companies could allocate a lot more of their wafers towards HBM than the conventional DRAM.
High performance computing.
The high bandwidth memory. That's
high bandwidth memory. Thank you,
But DRAM is where they're getting all their pricing lifts. So
what does that mean for like the consumer side of things? Apple's saying a few months ago that it's raising prices on this stuff.
Yeah.
That's here to stay.
That is here to say, as long as they're relying on a Micron and SK Hynix for DRAM. Remember, Apple doesn't need HBM, at least right now. They're not building data centers. They need memory chips for their smartphones, and they just need the DRAM. So DRAM is what has gone up in prices, partly because of all the wafers that are needed for HBM. So there are a lot of moving parts to this, but CXMT is a player that sells DRAM, the commoditized
CXMT?
memory chips.
I was just going to say, we've only got 20 seconds, but increasingly, should we be watching what China's doing very quickly?
Absolutely. On the open weight model side, everyone wrote them off, and suddenly they've got the support of 100+ companies here in the US saying, we want to support Chinese open weight models.
Wild, wild, wild. Thank you for coming back. I know we asked the same questions, but we need you.
Maybe we'll see you tomorrow.
We will, we hope. Mandeep Singh, Global Head of Technology Research of Bloomberg Intelligence. Coming up, the CEO of Nevex.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, they are both higher. We've got NASDAQ and the NASDAQ 100 index. We'll throw in the Russell 2000, all in the red. A sell-off in semis is continuing with the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 4.6%. The NASDAQ 100 index down 0.9%. NASDAQ Composite down 0.2. But the S&P 500 index reversing earlier losses, holding on to a 17-point gain, now up by about 0.2%. Dow Industrials up 555, up by 1.1%. Sherwin-Williams leading the Dow higher. The Bloomberg Mag 7 index up by 0.8%. This ahead of earnings from 4 of the 7 members coming up tomorrow and Thursday. The VIX above 18 with a 2-year yielding 4.27%, the 10-year 4.60%, and your 30-year 5.09%. Gold at $4,028 the ounce. Spot gold down 1.2%. West Texas Intermediate crude $78.97 a barrel, slumping 4.4%. Barrel of Brent $83.89. Brent crude right now down by 5%. SpaceX shares bouncing back today after temporarily raising a fifth of their value from the record-setting debut of Elon Musk's company. SpaceX shares right now, you recall, they did go public at $135. SpaceX shares now at $116. SpaceX today up by 2.8%. Recapping, S&P 500 index up 19. That is a gain of 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pallett. Tim and Carol, that's a Bloomberg Business Flash.
All right, Charlie, so appreciate it. Hey, folks, we've been watching shares of rocket, satellite, and space-linked companies. They've been under pressure. Names including Intuitive Machines, Rocket Labs, and Redwire, among those losing some ground today. This is happening as Elon Musk's SpaceX shares have dropped as much as 20% below their initial public offering price of $135 a share, so erasing roughly 1/5 of their value. For those who are watching on YouTube and TV and Bloomberg Originals, you can see just after the first couple of days of trading where the stock shot up, we have been essentially in a downward move here. SpaceX shares, though, I should mention, bouncing around today. They're now up a little bit more than 2%, but they were down a lot earlier in the session.
Joining us on set to talk about building out space infrastructure, Tejpal Bhatia is back with us, CEO of Nebex. The company describes itself as the market infrastructure platform for the global space economy. Good to have you back on the program. Last time you were with us, you were CEO of Axiom Space. So a little bit of a job, not a little bit, a lot of a job switch, but you're staying in the space.
Yeah.
Okay. All right.
Yes.
Just making sure.
Space. You got me.
$30 million seed investment round led by the company formerly known as Google Ventures, GV. Other top-tier venture funds included a banking relationship with JP Morgan. What are you setting out to do at Nebex that you weren't able to do at Axiom?
Yeah, well, thank you first both for having me back. We met a few times. Always loved our conversations. I feel like I remember vividly your story about your father.
Yeah.
And kind of the general connection we all have for space. Really cool to be hearing you talk about various space stocks and us speaking like it's a real economy. It's not a real economy yet, and it's not a real asset class yet.
Why not?
So SpaceX, by far, this largest IPO, very exciting. It's doing what public stocks do, and they've created a ton of value. A question I would ask is, why is there no remotely close second place? Right? Every other sector, I know the previous guest was talking about AI, right? 20 years ago, it might have been search or cloud or mobile. In every major revolution where there is huge value created, there's multiple massive winners, right? You know, look at the big four, you know, the FANG stocks we used to talk about a while ago. There's always other ones with space.
But the moat to launching a rocket and then landing it on a barge, which, you know, 7 years ago was a big deal, but nowadays happens so frequently we don't even necessarily show it. That's a pretty big moat.
Pretty big moat, absolutely. But again, why is there only one that's been doing it? And I think this is where Nebex comes in. We have a belief that this is a major transformation for industry and civilization. And Nebex is building what we call the commercial rails to go on the physical rails. The physical rails being those rockets that go up and down. And we've seen this over and over again. We've seen it particularly in New York quite a bit. When the railroads were built, New York to California, 3 gentlemen in Buffalo, New York, Butterfield, Wells, and Fargo created American Express to guarantee gold going from New York to California. And when they realize that they're guaranteeing it from robbers and gangs like Jesse James, they realize they don't actually have to send the gold. And that was American Express and Traveler's checks. JP Morgan, 1871, standardizes the shipping container. The first letters of credit between global banks guaranteeing trade. So we've seen this time and time again, but in space, everyone has been focused on the hardware. Everyone has been focused on the physical infrastructure. And when we talk about infrastructure, a launch a day is infrastructure. Launching giant rockets and landing on a barge exactly on their X logo, that's incredible infrastructure. Tens of thousands of satellites in orbit, that's infrastructure. Every other company, though, is putting up demos. So we feel there's this wide open space right now for a company to bring the rest of the economy along. Once those rails are set, going up and down, what's the next traveler's check? What's the next shipping container? What's the next trading platform that allows the economy to scale the way every other industry has?
So how do we get there? Because the other thing I would say with space is you want to make sure there aren't problems. It's complicated. It's difficult. I always think about, you mentioned my dad, like he would have been blown away by the idea that you could actually bring a rocket back and make it land, because that's not the case when he was doing it. So I'm just like, there are regulations to make sure things are safe and secure. Lives certainly at stake, and this concept of kind of building out space as a place for people to maybe live or data centers to exist. What does it take in terms of international cooperation among entities, companies, and then the financial entities?
Yeah, and again, we've seen this in other industries, aviation, right? From the Wright brothers to Lindbergh, going from New York again to Paris. We saw within a few years air shows everywhere, right? The wars having multiple air forces, and then within 100 years, that industry completely transforming life. We can't imagine life without airplanes now. The interesting thing about space, and I discovered this, in my previous role, I'm new to the industry. I worked at Google 5 years ago.
Yeah.
And it's been my childhood dream to send astronauts to space. I got my shot, I took it, I was really good at it. Sent 16 astronauts to space, 12 sovereign nations, billions of dollars of revenue, again, all as an outsider. And as special as I believe I am, as special my parents think I am, there's 8 billion.
Thank God for parents.
Yeah, there are 8 billion special people in the world. Why is nobody else cracking this code? And what I realized is, I think we uncovered right under our nose a gold mine, which is literally the only industry left on the planet that hasn't been touched by modern finance. And there's a geopolitical history behind this. Back in your father's time, the space race, John F. Kennedy, we go to the moon, we do these things not because they're easy, but because they're hard. I think we all get goosebumps when we think about it. That's kind of our origin story, space in the United States. At that exact same time, students in schools were being trained to get under their desks in case there was a nuclear attack. It was an arms race. And there was 2 superpowers, the United States and the Soviet Union. And everything came out of that. And originally, the first collaboration between those 2 space superpowers was what eventually became the International Space Station. And to remove complexity and politics from it, they decided no money will exchange hands. And it worked. And it maintained peace and diplomacy even through the current conflict. But now with a company like SpaceX and Starlink and Starship, we need financial infrastructure to actually modernize the industry.
I want to go back to, and Tej, we only have about like 4 minutes or so left, so I want to kind of get to some of what you actually kind of plan to do in the deals as this platform gets up and running. But I mean, I always believe that if there's money to be made, money will go there. And you started off saying, why aren't there larger competitors to SpaceX?
Yep.
So if the money hasn't gone there already, maybe it hasn't gone there for good reason.
Yep.
And maybe you need to have it concentrated in one hands, or government still being very much controlling a lot of stuff.
Yeah, and I think you've nailed it. I don't think it is a cause and effect. If you follow the dollars, it is a massive market today. I know last time I was here, we were talking about orbital data centers. We've spoken about pharmaceuticals and space manufacturing. We saw in SpaceX's IPO the $28 trillion TAM. Awesome. Yeah. Awesome. Let's
total
hope that
addressable
happens.
market.
Yeah, total addressable market.
Totally realistic?
Yeah, why not?
Okay.
Why not? But that's vision. We can look at exact numbers in 2026. We can follow the dollars, which is what we all should be doing, and every dollar goes back to a government budget. The beauty of government budgets is they were appropriated 5 years ago. The beauty of government budgets is all publicly available data. The exact dollar amount that's going to be transacted in 2026 is $138 billion. It's actually $137.4 billion for the weirdos who've checked every single RFP and tender and know where every dollar is going. So we know that that's a massive market now. So there's no guesswork there.
Yeah.
It's all coming from government budgets. So the reason it hasn't actually accelerated is because it's been a sovereign to sovereign business, and now with commercial supply, it's changing.
We're speaking with Tejpal Bhatia, the CEO of Nebex. So who are your first customers going to be at Nebex?
So Nebex is a financial exchange for cross-border space transactions. When governments need to buy commercial supply from another country, it gets very complicated. And basically, that's every single space transaction. If you want to get off the ground and
Export
you want to
restrictions, there's lots of things that go on.
Exactly. Import, export, ITAR, ER in the case of the United States,
Yeah.
Taxes, tariffs, politics,
right,
policy,
procurement rules.
Procurement rules. For many European countries, money cannot actually leave their borders. And they invoke what they call the barter system. There's no real barter system, but it's usually some sort of value in kind bilateral trade that agencies will do. So there's no trusted counterparty. There's no neutral central clearing settlement system for these deals, which forces every deal to be bilateral and sequential. There's no parallel processing in this. So when companies are going after government contracts, they win the contract, they get their payment, they hit the next milestone.
How do you take the politics out, though, in a world where geopolitics does determine who you sell what to, and especially it's heightened in terms of the sensitivity, whether it's natural resources, whether it's weapons, like how do you get around that? And forgive us, we only have about 45 seconds.
I can answer in 15 seconds. So 5 years ago, when I was working at Google, I'd never spoken to a world leader before. Sending 16 astronauts to space, you're dealing with presidents and prime ministers. I don't even pretend to say I understand politics, but we have the most efficient vehicle as humans to solve that, and that's the markets. So capital markets, and you mentioned the relationship with JP Morgan. What's happened is in this time warp that has become space, the space business is stuck in 1969. This building is a couple of $1 billion, right? The bankers who finance this get paid on transaction fees, assets under management. The atomic unit for space is a launch, which is about $100 million. You can't get the time of day of any Wall Street banker to come finance that, even if it's a bankable deal. So doing it at scale, bringing the capital markets in, makes it a money problem, not a politics problem.
We know this will continue, this conversation. Glad to have you back. Come back sooner. Let's not wait a year or so. Tejpal Bhatia, he is CEO of Nebex, joining us right here in studio. All right, folks, as we head to a break, we do want to take you to the nation's capital, Washington, D.C., and the National Cathedral. President Trump currently giving the eulogy for Senator Lindsey Graham, the service and funeral being heard. As we head to a break, you can follow this. Just head to Live Go. You're listening and watching Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, the S&P higher, NASDAQ and the NASDAQ 100 index both declining. Bottom line, those stocks are higher, oil is moving lower, and chips are selling off. The SOX, the Philadelphia Stock Exchange Semiconductor Index, now down 4.6%. The NASDAQ 100 index down 0.9%. The NASDAQ Composite Index down 0.2%. S&P keeping it all in context, up 0.2%. Higher now by 17 points, and the Dow is up 560 points on the Dow, a gain there of 1.1%. Dow Industrials getting a lift from earnings from Sherwin-Williams. The Bloomberg Mag 7 index up 0.6%. We will be hearing from 4 out of the 7 members in the next 2 days. Right now, the VIX is just above 18, and a 2-year is yielding 4.27%, while the 10-year is yielding 4.60%. Spot gold down $52 the ounce to $4,023. The precious metal down 1.3%. West Texas Intermediate crude holding below 80, $79.23 a barrel. It is down 4.1%. Barrel of Brent, 84 even, down now by 4.9%. Earnings news: Coca-Cola has raised its full-year outlook, bolstered by demand last quarter, while it served as a major sponsor of the FIFA World Cup. And today we are looking at Coca-Cola shares advancing by 4.4% now. Rival PepsiCo, it is trading higher as well, up by 1.8%. Briefly, United Parcel Service boosted its sales guidance for the year to about $91.2 billion, up from a prior forecast of $89.7 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, man, the fans are barely back home. Some of them maybe are still playing around in some of these great cities.
I think the merch is still selling.
It is. I see it in the city. I definitely do.
I saw some Spain jerseys yesterday on my way home.
Did you?
My daughter is wearing Argentina today.
See?
Yeah.
So it's still around us. I mean, the World Cup is still definitely a newsmaker, no doubt about it. Charlie just talked about Coca-Cola raising its full-year outlook, bolstered by demand last quarter, while it served as a major sponsor of the FIFA World Cup.
And then there's this: FIFA working on a plan to raise as much as $4.2 billion from external investors. This, according to a person familiar with the matter, as football's governing body opens itself to outside investment for the first time. I did not even know
I just
that one
assumed.
could perhaps invest in football's governing body. It's pretty controversial, to be
Are you going
fair.
to sell your crypto and go into it?
I am staying
He doesn't
put
have any
right
crypto.
here.
I don't think he does. I don't know.
No crypto.
With
No
more
crypto.
on all of this and the look at the world of sports, Vanessa Perdomo Maglione is with us. She is Bloomberg News Business of Sports reporter, sports business reporter, I should say. She's also co-host of the Business of Sports podcast. She's here in studio. And also with us is Randall Williams. He's another co-host of the Business of Sports podcast, and he is Bloomberg News senior reporter. Guys, thank you so much. Randall, you're in D.C. We're going to get to that in just a moment. But I want to get to what's going on here. FIFA pitching to outside investors. Is this a big deal, Vanessa? Give us some context. I think we just kind of assumed outside investors were involved, but I guess not.
Oh, it's really interesting. No, it's a massive deal. And this is just...
I assume the opposite.
Yeah.
Oh.
Yeah, I thought it was like a governing body that was supported by its members. And
Which it is supposed to be.
Yeah.
Right. That's exactly what FIFA is supposed to be. It's a nonprofit. FIFA is a nonprofit. It's a governing body. They're supposed to support their 211 members. And
I'm just so
basically
used to
all of them.
Americanized sports, and there's so much money in
Well,
there.
this is exactly what plays into it, though, Carol, right?
Yeah.
They just had their World Cup in the U.S. Gianni Infantino has a great relationship with President Trump, and one of the investors behind this is Joshua Kushner, who is, closely related to the Trump administration in a way. So it's...
Well, he's the brother of Jared. Let's
He's
just
the
be
brother of
honest.
Jared Kushner, right, exactly.
Which is the son-in-law of the president.
Right, exactly. So I think what we're seeing here is right after they have the World Cup in the U.S., they then have this idea to, which they did note beforehand, have been in the works a little bit, but they have this idea to have a for-profit part of FIFA.
I don't know, Randall. Come on in here, because there is some precedent to this.
Money in sports?
With the
How could that
PGA, I
happen?
read, thanks to Giles Turner's story, who covered this earlier today, but it does seem a little strange that you would have outside investment coming into a governing body, especially, when there are some asterisks around what you can then do with that stake of FIFA.
Exactly. I mean, what does Kushner and Thrive get out of this? And what do some of the outside investors get out of this? If this is a for-profit arm and there is a non-profit body, how do those things coincide with each other? And who's getting paid? We don't really understand as far as, where's this money going to go? A lot of times that, private equity and venture firms and funds are investing into teams. They're doing it for a purpose. They're doing it to, help with stadium issues. They're doing it to help with when owners have billionaires and taxes and different things like that. They're helping with things that are alleviating stress for billionaires. This one is sort of like question mark, question mark, question mark. Why is a nonprofit raising billions of dollars?
So what does FIFA say, Randall?
FIFA will tell you that this is for the good of the sport. This is going to enhance football around the globe, and they're looking forward to hosting the 2027 Women's World Cup and the 2030 Men's World Cup.
Okay, that's what FIFA says. UEFA is not so happy about this, Vanessa. Giles Turner writing on the Bloomberg Terminal just in the last 20 minutes or so that UEFA is considering a boycott of FIFA events, including the World Cup and the Club World Cup, in response to FIFA's proposals to seek private investment. Do you think, Vanessa, that this could be the type of thing that doesn't happen as a result of pushback?
I think that we have seen pushback like this before on, in certain things, and FIFA has proposed, ideas like this, but not this exact idea before, but they have proposed things before that the governing bodies have said no to. I mean, the 211 members associations have to say yes in order for this to happen, right? And then all of these other entities like UEFA and CONCACAF also would probably need to be on board. They're not necessarily the members, so it's different. But I think that UEFA's strong feelings about it could potentially
This
cause
is, by
some
the way, the
issues.
European Football
The
Body.
European
That's what
Football
UEFA is.
Association, right. And they came out and said this absolutely crosses the line. No football governing body should be doing this. And we'll see where it lies, but I think that FIFA, they're the ones who came out with this statement, and they're clearly very far along in
Randall,
this
come
discussion.
on in. Yeah.
And I just added, you have to remember, the members that are in Europe. It's not just anybody. It's France, it's England, it's Portugal. It's all of those countries that are considered superpowers and have some of the most popular players in the world. And so this is a Cold War brewing. And we're going to find out in many months and maybe years to come if it's going to boil over. And what is the result? We haven't seen anything quite like this in the global sport of football, probably since the Super League, which was going to combine a bunch of clubs around the world and try to, make the competition as high as it possibly could be. And that evidently was gone away with. And so this is something similar, but at a higher level. Imagine the Justice League versus the Avengers versus you throw another team in there that you all like, and this is what this is in terms of football.
FIFA has said the proposed company, FIFA Forward Enterprise, would remain under its control. Investors permitted to acquire only minority, non-controlling stakes. The venture could raise as much as $4.2 billion, and FIFA has said it could substantially increase development funding for its 211 member association, supporting infrastructure, coaching, grassroots programs, and women's football. Vanessa, do they need the money?
Well, I mean, they just made $15 billion from the 2026 World Cup, so I don't...
Everything was sponsored.
So I don't think that they necessarily need the money, but they'll always say, like you just said there, Carol, they'll always say this is to then support the further, growth of these of the member associations.
They didn't sponsor the hydration breaks, right?
Are you
joking?
They
sure did. And they got $500 million
that was
from it.
I'm just kidding.
They got $500 million from it. I mean, I think one of the things that we'll see here is how it, next year is the 2027 Women's World Cup, which will have 48 teams again competing with 104 matches, which on the women's side, this investment actually could probably use more investment for these smaller countries.
Okay.
Randall, I heard you jumping in there with some sponsorship commentary.
Yeah, I was just going to say, I do think that if the World Cup is going to expand to eventually to 64 teams, then what could happen is that these early round games matter less. That's going to upset, the nations that are superpowers. That's England, that's France, that's Argentina, that's Brazil, because they do have to play teams that might not have qualified in previous tournaments. And so if FIFA does by their word and they say that this money is going to go to those programs and it's going to develop talent, that we could see global superstars from Cape Verde someday at a younger rate than what we saw this year, where the goalkeeper was over 40. And so with that in mind, it sounds good. But the question is, does the world of football trust it? And I'm not so sure about that.
Money in sports.
I love this.
Never thought it would have kind of gone to the level it is here in the U.S., but here we are, right? So
we're the ones who made it that way.
Yeah. Well said, well said. Vanessa Perdomo Maglione, Bloomberg News sports business reporter, co-host of the Business of Sports podcast, along with Randall Williams, who is also Bloomberg News senior reporter. This is Bloomberg Business Week.